March 11th. Thanks, dude.
You're welcome.
Post crash, you've told me that it's over with.
Man, it was tough, but we made it through.
Has bounced back a whopping 50 points.
Yeah, no, I think we had 100 early this morning.
Nice. Okay. Yeah. SPOOs are back to 56.50 or something.
Yeah, that was tough yesterday. Not a lot of people in the office happy. A couple that were extra happy.
I was gonna say they're
true colors, real friends. How many of us?
It is the person at the craps table that like everybody's like on fire for weeks, months, even years at certain points being long, but there's always like one or two guys that's betting against the table.
And they win every once in a while.
And the last week or so has been a huge win for those guys.
That's all right. But yeah, bottom's in. How we feeling Tuesday? You do this Monday, Tuesday.
Definitely doesn't feel like the bottom is in for this market. I mean, I will say I've done a ton of research around equity crashes historically. A lot of them do tend to fall on Mondays. And a lot of them will historically have seen a bounce following that Monday crash. Now, you could say, well, that's all well and good, Frank, but I'm pretty sure we did exactly this thing last week and maybe even the week before. And so in environments like this, you also have to take into account the fact that volatility tends to cluster. You don't see a lot of instances, even going back to the pandemic, you might look at that on your chart and be like, oh, well, it's a blip. Like it was really just like one day. It was not one day. It was a couple of weeks, and really not for 2 solid months that we saw the recovery. We don't normally see kind of an exact V like that where it's like you sell off 30% and immediately regain that within, I think it was like we sold off going into March and then the start of March, obviously, that year. And then we were back by, I think, like June or July.
Yeah.
Volatility does tend to cluster. You tend to see a lot of big moves around each other for better or worse. We're seeing a lot of them to the downside. But another thing that I think you are encountering maybe for the first time in your career is correlations go to 1 when volatility spikes. And what I mean by that is everything that's risk on is going to get hammered, and everything that's risk off is likely going to see a bid. Because, you yesterday were surfing through the platform and you were like, everything's red. Like, these stocks are red, and like that stock is red. And I was like, yeah, Glenn, we're in the middle of a crash right now. Everything is highly correlated at this point.
Hard to find some green, on my watch list yesterday. But it's out there somewhere, right?
On days like yesterday, I don't know if it is out there. I think it's just a matter of degrees. But some huge moves across. I mean,
at least risk off crypto is still good, right?
Which ones are those?
The safe havens of crypto.
The safe havens of crypto. Which ones are those?
No, it turns out there are no safe havens of crypto.
Dude, it kind of stunk because yesterday around the open, equities were down like 1%, and ETH. Some of the cryptos were like looking at a rally yesterday morning, and then equities got pounded, and then crypto got annihilated.
Yeah, and the whole everything goes to all correlations go to 1.
Yeah.
Maybe an outside chance that this is supposed to be the most uncorrelated.
Which one?
Bitcoin.
I mean, it's hard to make a case.
Yeah,
dude. When actual gold is correlated to the market at this point, it has.
That's been a really interesting one too.
It's been correlated to equities, I would say, really since the pandemic. Gold has, whereas pre-pandemic, that trade was, unless I'm remembering incorrectly, it was more of a flight to quality type trade. But when gold is selling off with the stock market.
Digital
I don't know.
Gold.
It would be pretty funny to see the story of Bitcoin's actually up 10%.
Man,
Bitcoin and VIX.
that day though, when that day comes,
we'll see. I'm not. Again, these correlations do change over the long term, but right now in the short term, everything is pretty highly correlated in this crash. Let's get into the platform and take a look at what we've seen across the currency space. We're going to do a little piece on flight to quality currencies in a second and draw some correlations between major currencies against the U.S. dollar, but draw their correlations of Aussie, yen, Swiss franc versus the S&P 500 and the volatility index or fear gauge for the S&P. So that'll be pretty interesting. Well, Glenn, Eurodollar is back in a big way, opening up the platform here and seeing some close to 109 prints. We've already gotten up there, hit 109.20 early this morning, have backed off under 109, but holy smokes. And this is, you want to talk about correlations and different asset classes. This is one of the scenarios where you can't really make a case for equities are down on the week at this point, 3%, 2, 3, 4%, depending on where you're looking. And euro, you might say, oh, given the recent environment, I would maybe say that euro is more risk on than the US dollar. And so I would expect that the euro dollar trade would have been lower significantly this week so far. Yesterday, kind of hovering around unchanged, trading both sides only for like 20, 30 points. And now today, yeah, you're seeing an 80-point rally being sold into a little bit. But yeah, no real correlation with equities across some of these major currencies right now.
Yeah, and what's really interesting, we get caught up in U.S. equities, feels like the whole world is collapsing. But when we're looking at a market like this with that mindset of which is risk on, which is risk off, it's easy to validate that opinion, back up, zoom out a little bit. And if we could pull up euro yen,
sure,
that will give you a little more context, taking out the dollar piece here, and kind of validating the narrative that, okay, this is more of a euro story, capitalizing on a traditional flight to quality currency like yen, and that maybe the U.S. fear, all of the turmoil really is not as global as a lot of these global recession risks are, or risk off sentiment of uncertainty.
It's an interesting thing for sure, because you could also, and you'll see us make the case in just a second, you could also make the case that currencies, in the grand scheme of things, you have equities and treasuries that can be highly correlated in an inverse manner, obviously, where equities sell off, there's a flight to quality in treasuries. Right. Equities are moving higher, treasuries move lower, and we've been in an equities moving higher and interest rates being relatively high or treasury prices being low the last couple of years. It is kind of a middleman in this story, as we'll get to, where we have seen U.S. equities move lower in the last week or two, U.S. treasuries moving higher, U.S. interest rates moving lower, and dollar moving lower against yen and Swiss franc and a couple of currencies. Great call by you to take the U.S. dollar piece out of it, because you would say, okay, well, if this euro is, trading in this risk-on manner where it should be getting hit with the U.S. equity story, if you take the dollar piece out of it, you would say, oh, well, then euro must be down relative to the flight to quality yen. And it is not at all. As you can see here, this is the 15-minute chart. Over the last handful of days, you have a general trend higher. And as of today, it looks like it wants to trade through those recent highs. We go to the daily chart. Not seeing much downside whatsoever in this euro relative to the flight to quality yen piece. So, and we talked about it a little bit yesterday. Keep in mind that a lot of these different global economies, like the euro area, like the UK sparingly, but especially like, Canada and Australia, some of the different, like I say, global economies, not the US, have seen risk-off sentiment earlier this year and actually into last year. Right. And so it could be a little, because, you look at an interesting one here, this Australian dollar, which is probably, and we'll look at the correlations in a second, the most correlated to an equity story in general. And I mean, China sold off hard yesterday as well.
Yeah.
And this Australian dollar is not rallying like the euro is, but you would expect that it's moving through the lows. But to your point, a little bit of a U.S.-centric story that we're seeing here this week, and thus the move lower in dollar relative to yen, a very different chart. We're seeing the bounce in the last several hours with equities in the U.S., but very different than this euro-yen chart. If I go back here and pull up the 15-minute just to take a look. Yeah, as you can see, going back and forth, both are seeing the rally the last couple of hours, but the dollar-yen piece rallying off recent lows. Euro-yen rallying from recent mid-range to highs. Any other interesting pieces to you here on the board? I mean, yeah, euro dollar up another 60 points, pound up close to 130 now.
That is interesting that it's kind of taken, the pound's risen in tandem with the euro. We've seen in recent months and years, sometimes that's not the case. Euro can fly all by itself. Pound, UK, economic picture not been as pretty as of late. But with the united Europe story we've got going, and a lot of those, the action in bond prices there, taking the pound with it.
Yeah, this has been one of the pieces that hasn't sold off as hard as the euro and the yen amid the worst points in those currencies. But I would agree with you. It's kind of surprising how much strength we're seeing in this pound, given that it didn't give up that much ground in the later part of last year. This move was violent from 134 down to 124.
Seriously.
But just for reference, excuse me, going to this euro, this move from 112 down to 102 was a huge move. You might say, well, it's the same amount of points, Frank. Bigger percentage move, and 102 in the euro, given the last couple of years, is a lot different than 122 in this pound.
Exactly. It'll be interesting where the dust settles on this pound piece as well, because you look at where it's actually spent a lot of time in this area. It clustered around 130 on the way down briefly last year. But before that, in 2024, moving pretty cleanly through to the high or to the low, bouncing off of that 130 level, and it looks like last July. And so not really sure what the future is for this pound dollar, but we have historic precedent to the upside and, of course, to the downside.
Yeah, those are definitely the pieces that are moving. Like I say, again, interesting yesterday, did not really see... I mean, we saw some rallying early in the day by the commodity currencies, Aussie and Kiwi, and then they gave all of that back. But like not huge moves one way or the other.
The yen, yeah, I thought would actually blow open.
And so a little bit of relatively inside action for huge moves in equities, but today definitely starting to see some movement, and we'll see if this dollar regains some of the lost ground, not only against yen, but this Swiss franc. Obviously, we saw some selling in dollar the last couple of days as the daily chart relative to the flight to quality Swiss franc here. A little bit of a rally. We'll see if it continues with equities. Other than that, Canada trying to fight back a little bit here yesterday. This was one of the only pieces that dollar was really moving higher against yesterday, back above 144. Now trading back down close to 144. And I mean, man, this has been like a magnet for this market, this USD CAD market, going back to December. I mean, we've seen huge moves around 144, But holy smokes, we just keep coming back to it. Kind of like if we go to the daily chart on dollar yen, and you remember going back here, I mean, huge moves one way or the other in this dollar yen. But man, how many times we've traded that 150 to 155?
Right.
Starting to wonder if we're going to continue to get the volatility in this market, but it's really just going to keep coming back to that 142, 143, 144 range. If you've been on either side of it, it's been a good trade so far.
Yeah, it's still historically very high.
Yeah.
We talked about the run up at the end of last year in this market. Where will the dust settle? Right now it's looking at 144, but even during those times of Canadian dollar strength, not getting past 142. So
last piece really quick, not so much on the economic calendar today. You've got jolts, but tomorrow we'll jump into all of the news before it comes out. You've got all the U.S. inflation, and then you have a Bank of Canada interest rate decision. And maybe this is why Canada has been kind of held at bay the last several days, even amid what is perceived as negative sentiment or bearish sentiment for the U.S. dollar in a couple of different ways, is the idea that they're expected to cut again, and the Canadian economy is still. Canada isn't picking up the way the Euro area or the UK have the last couple of weeks. So we'll see about that tomorrow, but let's get into our segment for today. 10 safe haven Forex pairs for a stock market crash. I wanted to go look at the actual correlations, dig into the numbers, and make a case for what is actually safe haven right now, the last several months of trading in the Forex world, and what maybe doesn't have as much of a correlation, because these things change all the time, Glenn. And if you're reading an economics book from the 90s or the aughts or what have you, very different world that we have now. Even, we talked about it a little bit, even gold kind of trading with equities, not the same safe haven asset that we've seen in the past.
Right, and safe haven here just meaning tends to pick up increase in demand when investors are looking for more risk-off moves. A lot of those risk-on plays not panning out, kind of a flight to quality here, and we see a lot of that action take place in the currency space.
Yeah, keep that in mind, because of course this isn't a scenario of, if I have $1,000 in stocks when I am feeling, risk averse, when I feel like there's more risk in the market, I can just buy a safe haven asset and it is safe. We're talking about assets that when stocks move lower, they tend to move higher, and we're going to look at all the numbers. But if equities bounce back, those safe haven assets would probably tend to move lower. And a classic case that the correlation has actually held up recently is treasury markets.
Right.
And so if you want to look at that, you can look at 10-year or 30-year bond prices relative to the stock market. But we're looking at currencies, U.S. dollar correlation versus the S&P 500 over the last decade. Glenn, you see a mixed bag here, which in some ways is good for the Forex trader out there, that this is one of the most diversified asset classes relative to equities. Tends to have a weak relationship on the whole, Glenn, but I was actually surprised going back to the pandemic, where actually right there around 2020, you saw some of the most positive correlations between equities and the U.S. dollar, which is to say at that time, stocks sold off, U.S. dollar sold off, and then they both kind of bounced back. But in the last 2 to 3 years here, Glenn, you're actually seeing pretty consistently negative or red correlations between the two, meaning that we've seen equities move higher, U.S. dollar move lower, and vice versa. And so this U.S. dollar has been a little bit of the safe haven currency, or the safe haven part of the Forex equation, the last couple of years.
Right, yeah, I am pretty interested in the consistency over the past year. I mean, you look all the way to the right of the graph, it looked like for a second that correlation would flip positive, because just anecdotally, you try and think back the past 6 months, and you think, okay, stocks all-time highs, U.S. dollar, tremendous bull run, similar to what we saw in 2022, 2023, and that at that time correlation a lot more negative. But yeah, still holding in strong.
Yeah, and we'll take a look now because the U.S. dollar is only part of the equation here, right? Here we're looking at the U.S. dollar basket relative to the S&P, but now we'll dig into, okay, U.S. dollar and what currencies pose the greatest correlation that we've seen, and are there some currencies that the U.S. dollar is actually positively correlated, or isn't the safe haven currency relative to the stock market? Here you have the top 10 of major currencies and their correlations to the S&P 500. So you'll note that, Glenn, they're all, except for a couple that we'll get to in a second, negative, which is, again, to say that the U.S. dollar part of this is the part that is the safe haven. So if Australian dollar is negative 0.29 correlation to VIX, the U.S. dollar versus the Australian dollar is positively correlated to VIX or inversely correlated to the S&P 500. As an example, if you were looking at the U.S. dollar as a safe haven play in a risk-off equity environment, you would be selling that Australian dollar, buying U.S. dollar in this scenario. 12-month correlation data for currencies versus the U.S. dollar relative to the VIX or fear index show positive correlations for U.S. dollar to VIX. So again, if you flip to these correlations, that would be the U.S. dollar to the VIX piece. And so positive across the board. And if you're positively correlated to the VIX, that means that you're in that kind of safe haven pool, or at least you tend to rise when equities fall, or you rise when fear rises. And the strongest correlation here is that Aussie piece, followed by peso, Kiwi, and Canada not far behind. Not super surprising, right?
Right. And great visual here just to really hammer home the point that all these currencies exist on kind of a spectrum or a range, and where does U.S. dollar land in terms of risk sentiment. But what calls out to me is that none of these are particularly all that strong.
Yeah.
Negative 0.29 on a scale from +1 to -1. Not the strongest correlation we've seen across asset classes when talking about currency correlations, but definitely the standout here. And then all the way to the other side, when we talk about what are these flight to quality currencies, yen and Swiss franc always come up. And here, what do we make of this? Does this just say that on any given day, investors could choose the dollar over the yen, or are these completely uncorrelated?
I love your idea of bringing up as a spectrum, because if you use in this visual the U.S. dollar as the equalizer across all of these currencies, in my mind it's always like, well, in Forex it's a game of relativity. There's always two sides to the pair that you're trading, and so with that idea of relativity, which side of the pair is more risk on? And so here, given historical data, if the equity market was moving lower, you would expect Australian dollar to be moving lower relative to U.S. dollar. Right. Same thing with peso relative to U.S. dollar is more risk on, and thus would move with the equity market most of the time. Again, these aren't the strongest correlations, but you get to the point where yen and Swiss franc on this spectrum, actually they're more risk off than the U.S. dollar in a lot of these scenarios, and so they might tend to rise. And so we broke out the yen to VIX correlation over the last decade as well. And yeah, interesting, you're getting that kind of around zero, slightly positive number right now, because the last several months have actually been red and green at certain points. But you go back to pre-pandemic, Glenn, and yeah, this yen is correlated to the VIX month after month after month for years. So historically, the yen has been a safe haven currency. The last couple of days, we have seen that correlation kind of kick back in. And if you look the farthest point to the right, the correlation is getting greener recently. I don't know if it's going to continue that way, but the yen has been getting back to that flight to quality, that safe haven asset relative to U.S. dollar recently. We'll see if that demand does increase if fear and uncertainty, if the downside in equities continues. But as a last piece here, Glenn, I wanted to bring this up, that at the end of the day, interest rates are kind of the middleman for Forex and for equities, in that, equities are moving lower, bond prices are tending to move higher, and interest rates are moving lower. If interest rates are moving lower in the U.S., then that U.S. dollar is likely moving lower again. And here you have the correlation between the yen and the 10-year note, much greener.
Yeah, that's a great point, because when you brought up the VIX correlation, yes, more green than red, typically positively correlated. But this just calls out to me that, when we speak about currencies, you can never pin it on one thing. There are always other factors surrounding maybe a Japan-only story that doesn't have anything to do with U.S. equities. So when we say safe haven, definitely not protected against losses just going to a foreign currency.
Sure.
But then you flip to the U.S. rate play, and this much more positively correlated when we have the yen against the dollar specifically.
Well, so we'll see if this yen plays out as the safe haven asset if the stock market crash continues in the U.S. But that'll do it for today's episode. Coming up next, Tom, Tony, and Vanetta. Stay tuned, everybody. Thanks for watching. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call 2 real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks. Thank you, man. Thank you. I really appreciate it. Very kind word.
All traders are free market freaks. It's the lifeblood of risk takers. Nowadays, though, I still wonder how a productive free market economy will evolve to face the challenges of a more complex and divided world. So sure, I'm a bit concerned. In fact, as I think about the growth of digitization and AI, I know things are about to change at a pace we probably can't fathom. Regardless, one area we can all agree on is the power of decentralization to bring free markets into the future. The bullish case is that free markets will thrive when more people are empowered to participate through technological advances. Most of us also recognize the importance of sensible regulation to make sure that markets are equitable for everyone and will provide consumer confidence necessary to attract new capital. It sounds so reasonable on paper, but now come some of the challenges. Can we have a true free market when some of the megatech monopolies have a larger market cap than the GDP of most democracies? Can a free market thrive under the weight of income inequality and billionaires dominating the political machines? Can AI and quantum computing disrupt the tech backbone in a positive way to support consumer empowerment? And lastly, will the confusion around regulatory integrity be a meaningful hurdle or a showstopper? If corporate or individual fraudsters are allowed to run wild, then the importance of boundaries is meaningless. The bottom line is that free markets do not have default risk. They'll likely be around forever. But let's be careful not to mess too much with Mother Nature's ecosystem. Everybody has some level of fragility.
Come on, you know it, can you feel it? We got some things is hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hello, how are you?
Why are we literally rolling out the red carpet? What has this diva done? Who
I
is
saw
this?
that. Why do you got a little red
this
carpet?
diva?
I don't like it. They said it's
Sound?
Do we have a wide shot of the studio? They said it was sound. Yes, me lord.
And do we have to clap when you walk in?
Where are the rose petals? Wow.
What's going on?
What is going on?
I don't like it. I asked it to be removed because I think it makes the studio look ugly.
It's weird.
It's weird. It's ugly. I don't want to.
I mean, it does give it.
I don't think it helps.
It does give it like fancy strip club vibe.
We had a poll here at the end, like right here, inside, in the middle of the Tasty Live, like kind of.
Ladies and gentlemen, please welcome to the stage, Miss.
Catch one real easy
Yes.
too.
Yeah.
No,
Yeah.
Doesn't work.
I put one up in my bedroom years ago.
Lots of people did. Like pole fitness was a thing.
Yeah.
It was a legitimate thing. What's going on?
Very nice. Very nice.
So you're gonna make them take it out? I kind of like it. I mean, it's weird, but everything in this
I don't like
studio is weird.
I don't like it.
You wanted the studio to look like the men's urinal at CBGB. Like, your aesthetic.
You did it.
You did it. Congratulations.
So good.
Smell and all. Yeah, we're there.
All right, can we get to the crust of what we need to talk about today? And I need
crust
your help.
of it?
Yes, I need your help with this.
I'm gonna need to see a contract first. I don't know.
Tom has a wedding to go to in Palm Springs.
Oh my God.
And he needs a shabby, chic kind of Palm Springs, nouveau rich kind of outfit.
Ooh, yes, linen. Instantly linen, right? Very breathable, very movable, very chic.
I need breathable.
You need linen. Go with
I
linen.
told him
Like
to do Ralph Lauren purple label. You would be beautiful. Something flowing. Something flowing. I'm thinking ruffles, like ruffles.
a caftan.
Big sleeves kind of thing. A little gaudy kind of jewelry.
Yes,
Top, like
giving father of the
But
groom.
stone, not like metal or anything, like stone, because the mountains that are there and stuff like that.
Wait, just give me your credit card. I'll have this all sorted out by lunch.
Can you do it with that flowing hair and those twig lights? Oh my God, they would turn you out. Oh,
Not
Do you really have to go to a wedding in Palm Springs?
Yes.
It's your son's wedding?
Yes.
Okay, so that's a difference. Your father, like, you're gonna be in photos.
Yeah.
Like, this is a different.
Forever, for all time.
Like forever, right? Yeah.
do us a favor, stand on the end. Because if you stand on the end, they could just like kind of crop you out.
Also, what they
Case is still photoshopping hers.
usually do is they usually do the photos and don't tell me. They go, "Where were you? We were taking photos."
That's clutch move. Not gonna lie.
That's a pro move.
But that's this weekend.
No.
Oh, it's okay.
Oh, we got time.
I know what
I
it
got
is.
time.
You got time. Okay.
Yep.
But you need an outfit.
It's very casual. It's not a fancy wedding. There's no suits.
I get it.
I don't know.
You need a nice little. Come on, you know what I'm talking about.
You could do a linen pant. It's nice and like a yeah. I don't know.
Because you're all wrinkly anyway, so it would be perfect. I mean, it would be natural for you.
Yeah. I'll come up with something. All he said was,
Don't embarrass us.
"Dad, don't embarrass us. No jeans. Anything else, you're fine."
That's a high bar for you though.
I said, "Black jeans." He goes, "No,
No jeans. No. And then he sprayed you some water.
pepper spray."
Yeah. Oh man.
Oh my God.
Oh, I'm sure your wife will look stunning.
Not worried about her.
I'm
Yeah,
sure
I'm not
she
worried
will
about her
nail
either.
the brief. Right, yeah. Yes.
She'll be fine. I'm worried about me.
I can understand
So
that.
I'll figure it out.
What'd you get up to last night? What'd you do?
Nothing.
It was a crazy day yesterday. I
It
don't
was a
know.
crazy day yesterday, and I had a meeting last night after I left here. So then by the time I got home, I was tired.
Sure.
I was beat because we were out Sunday night. So, and I got to go out tonight. So
Oh no. Oh no. I don't like it
I know
when you
so,
go out.
So I didn't want to do anything last night.
I don't blame you. Eat leftovers?
What?
Did you eat leftovers?
Your hearing has gotten worse.
My hearing is 2020. Perfect. No, leftovers? What kind of leftovers?
I don't know. I just figured.
Do you know your new iPhone with AirPods can administer a hearing test? You can do it. I can show you your new iPhone. Did I say iPod? I'm sorry.
Hearing test?
Your new iPhone with AirPods can administer.
No.
It's good, but he doesn't have those pods. Other than that, he'd be fine. We could do this.
Yeah.
I'm sure we have
Why would I want to do that?
Well, just
my hearing is
to
perfect.
prove your superiority. Well, to get a certificate that you can print out and put on your fridge. I don't know.
Certificate of perfect hearing.
Yeah.
I already got that. Sorry.
Okay, well.
Thanks.
All right, that's fine. Pat, you look so spiffy today. Why are you all dressed up? Because you feeling better on the mend? Tomcatting around?
Thank you. Thank you for the compliment.
I mean, I had to look at you in sweats for like the last 2 weeks, so.
Well, thank you. No, I just wanted to up my game for you guys. You
sound better. Do you feel better?
Yeah, I still got this nagging cough. Other than that, I'm fine.
Yeah.
That's
annoying.
That's upping your game?
Yes, that's upping my game.
He looks nice. Don't be jealous.
That's all right.
Don't be a jealous Judy. He looks
Don't worry.
nice.
If you didn't have anything bad to say, it wouldn't be normal. It's fine. It's good.
I just asked if that's what upping your game.
Your name's on the door. It's okay. Don't worry about that.
You got lucky because they had tacos yesterday, so we're not having.
I know. We're doing pita, something like that.
No, JP got your paisan, JP Graziano today.
No, pita.
Really?
Yeah.
The board. Oh, maybe I read that wrong.
You read it wrong.
All right, my bad. I hate
Tacos yesterday
pita.
were actually quite delicious.
I'm not a big pita fan.
Yeah, me either.
Tacos were quite delicious yesterday.
You see, the reason why he likes it is because it's like prison food. I've said this numerous years now. If it's like prison food, he's a fan of it.
I like anything you can put in a bowl.
Right.
Yeah, that's
Yesterday
true.
was bowl.
And then people could just walk by and he can go like this.
But you don't like Chipotle though.
Chipotle is gross.
Chipotle is the best.
Used to like Chipotle.
It's gross.
Chipotle's
But yesterday
the
was
best.
actually was pretty good.
Yeah.
I give him credit.
Mm-hmm.
Today, I don't exactly remember what pita is.
Oh, I don't like it.
Oh.
It's the best.
But I'm sure it's meat off a skewer, chicken off a skewer, and
Skewer.
a little hummus. And a lot of
hummus.
And a lot of tzatziki and tahini.
Yeah, that's up your alley.
Yeah, anything with tzatziki and tahini is up my alley.
Yeah. Just real fast, can I tell you, your girl almost died on the way into work this morning. I'm fine.
I mean, you jumped off a cliff. Now you almost died?
I know, right?
Driving into work?
Yes, because, look, here I was. There's 3 lanes, right? I take the Dan Ryan before it gets into, downtown, right? So there's 3 lanes. So the right lane is, people coming on and off. Middle lane, I'm headed to downtown. Left lane goes to the Chinatown feeder, goes to Lakeshore Drive.
You couldn't get over.
No, I'm in the middle lane because I'm coming to downtown, so I'm the lane I need to be in. There's a white, one of those commercial work trucks, like someone's business truck.
Yeah.
Just
like the ones with no windows on it.
Yeah, no, but the truck, so it's got a bed in.
He cut you off.
Not even to cut out. It's not even a merge at that point. Everyone's just in their lanes, but he just comes over, and I was just literally just minding my business, singing Taylor Swift to myself. I did something bad. I'm like, oh my God. And so I was like, what would Vin Diesel do? Because if I panic too much, I'm going to go into the right lane, and smack that person. So I gently, hit the clutch, hit the nitrous. No, I'm just kidding. No, I gently hit the brake, but we had to do a dance like this where he was just coming over and I was trying to slow down, move over. And people were honking on my behalf. And I honked so hard. Do you ever honk so hard you rearrange your navigation screen on your own car? I was just honking and I'm like, oh my God. And then he just went all the way over. And then I was just someone was with me. So, but that's frightening. You're literally, this wasn't, that's been aggressive and, it's cut people off,
Mm-hmm.
gotten into a fist fight on the...
With all due respect, 2 of you guys, both of you.
We're not the driver that you are.
No.
But how is that my fault?
Of course, Mr. McGee.
If I'm literally just in my lane, I'm not even trying to, and he just comes all the way over?
I don't know.
How is that my fault?
It's your fault.
I don't know. But I'm sure... I've been with Tony. He thinks things aren't his fault. I've driven with you, and you think things are your fault. But
that was years ago. That was when she was a new driver. We did that. Now she's a...
You wanna bet who probably pays the lowest insurance in this room?
skewed against men. That's why.
Yeah.
No, you don't
Also,
talk
you guys are
you talk
elderly.
about quality and pay and all that other stuff. You don't talk about us paying more in insurance.
Also, you guys are elderly.
I'm the only one in this room that's never been in an accident.
That you've reported. See, I report my accidents. You don't report your
You
accidents.
don't report your accidents. Other people report your
They
accidents.
hit me. There was nothing I could do. They hit me. I was standing still. They hit me.
I've heard this story.
Okay?
Okay, that's your version.
You're the only one in this room that's ever run yourself over.
That's true. That's true.
Classic.
That's true. You're the only one that had to sue your own property insurance because you backed your car up into the garage.
Oh, yeah.
Didn't sue anybody.
You're the only one who's had their mirror kicked off by an angry cyclist.
That's true.
This is fun.
Forgot about that.
You're the only one who, left an envelope full of cash and a note on someone's car that you sideswiped?
No, I found that person.
Okay, but you sideswipe someone's. Again, like the examples are just given. Like, we're not making this up. Like, if you're new to the show, like, these are true Tom lore.
Yeah.
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 Anyway, something that is not fictitious is today's schedule. We got a great show for you today. It's a terrific Tuesday here at Tasty Live. Look, I got to tell you, I got to be honest. This daylight saving is kicking my butt.
Oh, I blame the market sell-off yesterday on it.
Yeah, you know what? Sunday I was tired. I'm never usually tired from that. It's weird.
Yeah,
Sweetie, you're 70.
Circadian rhythm, what did you call it?
Circadian rhythms. Yeah, your circadian rhythms are off.
No, I just got up really early in the morning and I was like,
I sat in front of my happy light this morning.
what?
You have a happy light?
Mm-hmm. How do you think I get here?
Hold on. What is a happy light?
If I
sounds like?
seasonal affective disorder, right? Like, so you just like, it's dark here in the winter, so you
live
can
in
buy
this
a
world?
light.
Like, I mean, are you just visiting? Like, what do you come from?
So you can buy a light.
Happy light?
Yeah, you can buy a light on Amazon and you sit in front of it. I sit in
China.
front of it when I put my makeup on, and it helps, I don't know, my brain, my circadian rhythms. And so, but I hadn't been using it because it's been sunny, like it's been getting like early, like, because then the time switch or whatever. But they recommend, now to get back on track, if you have a light that you can sit in front of, to sit in front of it.
Thank God I don't need makeup.
Oh, girl. Anyway, but we got a great show for you today. The top of the 8 o'clock hour, we got an options jive, finding break evens. Then 8:40.
Finding the English language.
And then at 8:40,
Nemo.
Finding language English.
8:40, a special guest this morning. We got Ryan Grace in the house talking about crypto. He's coming on at 8:40 today. There's a lot that's been going on in the world of digital assets and the permissions and the regulations and just everything. So
Big
Ryan's going
move
to be
last
on.
night, $6,000 in crypto.
Oh my goodness.
Yeah, I'm sure there's a lot to talk about.
Then 9 a.m. market measures, time decay versus volatility in short premium returns. So I think those are things that are very topical right now because we're experiencing just a smidge of volatility. And then around 9:30, we got big boy Scott Sheridan counting down the top trending tickers over at Tasty Trade. So that's always going to be fun. And because Jenny is on vacation, Liz. No?
James is here.
What?
Did you say James?
Liz.
Oh, I'm sorry.
Jenny's on vacation.
Grandpa. Listen.
Jenny's on vacation. Liz will be joined by Tony from Mexico. So if you're a fan of Tony from Mexico, why are you laughing?
You'll see him on our follow page, too. That's right.
Not laughing.
Yes. So,
follow.
hola, Tony from Mexico.
Hola, Uncle Tony.
Hola, Tio Tony. Right? Tio is uncle in Spanish.
Flaco Tony.
He's skinny.
I don't know. I just
Gordita?
say Flaco.
I like to say gordita. Hey, that's our run of show today. You guys want your daily dose? I got a lot of news.
Sure.
Here is my theme music. Let's go.
Our leading story. Breaking news.
Today's headlines.
Across the wire. Our
This
leading story.
just in.
Top stories. Just in.
Today's headlines. This just in.
Breaking news.
Breaking news.
All right, everybody. Today's a terrific Tuesday. It is March the 11th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
No.
Okay. The U.S. stock market lost $4 trillion in value yesterday. that seems bonkers to me.
Oh, obviously it's not that much because we got a lot of trillions.
Yeah, that's a lot. I mean,
Still have some trillions left.
Yeah.
The benchmark S&P fell 2.7%, its biggest daily drop of the year. NASDAQ Composite slid 4%, its largest one-day decline since September of 2022. And the S&P 500 closed down 8.6% from its February record high. What are you doing in the indices, I guess, relative?
We were pretty flat this morning. No deltas.
Okay. How did that happen?
Sucking wind on some of them, though. Not gonna
Yeah.
How did it happen? I mean, this market, when you get 2% moves, it will eat up your delta either way. So
Yep.
we could probably use a little bit of a rally because we could use volatility lower for sure.
You play for cyclical markets, right? We had a 1
I
week.
mean, volatility was down 50 cents this morning. It's like unchanged now. But SPOOs were down pretty big last night at one point.
My Taiwanese sources told me yesterday, talking about volatility of the S&P 500, 419 had higher vol. Only 26 had lower vol. The rest had.
Oh, yeah, sure.
So volatility expanding and continues to expand.
Yeah.
It's down small this morning. Forward/VX down 15 cents, but nothing moved.
Hey, in other news, a closely watched crop report due today will take existing trade tariffs into account as part of global forecasts for the world's corn, soybeans, and other farm products. We never talk about the WASD. I know you love the farm report, but I did want to talk about the softs. And did they get hit as hard as equities yesterday?
No.
Okay. What are you doing in the softs?
We have positions on all three: corn, wheat, and soybeans.
Corn's had the craziest move. Corn had like a 2-week run there where it didn't have an uptick, and now it's had a week where it hasn't had a downtick.
Huh.
Hasn't gone back to its highs of 510. It's 474 and change, but it's had a nice bounce off of its lows. Wheat and soybeans are kind of.
I've had positions on there all year with zero delta, and honestly, I don't think I made a dime. I'll tell you right now.
Okay, you tell us right now.
I'm curious if I made. It's so hard to make money in there.
Even with high IV ranks in there now and volatility that's almost twice as much as what it normally is. I mean, if I asked you, like, what do you think corn or wheat or soybeans monthly volatility is, what would you say? Just without really.
What their volatility is? Or?
Yeah, monthly implied volatility in the options.
Ooh, I don't know. Probably 20, 25 in there.
It's exactly what it is, 20, 25. Usually more in the teens or a little bit lower.
So,
and to be fair, Tom, it's only been 10 weeks. Like, don't beat yourself up.
So wheat, we're up money in this year. Soybeans were up money. And corn, I take that back. Corn, where are you, corn? Corn, we're down money. Soybeans were unchanged, and wheat were up money. So it's been just a complete, and I've had no delta, like no opinion.
Right, yeah.
Just taking some short premium trades, and that's it. And no bueno yet.
No bueno.
Mm-hmm.
Hey, the yen was investors' safe harbor of choice yesterday, and it traded near 5-month highs as fears about a tariff-driven slowdown of U.S. growth have rattled U.S. stocks, and along with it, the U.S. dollar. Let's talk currencies. Don't make that head motion
the yen
at
really
me.
hasn't. The yen's been sitting at like right around 68. It hasn't.
Nah, it's not.
Bigger story. I mean,
it started the year around 63.
No,
It's
that's
had a nice
start of the year, but I'm saying lately it's been sitting around the same price. The biggest mover has been the euro.
The euro, yes. Sacre bleu.
Euro has had a big move. It continues its rally today. I think it's up small.
No, it's up pretty big.
Oh, yeah, you're right. 7.5 cents. Yeah. Yep, you're right. Started the year closer to 103. It's 109.
JP Morgan joins Goldman, and they hike Euro area's 2025 economic growth forecast, talking about the euro. Similar to Goldman, JP Morgan expects growth in the region to increase by 0.1 of a percentage point to 0.8% for 2026. European defense stocks are looking strong. Germany just radicalized the way they're allowed to allocate money in their economy. Europe is back, baby.
Correlation of 0.61 in JP Morgan. Been following the market as of late. It's up small, about $1 this morning. It's taken it from 280 down to 232. So
an interesting story. A European satellite company, Utelestat, is kind of become like a little meme stock because they're like, we're going to challenge Musk's Starlink, and so that stock's been trading like a GameStop.
We're going to do that at Tasty Live too. We're going to challenge somebody soon.
In commodity news, oil prices edge lower as concerns over tariff impact grow. Brent futures fell 29 cents or 42% to 68.99. What about oil?
It's up a little this morning, nothing.
It is up about 87 cents or so. I mean, it's a little over 1% move, but you're right. Oil's come down from, I don't know, near the beginning of the year it was in the 70 handle, 77 and change. Now it's 66. So it's down around 10, 11 bucks so far this year.
Here's something interesting. Freeport McMoran, FCX, hopes that President Trump declares copper to be a critical mineral. If he does that, that would unlock tax credits that would be needed to boost American production of copper to offset global rivals. I didn't know that this was a thing, but it's something that they are hoping for. You don't really trade a ton of copper, but you can trade FCX.
Freeport McMoran.
It's McMoran. It's hard to say. I'm sorry, I butchered that.
1983 has been trying to come up with something that makes their stock go higher. First was going to be a gold play when gold was going higher in the night. You know, I mean, like everything. This stock just does not go anywhere. Good IV rank at 96. It's on but 34 bucks.
Ugh. Do you have a trade in there or no? You don't.
They've been trying to be relevant forever.
Forever. Hey, made in the USA. Lumber producers have migrated from Canada to the U.S. South. Now, lumber futures trading is heading to southern pineries as well. I didn't know that was a word. Pineries. The exchange operator CME said it's going to launch trading in a southern yellow pine futures. Oh, that sounds so good coming off the tongue there. A southern yellow pine. No? Okay. Starting March 31st, do you want to trade a southern yellow pine?
I don't think we'll be offering this on the platform.
Why?
Why?
It's at the CME. It's not at the ICE.
Why?
CMEs, those are your buddies.
Because nobody's going to trade pine yellow lumber futures.
Let me see. Do your southern accent. And that's southern yellow pine.
I don't think anybody's going to trade this. So, no, we're not going to be offering.
All right. Hey, the EU worries that America's embrace of crypto assets could impact Europe's financial stability. The Eurozone finance ministers are worried that the change of policy under the new U.S. administration to embrace crypto could affect Eurozone monetary sovereignty and financial stability. Are these valid concerns?
No.
Okay. What's crypto doing? And we have crypto expert from Tasty Crypto, Ryan Grayson at 840. But
right.
what's crypto doing?
It's up about 3,000 right now. I'm talking about the futures trading just under 82,000. But like I said, big range, almost a little over $6,000, just under $6,000 last night.
Well, maybe you can ask Ryan about this. The cryptocurrency exchange Kraken, release the Kraken, is preparing for an IPO next year, expected to take place in Q1 of 2026, and comes amid the Trump administration's pro stance on digital assets. What do you think of a Kraken IPO?
A, I like their logo, and B, I like Kraken.
Okay.
They're pretty decent.
The logo looks a little Pac-Man-ish, don't you think?
Are they a challenger directly then to Coinbase? Like that would be their biggest, like, I don't know.
Yeah.
Okay. What's Coinbase doing? Check on that.
So is the Kraken logo, is that thing that you always show us sometimes? You say it's like a dead one. Right, there you go. Yeah.
What's this? A dead this?
That's correct.
Kraken is, I'd say they're a Coinbase competitor.
What's Coinbase doing?
I like Kraken. I've never used their platform, but
Sure.
I've only heard good things about them.
Well, things are easier, so it
Most of the
seems.
crypto stocks are higher. Coin's higher by around $7 or so.
Good job.
We have seven.
Hey, getting into some of the earnings shenanigans from last night. Oracle missed on earnings and issued weak revenue guidance. Their fiscal third quarter results missed analyst expectations. The company's cloud infrastructure segment has been booming due to demand for computing power that can support AI, but Oracle said revenue in their cloud unit increased 49%, but they did offer weak guidance. Revenue came in $14.13 billion. Also, dropped the skincare routine. Larry Ellison looking good, honey.
Yeah, look at
He's like 85. He looks good.
Yeah.
I'm just saying.
He ages like the bat.
That picture's like 15 years old.
Oracle.
Ooh, you jealous?
Just under 147, down about $2, 250 possibly.
Delta Airlines slashed their earnings outlook on weaker U.S. demand, sending those shares lower. Delta cut their first quarter profit and sales forecast, and they maintained their full year outlook. They noted that both corporate and leisure bookings were down. Doesn't ever leave the airport, Delta.
Delta lower by around $2 or so. Love higher by around $2.50 or so. So there you go. I told you, my sister said she's long around 30. It's $30.75 now. Good for her. Oof.
Hey, fintech stocks got rocked yesterday as Wall Street worries about consumer spending and credit. I thought it was interesting. Stocks like Affirm and Shopify were down pretty big yesterday, as well as Coinbase. I wouldn't think to lump all of those together. I think the market was just down broadly, and this author needed something to write about. But I did want to talk about fintech stocks, I guess.
Sad enough, Love is going to start charging for bags and stuff like that. Only select customers. Do you think you'll be one of those customers that will get free bags?
Love is starting to charge for bags.
Mm-hmm.
That's
and they're going to get rid of the whole kind of ABC thing.
No, wait, that's seating.
What's that?
That's their seating policy, which is different than their bag.
Oh no, they're getting rid of the seating policy.
They're just not going to be Southwest Airlines anymore.
They're not going to be Southwest Airlines anymore. That is correct. That's what I'm reading here.
Oh man. Man, that sucks. Tom, anything in fintech? I feel like I'm talking to myself. Hello? Papa, can you hear me?
What do you want to know?
Papa, can you see me? Fintech stocks like Affirm, Shopify, Coinbase, things like in that nature. Or talk about the Russell. Whatever you want to talk about.
I mean, yeah, I think fintech stocks got hit yesterday, but I would think it would...
Oh, MSTR too. MicroStrategy. We didn't talk about that.
I thought the fintech stocks...
Which is actually now just strategy.
I thought the fintech stocks that got hurt the worst were everything related to crypto.
Okay, yeah, that's what his strategy, Coinbase, Hood, maybe.
Yeah. I think those were the stocks that got hurt the worst. I think
What do you think caused that? And maybe you could talk about that with Ryan, who's coming in at 8:40 today.
I mean, what caused it was that the market got crushed, and Bitcoin got crushed too. I don't know. Would I call Affirm a fintech stock? I'm not sure.
I mean, it's based on consumer spending and consumers' ability to spend.
Yeah, I don't call banks fintech. Mm-hmm. So
I didn't name the banks. I mean, I did ask about the Russell, but
I know, but I consider Affirm and Klarna and those things more of almost like a bank.
Okay, but they're a financial tech firm.
Yeah, nah. Not for me.
I love it when you go out multiple nights. Yeah, it's super fun.
And the time change.
Having the best time.
All hours of the night.
I know.
It wouldn't affect him as much.
He did say before the show started that he forgot his supplements and his vitamins this morning. So.
Yeah. Oh, you have special pills?
You need turmeric, girl. You need ashwagandha.
Is that the...
No, ashwagandha. No, it makes you mellow. It'll calm you down. No, I'm being sincere. It's it's nice. It's
What's
good.
the TikTok pill all you kids are taking now? What's that one? Come on.
Ashwagandha?
Hey, here's something interesting. Doge chief Elon Musk says that he is running his businesses with great difficulty. No shit, Sherlock. His shares of his automotive firm Tesla suffered their worst drop in half a decade last week. One of his SpaceX rockets exploded, diverting traffic from major Florida airports. Another rocket explosion occurred in December. SpaceX was under federal investigation, but then that investigation went away. That's fun. But no, sincerely, how can you run this government efficiency program? How can you run SpaceX? How can you run Tesla? Twitter suffered a massive cyber attack yesterday. Was down for hours.
Yep.
Matt didn't know what to do, where to get his ideas
I couldn't get
from.
my news. I couldn't figure out when to buy the dip or anything.
Yeah.
It was horrible.
But all sincerity, whether you love him or hate it, how can one person be expected to do all of these things?
Take a step back for a quick
Also, impregnating women, tweeting all the time.
Take a step back for a second and look no further than Tom. He runs a coffee shop, and he comes here in the morning. He's going to be walking people down the aisle. I mean, he does multiple things. It's not that hard. There's plenty of hours in the day if you want to find the time.
No, but real talk, the Tesla literally taking it on the chin, sales down globally. What are you doing in Tesla? What can be done? Is it oversold?
Tesla cut in half, up about a buck and a half this morning, but
sales are not down in Tesla because Elon has running different businesses. Sales are down in Tesla because Elon's being Elon. There's a big difference.
Well, be that as it may, but if you're a shareholder, it's still a valid concern about his where he's focusing his attention and time.
If you're a shareholder of Tesla, you have every right to be pissed.
Never fade a superstar.
Oh,
You have
okay.
every right to be pissed.
So you're buying calls here in Tesla?
I'm long Delta just because the stock is down 50%. I mean, you know.
That's a whole different reason. That's a whole different reason.
Right? Yeah.
I sold premium in there yesterday because the IV rank got to 150.
Yes.
150?
Yes. We'll see what it looks like this morning. Can't wait for it to open, to be
Oh
honest.
my goodness gracious.
Stock's like up $1.
Yep.
Oh my goodness
But
gracious.
the stock, but amazing. The IV rank got up to 150.
CoreWeave, which is looking to IPO, the AI startup backed by NVIDIA, has signed a 5-year contract worth around $12 billion with OpenAI ahead of their hotly anticipated IPO. As part of the pact, CoreWeave will provide AI infrastructure to OpenAI. Thoughts?
I don't know enough about CoreWeave, honestly, but I have no idea.
Tech stocks, it seems like this sort of market reawakening is heavily impacting AI stocks. Let's talk about that for a little
There's no
bit.
question the AI stocks have taken a hit. I'm not sure what NVIDIA's...
Isn't it amazing how, like, you know, the stocks to get all the attention in the news all of a sudden always go to extremes on both sides? Is what we
It's
try to
amazing.
talk about.
It's always an extreme.
Yep.
I bought a little NVIDIA yesterday.
It's unchanged this morning.
Yeah, I thought it would be higher this morning. Yeah, I'm still confused by...
I use ChatGPT, not a lot, but I use it.
I used it last weekend. I use it too.
Yeah.
And I think it's super cool. And some of the new ones, even...
I mean, I hate Google search, right? Like trying to find an answer to a question is maddening to me on Google, and that's been
There is
frustrating. I wish you could turn AI off.
doubt about it that asking AI questions is incredibly helpful. But I still haven't figured out how companies are going to monetize this, you know, ourselves included, other than, okay, here, we'll get you your answer faster.
Mm-hmm.
But how we're going to monetize that? I mean, you're not going to charge for support, you know? Like, how are companies going to really... I have my
But they're saying that what you could pay OpenAI $20,000 a month, and you could get either a PhD level candidate or like a level 6 coder, basically.
Okay.
So $20,000, like
I
is
have
that?
no doubt that is reasonably correct. And based on what I've seen so far on some of the stuff that we've been working on, I believe that to be the case. Again, though, you still have to figure out how to monetize that. It's not like you can't
just do advertisement.
Right, not everyone can pay $20,000 a month.
And
Like,
not everyone, even if you could hire, just as an example, even if you could replace a $10,000 a month coder with an AI $10,000 a month coder, somebody's still got to check all the work.
Sure, yeah,
So it's not like it's not quite as simple.
yeah. It's just interesting. Anything else in the chips out, like Microsoft? Not sure what Microsoft was doing. If that got obviously it got rocked.
I mean,
yesterday,
all these
but-
stocks are like
I know.
they're
Microsoft's
Microsoft's
actually unchained, maybe up 20, 30 cents.
They're all kind of unchanged. I thought they would be stronger this morning. Like I thought Nvidia would be up to like.
That's a sector rotation. I think it's.
I bought SPOOs last night. Just
you bought what?
I bought S&Ps.
Oh, I actually saw that, but you did it at 6 o'clock at night. I mean, I couldn't post it for you.
No, I don't care about that. I'm just saying I just bought them and I still, just
You made 40, 50 handles on it.
50 handles, yeah.
Yeah.
But I'm like,
where are the bagels and donuts?
Yeah.
but when I bought them, I'm like, I'm not looking at these. Like I didn't care until this morning. Wherever they are. Because you know what? After I'm like, I don't know. We'll see.
Mortgage lender Rocket Companies has agreed to acquire online real estate brokerage Redfin in an all-stock deal valued at $1.75 billion. The transaction announced yesterday gives one of the nation's largest mortgage lenders an in-house network of more than 2,000 real estate agents. And of course, the government doesn't care anymore now, so this will probably sail right through. So RKT is Rocket. And then Redfin, RDFN is Redfin.
Is it Rocket?
RKT?
We used to trade a long time ago.
$13 and change.
I was going to say, it was around $13.
There again.
That's your boy Dan Gilbert.
Yeah.
Yeah.
Got as high as 20, got as low as 10. It's $13 and change, where it looks like it's mean is.
It's like in a hostage situation.
Remember the guy Thad who used to come into be on bootstrapping from Chicago-based real estate company.
Oh,
Which one is it?
Guaranteed?
No, not guaranteed. That's
ones that have
guaranteed rate, not guaranteed rate.
Yeah.
Chicago-based real estate company. I can't think of the name. Anyway,
I don't remember.
they got
Ed
bought
Wong?
Yeah.
From
they got bought out.
I don't know what you're talking about.
one that had all the pretty models as real estate agents.
Again,
he was on.
I mean, I love shows.
Give me the one of the biggest ones at Property.
At Properties.
At
Yeah.
Properties. So they got bought out. Did you see that?
Yeah.
I mean, I like shows
saw it?
about sexy
Yeah, I saw it,
realtors.
yeah.
That's my favorite thing.
Yep.
Anything in Redfin, RDFN, or RKT?
We've
No?
never traded it. We used to trade RKT, but it's been about 2-3 years.
Would have an impact on Zillow. So you could track Z, which is Zillow. Don't blink at me like that.
Don't really.
Zillow $72 and change. I look at the markets in Zillow. They're not bad. 10, 15 cents.
Zillow is one stock that I think that will benefit from AI.
Okay. Oh, that's
Like if
interesting.
you're thinking about stocks that could benefit, Zillow is the stock that benefit.
Sure.
Because
Yeah, you can write descriptions of houses and like stuff like that with.
No, I mean, it
using-
can search for houses.
I see.
Prices could
fast.
get better.
Oh, yeah.
I mean,
Sure.
Yeah.
Hey, here's something interesting. Mr. Beast, the world's biggest YouTube star, his real money maker is not creating viral videos with stunts and large cash prizes. It's selling chocolate.
Chocolate?
Mr. Beast's company,
Horrible.
Beast
Is it
Industries,
really?
Bad.
is the majority owner of Feastables. It's a chocolate business that generated sales of $250 million last year and a profit of more than $20 million. Jimmy Donaldson,
They
the
use
young
cheap
star.
product. I've had it. It's horrible. Then he was on this guy, Mr. Beast, when he was
Yeah, he does hamburgers. He does
What kind
the
of chocolate do they sell?
Beast.
regular chocolate, like chocolate candy bars.
So Tom, you should get
$250
into.
million of revenue. They only make $20 million.
Again, I don't know all of their financials, but
They're
yeah,
not using it on
that's
product.
yeah. I don't know.
He looks like a grifter.
His teeth weird me out. I don't know. What's Google doing? Google owns YouTube. We haven't talked about Google.
Oh, I
today,
can do
so-
Google. I haven't
Yeah.
looked at
We
Google
haven't
this
looked at
morning.
Google today. Poor
Google.
Google.
Trading 165 and change, unchanged, maybe even down 50 cents right now. Even the S&P is only up 6. Volatility basically unchanged, down 10 cents.
Yeah, you'd think the market would have a little more of a bounce back than this one.
This is the greatest story I have ever heard. Houston, Texas resident Davis Liu is a software developer. And, some of us in our jobs, not me, because I love it here and this is the best job ever, but sometimes people fantasize about ways to quit, right? They think about going out in a flame of glory and, double birds or going with a mariachi band or final countdown. Not that I've thought about this at all, because again, I love it here. But some people have thought about ways to, what they're going to do when they
You're
finally
scaring
quit.
the children.
But this guy, Houston, Texas resident Davis Liu, basically initiated a kill switch into his company's software. So the bot would scan the active employee directory, and if at any time his name was removed from being an active employee, it would detonate like the whole system. Everyone got locked out. They couldn't use their passwords. He deleted parts of the system. Anyway, he's going to jail, but
Good.
slow clap to him.
No.
because-
Flat. I mean,
That's prick should
terrorism
go to
right
jail.
there.
Yeah. He should go to
Actually, that's why he got fired, because he wasn't doing his work and he was doing this.
No, this
instead.
is awesome,
I didn't
dude.
have time to build
No.
all that. You
That
could
guy
build
should-
something great for the
Awesome.
company.
That guy should be in jail.
This is awesome. Real men of genius. Anyway, but yeah, he's going to jail. Hey, Yankees' worst fears are now confirmed. Garrett Cole needs Tommy John surgery. And are you neurospicy? And do you read this headline and you just say, these are all first names, Garrett, Cole, Tom, and John? Why? What's going on there? No? Okay. Garrett Cole needs Tommy John surgery. He's going to miss the 2025 season. Are you sad about this?
I don't really care about the Yankees. I'm sad for Garrett Cole, but
How come
remember
they
Tommy
didn't
John?
know
you
beforehand?
remember Tommy John?
No, he's a
say
real
no
person.
way.
Yeah.
Is he related
Oh,
to
yeah.
Is he related to Papa John?
No.
No, Papa John.
Tommy John was the pitcher.
Yep.
What year
He
was
was the
this?
first one to have this surgery.
He was the
which
pitcher
was
for the
life
Dodgers mostly.
Changing.
Okay, what year was this, sweetie?
I don't remember. Probably sometime in the 70s, maybe early 80s.
Why would I know this? Even using my legitimate age, not my show age, I would not have known that.
Tommy John. I just figured you would have put two and two together.
No, but
How many years after surgery? Now, he had that surgery that had never been performed really before.
but how come they didn't name it after the surgeon?
Yeah, no,
He came back and pitched after he had the surgery.
Yep. How many years after that do you think he pitched?
Probably a while. Maybe, yeah.
It was a long time.
Yeah.
Over a decade, 14 years.
Really?
Wow.
Because what years did he pitch? I don't remember.
I don't know. He came back from surgery in 76. So.
Okay. So it gave him a lot of different pitches.
76. Why would I have known that?
He actually recorded more wins after surgery than prior in his
I'm just letting you know that there was a real Tommy John.
Okay, that's cool, and I'm glad he's okay.
63 to 89.
Wow.
Yep. Think about that. Unbelievable.
That is unbelievable.
63 to 89.
Yeah, more years than you've been on the show. That's right.
That's crazy.
That's impressive.
Yeah.
Also, Bears making moves in free
Bears
agency.
making moves.
Second
We're going to the
highest
Super Bowl.
paid center. We got the
We
center.
are going to the
We're
Super Bowl.
stacking
They're
our
doing some good
O-line.
things.
We're making moves like spin,
Yeah.
baby, spin. Let's
They're
go.
still 7.5 in Vegas.
They're still 7.5.
Are they?
I think so.
All right.
Is that up
well.
from 6.5?
I don't know.
Oh.
But it was so bad that Twitter was down, and people are like, "Twitter, you cannot go down in NFL free agency."
Yesterday was if you're an NFL fan, yesterday was a great day.
Tom, you have expressed remorse that you were not able to
Play
get back
professional
to your
football?
get back to to be a white cornerback. You want to be the next Cooper DeJean?
Yeah.
To get back to your spring skiing.
Yes.
Because you found skiing last year. You went, I think, twice last year.
You found it.
But you think you're the coolest guy on the mountain, and then this guy shows up. Watch this. Look at this little pupper. Oh, it's so cute. This is just for Oh, we don't have video in here.
Coming.
It's coming.
Stare at this red screen for a moment.
John?
Oh, it left. Oh, here,
You know what?
let me fix
Chicken
that.
butt.
Where's John when you need him?
Give us a second. We're calling John. We got it.
Timing is everything, Beth. You know why I got to blame this on James a little bit too.
I mean, you kind of.
James came back. It's his first day. That's
I mean,
what
you
it
just
is.
ruined
Nobody's
all the
safe
excitement.
here.
Unmedicated boomers.
where's
Be
this
nice
dog
to
in red?
production. Be nice to production.
Everything's gonna be okay.
I still don't see it.
Oh man.
I'll play it for you on my phone later.
We got it.
Wow. Wow.
Doesn't sound like it.
Just wait for
That's
the
what you
drop.
get for stealing my water, Beth.
All right, let's go. Let's see what you got.
Mm-hmm. Almost. There we go.
Wait for the drop.
Pizza! Chicken pizza!
See, this dog does not look happy right now.
Yeah, that dog's not happy.
That dog does
She's
not.
happy!
It does not look
No.
happy. That looks like dog torture to me.
No,
That's
she's
dog
happy.
torture.
A
I
little
agree.
pupper on the
I
ski.
agree.
She knows how to pizza instead of French fry. Anyway,
Dogs like to run around the snow. They don't like to ski.
Yeah. Yeah.
I think.
I do think that one
I
dog.
can't believe you showed
I,
that, but
I think that one dog on the skateboard likes it.
The bulldog.
A bulldog on the
Yeah,
skateboard.
yeah,
He likes it.
He likes it.
But
What
I
about the
don't-
one on the surfboard?
They probably like it too. But the skiing thing, I don't think they'll.
Okay, all right, duly noted. Bet, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live. Confirm and send next. That's right, Sal. I'll be back in 90 seconds with Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Now, don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. If you didn't know that, I don't have any idea why you're watching.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it.
See that? We knew it.
Pretty good.
Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around 80...
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983, yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him as a charity case. The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Sosnoff, 100-point range on the E-mini S&P. It's just rounding here from 56.50 down to 55.50. We're completely unchanged, actually down 3. We're up around 15, 20 handles earlier this morning. We came on the show about 48 minutes ago. NASDAQ down 4, unchanged. Russell up 11, unchanged. And the Dow down 27. Volatility unchanged. Bonds unchanged, down 1 tick. Bitcoin a little higher by $2,500, 81,500. We were talking about 82,000 a moment ago. Oil up 71 cents. It too had a nice range last night of a little over $1.60 or so. It is trading at 66.74, the higher end of its range. Gold back to its winning ways, up $20 after 3 or 4 days of downturn. Silver up 42 cents. It too is taking back its losses from the last a couple of days. Oh, there's palladium, Sosnoff. You may know it as platinum. 878 and change, up $11 and change. Corn, wheat, and soybeans, a little bit of a mixed bag of tricks. Oracle for earnings last night is the only one that we really had. Oracle 146 and change, down around $2.80. That's all I got, Sosnoff. What do you think for today? Significantly lower last night. Higher this morning, $100 range. That was the week range just a couple of days ago. We're getting them daily now. Volatility completely unchanged.
I'm thinking that they have a couple of. I think that they test the lows from yesterday, which is, I don't remember exactly what the low was, but it had to be about $50 lower. 50 handles lower or something like that?
Lows from yesterday were around near the lows from last night, 55.70.
Okay, 55.70.
55.60 last night.
55.70, 55.60, 55.80, somewhere in there.
Mm-hmm.
And then I think they closed the day higher.
Okie dokie.
It's Tuesday, March 11th. I'm Tom Sosnoff. He's Tony Batista. Thanks for spending your morning with us. Let's see, confirm and send. Emails that came into us yesterday. Busy yesterday. Busy day. Is there a level at which intraday movement in the S&P causes you to take a step back and reevaluate things?
I mean, every day the market makes me reevaluate things and my choices in life. I remember when one of my kids told me when Vinny was going to be born, that was your life decision. I mean, I make life decisions every day here. So I don't know. I mean, there's no real number, all kidding aside. But when we start moving outside the expected move, I certainly take a bigger look at what I'm doing. Sure. When things are going well, meaning inside the expected move, it's what it's supposed to do.
I mean, I'm going to simplify this for you because it essentially every time you get outside of like a 1% move intraday. So right now the SPs are 5,600. So anytime you have a move of over 50, 55, 60 points and you're outside of a 1% move, it causes you to take a step back and think about things. And yesterday at one point, we had almost 3 to 4 times that big a move.
Yeah.
So you definitely take a step back and you think about things before you jump right in. But if you're inside of that kind of that 1% move or essentially that 1 standard deviation move, then you're okay. You don't really have to take a step back. If you get outside that,
it is who we thought they were.
Yeah, if you get outside that a little bit, you kind of that's only going to happen 20% of the time or whatever the actual number is. It's close to that. And you got to just take a step back and think, okay, is there something going on here? Am I missing something? Should I wait until later in the day? That kind of thing.
Yep.
Let's go next slide. So I say 1%. Maybe I'm looking too deep into a shallow pool, but for the last month, the VIX has been elevated, likely due to market uncertainty driven by U.S. politics. If an elevated VIX brings greater opportunity, then why am I finding the trading recently to be so difficult?
Because you're on the wrong side of the market, probably with your delta. I mean, it's so funny. I mean, I get a bunch of emails every day here, and a lot of them are, listen, I put on a trade that worked immediately because I was short the market, whether it be a credit spread or just selling naked calls or buying put spreads, and they're loving the action. And then you get the other side where they're looking to try to buy the dip a little bit, and we haven't had a bounce back in the market, and they're struggling. I mean, that's what makes markets. So it's got to be the direction. Even delta neutral hasn't been a good direction in this market because we've been lower.
It's you get in situations like we've been in the last week or 2 weeks, and with the heightened implied volatility, the market kind of selling off pretty decent. We haven't had a good 10% sell-off in a while, and it doesn't matter if it's U.S. politics or whatever is driving it. Who cares? What an elevated VIX does bring greater opportunity, but it also brings, like yesterday, like I was so ready for yesterday, and I still lost money. So because the volatility just increased too much, and I couldn't defend.
Yeah, you could get in front of it, right?
I couldn't defend it.
Yep.
So there are just some days, and this is part of trading. There are some days when the market wins. There are a lot of days when the market wins. There are a lot of days when the market wins. We just have to win more days than the market.
Correct.
And but there are some days the market wins. Yesterday was one of those days. Yesterday was really difficult. Let's go next slide. I've been getting more active with 0DT using SPX iron condors. I've been closing my positions at 20 to 25% of the credit received. My question is, why not hold to expiration and collect the entire credit or just take a loss? I'm sure if I held to expiration, I would have some losers, but we'll also have many winners where I collect the entire credit. Thoughts on this? Am I missing something in the tastylive research?
Yeah, how come you can't get, how come you're not happy? Like think about this. You're getting 20, 25%. How come you're not happy? Why you got to push the envelope? I mean, listen, we've done the research. If you hold pretty much to expiration on these over time, it looked like it was a zero-sum game where you're basically a little bit behind the 8 ball here. So take your credits and run. Nice job out of you. You found something that works for you. Keep doing it and keep doing it until it doesn't work. And even when it doesn't work, try it a couple more times because it sounds like you got something good here. Stick with it.
Yeah, I mean, well, first of all, our research is really clear on this. If you take profits at 20 to 25%, you make money over time. If you let it go to the end of the day, you lose money over time.
Yep.
That's all there is. That's what you need to take away from this. There is no, we have not been able to determine that you can have success selling 0DT SPX iron condors where you put them on in the morning and you let them expire, where you actually net make money. But we have plenty of examples, meaning lots of research that shows if you put your position on early in the morning and exit at 20 to 25% profit, you actually make money. So the reason for the reason we do what we do is simply all based on the research. It doesn't pay to hold to expiration on a daily basis. It pays to take profits of 20 to 25% of max profit, period.
And the P&L swings you're going to have are going to be so great. You're not going to have any.
When looking for trade ideas, I am looking at the IVR scan or watch list on the platform. And there are several that have an IVR of over 100. And in a few cases, even greater. Is there such a thing as IVR that is too high that we should stay away from?
No, I don't think so at all. Matter of fact, I mean, I think we kind of benefit from the thing that we can find the most consistent for us is volatility contraction or volatility moving back to its mean. So for us, IVR at 100 or higher, which is only going to happen intraday, which means that the volatility as high as it's been and it continues to go higher that day, that's how it gets outside those fences of 0 and 100, is typically when we're looking to do something. I mean, listen, you want us to avoid earnings. If earnings are coming out, maybe that's something you want to do. But other than that, no, I think high implied volatility is exactly what we're looking for.
You know, this is a good email because yesterday I was looking for high IVR. That's where I found Tesla and some other ones. Is there too high a number in IVR that we should stay away from the market? I'm going to say, like Tony, no.
The markets are liquid. I mean, that's
as long as the underlying is liquid, no, there's no such thing as too high. I mean, you should be nervous that, I mean, you're going to get rewarded for the risk that you're taking, but you know, yesterday, like in Tesla, the IVR was 150. That's a big number.
Yeah, for sure.
Made me a little nervous, but it also made me want to get in.
Mm-hmm.
So no, I can't think of a reason, you know, why I wouldn't want to. Next slide. I once heard you say that when selling strangles, you often aim to collect similar premiums from both the put and the call sides. But if you try and collect the same premium from each side, wouldn't that result in a short delta position in most cases?
A short delta position in most cases. I mean, usually you're looking at a little bit. I'm going to go with some of the high flyers. You're trading some of these NASDAQ stocks where the stock is going to have skew. So you're going to go further out of the money and still be able to collect the same amount of credit on the put, which is, I think it's pretty much neutral. I don't think maybe a delta.
The answer to this question is, because it does mess you up, because I thought about it for a while, is that it would result in a short delta position if you're doing an index, because if there's put skew, the call's going to be bigger. But if there's call skew, it's going to result in a long delta position.
Yeah, that's what I.
So it really depends on what you're trading. So if you're trading like an index, it'll result in a short position. If you're trading like an equity that has call skew like Nvidia, it's going to result in a long position. So it really just depends on what the underlying skew is of the trade.
Yep.
And that's it. So no, it doesn't mean that you result in a short delta position in most cases, because it depends on what you trade. If you're trading everything, then no, half of them are going to be long, half are going to be short. Let's go next slide. And the last one. How do you know whether to close or roll if a trade's a winner? I understand rolling a loser, but would you ever roll a winner?
Yes, we've rolled winners. I mean, there are months when I have positions in the same stock. Sometimes I change the strategy on them because, look, I'm still trying to stay mechanical in here, right? I want to roll with 21 days. If it's a positive trade, I'm looking for 25 to 50% of the profit. If I haven't closed it, I'm going to move it to the next month. If it's a strangle, if that's the easiest thing that we can discuss here, I'm probably going to change the strikes and get more delta neutral in the back month, but still have the same type of strategy on. The stock's moved in a direction or another, I might lean with a little bit more delta on a short premium position. As long as you're taking your profits around 25 to 50%, you're rolling at 21 days. We roll positive trades and roll winning trades too.
You know, most of the time, we will roll. Obviously, we'll roll forward if our trade's a loser. If we have a winning trade, though, we will roll it forward. It's kind of like pressing a bet at a craps table or something like that. If the IV rank stays super high and we have a winning trade, why wouldn't we roll that forward?
Right.
So I have no issue with that. Rolling a loser's easy. We're always rolling losers. But why wouldn't we roll a winner? Well, sometimes we won't roll a winner because we're done with that stock or the IV rank's dropped. And usually when we're profitable, the IV rank's dropped. But there are definitely going to be cases where the IV rank stays high. We have a winner. We'll roll it.
Very good, sir. Let's take a quick 90-second break and come back. We got more Tasty Live with an option jive next. Even the S&P down 4.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
If you missed the live show, here's our cherry on top weekly recap. Today's Kashmir Pulaski Day. So
I know you forgot the pushkis.
I brought you cherry pie. What do you want from
me?
Yeah, it's
You're
tomorrow.
conflating just because I'm saying things that are in Polish. You think it's the same thing. Kashmir Pulaski, a freedom fighter. He's honored here in the city. This is his day. Tomorrow is Fat Tuesday or Mardi Gras, and that's Punchki Day. 2 separate things. They both happen to be Polish words.
Are you sure it's tomorrow or Thursday? I thought somebody. Oh, yeah, tomorrow.
No, it's tomorrow.
Anyway,
Fat Tuesday.
When is it ever
Fat Tuesday. Fat Tuesday's never on Thursday.
my chili is so spicy it'll burn your face off.
Yeah, that's not good to me. Like, I like spicy stuff, right? But just because it can burn my face off, that's not what I'm trying to do. I'm trying to have a nice meal. I'm trying to eat something nice. Your chili sucks. It's all right. Don't worry about it. Don't be
actually,
upset.
if we're gonna get after it, your chili does suck. We'll leave it at that.
Oh my God, I can't listen to you guys. Good, you're not getting any more. Neither you.
Sosnoff got me sick.
I definitely did not because I'm perfectly healthy.
Yeah, you are annoyingly healthy. Yeah, that is true.
And he is he's dying. He was hacking up a lung here yesterday.
I think it is the titration of you just disobeying like food safety laws. I think it has worked in your favor.
For sure.
For sure,
I think it has.
yeah. I don't think it's replicable in like a general population, but I think for you specifically.
I got another one, Sosnoff. I go to my local bank over here last night after the close, and I'm talking to somebody, and I had to do a wire transfer, blah, blah, blah. I'm talking to the guy, and they're having a problem with the wire transfer and all this other stuff. So they go, let me get my specialist guy. And who walks in? The Vanilla Gorilla. Remember, Liz and Jenny always talk about the Vanilla Gorilla, the best nickname on the floor because he had all this hair coming out of his chest. He had a big beard.
That's a pretty iconic nickname.
It's him. He goes, bat! And I look at him, and he was all clean shaven. He had his shirt and tie on, so I couldn't, I didn't recognize his chest hair or anything like that. I go, Vanilla? He goes, yeah. And anyway, he's the big manager there at the bank. So I got an in now. If you need it, you can have an in too. We got the Vanilla Gorilla on our side.
I don't need an in at like the Skokie Savings and Loan Bank.
It's the Glencoe Credit Union. How dare you?
I don't even loan at the Glencoe Credit Union.
I got Giuseppe in New Orleans. What's up, my man?
I've noticed the last 2 days to talk about your birthday, but those 2 guys next to you never once saying happy birthday to you. Happy birthday to you.
To you.
Happy birthday.
You belong in a zoo.
Happy birthday.
Hey, Sosnoff, now blow out this candle.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
It's option Jive. It is an option Jive, Sosnoff. Even the S&P is now up for
Jive.
Option Jive.
Yeah.
Finding break-even, Sosnoff, like you were in search of.
Finding Nemo.
You're going to be watching that a lot more now. That's right.
I'm going to be watching it?
That's right. Your grandson, he wants to find Nemo.
Oh, yeah. I don't know if my daughter's like...
Yeah, they all do it. You'll see. You'll see. Just like, don't you remember? We'll bring Beth into the conversation. Do you remember when Beth's kid wasn't going to have sugar?
Oh, gosh.
The first picture we saw was the kid was double-fisted with 2 ice cream cones and ice cream all over his face. I mean, they all do it, Sodnoff. We all
So, Beth, you liked Margie's, huh?
It was a great suggestion. I've been before, but...
You been to that one?
No, the other one.
Yeah, the original.
The big guy loved it.
It's old school.
Yeah.
The ice cream shop, the old Margie's ice cream. Yeah. It's moved?
They have a second one.
Oh.
It's on Montrose. It's been there. But you got it. You didn't get the
hot fudge. I know. He looked at you like you had 3 eyes.
I know. He doesn't think, poor kid, he doesn't know what hot fudge is.
No, I don't know.
The kids never had hot fudge?
No,
not really. It's not really a thing.
No, he looked at me like I was crazy.
Wow.
I mean, Beth doesn't feed the kid.
You have to get this kid out.
The kid had like 6 pretzels because he doesn't.
He did.
Feed him.
Yeah.
Don't you give him food?
He liked the pretzels. Had them for breakfast yesterday.
Winning, Beth. Winning.
Yep.
Oh, you're going straight to hell, Sosnoff.
All right, what are we doing here?
Option Jive.
S&Ps
Finding
are unched.
break-evens.
This is the worst rally I've ever seen.
This is the worst rally after a basic, cut in half of a lot of these stocks.
This is the worst rally I've ever seen.
Mm-hmm.
I'm looking around to see if there's anything that's jumping off my screen. Not really. All right, we got our first little piece of research today. We got little Ryan Grace coming on board today. We've got Scott Sheridan coming on board. Neither of those 2 guys are very interesting, but we'll do our best. And
make them relevant.
Yeah, we'll try to make them relevant.
Oh my God.
Then we've got 2 pieces of research. Both of those are pretty good. First one today, we're going back in time because a lot of people have emailed us recently. There must be a lot of new option traders, or there must be a lot of people that are, just kind of finding their way around different strategies, and a lot of questions about break-evens. So, finding break-evens. Let's see what we got. A break-even is the spot price at which an option position neither makes a profit nor incurs a loss. To one side is a winner, to the other side is a loser. But, and just understand, we're not in this business to break even. But sometimes break even feels pretty good.
But it's good to know, right?
It's good to know.
I mean,
you always want to know what your break even is. So break evens provide a straightforward way to compare different strategies and decide which best fit your assumptions about the underlying. In general, to go find a break even price, go past the short strike by the credit received. But there's some nuances to think about. Let's go next slide. So compared to and we throw some of our curve mode pictures up here, but compared to a directional trade, selling an option on the other side will increase your credits received and push the break-even price further out. Of course, you are then exposed to possible losses from the other direction, resulting in 2 break-evens, one to the upside, one to the downside. So if you sell a call, your break-even is the strike price plus the credit you receive for the call. If you sell a put, your break-even is the strike price you sold plus the credit received for the put. That's a simple strategy. If you sell them both, the break-even is the total credit of the 2 and into either direction because you can't lose both ways.
Can't close higher than your short call. Can't close higher than your short put. So it's
At the same time,
credit.
right? So it's the strike price plus the total credit. Okay, so you get a bigger credit, so you have a wider break even, but you can lose both ways. You can lose either way. So that's the whole game. There's nothing kind of crazy
risk
about
on
that.
either side of the market.
Yep. Let's go next slide. So while moving short strikes further out of the money, it will increase your probability of profit. The smaller credits mean that a $1 change in a strike won't move the break even by a full $1. Thanks to larger credits available at the money, short straddles can be a profitable strategy, even though they're almost always going to expire in the money. Basically, it has to. So all we're saying here is, hey, if you want higher probability of profit, move a little further out of the money. And if you want to move closer to at the money, like to a straddle or something like that, it's one side's going to close in the money, but you're going to collect a lot more money.
Yep.
All we're saying is in both cases, you take the strike price, you add the credits back in, and that's your break even. That's the whole takeaway. Let's go next slide. So defined risk trades use a portion of the credit received for the short options to purchase further out of the money options, capping potential losses from a large move in the underlying. Knowing the worst case possible can help us be ready for it, and it will reduce the BPR of the position. So the smaller the net credit will move in the break-even price and reduce the probability of profit compared to trading naked short options. So again, you receive a smaller net, like you sell an option up here, right? A call option up here, and you receive a smaller credit, your break-even price is going to come down a little bit. You receive a bigger credit by moving your strike price down here, your break-even price is going to go up a little bit. So the difference, the width between the strike price and the break-even is going to depend on how far out of the money you go. That's all we're suggesting here. And if you're doing something that's a bigger trade, like you're going for a at the money strangle or an at the money straddle, you're going to collect the credit from both sides. And the bigger the options, the bigger the credit, the wider the break even.
Sure. The higher credit you receive, the more it's going to move your break evens, right? It's going to further move it out of the money. Yep.
Yeah. So sometimes people get confused. They think if I go too close to the money, if I go too close to the at the money, I have too big a chance to lose. And actually, your break evens go kind of wide. Mm-hmm. But yes, the further out of the money you go, the further out you can make your break evens, and the higher your probability of profit's going to be. You're going to make less money, but the higher your probability of profit's going to be. Let's go to the next slide, Beth. So far, we've only discussed finding the break-even points for one lot trades, but multiplying the trade won't move the break-evens. That's important. So the more contracts you have, your break-even doesn't change at all. Break-even stays the same. Doubling the credit and doubling the risk will exactly equal out. So if you have a position on, like for example, if you do a defined risk trade and you do one contract or you do 5 contracts, the break-even is going to be the exact same. More complex strategies may have multiple break-evens. For example, a call ratio spread on XYZ consisting of a short 110 call and long 215 calls that is sold for $1 will only be a loser at expiration if XYZ or the underlying is between 111 and 119. The reason we say this is because we want to understand that complexity will change the break-evens a little bit, especially with things like ratio spreads 1/2 and 2/1, things like that. You should probably experiment a little bit with that before you trade them for the first time and just to understand the break-evens. Let's go to the next slide. So some of the takeaways from this segment. A short option position that is in the money at expiration will oblige you to pay up. That doesn't make it a loser. Just means you have to pay up.
Sure.
In general, to find the break-even price for a trade, go past the short strike by the net premium you received. Bear in mind that break-even prices are about the spot price at expiration. So active trade management can find profits earlier and more often. We always are earlier and more often, Especially for traders who are comfortable with risk and therefore collect larger credits, much of our success will come from positions profiting despite broken strikes.
What do you think about that, Sandov? Really what we're talking about here is like, why do people want to know their break even? I mean, they want to know where they start to lose money at expiration. Remember, your break even is an absolute number, but it's going to change as markets move, whether you're making money or losing money. Remember, this is at expiration.
Yeah, let me tell you that break evens are not that important. They're not as important for us because we manage early. So just like Tony said, break evens apply to positions that expire. Break evens are good to know because you like to know, hey, where's my break even at expiration? Where do I stand in this trade? How much more wiggle room do I have? All that kind of stuff. But the reality for us is the reason break evens don't mean that much for us is we manage early.
That's correct. I'm more concerned with or looking for my 25 to 50% than I am my break even. I mean, I kind of know my break even when I put on the trade.
Yeah, of course.
Let's take a quick 90-second break and come back. We got more Tasty Live. Kind of mixed market here, Sandov. Even the S&Ps are now down 5. We haven't had too much movement this morning, but we've had over $100 or just about $100.
Can I say one more thing about break evens? I just forgot this. I meant to mention this. The most important thing for break evens for me is when you're setting up a trade and you're picking your short strike, you should do it at the expected move. Some people like to do it at the break even. I prefer, and Tony prefers,
a higher probability
to set our strike up to pick the strike at the expected move. A lot of other people prefer even safer positions, which is set your strike up at the break even. Okay, that's it.
Let's take a quick 90-second break and come back. We got more Tasty Live. Sad enough. That's right with the opening bell next. We're back in 90 seconds with Tasty Live.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. I love to take risks. I love the instant pain, the instant gain of trading. I would describe my trading style as a calculated risk taker. I like to play towards volatility, which is something that you can quantify high and low points of. Well, my favorite strategy currently is the diagonal spread. I like the idea of having defined risk, but while also having a little bit of positive decay that works in your favor if you're not directionally correct. But the best part about it is the positive gamma that you get from it. I really like that the position can grow and get bigger as you're more correct on that position. So I think that the variable of trading on a day-to-day, hour-to-hour, minute-to-minute basis is really powerful and really fun to have access to. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade. What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with the opening bell here. We got about 7.5 minutes or so. Even the S&P is basically unchanged, down 3. Since I've been watching the market this morning, they've been up around 20. They've been down around 7 or 8. They're down 3. NASDAQ is up 9. Russell is up 9. And the Dow is down 61. Doesn't tell you the whole story here. We had almost $100 range in even the S&Ps last night. A significantly large move in the NASDAQ also of a couple of hundred.
Oh, the NASDAQ at one point, when right around 7 o'clock, it was down like 200. The NASDAQ was.
Yeah.
And I bought some S&Ps, closed my eyes, and just said, forget it.
Yeah, you did good on them. You actually scalped them. You bought them at like...
$50.
Yeah, 55.90 and change, if I remember.
55.90.
Right. And you sold them at 644. I think
It's a miracle.
The sale is the impressive part. You got almost near the highs there.
It's a miracle, Tony.
How does Daddy do it?
It's a miracle.
Did you get a memo or something? Did somebody tell you?
I got a memo.
You got a memo?
Yeah, I get this. I got a text message.
Quarterly or something like that?
No, I get a text message from my guru.
From your guru?
Yeah.
Your guru.
My Taiwanese.
Was open again. X was working again.
Taiwanese source. Yeah, I haven't done anything this morning. All I did was buy some NVIDIA. I'm trying to scalp $1 on it.
NVIDIA 107.5 or so, up about 60 cents. Didn't you get some long delta in Tesla
yesterday?
Too?
No, yesterday.
No, yes, what?
No, not today. I only bought NVIDIA this morning at 106.80 something.
106.85.
106.85.
You are correct. Good
I'm
job.
trying to sell it at 107.85. I want $1.
You want $1. You're allowed. Why can't I get all I can eat? You're allowed to get all you can eat.
That's my favorite thing about this business, is scalping $1 on something. It keeps me alive.
Mm-hmm. Hey, Trump put his money where his mouth is. He bought himself a Tesla this morning. Did you hear that, Sound enough? I could have brokered a deal with your used one, possibly.
That's so funny. Did he really buy a Tesla? He can buy mine.
That's what I said. I could have brokered a deal for you. But I think my original idea of having it like destroyed by protesters, I mean, insurance value has got to be worth more than resale.
I'll tell you right now, what they're giving me for my Tesla,
you might as well burn it.
You might as well burn it.
Right.
I'm doing worse. I'm going to try to sell it to Bob Groves on the trade desk.
Oh, is he interested?
Yes.
We have a live one?
We got a live one.
Oh, nice.
They made me an offer. So they
Bob, do installments. He won't remember after
No,
the
I don't
second
take
or third
installments.
one. Yeah.
You guys are all deadbeats.
Yeah.
But yeah, it was funny when I was talking to the Lucid guy. He's like, don't even tell me why you're selling a Tesla and buying a Lucid.
Mm-hmm.
And I go, why? Because everybody is. He goes, everybody.
What do you think about Lucid stock here? $2 and change.
I don't know. Looks like it's going bankrupt.
Doesn't it?
Yeah, but the shop, yeah, it does.
Well, it does have that monthly implied volatility in the hundreds again. That's basically what it's saying, a double or a zero.
Yeah.
And it's got monthly implied volatility of 100 across the board there, too. So you're going out a full year or two, and it's still not out of the woods. Lucid, a $6.5 billion company, sound enough.
Yeah, it was just 10.
How long does it say to get your car?
A Lucid? A week or two.
Oh, good. I didn't know. I mean, I'm just asking. You didn't want the Hummer? See you in a Hummer, I
don't. I've only been in a Hummer once, and I didn't.
You didn't like it, so you're not doing that again?
I didn't like the car. A buddy of mine had one. But it wasn't electric.
Yeah, I haven't been on the electric one. I don't.
I'm not playing along with your games.
You're getting too smart, Sosnoff. SMRT smart. You certainly are.
Now they just hit them. S&P's down 8, 9.
Yeah, like you said, this is the worst rally off of lows last night.
The worst rally.
Mm-hmm. I said last night we had to go lower. We were lower by about 40, 50 handles. I thought that was it when we were higher this morning by about 20 handles when I woke up, 15 to 20 handles. I was like, oh, how did Daddy do it? Daddy's back on all cylinders here.
I honestly think if they're going to go higher today, they have to be down at one point.
I thought it would just happen overnight. Yeah.
I think down, I think they got to get to 55, 70-ish to be interesting again.
Yeah, just off of the lows that we've made. The last
yeah, 55, 70, 55, 80. Maybe they don't get all the way down there. But something lower just to make them interesting.
We got Ryan coming in for talking about a little bit of crypto at 8:40 today. Bitcoin's hanging out at 81.3. It got down under 80,000.
Where's ETH trading? We bought some yesterday. I didn't buy any Bitcoin. I bought some Ether at 18,000.
Still sitting there. I think you're basically unchanged. It's 1,800.
1,800, I'm sorry.
Yeah, 18,000 would be a nice profit for you, but $1,878, up $10. It was over 1,900 last night. It's under now.
I got to tell you, I don't understand why that was down 10% yesterday and Bitcoin was only down 4%. 10% move in ETH is a lot. 10% move in Litecoin or whatever it was, 9%.
Yeah.
Was a lot.
You nibbled there too, didn't you?
Tiny. I don't count it.
Mm-hmm. Oh, you don't count it?
I don't count it. But
is
I
that my
think
100 on the floor? No, it's okay.
I think we're about to launch. I think we launched Solana. We're about to launch Cardano too on Tasty again. So we're putting back all the crypto we had before.
Well, we didn't take it off. I mean, the regulators told us.
Yeah, the regulators took it off. Yeah,
right. I mean, we're changing the tune.
Yeah, so we're gonna be back. Ryan will talk about it. I think we're gonna have back to 15 or 20 different cryptocurrencies. So it'll be good.
Very nice. Very nice. We got 2 minutes before the market opens here, Sadnoff. What do you think? Volatility up 12 cents? 20?
I mean, you're going to think you're going to have to buy the opening. I mean, that's all you can do.
Oh, well, if you think you have to buy the opening,
you have to buy the opening
early.
For a trade. You don't have to. We're going to be down at one point today, 30 to 40 handles. But the question is, do we go down 30 to 40 handles on the opening, which I don't think we do. I think we go up first. And then you can sell any rally, and then they're down 30 to 40 handles, and then they go up at the end of the day.
Volatility, Forex VX is telling you we are not done with this down move.
No, it is. I agree with that. It's not telling you that.
This has been 2 weeks of marching higher in volatility. If you've been watching volatility, you did not dip your toes in the water. When genius fails, Sosnoff.
I mean, they have not been able to hold a single.
They have not been able to hold a rally.
A single rally, not a single rally. I'm looking at some of the stocks this morning. Nvidia's unchanged. Amazon's down. Tesla's up $1 or $2. Baba's up a couple of bucks, but man, most of the other stuff. Google's down. Meta's down. Microsoft's down. Netflix is down. Costco's down. Uber's down.
Costco was over 1,000 not too long ago. 934. I mean, of all the stocks, hasn't gotten hit that much.
UAL, which was trading 75 this morning, it's now trading 79, up $2. It's moved. It's had a huge move pre-market.
Mm-hmm.
It's kind of interesting because all the airline stocks.
And Love $31.50. I don't know if you have to closing at $28 last night. That's a big move.
All the airline stocks were getting killed pre-market. Now they've all come back.
Mm-hmm. Round trippers, enough round trippers. All right, you got about 10 seconds before the market opens here. Even the S&P is making their lows that I've seen so far this morning, down around $13. NASDAQ down 36. Dow down 113. And the mighty Russell, there you go, up 4. So I don't know if they come spinning out of the turn. What's the first thing you see to the downside? I got Oracle down around $6 or so. So enough. You just mentioned Costco down $4. Apple can't get out of his own way. Apple didn't rally at all yesterday. Apple down another $3 and change to 224. Disney down 3 and change. Meta down $1, as you had mentioned a moment ago. Qualcomm down 35 cents. Had earnings the other day. Coin up $8 and change. Bobby, you mentioned up 5 and change. MSTR up $5. Reddit up $4. AVGO up $4. Tesla actually a little bit higher here this morning. Oh, they're $2.32. That was higher than that.
So in Oracle, are the options open yet?
We just opened 53 seconds ago, so I don't think Oracle.
I don't think they are.
You can tell if the option chain is red and green. They're all white right now, so those options are not open.
They are not open because I was going to say, I cannot believe with the stock only down 6, with the stock.
There you go. They just opened. So I don't know if you see how they just turned red and green there. The markets are a little wide. They're almost $1 wide, 50 cents to $1 wide. So watch your mid price when you're doing anything in Oracle if you're looking to open or close a trade right now in Oracle.
I just put an order in to close a trade.
It's easy to put in orders when the markets are wider or to close a trade because you put it in below the market and see what you can get. When you're trying to do price discovery on a new trade, a little bit different.
Yeah. Let's just see what we got here. Similar order.
Apple down $3. Google unchanged now. Microsoft up 25 cents. Place your bets out enough.
Place your bets.
Yeah, if you were worried about missing something, you haven't missed anything yet.
Oh, don't worry. I'm not
Oracle
worried.
down $6.30.
Which one?
Oracle down $6.
Yeah, so the spread,
$1.
the spread that we sold last night is
you don't have your you got low D over there
at 240.
You sold your oh no, you bought your Nvidia. Sorry.
The spread we
there. You sold your Nvidia. There you go. I thought it was going to trade.
No, I bought more Nvidia at
663, and you sold it just now at 767. So you made a buck on that.
It's an amazing scalp to start the morning.
How does Daddy do it? I mean, how do you do it, Sadnoff? I mean,
I don't know. Anyway, Oracle, I'm trying to take profits here because I hate the stock. Nothing done.
Even the S&P down 14, NASDAQ down 41, and volatility still up, trading, well, not on its highs of the overnight session into the day, but the highs of this morning, up 35 cents at 23, volatility at 23. Let's see what VIX is doing, just for giggles here, Sadnoff. VIX. Up 75 cents to 28 and change. VIX moving the same way as /VX as you would expect.
Taking a look at our positions here this morning. Man.
Yes.
Coles, they don't like that stock. I have a small position there.
You got a positive P&L. I mean, that's rare.
I know.
Coles down $2 and change. They are taking this one to the woodshed side of them. They don't like Coles. They don't like Coles cash. They don't like anything. $10 side enough. You know what happens when these stocks go into $10? They kind of lose favor with all of the mutual funds and other ones.
So the Ivy rank in Tesla opened at 97, which NVIDIA. Wow.
NVIDIA 107.87. Good job out of you.
So I did scalp some NVIDIA this morning.
Nice job.
There you go.
How did Daddy do it? NVIDIA up 93 cents.
Bought 2 tranches and scalped them both. Oracle, on the other hand, no bueno. I'm going to.
Why you keep trading Oracle? Just trade NVIDIA. You're doing much better than there, obviously.
Obviously.
Volatility up 40 cents. Continues to climb. We are not out of the woods yet, Sadnoff.
No, I know. I'm trying to just do it. What would you do in Oracle?
Oof.
It's a crappy stock to trade. Can I just say that?
Yeah, Oracle down $9 now, yeah.
Can I just say how bad this stock is to trade? I mean, you don't ever have to trade Oracle, you're lucky. I am short in Oracle now. The 115, 165 Strangle. Because I adjusted.
In April, right?
In April. Mm-hmm. I mean, we're up money in there today. ORCL. We made about 80 cents on the Strangle, but that's what we lost.
Basically delta neutral now that you're
right. But that's what we lost yesterday in there.
Mm-hmm.
So it's not
Vol.
Yeah. Tesla, I just thought that it's weird. I thought this stuff would come in more.
Yeah, Tesla Ivy rank 95 stocks up $2.
Yep.
220 and change. It has not held a rally either, so don't get too giddy here if you're trying to buy the dip. in Tesla. Volatility is still up 47 cents. Even the S&P's down 20, Sadnov.
So what do you think about this move here?
I think it's more to come. It doesn't seem like volatility wants to give it up. More to come, Sadnov. More to come.
I did not think we'd be down 21. And on my screen, Amazon, Nvidia's up $1. Amazon's up $1.50. Tesla's up $2. Coinbase is up $7. Every single NASDAQ stock I have is up.
Well, something's down because the NASDAQ's down 17.
I know. Just saying, every single NASDAQ stock I have is up.
Well, Oracle's leading the NASDAQ lower by 10 or so.
Yeah, no.
Qualcomm's down 2 and change. Apple's down $2 and change.
Amazon's up big. Look, Nvidia's up $1.40. I'm we're almost even for yesterday in Nvidia. Nothing else.
I mean, almost even. I mean,
No.
Why even come in?
No. Not almost even. Almost even in Nvidia.
Look at this NASDAQ up 20. As foretold, Sadnov. Good job out of you.
All right. What else do you got? What else do we got going on?
That's it. We could take a quick 90-second break, Sadnov. I mean, markets having a little bit of a tug of war here. You got the Dow lower by 160, even the S&P's lower by about 7 or 8 handles. You just had the NASDAQ catch a bid up 43 and the Russell up 6. Russell's been the strongest of the group all day long. NASDAQ's trying to lead us higher. Volatility only up 20 cents now after making its highs at 23.85. Last night is 22.85. Let's see if volatility goes red on the day here, Sadnov. Maybe you'll get something. They're trying.
NASDAQ up 60. NASDAQ looked really good to me. All right. Well, we haven't done anything bad.
Let's take a quick... That's a win, Sadnov. I mean, there's a compliment if I've ever heard it. We haven't done anything bad. We'll take a quick 90-second break. We'll come back. Hopefully, Ryan won't ruin our streak of not doing anything bad when we talk about crypto. That's right. We got a tasty crypto show coming up in 90 seconds with my man Ryan. We'll be back in 90 seconds. Even the S&P's almost going to turn green. Right now, they're up 50 cents. We'll be back in 90 seconds with Tasty Live. We saved, Sadnov. We saved them. Up, down 75 cents. We lost them.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this. Which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
What sparked my interest in trading was the probabilistic nature of it. I used to play poker a lot, still do, and if you understand the math for poker, you realize that it's a probability game, it's a number of occurrences game, and you want to put yourself in good spots the majority of the time and have good risk management. All of these things apply to options trading and trading in general, so that was my initial pull into the trading world. My trading style really revolves around implied volatility analysis. I like to look at specific markets, look at the differences in implied volatility between the weekly cycles and the monthly cycles, see if there's certain strategies that might play into that more than others. My favorite strategy of all time is a short put, simply because it allows you to acquire 100 shares of stock at a lower cost basis. And it's a position you can manage or push forward in time forever if your trade size is small enough.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with a Tasty Crypto Show. My man, Ryan. Welcome to the show, Ryan.
Thank you very much, Tony. How are you guys?
I'm doing well. It's been a while since I've seen you. You look great. I'm glad
Thank
you're
you.
in the studio here.
You look great as well. Tom, you look great.
Thank
Everyone's
you
looking good
so
today.
much.
Yeah.
Yeah.
He's okay.
It's been a while.
Right now he's participating.
Yeah.
Yeah. Even the S&P's down 4 or 5, so couldn't hold a rally here. More to come on the rally side?
They tried.
They did try. Well, what do you got for us, Ryan? I know you want to talk about crypto, so let's do that. Let's switch gears real quick.
Yeah, absolutely. We've got a couple big updates on the Tasty Trade side that we want to talk about here today. We'll start taking a look at a huge update to the Tasty Trade mobile app. We've completely redesigned the crypto trading interface. Basically, have put everything in one place. We had a little bit of a fragmented experience before, so now you can find it all on the new crypto tab. That's everything from the spot crypto trading with the new tokens that we've just added, which we'll talk about here in just a second, as well as the ETFs, the futures. We have some news that we're going to be adding. There's some content in there. So a lot of great things going on in the new mobile app. And then I want to talk about some of the new tokens, the product that we've added, and some of the new features that are coming soon as well.
Let's do it.
I like it. Okay, what are we looking at?
Cool. So quick demo, if we could throw up the mobile app here. And this, again, is the Tasty Trade app. This is available for both iOS and Android. Full 100% rollout. If you go to the stores, you'll be able to download this. And what you'll see is that we've now added a crypto tab to the navigation at the bottom of the screen. And so before, you had to search for a symbol. If you are interested in trading crypto, you want to take a look at what's happening in the markets. You've got a watch list here. What I love about this is that these prices update faster than any crypto trading app that I've ever seen. As you would probably expect from us, it's very fast. So what you'll see at the top is you've got your balance for your crypto position. You have the ability to transfer crypto from this screen. Before, you had to go to the Tasty Trade website. You had to log in to be able to do that. So if you want to deposit crypto, you can do that very easily. Just click that transfer crypto button, or if you want to withdraw it, use it on chain at an address you control, you can do that as well. If your app doesn't look like this, you'll see a big enable crypto button at the top, and that's the first step that you have to take. So if you want to trade crypto, you need to enable it on either a cash or margin account with Tasty Trade through Zero Hash. But if I just scroll through here, a couple things that I want to point out, again, all in one place. If you got your prices, you click on any one of these, it's going to take you directly to the order ticket. There's some updates that are coming to that as well. And then as you scroll, you'll see we've got all the new tokens that we've added. If you're interested in learning a little bit more about this, you're just getting started, we've got a couple articles here that you can jump to. And then you can also get a quick look
Hold on,
at.
so it looks like you have significantly more tokens on there now than I do on my crypto watch list on the downloadable platform. Or is it the same? It's just an illusion. I'm trying to imagine it's the same.
It should be the same.
It should be the same. It's just, it looks pretty on the mobile app.
Okay.
They really did a nice job with the interface.
They did. Yeah. Yeah, we've got Derek, Julia, and team behind that, and they're doing a fantastic job. They've got a lot more coming. This is kind of version 0.5 of what we're working on. So a lot more coming. You'll also see that we're adding more tokens. Got a few on here that we've added recently. So going back to December, we added Doge, we've added Solana, XRP. We've since added Chainlink, we've added Shiba Inu or SHIB, we've got Cardano, the symbol is ADA. I know a lot of people have asked for that as well. We also
we had a lot of these in the past, so we had to take them off the platform.
We did.
Regulation?
What we saw was that, for a couple of reasons, and one of those being the kind of regulation by enforcement that we experienced for a couple of years, saw market makers step away. So less liquidity in a lot of these tokens. It was a subpar experience. We wound down to 8, then we wound down to 4. Now we're in the process of bringing them back, and I hope this time that we're going to be able to add a lot more than what we even had previously.
Very good.
Yeah, I mean, it's always going to be like this. It's always going to be kind of open-ended. The difference now, I think, is that I hope we built the back end so that if there's something that kind of gets hot, we can add it.
Yes.
So we don't have to go through the whole process of like, let's get this approval or that approval. I mean, people want to trade something, let's give it to them.
Absolutely. It's pretty straightforward for us to be able to wire that up and add new tokens. So in addition to these, we've got another 5 that are coming hopefully by the end of next week. We're in the process of just testing a couple things and making sure that the liquidity is there and that we're good to go. But more coming soon. That's pretty much it for this update, guys. I want to point out that, if you want to reference the futures versus where the spot prices are, you can do that. You can jump into the ETFs as well. You want to trade options on something like IBIT. We've got everything right here in one place. All the functionality from enabling crypto, trading crypto, and transferring it to that market awareness and the content. And we're going to continue to expand on this and really work to create a much more crypto native experience. So when you're looking at these different tokens, we want to treat these almost like equities where they have specific data points and metrics that are relevant to them. We're going to start to pull that into the platform, and you'll have a much better crypto trading experience going forward.
Most definitely, of course. I mean, I know you're looking at the web-based there. If I could, for just a quick second, switch gears for you and show you how you can do it right here on the downloadable platform. I have my BAT watch list up here on the left-hand side. You can just click on the watch list, go down to crypto. You'll have all the different crypto products that Ryan had just mentioned. They're all right here listed for you. I have high and low. You can put buy and sell, which I think most people would probably prefer. So you can just click on it and trade it right from there. You have all the Bitcoin ETFs also here. You click on those. I just put the first one up there in alphabetical order. You look at some of the markets in here. Good, not great. About 30 cents wide on some of the options that we have here. BITB would be another one that has markets also. Good, not great on the option side. Have you found that the options, because we do a lot of options here. I mean, I know Bitcoin is really just a 50-50 shot one way or the other. Can't be short any of these coins, can you, if you're just trading the coins themselves?
You can't short the spot product or coin, but you can do that obviously through the futures. You can put those trades on via the options.
Sure. You got the Bitcoin futures in there too as a list. I mean, when you go to that list, you got crypto, Bitcoin ETFs, Ethereum ETFs, and then crypto futures. That's what we were just talking about. If you want to get shorted, you can use the future. The spot being the cash product of itself, you can't get shorted. But do you find that a lot of people hedge with the options? I mean, we do a lot of options here, centric on options. I mean, do you?
Yeah, I think you're definitely seeing liquidity improve in there. I think what you're seeing more of now that you have the ETFs, and I suppose this is more on the institutional side, I'm hoping that there are some regulatory changes coming where you'll get some margin relief against those spot positions. But what you're seeing is
that's probably for a further down the line.
Hey, one can dream, you know?
Yeah.
But I think as this evolves, maybe you get there. But what you do see a lot more of, and you'll get these reports where, you know, institutions are short all of these futures on the CME, it's quite often a basis trade against a large ETF position or an underlying spot position. And so that's a pretty popular trade that you can put on if you are in a place where you get some of that relief, where you're long the underlying spot and then you're short the future against it. But in terms of using, the options to hedge, I think what you quite often see in volatility terms is people are speculating more so on the upside. And if you do believe that you're going to get a six-figure or much higher Bitcoin price, that's one way to play it with leaps or longer dated stuff. At least that's what we've seen.
I mean, obviously the most popular one is IBIT.
Yes.
I mean, not only in sheer volume, I think got 9.5 million trading there, but on the option side too, you got thousands of open interest on the options.
Still fair at best.
I mean, markets are 10 cents wide.
I traded. I'm telling you, it's fair at best.
Yeah. Markets are 10 cents wide. The others only have hundreds in open interest. I mean, it's 10 times the size of most of the other products.
So what do you want to say? Like, what's the big story here?
Well, I think the big story here in terms of what's happening in the market is this, the volatility that you're obviously experiencing in equities is happening in crypto. When you look at crypto, this isn't specific to crypto, what we've seen in the past.
I don't think it at all. I think crypto is probably underperforming volatility-wise. It's been bouncing around every day, but still, it's pretty normal for it.
Well, I think, when you look at crypto historically, quite often these massive moves that you have, I mean, we've got Ethereum down 50% in 3 months. That's been driven by forced selling. That's been the result of system-wide risk. You go back to the FTX collapse. And so I think for everybody here today, what you're seeing again in equities obviously is the same thing, just higher beta in crypto.
So I have a couple questions for you. Do you think that the huge down moves in the two most tradable crypto stocks are Coinbase and MSTR? Do you think that the high beta in those being down almost 50% off their highs when crypto's only down 20% off its highs, do you think that ratio is pretty fair both ways?
Yeah, I think so. I mean, you live by that on the upside too. And I would look at that the same way that you might think about an oil company versus the price of crude.
I do think of it that way. But I mean, if you do think of it that way, then the opportunity is really in like Coinbase more than anything else.
If you want to lever up, absolutely. Yeah.
And the other thing is, why do you think that ETH and some of the other coins just got destroyed as much as they did yesterday compared to Bitcoin?
Oh, I mean, they're just that much smaller. And what we're seeing is not out of the ordinary. I mean, what we're seeing in Bitcoin is not out of the ordinary. Quite often in at least prior bull markets, you've had these large 30% corrections, and they happen pretty frequently. But I think just gets back to the fact that, Bitcoin at best is $1 trillion, $1.5 trillion market cap, right? There's bigger companies in the S&P than that. And then you look at something like Ethereum, 400 billion, 300 billion maybe, Solana, much, much lower. So the space is tiny. There's not really that much capital.
You just think it's just more of a size thing?
I think so. And ETH has just underperformed. You look at the ETH BTC ratio, it's, as I like to say, it's pretty trashy.
Do you think that some of the new ETFs that they're going to come out with, and I'm sure futures as well, like on Solana and stuff like that, do you think there'll be any traction?
I think on Solana, I don't think that the space needs ETFs for every token that's out there. I think it'll be...
I don't think they do either.
Yeah. Solana might help, but what might help ETH more so is if you get staking. Right now, the Ethereum ETFs cannot stake their ETH and cannot then receive rewards from the network. In a world where you can do that through any other vehicle, I don't think there's as much demand for an ETH ETF. Whereas if those staking rewards are passed through as a dividend, you could see increased demand there.
So where is the growth? Where's the growth going to come in the crypto space? Because I kind of feel like we've overplayed the whole Bitcoin hand, and I feel like digital assets are bigger than that, and I feel like the whole space is I feel like it just needs another kind of a jump start on growth with something else.
Yeah, absolutely. I think you have to put Bitcoin in its own category. Bitcoin benefits from global liquidity and zero interest rate policy.
Like where are you on the whole argument for tokenization of, basically global to tokenize securities and globally so that people like me can trade securities anywhere or, different markets. We don't have to change currency. We don't have to clear that kind of thing. So we can do it all digitally. Are you on board with that? I'm sure.
Oh, absolutely. I mean, it's happening as we speak.
Yeah, when do you think you'll see that in the U.S.?
As soon as you get some regulation or clarity, I suppose, when we look at kind of what's moving through the process right now, it's going to first start with stable coins. And that's your biggest real world asset that's on chain.
How far do you think Tasty is away from being able to accept stable coins?
We're working on it. I mean, within months, we hope to have that out.
Why is it taking us so long?
Well, we've got a bunch of development priorities, Tom. So it's on the list, but we have some people working on it.
Because it exists already and we should have it.
Absolutely, yeah. We just got done with the interface update here, and so the next thing that's slotted for work is USDC stablecoin support. So eventually you'll be able to fund your account with stablecoins if you choose to, or if you want to use stables on chain, you'll have a mechanism for that.
Who will benefit the most from that? Is that mostly just like international customers?
No, I don't think so. I think it's everybody that will, if it takes 2 to 3 days for you to move your money around in the existing banking system, because I would argue ACHs are fairly antiquated, and you benefit from this,
Stablecoins will be instantaneous.
Yes, and with much, much, much lower transaction costs, right? Sure, you could do a wire, but there's still an associated fee with that.
Yeah.
So I think stablecoins are huge, and that just facilitates, more activity on chain. You go back to, okay, what's next for blockchain networks? Well, you need more developers. You need support from these communities. That's going to result in more utility, more applications, more use cases, and that drives more users. I think what you're seeing today and why you have some fairly depressed prices out there is that you have an oversupply or overabundance of block space. When you think about what these networks are, there's settlement layers. And there's a lot of them that do the same thing. I mean, even when we look at these tokens that we're talking about, whether it's things like Solana and Ethereum that have been around for a while, Avalanche, which we're adding, Aptos, Sui. These are all smart contract platforms.
Yeah.
Some of them are higher performance, but in the same way that you saw an oversupply of telecommunications networks or oil energy infrastructure leads to depressed prices, it's necessary for future growth, but in the short term.
So that leads me to my next question on digital assets. Where is the next, what do you think the next kind of cool thing is?
Oh, I think it's the tokenization of securities of more assets. That might not sound like a big deal, but that just brings so much efficiency to the existing system. I've talked about this on the show before, where there's nothing really wrong with it, but this is a huge upgrade as the whole system starts to adopt more of this technology.
It definitely creates a different level of. It opens up a lot of markets that we currently don't have access to, in a way that's really nice. But what I was hoping you would say is how far do you think we are away from derivatives on these, on these cash indices?
I don't think we're that far away either. I think the NASDAQ has filed to offer, the equivalent of what would be like an SPX index option. So I think you're going to see that naturally. That's the next step in the maturation of these. You don't yet even have options on the Ethereum ETFs.
Yeah.
So I think that's coming. I think the other thing that's interesting to me is you're seeing some of this with meme coins. And I get that that's left a bad taste in people's mouths because of how volatile it's been. But what you're witnessing is this global capital formation on chain that's somewhat unrestricted. If you have an idea,
it's a little dangerous.
Sure, but I think it's part of the process.
It's also not really legal in the U.S.
I think it's globally accessible. Like there's kind of the idea that you're going to go through the IPO process, and you're going to tokenize securities, but in the sense that you have an idea and you have a development roadmap, and maybe the U.S. government decides to prevent this, but you have a global marketplace now to communicate your idea and raise capital. If you commit fraud, that's still wrong on any level. But the technology exists for a lot of people to crowdfund capital globally to support their ideas. That might be starting a new business or might be building a new piece of technology.
Isn't that but limited to $5 million?
Well, in this, what we're seeing here today, whether there are new rules that are applied to this, is that anybody can the platforms exist, the technology is there, anyone can launch a token. Not that it's going to be worth anything.
But Reg CF, which is the crowdfunding regulations, I think it's only $5 million, and you have to be fully audited and everything else going forward. In the past, going forward. It's not as simple as anybody thinks. It's pretty tough.
Right. But I would say what we're seeing is these communities come together on the internet, whether there's rules in the United States or not.
It's very hard in the U.S. unless you go with the regulated entity. I
suppose if you look outside the U.S., that's what's fascinating about this. Things are evolving. You get to a point where there is more of a degree of self-sovereignty, and the kind of previous way that things were done, it just doesn't matter anymore.
It doesn't matter until you run into the regulators. I agree with you. That's the whole beauty of decentralization. That's the whole purpose behind it is, the distribution, borderless distribution, everything, borderless opportunity. I think that the derivatives market will solidify the products, and I think tokenization will mainstream everything. And so I think those two are really critical. But I think for us, we have to keep pushing forward on our tech offerings.
Absolutely. And to that point, a couple of things that we've talked about maybe already with USDC funding, that's coming soon. We're looking at a couple other little features, such as the ability to set up recurring purchases. We're going to keep adding more product, and we've got more updates as well coming to not just the mobile app, but desktop platforms too.
All right. Thank you, Mr. Grace.
Yeah, thanks for having me on, guys.
That was good stuff.
I appreciate it.
Any other questions?
No, good job out of you. Bitcoin up $1,500 to 80,500. Even the S&Ps were just green a moment ago, solid enough. They backed off. They're down 17 now. Nasdaq up 25. Russell up 5.
They move.
Apple is the culprit. Apple down $6. Hasn't been able to get itself underneath it.
What happened in Apple again?
They found the sell button. We're going to take a quick 90-second break and come back. We got a market measure next. We'll be back in 90 seconds. Let's take the live.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
My first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I feel like everybody.
How did you know that?
Because who else was popular then in the late 90s?
Oh my God,
that's amazing.
That was cringe. There it is, the song. Yes.
Yes. All right. Good luck. Good trading. Let's go eat some roost.
Peace.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
You're gonna want to put natural gas on your list for routine rundown today.
You're me. I'm Futures Katie from the future.
Can you please explain to me buying power reduction?
Buying power reduction is basically how much you have to set aside per strategy when you're entering a trade.
One of the coolest things about stepping into the futures world for me was learning how all of the different asset classes are correlated and non-correlated to one another. So it's really opened up my eyes to all the different products that are available and how relationships that I saw before might be enhanced by these new products that I've now been able to trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the Market Measure. Thought we were out of the water side enough. Not yet. Apple down $6. Even the S&Ps were just down 40. They're down 18. Volatility is here, up 45 cents to 23.10. NASDAQ is now down $1. Now it's up $1. Man, they're really pulling tug of war here with the market, one way or the other. Volatility hasn't died yet.
They were just, S&Ps were just up, then they were down 20, then they were down 60, now they're back up.
Mm-hmm.
I mean, I'm sorry, now they're down 20 again.
Yep.
But NASDAQ was, everything. Crazy.
Yep, volatility's still here.
I'm being very, I don't know. We took our profits in NVIDIA this morning. We took our profits in Oracle. We've adjusted some other stuff. Yada, yada, yada. I'm Tom Sosnoff. He's Tony Batista.
And that's our show.
And that's our show.
Mm-hmm.
Before we get to the Market Measure, we're going to give you a quick update. That was just Ryan Grace filling us in crypto. Ryan's awesome. He runs crypto here. And we did build some really cool mobile crypto features. And they're also going into the platform too. But let's see. On deck. So for tomorrow, what's your assumption? Yeah, tastylive.com/assumption. Send us your assumptions for tomorrow. Tastylive.com/assumption. We need your trade assumptions for tomorrow. Mm-hmm. Also, we still have this show that Mike, Nick, and Katie, we just filmed it yesterday. We're going to cut it up, make it all pretty, and stream it and mint it on March 29th. So if you haven't signed up yet, it's the only thing you can sign up for right now on tastylive.com/events. tastylive.com/events. Pretty soon, we are going to announce our whole live schedule for 2025. We tested Mike, Nick, and Katie, and they did a great job this week. And they're going to have some road shows this year, along with Dr. Jim, hopefully Ryan as well.
Mm-hmm.
And then I'm going to be doing some stuff, and hopefully if we can get Tony out of, what do you call those things, those lazy boys?
Lazy boy, you just
lazy
said
boy.
Yeah, there you go. Recliner is what you were looking for, probably.
If we can get the lazy boy out of his lazy boy, we got a chance to get Tony on the road for some this year. But
ready to go after meeting everybody on.
You got a little pep in your step.
Yeah, man. I was so humbled. I mean, people came from,
I know,
Florida, Boston.
They came to see me, but they just said no, hi to you. That's okay.
They came to see you, but they had to get past me first. Yes, it was very humbling. And maybe
I don't think you charging that one kid like $20 for an autograph was
a little cheap move by me.
Did you guys bring 8x10s?
What?
Did you bring glossies?
No, you were supposed to bring them and you. But no, it was really nice. And anyway, we have our schedule coming up. I can give you a sneak little. Well, I'm not even going to give you a sneak little preview, but very soon we will. I don't want to get in trouble with my handler. she'll get mad at me because I'm not sure if everything is finally in. We'll be doing, I think, 8 or 9 cities in. This is just me, along with whoever travels with me. 8 or 9 cities in the U.S. and then 2 abroad. We'll be doing one in London and one show in London, one show in Milan. So, yeah.
It'll be fun.
Want to go to Milan? I don't need you. I already replaced you in Milan. I got Dylan.
Been a while since I've been there.
I got Dylan. I got my whole European team.
Mm-hmm.
I got my European guys.
Everybody on the European team stand up. No need to stand.
Yeah.
Anybody else?
I got Rich. I got Angie. I got Dylan. We're gonna be good.
Mm-hmm.
You be nice to your original.
The original?
It's all right. To the OG, it's all right.
He can do.
Replace me with newer
he
models.
He can do America. He doesn't do good on the overseas flights. He doesn't do good.
He would be great.
I would like him in Italy. I would like him to go to Italy because, because
done a lot of webinars with those guys too.
Yeah, I know, but I want to see how you are like in your
natural habitat.
Yeah.
Not just like on Taylor Street or something like that. Like
I don't consider
in the
that.
true homeland.
I don't consider an Italian deli to be your like natural like for a Jew.
Olive Garden is not in my natural habitat. You don't think?
For a Jew, I think going to a really good deli is like kind of a natural habitat.
Yes, yeah,
that's good.
But can't expect anything more.
For an Italian, because there is no such thing as so for Jews to go to an Italian restaurant, I feel like that's kind of our natural habitat too. But I think for
you own that now too. I mean, you're going to take that all.
Yeah, I'm saying you don't have any advantage, okay, over me.
Yep.
But if we're going to Milan, then you have like
I might have an advantage.
Yeah, you got edge. You got a couple of words in your thing. You got you look like one of them. That's
look like one of them.
You look like one of them.
Nice.
You can fake it.
Yes.
You can fake it better than me.
I can fake it better than you. That's correct.
So, yeah. Plus, I want to see. I need to get we need to get to the right restaurants.
We could do that.
But anyway, we got a bunch of stuff coming up. We can't wait to tell you. We're just finalizing the plans. And totally different this year. So
do it.
Totally different show. Time decay versus volatility in short premium trades. Time decay versus volatility. I'm trying to understand where they're going with this. Let's take a look.
Okie dokie.
The primary source of profit for short premium positions is IV contraction. And you know what? I need a little IV contraction, and it ain't happening right now.
No, it is not. Volatility up 60 cents. It doesn't.
The VIX futures this morning are up 70. What do you got them up? 70 cents?
55 cents if you're looking at the J's, which are the new front month. Yep.
No, I was looking at H's. Yep. J's. H's is going to be March.
Mm-hmm.
J is May.
Yep.
Got it. And the VIX itself is up a little bit this morning, too.
Yeah, VIX is up. It's up 36 cents. That's a 1% move to 28 and change.
Yeah. So we're not getting any volatility contraction this morning. However, since the extrinsic value of an option decreases with time due to theta decay, it's still possible for a short premium position to be profitable without significant changes in implied volatility. It is possible. It's just painful. Let's look at how profitable short premium strategies can be when implied volatility is sideways. It's the world we live in right now. So we did a study, 2017 to present, 8 years, 16 Delta short strangles, 45 days to expiration, managed at 21 DT. We looked at sideways markets, meaning that the implied volatility moved plus or minus 5%. For those occurrences, we determine the POP, the average P&L, the average premium, the average return on investment. So lots of stuff. But here's the whole key to this study today. Plus or minus 5% higher or lower. So IV is kind of dead. 5% is nothing.
5% is nothing. You got a 3% move today, and we're basically unchanged in the market.
Yeah, 5% is nothing. So we're looking for 5% moves and in implied volatility, which is sideways. Okay, let's go to the next slide. So the table below represents the performance results of a short strangle based on implied volatility changes ranging from -5 to +5. So that's if nothing freaking happens. So the IB change between -5 to 0 and between 0 to +5, and you can see the probability of profits. Anyway, let me just think of, let's just take, when we look at this slide, thinking, hey, is there a big change in the -5 to 0 or 0 to +5? And the answer is a little bit in the POP.
Yeah, I was gonna say, because you gotta fact. I mean, that's a 6-7% differential between the two. I guess statistically, that's going to be significant, right?
Yeah. So clearly, when implied volatility just pops up a little bit, there's more opportunity, which is what we always say. It's not humongous, but it is significant enough.
Mm-hmm.
All right, let's go to the next slide. I'm going to guess.
The P&L jumped a little bit with that.
Yeah, it's about 10%.
Yep.
All total. So theta decay can increase our odds of success when using options, but over time, an option's extrinsic value decreases. So what would offset this benefit? Adverse price movement, like you could argue we're seeing that now.
Sure.
IV expansion. Okay, the options gain value, completely negating the benefits of theta decay. And sometimes could be early assignment risk, but I'm not too worried about that. Doesn't come into play. So let's go to the next slide.
Mm-hmm.
Okay, so 98% of these sideways occurrences happen when the VIX was between 0 and 30. Well, yeah, of course, because the VIX is always between 0 and 30, just about. 77% took place when in low IV between 0 and 20. 21 took place between 20 and 30, which is where we are right now. So the first thing that jumps to mind here is the chances of a sideways move right here is pretty low. It's about 1 in 5.
Right.
You're not going to see a lot of sideways moves. Okay, that's good to know. Most of the sideways moves happen when volatility is lower. And also you can see right here the total number of trades. When implied volatility is mid-range, it's about a quarter of the number of trades if you were to, in lower IV. And so I think that's interesting too. And so we just broke it all down so you can kind of see. And we're in that mid-range right now. 41 trades were -5 to 0, and 54 trades from 0 to +5. And you can just see the percentages there. In high IV, it just never happens.
Yes.
2% of the time. Yeah, crazy. All right, let's go next slide. So this shows why in our portfolio allocation guidelines, we still allocate roughly 25% when implied volatility is low. Remember that is the most conservative case. So what happens in this case here is we talk about it as the conservative case. The moderate case is about 30 to 35% more, and then the aggressive case is about 30 to 35% more than that. So it could get up to between 50 and 60%, even in low implied volatility, depending on if you're going moderate or aggressive. But in the most conservative case, it's 25%. Short premium strategies are still often profitable when implied volatility is low and goes sideways, but capital exposure should stay low since there's a higher propensity for outlier losses in low implied volatility. Let's go to the next slide. So when we think about this, and we give this a little bit more context, short, early managed SPY strangles profit roughly 90% of the time when implied volatility is stagnant throughout the contract duration. Now, here's the thing. You have no idea when that's going to happen.
I wish I knew.
It's the best time because you make money all the time, basically, but you have no idea when that's going to happen. The majority of these occurrences happen when implied volatility is low, which is why we still allocate a small amount of capital to short premium trades when implied volatility is low, although there is a higher exposure to outlier losses. So people say to us all the time, why are you still doing this stuff when implied volatility is low? And our answer is because there's still opportunity. As you see here, 80% of the time that implied volatility stays within a -5 to +5 range is when implied volatility is low. And in those cases, 90% of that time, those positions are profitable. So there's a very strong quantitative or mathematical case to be made for trading even in periods of low implied volatility. You make less money, your probability of success is very high, but there's a lot of times when, it works just because we stay in these narrow ranges.
Good job, Sadnaf. I don't know if you've been watching the market while you were talking here. I mean, even the S&Ps were just down around 40. NASDAQ was just down around 60 or 70. NASDAQ's up 9. Even the S&Ps are down 20 and change. There is a fight going on between the bulls and the bears right now. Volatility's still up 60 cents.
What are you thinking?
I'm encouraged. I mean, Apple's down 4. It was down around 6.5 just a minute ago.
7
encouraged, but man, this volatility does not want to contract. I mean, it just does not want to contract. If volatility doesn't contract, we're not going to get our legs underneath us. And volatility is not contracting right now. We're 23.30. The highest 23.85. Let's take a quick 90-second break. I'm perplexed. I don't know if we got more Tasty Live after this. What comes up next? That's right. Your friend and mine, Mr. Scott Sheridan, next. We'll be back in 90 seconds. Tasty Live.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Today's Kashmir Pulaski Day. So
I know you forgot the pushkis.
I brought you cherry pie. What do you want from
me?
Yeah, it's
You're
tomorrow.
conflating just because I'm saying things that are in Polish. You think it's the same thing. Kashmir Pulaski, a freedom fighter. He's honored here in the city. This is his day. Tomorrow is Fat Tuesday or Mardi Gras, and that's Punchki Day. Two separate things. They both happen to be Polish words.
Are you sure it's tomorrow or Thursday? I thought somebody. Oh, yeah, tomorrow.
No, it's tomorrow.
Anyway,
Fat Tuesday. When is it ever
Fat Tuesday? Fat Tuesday's never on Thursday.
My chili is so spicy, it'll burn your face off.
Yeah, that's not good to me. Like, I like spicy stuff, right. But just because it can burn my face off, that's not what I'm trying to do. I'm trying to have a nice meal. I'm trying to eat something nice. Your chili sucks. It's all right. Don't worry about it. Don't be
actually,
upset.
if we're going to get after it, your chili does suck. We'll leave it at that.
Oh, my God. I can't listen to you guys. Good. You're not getting any more. Either you.
Sosnoff got me sick.
I definitely did not because I'm perfectly healthy.
Yeah, you are annoyingly healthy. Yeah, that is true.
And he is he's dying. He was hacking up a lung here yesterday.
I think it is the titration of you just disobeying food safety laws. I think it has worked in your favor.
For sure.
For sure.
I think it has.
Yeah. I don't think it's replicable in a general population, but I think for you specifically.
I got another one, Sadnop. I go to my local bank over here last night after the close, and I'm talking to somebody, and I had to do a wire transfer, blah, blah, blah. I'm talking to the guy, and they're having a problem with the wire transfer and all this other stuff. So they go, let me get my specialist guy. And who walks in? The Vanilla Gorilla. Remember Liz and Jenny always talk about the Vanilla Gorilla, the best nickname on the floor because he had all this hair coming out of his chest. He had a big beard.
That's a pretty iconic nickname.
It's him. He goes, Bat! And I look at him, and he was all clean shaven. He had his shirt and tie on, so I couldn't, I didn't recognize his chest hair or anything like that. I go, Vanilla? He goes, yeah. And anyway, he's the big manager there at the bank. So I got an in now. If you need it, you can have an in too. We got the Vanilla Gorilla on our side.
I don't need an in at the Skokie Savings and Loan Bank.
It's the Glencoe Credit Union. How dare you?
I don't even know the Glencoe Credit Union.
I got Giuseppe in New Orleans. What's up, my man?
I've noticed the last 2 days to talk about your birthday, but those two guys next to you never once saying happy birthday to you. Happy birthday to you.
To you.
Happy birthday.
You belong in a zoo.
Happy birthday.
Hey, Sadnov, now blow out this candle.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
There's a beast in the financial world. And it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live. That's right, with this man. Tasty Trade World Headquarters and soon-to-be world traveler. That's right, your friend and mine, Mr. Scott Sheridan from the Scott Sheridan Studios.
Good morning. 2 things.
Okay.
Love the shirt.
Thank you.
Very springy.
Thank you.
Very fresh.
Thank you.
Yeah.
Wow, Vanetta complimented me too. I'm going to have to wear this more often. Thank you.
I find it to
Very
be
nice.
appalling.
You find it really what?
Appalling.
Appalling? Appalling. But we'll talk about Sadnov's wardrobe in a minute here. He has pending wardrobe change he has to do.
That's A-Pauling. So it's from the manufacturer A-Pauling. More importantly, did you watch Honora last night?
I did not have time yet. You know, I apologize. I will get to it. Can you give me the week? Can I get through the weekend?
Yeah, but I'm not going to be here, and my time zone is going to be off, and then we're not going to be able to talk about it, and then you're going to forget. So you promise me you'll text me.
I promise you I will text you. I promise you I will text you.
Okay, more importantly, I want to call in from the Cubs Dodgers game when I'm in Tokyo.
Yes, that's what I mean by world traveler. For those who don't know, Mr. Sheridan is going to Tokyo.
For the Cubs-Dodgers Cubs home opener against the Dodgers, 2 of them. So it's funny, I've never been to a home opener in Wrigley, but I'm going to Tokyo Dome to see it. But to be fair, we are guests of the Cubs. I'm very excited.
Must be nice.
Must be nice.
Well, Mr. Blackshirt must be nice. Don't talk about it because you could have been must be nice too, and you chose not to.
Well, we have a fiduciary responsibility to our viewers.
The show is more important to me than
That's right.
home opener in Tokyo.
That's right.
With unlimited sushi.
Well, I'll be coming in and I will be showing.
I can't wait for you, Scott. I'm so excited.
Thank you, Beth. And I will be calling in from the Tokyo Dome. I have no idea. What else do they do at the Tokyo Dome?
I think that would be
baseball
great.
there?
I mean, all kidding aside.
Sumo wrestling.
Are you joking? Are you really going to do it?
I'm 100% calling in.
Oh, you got it. That would be awesome. You got to have a hot dog in your hand. Like, you got to be staged a little bit.
Hold
you
on
gotta
a second.
Or sushi or whatever it is they eat.
I want a hot dog. I want a hamburger.
Right now, this is going to be a problem. I don't know if I'm going to have to call in. I'm going to have to call in at the beginning of your show because it's 11:29 at night. You figure the game's probably 7 till like 9:30. So I think if I call in, I'm going to have to call in like in the morning, right when the show starts at 7.
We would love that.
Be crabby with me. Thanks, Beth. Because Tom and Target are like, we don't have space for that. We don't want you calling in right when we start because we have more important things to do. I'll work it out with Beth. How's that? You guys just sit tight. We'll put the whole thing together.
I like it. I think we have to do it. I think it would be great.
Don't mess up the flow.
Okay.
Don't mess with the
I won't. Tom, would you like me to bring you a Hello Kitty or anything from Tokyo?
No. And don't try to
Vanetta wants one.
And don't try to let
Kitty?
JJ get on. Don't try to let him sneak on air either.
I don't know if I'm sitting with him.
What?
I mean, I don't know if I'm sitting with him. I've got my tickets. I don't know where his seats are.
Oh.
I mean, I have to imagine I have good seats.
If you could, just try this.
Yeah.
We would rather speak to Tom Ricketts than you. So if you could get Ricketts on.
Oh my God.
Okay. Try to get Ricketts first, and you'll be the second choice.
Done. How about that? Just for you, I will try to get Tom Ricketts.
Because he told me last time that he would come on air. So if you can't get Ricketts.
So for people that don't know, the Ricketts own the Cubs.
Yeah.
So,
But if you can't get Ricketts, get Jed Hoyer. Okay. Because then we'll speak to him.
Wait a minute. I just got bumped to third.
No, you're going to be bumped to fourth. And then if you can't get Jed Hoyer, okay.
He's not done yet.
Yeah. Then
Wait a minute, Tony, is this what it feels like every day?
Every day. Yeah.
Hold it.
Send me the list. Ricketts, Hoyer.
Ricketts, Hoyer. Craig Counsell. I'd like Craig Counsell. Yeah, the manager. But he's going to be hard because he's going to be.
He's going to be on the field. I don't think I can get him mic'd.
Yeah.
You got to show. I'm going to get Ricketts. How's that? I'll get Ricketts for you.
You know what? I'm going to do one better than you. Tony from Mexico is coming on the show next with Liz. Is actually an expert in Japan and Japan culture. He goes multiple times. Has gone multiple times a year.
We're not.
So we're going to ask Mexicans.
So we're going to ask Mexican Tony. That's right. Mexican Tony to give you pointers on where to go and what to do and how to behave.
What's the other guy that runs? Who's the
Who's the GM?
Yeah, the GM is he's a really nice guy. Oh God, I gotta look it up now. I forgot his name.
Carter Hawkins.
Super young guy, very nice.
Carter Hawkins.
Mm-hmm.
Yeah, you can get him for sure.
Said it twice.
What?
So now, wait a minute. Am I now fourth or am I fifth?
No, you're fourth after Carter. He's a nice guy and he's funny and he's interesting and he can tell us about lots of different things
I'm a
about
nice
baseball.
Guy.
What?
I'm funny. I'm interesting. I'm a nice guy.
You're not.
I'm interesting.
You're not. All you got is some bad food stories. How you had. I got sushi. I had my omakase. They laid it all out. You know, we don't want your omakase stories. We want.
You know what? Beth is much easier to deal with. She's just happy. Like if
just
I
remember
call,
the order.
Okay, you know,
Ricketts.
I got it. Ricketts,
Jed Hoyer, Carter Hawkins, then you.
Me. So I am fourth.
You're fourth, unless Craig Counsell for some reason is available.
Or Mrs. Ricketts or Mrs. Hoyer or anybody else.
Nah, I don't know them.
You know what? I'm getting Ricketts on. How's that?
Yeah.
Okay. I'll see what I can do. I'll report back.
Okay.
Wow, this is a tough crowd.
I'm guessing there's going to be a couple of. They usually travel with a couple Hall of Famers. So if you have your choice.
Oh, so now I just got bumped to fifth or sixth, depending on
if you could get Andre Dawson, I love the Hawk. I'm a huge fan.
I like the Hawk.
I'm a huge fan of the Hawk.
All right.
So Andre Dawson usually travels with them, and so does.
Do we have anything if they do come on? Do you have any like B-roll or mound ball or something that we can show so we can show there's a connection with Tasty and the Cubs?
No, but we could talk about our ideas for option
new ideas
for our new ideas for creating an option market around hot dogs.
I like it.
Comes up with ideas. You got to give them that.
Yeah. So we can talk to him about the.
There may be harebrained and cockamamie, but he comes up with ideas
about making hot dogs optionable. And I
like it.
Yeah. I think
Speaking of which, optional, I was at Costco today. Yesterday I was at Costco. I mean, the $1.50 hot dog and soda is there anything better? And it really hurts me. If you go to Google the Costco that I go to, it has like a 68 out of 100 rating. How is that possible? How could Costco not have 100 out of 100?
Well, I mean, they're not going by quantity, they're going by quality. You know, here in Chicago, you're a Chicagoan, even though you're a world traveler now. I mean, you like the quantity of it.
Yeah, and
I agree. Their dogs
what is there not to like though about? Forget that. just Costco in general. I'm not talking about the 68 for the hot dog. I'm talking about the store. Got a 68. What could you not like about Costco?
See, this is the problem with Scott when he's in Tokyo. Like he's going to be in Tokyo. He's going to be sitting in the stands, and he's going to say something like, and he's going to be like, I'm in Tokyo, and I'm going to tell you something. The Costco hot dog is a little bit better than the ballpark hot dog here, and we're going to have to listen to the whole story about Costco. That's why I want Ricketts on.
I did just get a list of the world's best pizza places, and number 3 or 4 is in Tokyo.
There's a couple of the
Actually,
best pizza places.
Joe Mama go there?
There's a couple of.
Or
was that China?
It's Joe Mama. There's a couple of really good pizza places. I'll have Joe Mama reach out to you and tell you where they are.
There you go.
In Tokyo?
When he gets back from Milan.
Yeah.
But he's almost broke.
Okay. More importantly, I need to get there because even though I'm number 5 or number 6, I need at least a couple seconds because I'm going to have my jersey on with my name on the back.
Oh my God! Please don't.
You have to start it. You have to start the presentation from behind, like with just your name, and then turn around. You have to do that. Hi, I'm Scott Sheridan from.
Please do not embarrass all of us by wearing a jersey with your own name on it. Do not embarrass all Cubs fans around the world.
I think it's very appropriate. Because I think it's now for sure I'm doing it. If it's going to bother you, I'm doing it for sure. So we'll start off with a shot with me in the 6, and then it'll have my name on the jersey, and then we'll go from there. And I'll try to get Ricketts on.
They'll probably give you clothes over there, so you don't have to embarrass.
Look. So you don't get beat up. Have her wear the jersey, okay? Just have her wear the jersey.
Don't wear your own jersey.
Don't wear your own name, please. For the love of God, don't do it.
Wait, is it okay if the 6 can wear it though?
Yeah.
No.
Yeah. Let her do it.
No,
let her do it.
You can't wear a jersey with your own. It's unethical.
Okay, but see, had you accepted the offer, which you were so graciously offered and you denied in a very rude manner, you would have received the swag bag, unbelievable swag bag.
I got it.
So no, you didn't.
I got the jersey.
What was in it? Not the jersey. That's the jersey for the season.
Oh.
That's for commoners. Okay. It's the swag bag for going to Tokyo.
Oh, I didn't get that.
Ouch.
Right.
Ah, you hurt me.
Yeah. So it says Chicago Cubs in Japanese on the jacket. Got a nice baseball hat, a scarf.
Oh, yeah.
6 got a fanny pack. I mean, there's a lot of stuff in there. Would have been good for you, but
I didn't get anything.
The invitation.
I didn't get anything.
Yeah. And Beth, you got to make sure I know who your friend is so I can say hello.
Yeah, I have 2 friends. They're great. You'll have fun.
Okay.
Great.
There you go.
I didn't get anything.
Okay. See? Oh, and even better, Tom, you're going to appreciate this. JJ got the wrong size. So he went to the Cubs. They were lucky. He was lucky enough to swap it out. And guess what they had? They gave him one of those beautiful putters that you have, but not from that one. It's for this because we were invited to play golf in Japan. I turned it down because I'm going to stay with the 6, but a beautiful golf course. And I guess they're giving everybody that's playing golf an amazing putter with a Cubs putter cover in Japanese.
Don't worry. I got pita today. It's going to be fine. I got a trough full of tzatziki and some other crap or whatever it is in there. Hummus, as Sadnov says. Don't worry. I'll be fine. I'll be fine. Here, Bat, have some. We'll give you some. There you go. Just take like a ladle. Yeah, you gotta have some.
Well, it's better a ladle than his finger or his paw. Just take the whole thing. True. Right?
Very nice.
Pita is good. All right. Should we get to some business?
No.
I think you pissed me off.
Yeah, even the S&Ps are down 57 now.
Yeah.
You annoyed the crap out of me. You brought the market lower.
Yeah,
with you
you've ruined everything. Yeah, you've kind of ruined everything.
Has Nicky gotten bullish yet? Has he gotten bearish yet? I just want to know when are we turning here?
I don't know if Nicky's gotten bearish, but he must have been watching the show a little bit on delay because he just DM'd me, and Tom did a show on Sunday. Some people came from far and wide, Florida, Boston, to name a few, and Tom said they all came to see him, and Nick is like, they came to see him? I mean, Nick, Katie, and Mike presented, but they came to see him?
No. I said between you and me.
Oh, okay. Oh, between you and I. Got it. Mm-hmm.
Yeah, tell the little...
Sadnov's making friends all over the place today. All over the place. Mm-hmm.
All right, I don't like this market move now. It caught me.
As foretold, Sadnov, as foretold.
As foretold.
Plan it. You can't really be surprised with what's going on here.
No, I'm not that surprised. But this morning, I thought there were certain stocks that I had to get a little long. Didn't work out.
So what I'm fascinated by was that I don't think there was one sane person out there that said we were going to have a recession this year, and now it's like a lock.
Well, they're going to tell us when we get out of the recession.
They're going to tell. Well, I mean, they do a lot of things. Trump just said it was okay today to buy a Tesla, though.
Yes. Well, one himself.
He said okay to buy it.
Yes. Tesla's actually unchanged now after being up to
Trump said it's okay to own a Tesla.
36. It was up $14, $15 higher than where it is right now. It's
is there a brand? Is there a brand that you could think of that shifted as quickly as that brand did from representing one group to representing another group?
Never.
I mean, you went from people who are environmentally, conscious, just people buying an electric vehicle because it was trying to do the right thing, to now it is just I'm not saying it because I'm going to get AD, also leave it alone.
Trying to do the right thing with all those metals that we don't have enough of. Sure, I got it. I got you.
Yeah. You could buy Tesla now down on the day, and you can buy Nvidia.
See, what we did was here. Let me just show you what we did. So for you
can buy Nvidia down on the day now.
You can buy them all down on the day. We charged you a large price for the Tesla when you bought them, and now we're buying.
Now you're buying it back.
Now we're buying them on the cheap. Once we buy them on the cheap, we'll get them back to fair value again. We got you coming. We got you going.
As soon as we get back to Chicago, there's going to be a Tesla X that's ready. So if you want to buy another one on the cheap, you can have it.
An X? No,
an X.
No, I want Sazas.
Yeah.
No, but Grove's already got it.
The Gullwing.
Yes. Yeah.
It's we're at. So as soon as that car gets that car's at, okay, whatever, you can have it.
This is not the one that was in the accident, right?
No, that would be mine. And now that's got bad juju, so I gotta get rid of that one too. So we gotta get rid of two cars when we get back to Chicago. Yeah, bad juju, can't have that one.
Bad juju.
Bad juju.
I think Scott's bad juju for the market.
Scott, I'm not going to have him on the show anymore. We were doing just fine without you.
You know what?
Now all four indices down around 1%.
Yeah.
I'm happy to be your punching bag.
Volatility making highs. 23.96 up $1.30. That's almost 6%.
Yeah.
Wow.
Higher than yesterday.
Would you buy anything here?
No, but I'm itching. Yeah, wait for volatility to sell off a little bit here, Saz.
I know.
Would you buy anything here?
I think they're going to close up on the day.
I already have long delta and stuff that I don't want. Do you need more long delta is what you're asking me.
I wonder. Let's see. SPX. SPX. I don't usually.
Can you not buy anything today? I don't want you cranky tomorrow.
I'm not going to be cranky. But
SPX, $54 expected move for the rest of today, Sal. Off $102 expected move for tomorrow for the week.
ES had a 100 point move overnight.
That's correct.
There's no cheap options in the 0 days.
Think about that. Cheap options. Really?
There's no cheap options in the 0 days. If you want to buy the 5,700 calls, right?
Buy the 5,700 calls?
Buy the 5,700 calls.
They're $1.
Yeah, they're $1. They're $1.
Yeah, the 5,700s. We're 55, 60.
Sir.
What?
Go sell them, sir.
I'm not selling them. I'm just saying.
Go to the other side. The 54.30 and change are $1 on the downside. You could go basically 2 times, 1.5 times. No. The expected move for the day is only $50. You can go 3-4 times the expected move on both sides and collect $2.
Well, I did something.
Yeah, but the problem is to do that you need $100,000.
Oh, I get it. No, you use some sort of defined risk, collect $1.50 or something like that by a wing.
Yeah, but the problem is the spreads don't trade for anything.
Well, you could do like $100 wide spread or something like that.
Yeah,
you're basically doing a synthetic strangle.
Yeah. Because we got to end somewhere, right? Just let me know. Let me know when the youngin is bearish.
He hasn't answered yet. Let me ask him.
Yeah, because the steam's coming out of his ears right now.
He's not happy with you.
I'm sure he's not.
Yeah.
It's okay. Am I really not doing my list there? You guys just
No, do your list. Do your list. I'm ready for you now. I'm so sorry.
Well, you weren't ready 5 minutes ago when I said I wanted to do it. They're like, yeah, you didn't care.
Wow. I apologize. Ooh, somebody's a little.
I told you you have a nice shirt.
You were nice.
I asked you how you're feeling.
You were nice to me.
I asked you how you're feeling.
I know. I'm a little mad now. Even the S&P just rallied about 20 handles that like Sadnov may have painted the bottom here. Say, could we buy him? And I said, no, not yet. Volatility has to downtick a little bit. Now, it did downtick 30 cents, but he did get it right so far. We'll see.
Did you hear a ding? I didn't hear a ding.
Ooh,
No,
Nikki just said, I'll put my yearly returns against your yearly returns if you guys want to match. He's putting it out there, Sadnov.
I'm not saying a word about the poor kid.
He's putting it to you, Scott. There you go. He'd give you his yearly returns, Nick, but he's going to be in Tokyo. Can't do it right now.
Exactly. All right. Top 15 symbols going through the system. First 40 minutes of the day. No broad-based indices or futures. Tom, for you, number 15. IBIT at a 99 for everybody else. Tesla at an 89. NVIDIA at a 55. Apple at an 86. Oracle at a 64. Amazon at a 73. PLTR at a 103. Meta at a 55. Coin at a 69. TQQQ and an 88, AVGO at a 69, MSTR at a 51, GLD at a 51, Microsoft at a 72, TSLL at a 113, and number 15 for Tom, IBIT at a 99. Rounding out the next 10, AMD at a 54, Hood at a 117, Google with an L at a 67, Netflix at a 67, SLV at a 32, SoFi at an 82, Bob at a 75, SMC at a 37, Intel at a 76, and DAL at an 82. And did I see, speaking of DAL, did I just see Southwest Airlines just got rid of 2 free bags? You have to be like status.
Yeah. Tony was complaining and they got rid of it.
And they're turning into Frontier Airlines now. Love traded all the way up to almost $33. Trade down as low as 30 just now. It's up $1.60 after being up $4.
That was their hook.
Yeah,
that was their hook before they realized they needed to make some money somewhere.
Right.
So join in. So now, unless you're an A-lister or
they're going to quote unquote reward the
status
travelers, the status travelers. That is correct. Like people like Sadnov who get free bags on. Is it American?
Yes, we get free bags on American.
Free bags on American?
Yeah. Free bags on American, yes.
Uh-huh.
I haven't checked a bag in 10 years. So free bags don't really do anything for me.
I'm a bag checker. I know.
You get the cheese cube too. Free cheese cube.
You're a bag checker? I can't believe you're a bag checker.
Like, it depends on where I'm going. We'll see. The 6 is the bag checker. So, because you got to make sure the outfits work. So I got to say,
I can't believe you're checking bags to Tokyo.
Well, here's the problem.
Oh my God.
I am not bags, a bag. So what I didn't realize was this is a little fancy. So it's actually a good thing you're not going, because I didn't have the proper clothes out here.
I forgot to mention, Sadnov has to do. He has to be Palm Springs chic in a couple of weeks, and he was asking for ideas on what to do.
I was not asking for ideas.
Yes, he was. And I wanted to be a little bit flowing, like a flowing kind of linen, oversized R&D, like, you know what I mean? Like maybe some big chunky jewelry on him.
I think that's good. With some nice slides.
Yeah.
Like Gucci slides.
Yeah.
Yeah. Tom, that's you. That's you.
Size?
Just flip the hair every once in a while. So wait, something
You'll find
changed
yourself a new one down there.
Something changed. Wait, something changed from the concert with no event, just a concert. There's now a PNC Palm Springs party.
No. He's making this up.
I am not making it up.
There's no way.
Were you not asking for help this morning?
I was not asking for help.
I walked right in. You were asking about the bets. Like, I think you should wear linen.
Hey, Tony.
No, I said I can't wear
jeans.
Weird.
Hey, Tony.
Yes, sir.
I have intel that I wasn't going to share, but you're not making this up. I have from the horse's mouth, from an attendee of the event, that this is a fancy schmancy event. So calling out your BS. We're calling out your BS, and we'll leave it at that.
Come on, he wants to take you shopping.
Oh my!
I'm dying to take you shopping. I really am.
Get out of here.
I'll buy.
Oh my God.
I'll buy. My gift.
I don't want your gift.
If you could get him in a Don Johnson outfit like this.
Now that's Miami. We got to get him in something.
You know what?
Maharaja Harishi kind of.
Beth, you could do this. She's Palm Springs chic.
I vote Tony. Tony will knock it out of the park.
I would.
You would.
Strolling down Oak Street. It'd be lovely.
I would. A little deconstructed something.
We're going to film it.
I got content.
Oof. There's a lot of silence over there.
Content. We need content.
We need always looking for content.
You got exposed. Look at when you get. You know when you get exposed because you get quiet.
Yep. We got him.
You get very, very quiet. That's okay.
I think it's kind of. I just think it's kind of funny that all I said this morning was I'm not allowed to wear jeans, and Tony interpreted that as, oh my God.
Why wouldn't the missus take you shopping or just go buy things for you?
I want to hear this answer. I'm going to record it. Go ahead.
Have you met her? She doesn't care.
Well, she told you can't wear jeans.
She didn't tell me.
Oh, he did?
Yes.
Oof. That hurts.
Yeah.
Coming from the offspring, telling you can't.
She only cares.
She was telling.
She only cares what she wears. That's for sure.
I know she's not going to be in jeans. Okay, no. She will be properly dressed.
Yeah, no question. So I'll be in jeans. I mean, I'll be in some form of. I won't be in jeans. I'll be in some form of casual.
See, for those that I haven't said this to. There's 3 rules of life. Most people know there's 2. The 2 rules are death and taxes. I have a 3rd. If you're ever in a room with you, you know you're better dressed than at least one person. Okay. There we go. It's okay. I think linen pants, linen. Go shorts. Go Bermuda.
I don't do shorts.
Jorts. Yeah. He doesn't like it if it hangs. So jorts.
I don't do shorts.
I don't get that.
Jorts.
I don't get that. My son is like that. He won't do shorts. Actually, both my boys. Neither of them will do shorts. They're like, what do we care? Just put pants on and just get through it.
Vinny loves shorts. He says he has the legs for it.
Of course, he's a Batista. Of course, he's got the legs for it. He's a Batista.
It's a quote. I have the legs for it. Dad.
What Batista doesn't say he got the legs for it. Okay, that's passed on from generation to generation. I got the legs for it, Dad.
Tom and Sheik should be the biggest oxymoron in history. So far, that's the feedback I'm getting so far.
You could pull it off. When is this, by the way? Soon?
See, I just messed this whole thing up.
You did. You had it.
I had it.
You had it. I didn't give you the push that you needed, and I apologize.
April. I have to be ready by April.
You have to be Palm Springs Chic ready by April. Are you going to have like a trial run? Like you're going to do a show for us, like a little something?
Parade around. I could.
I would like that.
It's going to cost you a lot of money. It would cost you.
Me too.
You'd have to take your checkbook out for that.
Okie dokie.
If you do a twirl with a twist of the hair, oof. We got something.
All right. Now they're rallying. He just missed.
Remember, they're down 42. You have time.
They're down 42. I missed the whole rally. Nvidia's up on the day.
That's what we are now. Thing. Mm-hmm.
I missed the whole rally.
30 cents. You missed the whole thing.
Mm-hmm.
I missed the whole rally.
Tony, I wish you well.
Thank you, my friend.
This day cannot end well for you because regardless of what happens, it's your fault. You either stopped them from getting long, or if the market goes lower, it's going to be your fault because he covered some stuff or he bought some stuff. And
all I'm doing is scalping stock today while you guys are yakking up.
He is scalping stock. Bought NVIDIA 6.5.
Not as good as they should, but it's pretty good.
Okay.
All right.
Making 50 cents on 100 shares of stock.
Hey, I'm trying.
Oh no, he's up to a couple hundred shares now. He's got like his wife gave him some money or something like that. He's upped his game. I don't know what happened over there, but he's definitely upped his game. Something happened.
Love that. I love that. All right.
All right, my friend. Well, I'm going to take a quick 90-second break with you because I've had enough of him. We're going to take a quick 90-second break. Sound off. Even the S&P down 43, NASDAQ down 67, Russell down 8, Dow down 500. Volatility up 90 cents. Are the lows in?
Yeah.
For the day. Well, are the lows in? You go, yeah. And I say for the day, which shouldn't change your answer. And now you're thinking, be definitive.
We're going to close higher at the end of the day.
We'll be back in 90 seconds. We got more Tasty Live right now with Liz and Tony from Mexico. You can see him on the follow page. And, well, you can see him on the follow page, but you can see him right after this piece.
Who also has an expertise, who has a minor in Japanese.
Cuisine. That's correct. That's correct.
Is he going to tell that story?
He's going to help you out. Probably.
Oh.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. With stockbrokers.com, we're number 1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
everybody, and welcome to my favorite day of the week. It is my great honor to have on I cannot believe he gives us his time. This is one of my favorite Tonys. Don't tell the other one. He's actually my favorite Tony. Do not tell Batista. Do not tell Batista. It's just us right here. But it's my favorite, Tony from Mexico. Thank you so much for giving up an hour of your time to be here with us
today. It's my pleasure, Liz. I love doing the show with you. It's always a lot of fun. And hopefully we can give the audience some value, of course.
Okay, so I'm going to give everybody, we get new viewers all the time. So for those of you just joining us, Tony from Mexico is on the follow page, which I will pull up on when we jump into the platform. He has been with Tasty since its inception, which I don't think a lot of people realize, since the very, very, very beginning. But he is not just a trader. He is the best entrepreneur that I know. And don't tell the other Tom. But yes, so he has, you have lots of lots of cooks in the kitchen, lots of irons in the fire. And so I'm always so honored when you will give me an hour of your time so we can dive into what you're doing trading wise, entrepreneurial wise, anything that you want to talk about today, Tony. It's all about Tony.
Thank you, Liz. I love trading. I love working. I love starting new companies. And I don't know why I keep doing it. I tell my wife, why am I doing this? And, a year and a half. You're an
addict.
I am an addict. It's better to be addicted to work than to something else. But, I love that. And, I still have energy and I still have maybe 20 years. I don't know, maybe 2 days or 20 years. So who knows? But I want to keep doing stuff and have fun with it.
Well, and being the entrepreneur that you are, I love listening to your take on the markets because you look at it from almost a different perspective than a lot of other traders do. You follow the tasty mechanics a lot of the time, but you also can get extraordinarily creative a lot of the times as well.
Yeah, I've been working so hard on my other companies that I don't have the same amount of time to look at the markets like I used to. So last year, I set a goal to, try to make 1.2, 1.3% a month, and I was able to get to 1.4. So I think maybe not watching it 100% of the time has helped me. And this year, believe it or not, I ended February 3.2% up. Even this last Friday was 3% up, and now I'm down 1%.
Oh yeah, this is taking a little bit of a bite out of a lot of people's portfolios.
Yesterday I broke some of my Liz and Jenny rules, so I said it's ridiculous. So I went a little bit bigger than I normally go, and. So that's something I wanted to talk to you and talk about so everybody could listen how you and I feel about these markets. So I think there's maybe 2 or 3 or 4 different types of people watching us right now. First type of person I think is watching us is a person who's normally always long and always adding, and they have done very well for themselves, I think. If they never sold, if they're always been long, and down moves like this maybe scare them because they're used to seeing their account go up every single day, right?
Well, and the buy the dip mentality has been enforced for years. If you get the little dip, this is a buying opportunity, and you've heard it all over the general population.
Exactly. That's the second type of person that just buy the dip, buy the dip, buy the dip. It's never going to go down. And then the person who follows tasty mechanics, who's a little bit short delta, more neutral, positive theta, etc. And at the beginning of the move, they were very happy because that short delta helped them help their positions, and they were making money, etc. But now this move has moved, I think, past that short delta, and maybe most people that trade correctly are long delta right now.
And I mentioned this yesterday with TP. He was on the show, and I said, if you're trading the tasty mechanics, you are long by chance, not by choice right now.
Exactly.
Because once it moves too far, too fast, everybody's deltas become long. Long. They grow teeth, right?
Yes, they grow teeth. So I wanted to throw out a word of caution. So I've seen this movie before. You've seen it a million times like I have. So we all want to sell calls to protect our positions. And, when you sell it and it keeps going down, it feels nice for, maybe one day or something. But when the rip off your face rally comes and those short calls that you sold to protect your portfolio are now like 50, 70, 80 points in the money, it's very hard to get that money back. So
it really is.
Yeah, I wanted to talk to you and see if we could come up with ways to add short deltas that will not completely destroy your account if we rally hard.
So I want to use your information on here, and we could talk through all these scenarios. But did you add short delta into your position this morning? So basically the crux is, how do you get short delta when the market's already down, right? Is that the kind of the theme of it? If the market's already down, how do you add short deltas to your account without it being
This morning I did not add short delta. I did not.
You did not? Okay.
I did not.
So I will tell you, you've in shows in the past, you've changed my trading in the fact that I remember talking to you about fighting down moves by adding another downside ratio spread. It's almost like kind of like when you would lean into the pain. If you were taking the pain, if you added another one, it kind of smoothed out where your house of pain would be, and you can kind of go from it in that direction.
That's correct. Yeah. So I have some of those trades on. For example, I have some problem children at maybe 58.50. So, for example, let me show you a trade that I added.
Yeah, so let's pop in the platform, Beth, and I'll walk through all this stuff for Tony. And when I want to say another thing too, I'm almost positive, and you can correct me if I'm wrong here, Tony, but you almost exclusively trade SPX, correct?
Yeah, SPX. Yeah, mainly. Yes.
Okay. I mean, I'm sure there's covering on this.
Here we can do, we can do, on Aspire everything. So let me show you a trade that I thought was good that's not good anymore, right?
Story of our lives, Tony. Story of our lives.
So let's see how we could defend that trade. So I bought the May 57.50 long put.
So you're going to May. So May with 65 days. Okay. Wait, hold on. I'm not going to go to AM. I'm going to go to regular May if I can.
Yeah, May 16. Yep.
Yeah. Okay, there we go. So you bought the 55.50?
57.50.
You bought the 57.50 put?
Yeah, but sold one 5,700 put.
Sold one 5,700 put. Okay.
And then sold the 5,300 put.
So one by one by
one. 111.
The 111. Okay. Now this is pretty wide. Hold on. So I'm just going to make sure I got this in right. So I bought one 57.50 put, sold one 5,700 put, and bought one 5,300 put.
Oh, sold the 5,300.
Okay. So I'm selling two, buying one.
Selling two, buy one. Yeah.
Correct.
So
okay. There we go.
I thought this was a completely great trade. Sold it for $30-some. Now it's 80.
Tony, I know you're a true trader because we both laugh when we say this. Other people couldn't handle that, but we both laugh.
I know I'm safe till 52.50, but right now I'm in trouble,
Yeah, you are in trouble right now. But that happens. When did you do that? This morning?
No. I did that maybe last week. Last week I was in Texas, so I was doing stupid trades when I was in Texas.
So if it makes you feel any better, I'd rather be tested earlier in the cycle than later, and this is earlier.
Yeah. Now, I wish I could take profits on the long put vertical, the 5,700, but I can't.
No, you need it.
It's still a lot of time. I would close it if I could.
Well, verticals don't give you full profit or near full profit until the time marches on until the end.
Right. Let me show you an even worse trade, okay?
Okay, I'll clear this one out.
Okay. So I bought the 59.50.
Are you still in May?
April.
Oh, you're in April. Okay, April. You bought the 59.50 you bought?
Yes, one time. And I sold two of the 57.75.
Ooh, this is a tough one. So this is a regular ratio spread. I'm assuming you did it when it was above 56.50.
Yeah, I normally buy the 25 delta. So
yes. Okay, so what's interesting about this trade though, Tony, and I mean, you have 37 days, and you and I both know that your break even on this trade, as I scroll down, your break even on this trade is 53.85. So you have lots of room to the downside, and ultimately at the end of the day, your sweet spot is if it expired at 57.75 if you sat on your hands.
Well, yeah, it's how wide? Oh, let me see. No, it's not. Listen, it's 59.50. Let me see. It's the April 59.50.
59.50 you bought. Okay, let me
Yeah,
this
59.50, 57.75.
59.50. Hold on, I'm buying this one. Buy one.
Yep.
Whoops, buy one. Okay, so you bought one.
Yeah.
And then this is even better. Your break even's even farther.
No, and then I sold at 57.75.
So you sold two 57.75s. I got this all wrong. Okay, I did 55.75s. I was like, you're in great shape, Tony.
Yeah, I thought so too when I put it on.
So 57.75 too.
So my break even is 5,600, right?
Yes, it should be. Hold on, I'm gonna go back to that's when you put it on.
Yeah.
This is 1, and I'm gonna highlight this one, and I'm gonna go 2. There we go. Okay, yeah. So your break even now is if I've got this in right, your break even is different than what we have because you have a different collection. But yeah, you should be around 5,700. This one, if we put it on now, it would be 54.80 because you're collecting $120 here.
Yeah, but I collected $20 only.
Okay. Yes. So you're in the house of pain.
Well, let's say we didn't collect anything. My break even is 50. It's 175 points below 57.75. So 5,600.
5,600. Yes, that would be around.
And then I collected $20 so 55.80. So
Okay.
I'm at break even. So this is a perfect example how I messed up. So what people don't see is I put this on and take them off fast. So I'm taking a lot of profits on these trades. So let me show you how I protect.
And you take them off. You take them off within a couple days. So there's a lot of risk here. So I mean, we're using massive numbers here. It's it's in the hundreds of thousands of dollars here. Tony is a larger trader. Anybody that's watching us right now can scale down by using the exact strikes in SPY, in ES, in anything. It's all scalable down to a normal size. But you take profits quickly because you're putting so much risk out there. Correct?
Yeah, I try to take $1,500, which is 15 points, 20 points,
And you take your risk off the table quickly.
Take the risk off and thank you very much.
Yeah, for sure. For sure. Now, obviously you're stuck in this one because it's a loss. You're not going to do you take your losses at a certain threshold?
No, I don't think, no. I mean, why should I take my loss? So if something bad happens, we're going to bounce, not today, not tomorrow, who knows. But how would I manage this trade? So I would max out my profit on the long put vertical, which is $175, which is, let's say, $17,000.
Correct.
And then I would roll one of the 57.75s to May.
And honestly, just kind of for our viewers, when you take a look at this, it's all that's happening right here is you have the put vertical, and then you have one extra short put, which you know how to manage that. And when you break it down like that, you break it into two different trades. You would max out your profit on the put spread, and then all you're going to do is roll that put spread into perpetuity.
Not the
put spread, the naked put into perpetuity, because at some point
perpetuity until we bounce.
Yes.
Yes. And when we bounce, boom, take it out. Thank you very much. Next.
But okay, look at this, Tony. As we're talking, we might have hit the bottom, right? As the show started. Look at this. SPOOs are only down 28 now.
We tested the 55, 58 level. I'm not a technician like Tom, but the 55, 58 level 3 times overnight, a few seconds ago, and then a few seconds ago again. So I think. I don't want to call the bottom, but I think at least a short-term bottom.
At least for today, maybe?
For today, maybe. Yeah. Hopefully. So, and let me show you how I defend this dumb trade. It's not a dumb trade, right? And,
no.
We were at 6,000 and my break-even was 5,600. So it felt pretty safe.
Yes.
So a way to protect this trade, I go to March.
Okay.
Yeah.
Do you want me to keep this on? I'm going to clear this out.
No, you can clear it out. But I want people to think about my pain level around 5,600, right?
Yeah. So his break even is around 5,600, but he's using different levels, so it looks different here. It doesn't look like it here. So I'm clearing this out, and then I'm going to go to May. You said regular May.
Yeah, March.
Oh, March. Okay, you're going to go nearer term.
Yes.
Okay.
And then we go to the 5750 put.
The 5750 put.
Which is just a little bit out the money. Buy that once. Mm-hmm. I want to engulf my break even, which is my 5,600.
5,600, which is right here. Now, are you going to sell two at 5,600, or you're going to go lower?
Yes. Let's try to see sell two. I have one, and that's a perfect way to protect my 5,600 level. So I'm going to collect $30, and then my break even is 5,450.
So, and I love layering these on top. Tony, you're the one who taught me about this too, saying that if you're looking at it, I would much rather collect, and this is personal opinion. I know there's lots of different opinions out there, but I loved what you brought up in this, in the beginning of the show, saying, instead of selling call spreads against it, how can we hedge against this? I would rather put more risk. Now you have to be able to start small enough to add to it, but I would rather add the premium selling and defend the downside than add that top side.
Yeah, unfortunately, you need capital.
You need capital.
Yeah, and if it keeps going down, then you have to defend this one.
Has this run for you? Now, I love that you're honest about where your portfolio was, the percentage is up, because I mean, we were in a similar situation with the show account on here. You know, we did great last year, we did good this year, and then all of a sudden, gone, right? And then you're down because at some point when it moves too far too fast, your pain point gets hit, and then you're down. So when you're looking at this, does something like this, these down days in a row, does this scare a big trader like you, Tony?
No, but I'm disciplined enough to say, hey, I overdid it yesterday, so I added a lot of risk yesterday. So now I'm gonna just it's like when you go, I went to Texas last week, I overate barbecue. So when you overeat barbecue, you're not going to go have a big breakfast the next morning, right? So
you try not to, right?
I tried not to. So I overate yesterday. So today I have to go on a diet.
Yes, now I get it.
Right? And I still have some bullets left, of course. But you see, I don't want to put all my bullets at one level. I don't know if you know what I mean. So you
like to stagger them, right?
Yeah. So I put some bullets at 6,100. Then I put some bullets at 5,900. Then some bullets at 5,800. Now yesterday I put in bullets at 5,650. Now at 5,550, 5,590. For me to put another trade on, maybe I'm going to wait till maybe 50. Hopefully we don't get there, 5,400.
And can I ask you a question about your mentality? Excuse me, I'm going to sneeze. But the mentality about how when you're hedging it, you're going to go nearer term.
Yes.
Excuse me.
Yes, because I want a fast payout. Yes. Yeah.
And
if we hedge with the same month list, it's never going to pan out. It's going to be it's going to take forever.
So I had been it does take forever, but in the past, I'll take the break even and put the spike on there too, or start the ratio spread at exactly where the break even is. I like that. And that's kind of what you did here is you put your center strike at where your break even was for your farther out stock.
Yeah. Yeah. And let's say if I want to add more risk like yesterday, and I didn't feel, so I did 2 trades yesterday. I call them the bad trade because this trade I was taught by Tony Batista. So let me show you two bad trades I placed yesterday. One, an aggressive bad trade, and then a conservative bad trade.
That's an oxymoron, conservative bad, but that's a conservative bad trade.
Yes. Okay. Oh, they're broken wing flies, right?
Yes.
So the first fly is what I call an aggressive bad trade.
Okay.
It's the 56.75.
What cycle are you going to start these? Because with those, April. So you're going to go April, not all the way to May. Okay, so April. Yeah. Okay.
56.75, 56.25.
And you're on the call side, I'm assuming?
No, puts.
56. Okay, so 56.75, 56.25.
Yeah.
So I'm going to buy one of these, sell two of these, right?
And then buy the 100 white, the 55.25.
And then I'm going to buy the 55.25.
I did that yesterday because we were at 56.25, but we're not anymore. But look, I collected 15.10, and we're 15.40 today.
That's not bad.
No. Normally, a bad trade, you collect $3.
Can I ask a question just from my perspective? I know that I'm doing it like you do. You're using all puts. So you could use puts or calls with this. You could flip the cards over to the other side. Is there a reason you're using the in-the-money puts?
No, because I like the right side. It's just my preference.
Okay. That's okay. So
and
this is
another reason why I do the put side. So one way I hedge this bad trades is if we're in the house of pain, for every 3 or 4 broken wings, I might sell one 56.25 call. One.
Oh.
Let's say we have 3 or 4 of these. For every 4, I would sell a call if I'm nervous.
Okay, and you're just picking. Okay, so you use the put so you can defend it with the calls. Now, just kind of going through your thought process. So we were at 56.25 when you put this on. So basically, it would be at the monies. So we could replicate this right now, putting it at the 59.90s as our short strike if we wanted to. Right? I could take this and go. Hold on, I'm gonna do this real quick.
Yeah, you can move it down. Mm-hmm.
I'm just gonna move it down. Wait, hold on. I'm going the wrong way. Yeah. Okay, so I'm gonna keep taking the strikes down, so we can get to the at the monies. There's so many strikes. I keep going in the wrong direction. Are we there yet? Yeah, there we go. So this is exactly the same trade. And what did you pay for it yesterday, Tony?
15.10. So
15.10. It's bouncing around because you'll notice, SPX markets are a little bit wide. So you're not really in a house of pain yet, even when you're at the 56.25 level.
No, not yet. No. So if I want to add more risk and look at the buying power, it's not that much. So, normally I try to collect $3-4 with a bad trade. So if I want to add more risk, I would do a $12, $14, $15 credit. And, 50 white risk, collect $15, you're risking $3,500. So it's a nice way to put on more risk, feel you did something on the down move and you didn't waste the down move, but you didn't add a lot of capital.
Will you ever break the wing to the top side when you're doing these? Where, your risk is to the downside here. So you're trying to capture profits, but ultimately your risk is to the downside. You can kind of flip the cards over and break the wing to the upside, or do you typically keep the downside as your risk?
Not really keep the downside of my risk. Now, if we rally hard, I might move the long put up to make it a regular butterfly, if I can do it for cheap.
Okay, so if we rally, you can buy this the bottom strike. This, in this example, it's the 54.90, and you would pull it up and buy, and then complete the butterfly. So you would have zero risk on. If we rally up quickly, you can then take the broken wing and make it a real butterfly.
And sometimes with no money.
Yeah. And so you will do that too. That's pretty cool. I've never we do bat wing trades all the time with the ratio spread and the broken wing, but I kind of like your idea of using all puts. And then if you have multiples, using that call to defend it.
Yeah. I wouldn't sell 1-to-1 because then if we rally up, you're not going to like it,
Oh, so okay. I do remember also. I do also remember years ago that you swore off naked calls.
Yeah. Now I don't mind selling 1 against 4.
Yeah, that makes sense.
So 1 against 4 is not bad. So let me show you another type of trade that I like to do. That I want to add risk, but I don't want to spend a lot of money.
Okay.
So I would do a long call vertical that could go 2 ways. So let's say we go to, let's go to April.
April, you got it.
let's say we buy the 56.25.
Okay, buy the 56.25. And you said long call vertical.
Yeah, long
right?
call vertical.
Okay.
Let's try to see what the half price of that is. The $75. What is it?
Oh, $75 one would be, let's get down. Oh, wow, this is going to be wide. The $75 option is $57.80.
So let's pick something that's 75, just so it's, I like
Right
the
here.
25. Yeah,
57.85.
57.75.
Okay.
Just
That's
so we have-
$75, right? There you go.
Oh, sell the 57.75.
Oh, sorry.
Yeah.
You want the 57.75. Okay. So it's exactly 50%.
Okay. So this, it could go two ways. Well, three ways. If we rally, you see, this vertical costs $74, right?
Right.
So if we rally, I would look to either sell again the same short strike, but maybe for $100, $110. This one.
Okay.
The one we just sold for 75, you see it's already 80, right?
Yes.
So I would be looking to sell that for maybe $100, $110, or go to the 58.25 and try to sell that for $80 or $90 to get a credit.
This is if we rally.
If we rally, right?
Yes.
If we rally, I would try to sell that for maybe, I want $10 credit, $85.
So then you're creating the ratio spread, the peppered ratio spread.
Yes. And that call really doesn't scare me, because if we rally, I mean, I'm going to collect $100 on the long call vertical, and then the break even for the short call is way up, right?
Yes. Now, the only issue with the trade like this is if we just fall out of bed.
Well, if we fall out of bed, so this is what I would do. So we're paying $74, right?
Correct.
And I'm now let's look at the put side.
Where are we going in the puts?
Let's see where the $74 put is right now.
Where a $74 put is. So if I'm going to get $74, I'm going the wrong direction. $74 on a put would be, oh wow, we're pretty far down the 53.05.
Yeah, let's say the 5,300 just for the heck of it.
Yeah, okay. 5,300.
So I would put in a GTC for the 52.50 to sell it for $85, let's say.
Okay, so the long you'd sell it for $85.
Yeah, I would go even $50 more than where we are right now. Let's say we keep crashing. I would go to the 5250.
5250, okay.
And then put in an order to sell that at $85.
Oh. Okay, so this is...
That's before debit. I don't want debits. So this will eliminate the debit of the long call vertical, but you added more risk.
Well, you kind of, what I do like about your style of trading, and not a lot of people can do this unless you're doing it in a smaller scale, is you're actually kind of leaning in. You're leaning into the direction that it's going. Yeah. And that's not a bad way to do, because, and I've been saying this a lot lately because it's the only thing I can say, and I know it's the crypto terminology, but fortune favors the brave. Like when you're in the house of pain, you're actually leaning into the pain.
Yes. So I have one of these trades that went wrong. Okay.
Oh no. Oh no. Okay. So you've got a long, then you'd have a long debit call spread, and you'd have a short put. Now we've done that before. And that's like one of Jenny's favorite moves instead of the diagonal is buying a call debit spread and financing it with a put spread. Here you're waiting to finance it.
Yeah. Let me show you the bad one so people know how bad it can get.
Okay. Right? Show it to us. What is it?
So I bought the 59.75.
Okay, you bought the 59. Oh man. Okay, 59.70. You're killing me, Smalls. Okay, you bought the 59.75 and sold
the 60.75.
Oh, Tony. Okay.
And then I waited and I put in a GTC to sell the 55.50 at $72.
50, and then you sold the 55.50. 55.50?
Yeah. 55. But look where we were. We were at 5,900, right?
Yes.
Mm-hmm.
Okay, so then you sold it for $70. So you're in this house of pain. So you covered your cost. death before debit, but and you probably took in a little bit of a collection, but you're now in the house.
$20. Yeah, I collected $20.
You collected $20.
$55.50. I sold the $55.50 for $70.
For 70. So you covered what your cost of
sell
debit
it.
was.
Sell it so people see. Yeah. So there, I sold it for $20. It's $120 now. So I'm down $10,000. Okay.
But you and I both know that your real break even here is what? 55.30.
Yeah.
Because you collected $20 over.
Yeah.
Now you just have to be able to
suck it up.
Yep. And this is why you're probably hoping for a wee bit of an up move or a pullback in this to get out of it. But
believe it or not, on the first rally, so this is the third one. I had put the last week, even though I was traveling, I did this 3 times and collected maybe $1,500, $1,200, 3 times on this. So I have a GTC to buy this for $10. But you have no idea, Liz, how fast this $120 is going to go to $10.
It does go. It will.
5 seconds.
It can and it will go fast, right? All you need is one relief rally up about 100 points, and you're out of this.
The VIX will come down. My long call vertical is going to start kicking in. So I mean, worst case scenario, I roll this to May or June, and then I don't know, collect another $100. Who knows how much?
Yeah.
But I'm not.
I want to be, like I said, I want to be very clear. These are big sizes for someone, but you can always make these smaller, and you always have to make sure that you can withstand the pain. Because the last thing that you want to do is get your size too big that you're then out of the trading game, right? Yeah. You want to be able to always live to trade another day.
Yeah, and
sizes.
The children, I do them in 4s.
Oh, jeez. Okay, Tony, can I want to show you something that we've had a viewer been doing, and it's been fascinating to me. I'm just gonna pop to Twitter real quick.
Oh my God, thank you. Yes.
So this is Jack Tucker, and so he's been people have been pretty fascinated with what he's doing. Now, it's totally different than you. You're going out and you're following the 45 days till expiration, and I like that. You're kind of following the tasty mechanics. Yep. Jack Tucker is big by big in SPX, and he's doing it in the 0 DTE, and he's been doing these tranches on a daily basis. And even with these wild whippy moves, he hasn't been hurt that much. So I guess I was just trying to show Jack Tucker's, because we haven't been to Twitter in a couple of days.
Please,
but also, do you use the 0 DTEs at all?
No, because I have very little hair left, Liz, and I don't want to lose it anymore. That's it.
But I also think so. He's taking the around 9 o'clock ish, and he doesn't do it on the open. He does it a little bit. He'll do tranches of SPX iron condors, and then it's instant gratification. You're either getting it or you're not. And he's doing that same thing where he'll either roll it out in time another day and just kind of saying it'll all come back in really quickly. Kind of how you were saying with that trade, you get one move, you're out. If it bounces back and forth, it's immediate at the end of the day. You're going to keep all your premium. But
how wide does he do it? Do you know?
Pardon?
How wide does he do it?
So he's usually about 100 points wide.
Okay.
And here I think he's a little bit under, but the bigger the volatility, the more. But he's taking in between $15,000 and $20,000 in premium per day.
And with these tranches. Wide from at the money.
From at the monies, yes. So if the flag's right here, you can see, and he'll do a couple tranches of them. And I think this is only a couple here, but he keeps doing them throughout the day, just kind of adding and kind of shifting how you do, where he'll kind of shift and put him this way, shift and put him this way. So then all of a sudden the P&L range is kind of a big, wide P&L range. But it's been pretty fascinating because it's such an instant gratification trade, right? Yeah. And then his mentality is if it gets close to here, or if he's tested, you kind of let it go, or you can roll it out in time and try again. But it's been really working. And these 0 DTEs and SPX, now that we're on the trading floor, is about 50% of the volume. So I don't want to talk about what we trade, because I get to talk all the time. So you don't use the 0 DTE SPX trades?
The reason I don't use it, Liz, is because I have to look at 7, 8 other businesses. And let's say if I didn't have any other businesses to look after, I would do it.
I'm glad you said that. So it's easier for you, and it kind of smooths things out a little bit to be in the 37-day or the 45-day days till expiration.
Yes.
Yeah.
Yeah. If I didn't have it, I could adapt my trading to shorter time frames. Definitely.
Right.
Yes.
So it, like I said, this whole world is fascinating, and I'll never forget somebody coming up to me on one of the tours we were on saying that once you become a good trader, everybody starts trading. It just all kind of funnels into the SPX, and all of a sudden you're just trading it because it's big and it's liquid.
It's definitely, and no, I think the only thing that could go awry is on the put side. I'm not worried. If we rally hard on the call side, he might be rolling it, but maybe the roll will get away from him.
Right. And I don't know. I mean, at this point, he's been doing it for a while. I don't know if at one point, because it is each day, you're making so much in profit. Maybe if it gets away and it's done, he could be like, I'm out. I'll try it again tomorrow. You know what I mean? Where you're instead of rolling that same one, because he has been doing it for so long that I think he might be like, okay, if this is done, it's done. You don't win 100% of the time, but if you win 5 times and you lose once, you're fine.
Do you know how much he collects? Can we set up one just to see it?
Sure. He's collecting quite a bit, and he does big tranches. So like in this, let me just show you in this example. So his P&L for the day is, today it'll be 14,000. So at the end of the day, if we end in this area, he's taken in $14,000.
Right.
So he's, we're a little bit late to do it, but I'll look at his strikes. Let me go this way. So he's got 1550, 1560. Let me do that. Okay. So he's in the 0 DTE.
Yeah. Yeah. I love 0 DTEs, but someone wants to buy a pickleball business, a golf business, an Airbnb business.
Oh, I'm sorry. When I said $100 wide, I think he's only $25 wide. He just does big tranches of them. So then I think he's here and here. So here you've got $10 on this collection, and you're just doing tranches of it.
Okay, that's $1,000. Maybe he does 10 of those. Who knows?
Yeah, he'll do 10, and then in maybe a half hour he'll shift it. Then all of a sudden he'll have the 50s, not shift this trade, but put another tranche in on top of it.
Yeah.
So he kind of does. That's what I was saying. You guys remind me a little bit of each other because you'll actually take it and just put more on top of it, risk on top of it, and it kind of smooths and makes it a bigger win range.
I like it.
Yeah. It's pretty interesting. It's been fascinating to follow. No, I've done it multiple times, not to his tranche level, but this is something I don't mind doing once, 1 lot or a 2 lot, because it's not a lot of risk even for this account.
Even if you only make $300 or $400, let's say you own I'm always looking. You own an Airbnb that maybe you paid $1 million for. If you make $300, you're making the same amount of money than the guy who owns the Airbnb for $1 million.
Yes. You're the one who taught me this too. You can kind of look at it like investing.
Yes. Yeah. I mean, it's not really passive income because maybe he can go to the restroom for 5 seconds, but
Okay, so Tony, my other questions to you are, because this has been a hot topic lately.
Yes.
I know you also have your children trading, and you have them acquiring, and I hope we've said this on air before. You have them acquiring dividend stocks, correct?
Dividend stocks and S&Ps and crypto and gold.
Okay, so how has that been going for them? Number one, in this crypto down move.
Nicole, because she's involved in finance, she was up 40% last year.
Wow, wonderful.
I hope she doesn't mind me saying so. Her account by herself is now $250,000, and she's 25.
That is amazing. And when she's up 40%, you got to think she's growing it by leaps and bounds. That's wonderful.
Yeah.
And so is she just an asset gatherer, or is she actively trading?
She asset gathers, and she sells the yearly puts that I've mentioned in your show. That's it.
So, and does she use, I'm going to say SPY probably. Let's go to SPY.
Yeah, let's go to SPY. Yeah.
We've talked about this
and
before.
Now she has portfolio margin, so that's even...
that's when it gets fun.
Yeah. Let's go to, let's say, March 2026.
March of 2026. Okay, there we go.
So $12 will give you 1% a month, which is the normal strike she would sell. But now that the volatility is high, I told her to go to the $24 one to get 2% a month.
Okay, so $24
because of the volatility.
Yeah, so it's going to be the 520 put.
Yeah. So look at, you sell the 520, your break even is 500. You're making 2% a month.
It's not bad. It's not bad when you look at it from that perspective, right? And something like this, I'm assuming she's not going to adjust. You're sitting on this.
Well, no, when we collect 50%, close it and reload.
Close it and reload, but you're not micromanaging. You're not adding calls. You're not adding call spreads.
And if she gets a sign, she gets a sign.
And then it's the Wheel of Fortune. Then you're selling calls against
the Wheel of Fortune. Yeah.
Right.
Probably we will do the Wheel of Fortune. She probably would keep rolling the put. Because of the capital concerns. Not because we don't like the Wheel of Fortune, just because it's less money to roll the put than to do the Wheel of Fortune.
Yeah, and it's the same thing if you have the in the money put. How much, if you don't mind me asking, how much of her portfolio does she have allocated to this versus asset gathering of your gold, your Bitcoin?
Yeah, maybe 35%, 40%. Yeah.
And does she have all of her capital at use, or is it less now with the $250,000 account?
Well, now less because of the portfolio margin.
Yeah, you got to keep some powder on the sideline.
Yeah, keep some powder. Yeah, but we still tell her to trade like if she had regular margin, and just keep the portfolio margin as a safety net.
And I always say, use it if you need to. It's good to have, because if there's an opportunity that you want to jump into, it's there, but it's not necessary.
Yes. So that's how she's trading, and she loves crypto, and I've been pushing her on gold is the old man's crypto, which is me, that I'm old. So I told her to keep buying. Young kids buy all sorts of crap. I told her, buy your crap, but focus on Bitcoin. To me, Bitcoin is gold. Gold is gold. Bitcoin is digital gold. And the other stuff, you can make 3 trillion%. That's fine. But I'm not afraid of Bitcoin. And I'm not sure of all the other stuff. I don't know.
Well, there are lots on there now. To your point, we've had so many discussions about this, and I do really think that every time I'm on with you, you make me a better trader just by refocusing and kind of centering on things. I like looking at that return on capital, and this is just asset gathering. And I've been doing that same thing since our last show, where I'm gathering Bitcoin, and Bitcoin and Ethereum. I've done both. Yeah. I've been doing both, and
Ethereum is getting hammered. So let's say if I had $10 and a young guy doesn't want to trade, I would put $5 in the S&P, $2 on GLD, $2 on Bitcoin, and $10 in cash.
That is a good analogy. Okay, say that again one more time from the top.
So you have $10, right?
Okay.
I would buy $5 of the SPY.
Okay, so 50% in SPY.
Yeah. $2, 20% on GLD.
Okay, 20% in gold.
I would buy $2 on BTC.
Okay.
And $10 on treasury bills.
That's not bad. Okay.
Yeah. And rinse and repeat till you die.
So every $20 you get, just keep going with it there.
Every $10 you do it like that. That's it.
So what? And then I've been meaning to ask this. So I've been talking to TP about this. What are your favorite dividend stocks, or does it not matter?
No. I used to be AT&T. Now AT&T sucks.
Yeah.
And so right now, my favorite dividend stock is the Treasury bill. To be truthful, because it's paying 4.5% without practically any risk.
What products can we use to replicate the Treasury bill?
BIL.
Yeah, that's what I was just in. BIL. Okay. So and this is a smaller. It's a smaller
scale.
ETF.
Yeah.
And you can just go out there and buy that.
And the yield is normally, the same as the Treasury bill. Look at the volume. It has huge volume.
Done overall, because I've got some of this in my account probably since you told me this. So I bought this, I think the last time you and I were talking, and then I clicked the button that says reinvest dividends. And that's what I think is fascinating about this. So I have the reinvest dividends in here, and it just comes, the dividends keep coming. You never really make any money. You just keep getting more and more of the product. So it's the same thing as making money, but you're just acquiring more of these.
Yeah. And the other one, I do the box.
Yes.
Yeah. I hope we get a commission from them. But so there's an ETF called
BOXX.
BOXX.
Yep. Tony, you and I have talked about this one before too. So
they
this
do
is
the box for you. If you're lazy, you don't have time to click a button for 5 seconds, then you can buy this stuff.
Or because people don't understand really what the box is when they're doing doing it. So this is a product that does replicate the box in the SPX, and I believe it falls under the same tax provisions as a SPX, where they're just creating it for you and moving it. And I'm going to show this here.
I do the boxes myself. For the big amount of money, I do the box. For the little extra cash I have left over, I do bill.
Oh, do T-bill?
No, the BIL.
Yeah.
I mean, not petty. I mean, for smaller amounts, I do bill. For big amounts, I do my own box.
Well, you're creating your own box. I'm just going to show very quickly what the box is. And I know this is going to get I'm going to get so many emails from this and I'm going to regret it. But hold on, SPX, yes. You got to go to I'm going to regret this until my dying day. But here we go. I'm just going to show quickly what a box is. I'm going to go to May, and the box is, I'm just going to go to round numbers because it'll be easier for me.
I do it 600 wide. I always do it 600 wide.
600 wide? So I'm just thinking round numbers. So 55.
Yeah.
And then, so you're, am I putting this in right now? I'm buying one, selling this. So this particular box, if you took a look at this, you're going to collect, now you can adjust it differently, but you're going to take in $250. It's a lot of.
You have to buy the put on the right side of the 50.
There we go. Oh yeah, there we go. Thank you.
Yeah.
Do I have it in right now?
I would do 300 above the at the money and 300 below the at the money. That's how I do it.
So am I too big here then? Am I too far? No, it's right. That looks about right.
You were 100 down and 100 up, right?
Yeah. So this is tighter than what you would do. You would go wider.
Yeah.
So I'm gonna pull it.
And this is 65 days. I would go longer.
And so this is essentially what we're showing right now is, it's a combo. You're buying the combo at the bottom, selling the combo at the top, and it is causing a collection. It's the same thing as what the interest rates are going to be in BOXX, which Tony alluded to, that you can do this. This is the lazy man's being able to do it.
Yes.
Well, the one thing I was going to say about BOXX, having someone do it for you too, is you can do it in a smaller nugget if you wanted to. You can take a smaller portion, because Tony was going $3 up and $3 down, or $300 up, $300 down, which is a lot of risk. I mean, you almost need portfolio margin for this. You can take a small amount and even do less than 100 shares.
Yeah, definitely. Because I like to collect. I know my number. I like to collect $579 in a yearly box, and just keep it there.
Yeah, and that just sits in your portfolio. You put it on. But you know what I love about you doing this, Tony? It makes me so proud as a trader from the trading floor that within, I don't know, it'll take you 5 to 10 seconds to put on a box in the SPX, a yearly box, and it just sits there.
Yeah, it stays there forever.
Yeah, it stays there. It stays there until it expires. It's pretty impressive, and you have such a good mind to be able to understand what that is, because I have friends who say you could write this on the wall and people really wouldn't understand what they're doing.
You see, there's a lot of people who learn a lot of stuff but don't do it. You see, I learned this from Tom Sosnoff. How fast you make decisions, you've heard this, but it's the truth, and how fast you execute determines how rich you're going to be.
It's true.
So it doesn't make sense to watch Tasty Trade and not act on it. It doesn't make sense to read a book and take the golden nugget of the book and not apply it to your life. So we're blessed to have so much valuable information at our fingertips for free, but it's useless unless you apply it. It's absolutely useless.
It is. And don't you think, Tony, when you first started, it took you a little bit longer to press the button, right? In order to, you'd more analyze. Now you kind of know what you're doing and you jump in and do it pretty quickly. I just wanted to go to this. You can follow Tony from Mexico here. He is on our follow page. Here's this handsome devil right here. He's all of his trades are here. You traded a lot today. Oh, that was this yesterday?
Yesterday. Yeah, yesterday I went overboard.
Tony, yesterday. Well, we were down so much. So I'm glad. Look at this and look at the times you traded. So if I'm understanding correctly, 144 was when you were in the belly of the beast. This was the lowest of the day.
Yeah, I love the belly of the beast. Yeah.
Yes.
When my stomach gets nervous, that's when I think I should put on trades and go against my stomach. Yeah.
Look at this. You did. You really did. Because I think you painted the low of the day yesterday. I'm sure it was adding on to things that
I
you
even
had done.
scalped some futures, which I never scalp futures.
Good for you. I love it.
God. It was fun. Yeah, look, I've been trading a lot. Too much.
No, you haven't. This is good. Hey, but what I do like is the consistency here of there's your gold. So your money's where your mouth is. You're buying GLD, but you are in just SPX.
Yeah, mainly. Yeah. You might see some Bitcoin, maybe IBIT sometimes. I don't know.
So do you trade IBIT too?
Well, I put it on my 401k. So I really don't. I just buy it and leave it there.
You can't buy it and leave it there, right?
On the 401k, yeah, you can leave it there.
Does IBIT doesn't have a drag?
I don't think so.
No, it was the other one, I think. And I'll let you know because I've got Ryan Grace coming on. I'm pretty sure IBIT does
ask
not.
Him if he has a drag, I'll sell it.
Well, that's what I was going to say because one of the crypto ETFs does. I don't think it's IBIT though, but I will text you immediately following my show with Ryan Grace and let you know.
Thanks, I won't have a good retirement.
I don't think it is.
Because my 401k is only gold and Bitcoin. That's it. No S&P.
Well, that's good. I mean, it's funny. Yeah. I love that you said that you're teaching your kids to buy gold because I feel exactly the same way. I've been acquiring gold and Bitcoin as well for a little while. Now, the Bitcoin this couple weeks has been painful.
It has, but it's a buying opportunity, so people should nibble.
It's funny because do you look at it more like an opportunity? I've kind of stayed consistent saying, kind of along your lines of if you had $10 each week, I put X amount into Bitcoin and X
you should buy every week. Yeah, every week.
And even though it's down lower, I didn't increase my size in what I'm buying.
Well, if it crashed, I would maybe use 2 weeks of money or 3 weeks of money and put it all in. Yeah.
Yeah. Okay, good.
I mean, take advantage of it. Yeah.
Okay. Now, Tony.
I know you have to leave. And,
I know I have to leave. So I've got one more final closing thought for you. Number one, you are my favorite person on this platform. But so what do you think is going to happen? Do you think that we are going to go up from here? Is this a buying the dip, or do you think we're just going to get a little bit of a relief this week and crash again on Friday and Monday like we've been doing every day?
So if you look at the VIX charts, there's two types of VIX charts. One that spikes up and spikes down really fast. And this one, the scariest one, is the one that's sidestep up. And yesterday, I think we could have spiked hard, but I'm afraid we could get a higher spike.
And this is, so I'm glad you said that. This is a little bit more intimidating when it's going up like this.
Yeah, the other one doesn't scare me. One big up and then one big down. You see the previous spike?
Right here. Yes.
That's not scary. No. This one is scarier.
Where it's just stair stepping up.
Stair stepping up because they don't end like that. They end up with a huge candle.
So there's going to be one big candle somewhere.
Or maybe the huge candle was yesterday. We don't know. Hopefully.
Maybe.
Yeah.
And it is pretty crazy too because I keep an eye on UVXY. I don't know why, just because it has had a bigger bang for its buck. Yeah. When you look at this little pop up a bit, and this is that same thing. Usually if you get a couple down VIX days in a row, you'll get a massive spike in UVXY, and we haven't seen anything.
Yeah. So there's like a hanging net. I don't know. Hopefully yesterday was the little relief, but today Trump again put tariffs on 50%. And I mean, geez,
I can't even keep up with it. I don't even know why it's happening. I just look at the market, and the market's just all over the place.
They I don't know. They're forcing a recession, and the market is already staking it in. So
Yeah. All right. Well, Tony,
which is not all bad. You know, there's good and bad and everything.
Well, I do think the market needed a little bit of a pullback, right? Just a wee bit of a pullback. I'm glad volatility is back. With volatility comes opportunity, but you have to be able to take that opportunity. Some people try to step back. This is when we try to step in, but I'm stepping in a little bit, toes in the water right now.
And the reason why, you know, just to end, the reason why you have to take, I'll tell people, take profits fast when you have them, take them. Why? Not because of the profits, because you need the capital when we go down again. You need that capital to rinse and repeat. That's why right now be more opportunistic, be faster, take profits faster.
And it can't be taken away from you once you close it.
Right, and then you have the buying power back and get ready, and then you're looking forward to a down move instead of dreading it. Right.
This is all true. All right, Tony, I have to jump on another trading call.
Thank you so much. You're the best.
I appreciate it. Will you come back and join me again one day when Jenny's on?
Whenever you like. Right. I can do this every day.
Thank you so much, Tony. We appreciate it.
All right.
Okay, everybody remember to trade small, trade often, laugh with us, learn with us, and watch the Liz and Tony show. Bye, everybody.
Bye-bye, Liz.
Thank you.
Thank you, Liz.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
Shake it up, stop when the clock hits 13.
I'ma do it.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mikey Butler, and of course, Thomas Westwater in the house with us for our Thomas Tuesdays. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend it with my guys, Mike and Thomas. Thomas, how are you, sir?
I'm doing awesome, you know. The time change is awesome. We got more light in the afternoon, so we get home from work. You know, it feels great out. It's like in the 70s here almost. So it's all awesome. Thinking about changing the hairdo. So my son needs his first haircut. His hair is like down to his shoulders.
Oh, wow.
And I want to do a mullet.
Yeah.
So I'm thinking about doing a mullet with him. And like mullets, they're
in.
If you go to Australia, they've been in for a while, but they're coming back here.
They're very in.
So once I get it signed off with the wife to do his mullet,
you
might see me with a mullet soon. So
wow.
I like
the father-son mullet. I like it.
Yeah, his hair is platinum blonde, so we're like, it's way different, but I figure we could rock the same hairstyle. So
yeah,
I like that.
And then you can show him pictures later and be like, you had a mullet when you had no control over your life. Like, it's amazing.
All up to us. So.
Yeah,
love it.
I'm jealous of Kevin's mullet.
Yeah,
Kevin's
he's got a strong
nice
hockey player mullet going.
Yeah, you look at it, you're just like, that's beautiful.
I don't.
There's nothing else you can say.
I don't think any of us have very strong hair game here.
No, my hair's way too straight.
Yeah.
It would just like fall straight behind my head. It would look really crazy. I'd look like an absolute serial killer.
Yeah.
Yeah. So we can't do that. But yeah, the everything feels fake. The market feels fake. The weather feels fake. I don't know what to tell you.
We're not in base reality.
Yeah.
I was going to start with the egg prices. Your coop has gone down today.
First
of all. Sorry, go ahead.
I'm going to bring in some eggs for you guys tomorrow. I got about 5 dozen sitting on the counter. I feel a little rich, so
I think that's more than you could possibly.
Yeah, we're getting about 13, 14 a day right now, so
magical.
Awesome stuff.
Yeah,
I will welcome those with open arms.
Yeah,
they were great first time. Nice orange yolk.
Yeah,
that's when you know it's good.
Some omelets, you know.
Yeah. Mm-hmm.
What was your rant you were about to go on with the eggs?
Well, first of all,
you got really excited about that.
Yeah, I know. Well, it wasn't excitement. I was actually like livid yesterday. But first, thanks to everyone that came to the Bad Coffee event. It was great. Yes. Met some awesome people. A lot of people that are in the YouTube chat. Some people from Boston, Florida.
Yeah, we had people fly in for it. I couldn't believe that. Tom tried to take credit, too. He was like, everybody was coming to see me, where I'm like, it was our event. You didn't even mention that you'd be there.
But yeah, it was a good one. We recorded the digital collectible yesterday.
Yes.
So sign up for that, tastylive.com/events. It will stream on March 29th at 10 a.m. So make sure you sign up before, totally free, and get that delivered to you.
Yeah. Don't have to watch it that day. You'll have it, and you can watch it multiple times whenever you want. You'll have it. It'll be in your little digital wallet.
Yeah. So on my way home from the live bash recording, I stopped at Jewel. I was like, I need to get some stuff.
Yeah.
Eggs and egg whites were two of those things. So I stopped at Jewel. I ran into Donnie at Jewel. I told you about this, which was funny.
Donnie, the small.
Literally like 15 miles away from here, and he's just at Jewel. He's like, "What's up?" We talked about his skiing adventures. But I go to the egg section. There's no egg whites, completely gone. And the only eggs that were left were like just, not the ones I was looking for. I was looking for this specific like type of eggs. So I'm like, okay, this is insane. So I keep driving down Ashland, and there's a Mariano's on the right-hand side. So I'm like, you know what? I'm just going to pull in here. Let's try this one. I go to Mariano's after Jewel. No eggs, no egg whites. And I'm like, I asked the person, I'm like, am I in the wrong section, or are we in a panic? Like, are we in a crisis here? He's like, no, it's full crisis mode. So if you're looking for egg whites and you find them, you should buy a lot and resell them to your neighbors because they're gone.
I'll take care of you tomorrow.
Thank you. Appreciate it.
Good. And you didn't get hit by the bird flu.
No, we're good. So
good.
Perfect. So that's my little rant of the day. Yeah.
All right.
Yeah. It's not every day you see the E-minis. Well, the E-minis were down more than the NASDAQ just a little bit ago, but
are down.
Is this sell-off fizzling out? Like we're down a little bit. Bitcoin's up.
No.
Is this the end?
I don't know, Mikey. We need you to flip. We need you to flip from
bullish to bearish. I physically can't. I'm too bullish. All these products getting face ripped off.
How can you not be a little bit bullish into a 10-15% downside move? This is what you hope for. You buy at lower prices, sell at higher prices. Isn't that the name of the game?
It is, but the problem is we have a 2-point backwardation between the H and J contract, a 1 point between the J and K. So the market is telling us that we should still expect more volatility going forward. We had a little debate yesterday between you and me. I was saying if the bottom is in, the near-term bottom is in, I think you could see just a flood to get along these stocks that have just been destroyed.
Mm-hmm.
Maybe you see a V bottom like we've never seen before, but you kind of had
beautiful V bottom.
Yeah. But you had a different opinion. You said, maybe we just chop around here. Maybe volatility stays bid.
I know, but more grindy up.
Yeah.
Yeah.
Versus just rocket ship back up.
I don't know. I mean, markets move really fast now, faster than in pre-pandemic times. So I don't think I don't fade your thought of a V bottom, but putting it out there as the other option as maybe just a kind of chop fest, a little pain on both sides of the market, that would certainly fit at this point, it seems.
Because we're all getting the texts like, should I buy X stock right now?
Is it over?
Yeah.
I'm scared. I'm going to cash. It's happening.
Yeah.
All that stuff is happening.
The I'm going to cash is usually the bottom.
I know.
That's when people, pull it to cash and then they watch the market rip 20%.
Yeah.
Can't be that person.
Yeah.
You can, technically.
Yeah.
But
yeah,
we'll see what happens, but we're still in backwardation, which means objectively, volatility is here to stay for the time being.
No doubt. Volatility has remained very, very sticky, but hasn't had the explosion. I mean, we did yesterday get I think the VIX got into just under a 30 handle. Did we get into the 30 handle yesterday in the VIX? We got 20.
We had to.
29 was the high today. 29.56 was the high of the session. So, and I think that was kind of in the overnight session when we had that little bit of a down move. We opened up 30 and then sold off, or we sold off 30 or 40 points, and then we were flat within about an hour of the overnight session. So it's been a whippy two-sided market. I'll give a quick little market update. E-minis down 45. We're at near the lows, I think, of the day. The low of the session, 55.54, so actually about 20 points lower from here. That includes the overnight session. You got the NASDAQ down 86. A little bit of strength from the NASDAQ today, I think, just given what we've seen in the last month or so. You got stocks like Nvidia catching a little bit of a bid. Amazon was up a couple bucks. You had Meta up a couple. Netflix was up some. Really, the one that's bucking the trend, which has been the strongest for the beginning part of the sell-off, was Apple, which is now down $7 and change near the low of the day. So definitely some whippy markets back and forth. Tons of price volatility, in terms of the moves. Dow is down 540. You got the Russell down 8. So everything continuing the down-only market. You've got oil catching a little bit of a bid, but near the lows. /CL 66.72, volatility futures 23.45, right in the middle of where we've been trading, obviously the higher end of the last couple sessions here. Bonds down 16 ticks, rates coming up a little bit. You got gold and silver both up. Gold's up $22, silver up 65 cents. Big move in silver, a little over 2%. Bitcoin having a little bit of a bounce, but it looked like death yesterday when we were in the car together. It was down 76. Did we see it? Spot? I think something around there. But it has certainly moved with kind of the risk-off appetite that we've seen. It's been a risk-off appetite for basically everything but the metals. Gold and silver have both kind of remained strong. They've had some big moves in both directions, but have gone basically nowhere despite risk assets, stocks and Bitcoin going significantly lower.
Yeah. If you've been in gold and silver, you are thriving right now.
Yes.
Even though you've taken a tiny bit of a loss, but lots of downside moves that have been really violent. So
yeah,
cheaper prices for all, unless you're buying eggs, right?
Yes.
I did have a family friend ask if I routinely buy physical gold, and I was like, bro, we're
in your closet.
Yeah, I get it. It's not a bad thing if you're gonna hold it for a long time. I had to explain, that you're paying 2 or 3% above spot when you're buying, and you're selling it 2 or 3% below spot when you're selling. So you have like a 5 to 10% VIG attached to spot gold or silver. And I explained that you could, get paper gold, assuming that you're not too worried about the zombie apocalypse coming, where you need to start, shaving edges to pay for cans of beans. That might be the easier way to go.
That would be wild.
Yeah.
Yeah, and don't tell people you're storing gold in your house.
That too.
Yeah, it's usually a no-go.
Yeah.
Well,
we're family friends, so he'd be the last one I'd go after. I'd go after Mike first.
Right. True, you have told me that actually.
Mike has a good food storage.
Yeah, he's gonna
lots of rice. Lots of rice.
Yeah. 20-pound bag of rice. Endless ramen.
Yeah.
All right. Well, we are streaming live on YouTube. If you want to join us there, just pop over to the Tasty Live channel. You can throw in your trade ideas and questions along the right-hand side chat. It is Thomas Tuesday. It is also Cherry Picks Tuesday.
Yes, it's out already. We got it out early.
Beautiful. If you want to
jump on it.
Love it. If you want to get that, just go to tastylive.com/newsletters. I've got the link to that site pinned to the top of the YouTube chat. So you can just click on that, get that quickly. But yeah, I hope what you have to say today, Thomas, aligns with my position. We're talking crude oil. The question is, are we buying the dip? I hope you're going to say yes, because I already bought crude oil before this.
I did too. Yeah.
Incredible.
We're on the same page.
Incredible. Well, why don't you walk us through your thought process here? Give us some visuals here.
So pretty good much make a case for getting along crude on a couple things. Number one, we're at a pretty good support level. That also, it could be two-sided because if you break below those major supports, you enter an area of lower liquidity where you don't have that much volume traded in those prices. You can get a bigger flush out. Now, the U.S. equity market's been pretty well correlated with oil for the past month, and that's kind of what we're seeing from these growth concerns, tariffs, everything like that, driving down economic demand, et cetera. So, equities and oil are trading like two in the same right now. So, if you're thinking equities have bombed and you're trying to get a little long there, I think it also makes sense to dip your toes in oil a little bit here. The tariff news, we've flipped back, gone back and forth.
The head is spinning
many times now.
Circling.
President Trump saying he's doubling the tariff on steel and aluminum from Canada now. Some other goods are exempt. It's pretty confusing stuff if you're not constantly watching the headlines. Yeah. But yeah, if we get into the first slide, one thing I want to talk about is the prompt spread in oil, which measures the difference between this month's contract price and the next month's contract price. It hasn't sold off as much as the underlying oil price has. So the prompt spread has stayed a little bit elevated. For the prompt right now, we're at about 35 cents, trading between there and 37 cents this morning. But I wanted to do a regression with oil. So this regression, oil is the response variable, and the prompt spread is the explanatory variable. So this looks at how the prompt spread explains prices in crude oil, which is that front month contract. If we look at the R-squared value right there, we see it's 65%. That's pretty much saying 65% of the move in the prompt spread explains what's happening in the price of oil. So that's a pretty big R2 value when you're comparing financial assets. The slope is, just to quickly explain these for anyone that's not familiar with regression analysis, the slope is saying for every 1 unit increase in the prompt spread, the price of crude oil should increase $11.45. So for instance, if the prompt spread automatically jumped overnight to $1.35, you should see an $11 increase in the price of crude oil. The correlation 0.81 is just showing a strong linear positive correlation. That's why you're seeing that red line go up. That simply means as the prompt spread increases, the price of crude oil increases. The intercept value, 73.45, that's showing if crude oil, if the prompt spread was at zero, according to this regression analysis alone, the price of crude oil should be at 73.45. And this regression I did all the way back to the end of 2019, so it's capturing about a little over 4 years of data, 4.5 years of data. So, the prompt spread, it's dropped. It's still in backwardation. It's trading at 37 cents now. And at the same time, it looks like crude oil is at a supportive level.
So in this, just to point it out, it would be like, based on the prompt spread right now, oil would be somewhere like maybe around 70-ish, 70.
Yeah, right around there.
70 would be like kind of the based on the regression model.
Right. It should actually be a little bit higher because if you take the prompt spread and you times it by the intercept, and then you add the slope, then you're getting the price, which is the intercept. So actually, we should probably be 75, 76.
Okay.
That's if you're going by this low. And again, this relationship only explains 65% of the price. So there's 30% about that you're getting other things are influencing. And there's hundreds of things that influence the price of crude oil, right? We're going to get the API numbers today. API, American Petroleum Institute, they put out, it precedes the EIA's numbers. So we're looking at a build consensus estimate is around 2.1 million barrels. So, if we come in over that, perhaps we could see a little bit downside oil. But those numbers will come out, I believe, in about, where's it at? It comes out in about 4 hours, so 3:30 Central. And we're looking for a build at 2.1. That's after dropping 1.45 million barrels last week. At the same time, we got other things happening. Iranian oil exports increased to 3.3 million barrels per day for February. those are likely to come down because now Trump is doing this maximum pressure campaign. So 3.3 million barrels, that's about 3% of global consumption. So that's pretty significant there. You're also looking at Venezuelan oil coming down soon. At the same time, OPEC says they're going to increase 130,000 barrels per day in April. We got some interesting comments overnight from the Russian prime minister that does energy. He said that they're going to do this production increase in April, and then they're going to look at other things like a production, like actually lowering production within OPEC. So allowing more exports to get into the market, but then going forward, lowering production. And that makes sense as the price comes down because OPEC wants to artificially keep prices up. That's what the cartel was built for. But you're seeing the U.S. pressure on Saudi Arabia and stuff. Russia wants the U.S. to mediate these peace negotiations. So at the same time, there's probably some backroom talks about, get a little more oil on the market. That's one of Trump's policy goals is lower gas prices, right? So you got political factors. You got, these tariffs at the same time, bringing down consumption likely if economic activity weakens. But the important thing to know for oil is you're really more sentiment driven in the short term than you are on the actual fundamentals. So sentiment driven moves, when that happens, you could get these slingshots, right? Because sentiment comes down, it depresses, then the fundamentals, if it actually looks a little stronger than where the sentiment was, you get a slingshot back up. And that's kind of what I'm playing this long play at support for. So we'll go into the next chart, just talk a little bit about positioning. We'll look at crude and then we'll look at Brent next. We saw Friday's COT data came out. That's for the week going back to Tuesday. So this captures data going up to last Tuesday. We see that shorts, they built up. They got the highest they've been going all the way back to the start of 2024. They increased over where we got in September. And that's also where prices started to bottom. If you look back in September, oil prices, they got around 65, somewhere around there. And then shorts started coming off. They didn't even come off that much, but we got a big rally going back all the way up to 75. And that's kind of, what we're looking at here. Shorts are starting to come down from this annually elevated level. Longs are coming down too. That makes sense because the sentiment's deteriorated, but shorts is what you want to look at if you want to get these moves higher, these shorts covering coming back into the market. So I think that's one positive signal there that we can take from it. And if these prices do even consolidate, you'll continue to likely see those shorts come down. So let's go to the next chart. Brent is telling more of this story. So the orange line is for the shorts in Brent crude oil, which is, WTI is the U.S. benchmark. Brent crude is more of the global benchmark, especially for Europe, Asia, et cetera. So a big capitulation in shorts last week. And that's right, where support was back in September again. So I think the risk reward here, if you're trying to get long oil, this is a good place to do it. There's decent volatility in oil. It's not the greatest, but 25.2 IV rank, that's up from like 0 a few weeks ago. So you got a little bit more juice to play with. The actual volatility is a little more elevated.
The realized volatility has certainly been there.
Yeah.
You've seen, oil was trading, like the mid 70s kind of at the start of the year. So you've kind of had that realized volatility play into this, and the skew to the upside too is helpful as well, because you kind of have that. If you have that capitulation and that bounce, it further accelerates it because there's like a perceived floor baked into it. You have that kind of bigger move to the upside.
Exactly, definitely. So I'm already long crude. I sold a put spread last week. The short's at 65 or 66. So got 36 days left. I'm fine with keeping it on for the next week or two, hoping for a bounce. I can get this position profitable. I'm down like $40 right now. It's no big deal. But yeah, if I didn't take it last week, I'd definitely be putting it on today. So yeah, I think the risk reward is there. I think tariffs remains the wild card. Trump has a summit with all the business leaders today. I'm sure he's going to hear an earful, with equity prices dropping 15%, around there, they're going to be trying to urge him to give not take them off necessarily, but just provide more clarity, which is what the market really wants, right?
Yeah.
If they came out with a decisive plan, said tariffs were going to go up to 50%, something like that, but the market knew that's what it was,
and
I think you'd see that volatility drop, right?
You would think so.
Yeah.
You would think so. Does seasonality come into play too? Because we're getting into like kind of the summer months, so you typically have more, oil usage, travel, stuff like that. You would think that would be somewhat bullish as well as kind of another piece to the story.
Oh, definitely. Seasonality starts to get really strong in April. It increases in March, but April and May are those strong months, and then it gets really good again in August and September before, dropping in October and November. So seasonality is working with us here as well. More people going on vacation, summer, weather's getting warmer, traveling more. So, as long as we don't enter an actual bona fide recession, I think we have a good chance to at least get a bounce here. I'm not saying oil prices are going to go back up to 80, stay around there, but I think this is a move you can play, get some capitulation by the shorts, and take advantage of that.
I've got something spicy.
You do?
Yeah.
What are you doing?
Go to the May contract, May 15th.
Okay.
And you sell the 65 put and you buy the 70 call for $1.30 credit.
You're going to do a
micro crude.
Okay. I was going to say, I was like, that's a big boy position in the.
Yeah, 65, 70, and you can define the risk if you want to.
A Super Bowl.
A Super Bowl.
Wow.
Uses like $1,300 in buying power. You could define the risk and give up 50 cents, but it doesn't change your buying power too much if you're going to buy the 55, for example.
Mm-hmm.
But I think that's interesting. You still have neutral profitability. 65 is where that lower support is.
Mm-hmm.
And if you get a bounce, that 70 call will certainly appreciate.
I just went long the micro crude contract. So
there you go. I'm already long the micro crude, so
this is your double down.
I don't think I can do it, but I like that idea. I like the Super Bowl idea.
You could do similar to what Thomas did of just selling a put spread.
Yeah.
Like the crude futures, you do it $1 wide or $1.50 wide.
Yeah.
That wouldn't be too much more risk for you.
Yeah.
What's happening with Natty Gas, Thomas?
I knew you were going to ask.
How could I not mention it? Natty Gas has been stubbornly persistent to the upside. Yesterday was a huge move. This
looks like a meme stock.
Yeah, this goes against everything we've ever talked about. You got summer coming up, supply demand. Everything was kind of on the short side of this, and we get a little face ripper here.
Does this feel...
Go ahead.
Sorry, I'm just going to ask quickly. Does this feel like a short squeeze fund blow up move? It feels like it's not as violent as we've seen before, where it's like the 1 day squeeze to the upside, but maybe it is.
We had that yesterday.
Yeah, maybe it is.
Yeah,
yesterday.
Yeah, yesterday we got above. We almost got to 5. So really interesting move. We got that super long tail on that candle.
Mm-hmm.
So there's plenty of profit taking between 4.6 and 4.9.
Mm-hmm.
Plenty of appetite to sell there. Staying high here, I don't know. It's kind of confusing me. I don't think the market doesn't make too much sense to me with this nat gas market. The weather's gotten a lot warmer. I think a lot of the stories, these LNG exports are going to accelerate. Europe's going to try to rebuffer their inventory over the summer. So lots of pressure on U.S. production there. And these prices get high and, output could come back online or at least increase as these producers see these high prices. So it's almost like oil where it could be self-correcting in a way, but I don't know if we're there yet. So there's a lot of conflicting ideas right now in nat gas. I don't know. I want to say sell it, but this rally has been stronger than I've expected. So it's telling me I don't have the greatest read on it right now.
Yeah.
And these moves can rip you apart in 1 day here. So.
Oh yeah, it's the Widowmaker.
Yeah.
But yeah, this has been a huge move. I guess, I mean, like all the thing, we've obviously covered the short side of it with you a couple times, or that thesis. But, you know, you would also think like an end to the Russia-Ukraine situation would be another kind of, you know, short thesis to natty gas specifically, because I know they supply, and I know this through you, that they supply, you know, most of the energy, natural gas to like Europe and all those places. So you would think that an end to that would be a big catalyst to the downside of natty gas. And you haven't had any of that over the, you know, last couple weeks, where we've had some sort of flip-flopping on what that situation is going to look like in the future.
Yeah, I mean, there's been a lot of changes in the European gas infrastructure over the last few years since the war, and they've diversified away from it. So it's like, even if those sanctions come back on, is Europe going to go back to Russia to get a lot of their product when they're, you know, they've positioned themselves to take a lot more U.S. LNG. So, you know, I think even if the sanctions come off on the U.S. side, Europe is more hesitant to do that. We have Germany, you know, trying to do this huge defense and infrastructure spending bill, saying 500 billion or something like that, where they're going to remove the constitutional brake lever that they have. But recently just came out overnight, this Green Party in Germany, which they just lost, but they still have enough power to like kind of railroad legislation if they want. They're saying that they're not going to go with that. So you're going to see some political headlines come out of Europe over the next, you know, week or so on that. But yeah, even if the U.S. takes sanctions off that oil and gas and stuff like that, is Europe going to, you know, go right away and try to get more Russian gas? Probably not, at least to the degree that they were before. So I think that's something to consider.
I do also have to give you props, because somebody at the live event on Sunday was like, hey, you know, great trade in soybeans. I followed you as well as my wife followed you. And I was like,
oh,
wow.
Yeah. Family trade.
It was a family trade.
Yeah.
And I said, I appreciate that, but I can't take any credit for that, because that was all Thomas. And we've had quite the move in all the ags since the last time we had John. Was it last week, or did we miss last week?
I think it was last week. I don't know. The
I'm
days
a little
fly.
like,
The days just go by for me.
I'm a little like off on everything. But soybeans have had a really nice little bounce back from that 1,000 handle. You had corn as well, which has had a big move. I was able to close out of my wheat position, which has been a thorn in my side on that little bit of a bounce. So a lot of those seeing a little bit of relief as well.
Yeah, corn's had a really good comeback. We do have WASD tomorrow, the USDA's World Agricultural Supply and Demand Estimates. So we'll get perhaps some volatility in the AG products tomorrow, assuming they're outside of those trade estimates. The day after, I think Thursday, I think we get CONAB, which is the Brazilian equivalent. It's another big report, because Brazil exports a lot of soybeans, and especially with everything going on with China right now, it looks like, you know, they're going to diversify further to Brazil. So it'll be interesting to see where those numbers are at. You want to look for, you know, those yields per acre, things like that in the WASD report tomorrow. So I think that comes out at 12 Central tomorrow.
Okay.
Beautiful.
We would have got that on our Westwater Wednesday.
Yeah.
Yes.
RIP.
Yeah. Corn.
The new and improved Thomas Tuesdays.
Yeah. Corn is the last one that I have. I had the soybeans winner, I had the wheat winner, but corn, I think I just got in too early. I had the 490-505 diagonal spread, but if we get some positivity, it's only down $100. If we get some positivity in price, we will be able to close that for a winner. So that would be great. Lovely. Well, thank you for that overview. We are all long crude oil, so take that for what you will. But yeah,
right.
That's how you do it. Yeah.
This is it.
This is it. Popping over to the YouTube chat now. If you want to join us there, just go to the Tasty Live channel. You see this video streaming live. Leonardo Teixeira. Adjusted my SPX position to a 20 delta on the call side. I assume it's an Iron Condor, yeah. 5,700, 5,970 shorts, 20 points wide. What can I do now? Wait. Yeah, you basically have $11 credit on a 20-point wide iron condor, so that is your 50-50 shot. If you make that more narrow, you turn it into a butterfly situation where it's a low probability trade. You're going to have to hold that all the way to expiration. And in these markets, I would rather have a wider profit range than a narrow one.
Yeah, and you haven't gotten any volatility contraction. So, like that's going to be, I think we mentioned that the last time we were on Friday, of the bigger piece of that position is not so much the time value, it's the volatility. When you're inside the expected move on both sides, it's going to be a 50-50 shot based on where volatility is at. If volatility comes in, those spreads, all else being equal, will be wider across the distribution. And so that's the bigger piece, is looking for this vol contraction with the VIX. Basically at the highs, you need vol to come off a little bit.
When do you use an at the money iron fly or an out of the money equal with butterfly in terms of IV and price action? Those are the same trade. So an at the money iron fly, where you're using a put spread and a call spread, is really what we use when we're trying to take advantage of liquidity in markets, because that strategy uses out of the money options.
Yeah.
If you use a regular butterfly, it's the same risk profile, but you have in the money options. Half of them are in the money. So really it just comes down to liquidity, but it's the same trade.
Yeah. The at the money spreads, we do iron flies. If you're doing them out of the money, like if you're playing for a directional move, we would do all on one side. So we would do, like, if you're playing for a downside move, a put butterfly out of the money, all out of the money options. If you're doing it at the money, we do the iron fly, which is short put spread, short call spread. If you want an upside move, we would do all call sides. And you can interchange them. It just comes down to liquidity. You can make that, it's the same position, all of them. It just depends on where you're placing them. We want those better markets.
Costco has quail eggs. Yes, they do. I saw them the other day. It's kind of wild.
That'd be a nice addition to your weekly ramen.
Yeah, just toss some quail eggs in there.
Yeah.
That could work.
Yeah.
Looking at XOM, sold a 45-day 120 call yesterday.
Well, that was a good trade. Stock's down $2 and change. I mean, that had to have come in pretty significantly. Where was this trading yesterday? What'd they trade it for?
Does not say.
45 day? 120?
45 day, yeah. So it was trading for.
Did they just open yesterday?
Yeah, it looks like they just opened. But yeah, regardless, it's got to be a decent winner.
Yeah.
But yeah, this one is in the earning cycle, it appears, potentially.
Markets kind of stink there.
Yeah. But it's a good trade.
Yeah. Generally speaking, I would stick to monthly expirations here. Just when you look at the liquidity, I mean, these are a couple pennies wide. And in this April expiration, I think they probably just opened yesterday, but there's, 50 cents wide, even more on some of these. I guess we could dabble in something here. This is a pseudo long oil play that we could do. Do these respond similarly? I mean, like if we have a pop in oil, do they generally move in the same direction? I would think the correlation is probably pretty high on at least a day-to-day move.
Yeah, I mean, kind of. You're also, for the producers like Exxon and Chevron, you're looking at things like the crack spreads, which is the margin they make on refining that oil into gasoline, diesel, all those fuel products. So the crack spread has come down quite significantly over the past couple weeks. But we're still higher than we were at the start of the month. So you're getting better margins, even though those oil prices have come down because the fuel prices have outpaced a little bit. So.
Okay. So if oil prices went up, though, that would be bad for the spread? Or
if they go up more than fuel prices, then the crack spread would go down.
Yeah.
But if they both go up together, then it's still
a net positive. Depending on how much they
because Exxon is selling oil too. So I mean, they have different segments of the business, but higher oil prices definitely better for ExxonMobil in the long term.
Okay. We'll do a little small long delta, a little diagonal spread.
There you go.
May, April. Small one, small.
Is Tom still holding his natty gas short? Probably. He's trading the J contract as of last week.
Yeah, you can shoot him an email. It's just Tom@tastylive. He'll tell you what he's got.
Yeah. He's definitely slinging options in there in the J contract, so I would assume. We got Adobe earnings tomorrow. I'm going to write a little earnings preview today, but I mean, these stocks are tough. These are tough sells to trade, to get, like, place a lot of risk in here in the market like this.
Yeah.
But
Adobe's not one that I want to lean long. I feel like that's a major, you've got AI that can make all sorts of images for you now. Like Adobe is probably not the space I'm buying dips.
Yeah, I mean, the last earnings report in December, stock just absolutely tanked. Went from 560 to 460, 100-point move in a week, and we're still around that low level. So, yeah, big implied volatility though, almost a 40-point expected move on a $400 stock, and that's big relative to April and May. Only a 50-point move in those cycles. So yeah.
God, E-minis are just flying around.
Literally. Question for Thomas. Tim Knight shows a natty gas cycle chart. He also stated that's an upcycle. How do we tell when that upcycle is done?
It's a good question. I'm not sure what he's referring to on the cycles. I'm guessing it's probably a technical long-term cycle. But yeah, I'm not sure. So I'm not sure what Tim Knight was saying about that.
Yeah, Tim throws a lot of big words. I get confused too.
Yeah, I think
there's a lot going into his stuff.
Yeah, I mean, either way, it is surprising still to see this move sustained to the upside. I would have expected a lot more chop, but it's just been a rip-roaring rally in there.
And you can chart natty gas on a longer time frame in the platform. If you use the $sign, it strings all the contracts together. So if you wanted to kind of review it or at least watch whatever Tim was saying and then pull it up on the platform, you can do it that way if you're looking at longer durations.
Another Iron Condor, Apple, 225. This is for March. 225, 230 short put spread, and a 240, 245 call spread. Do I wait or do I roll the calls down? This is another one where it's like, if you roll those calls down anymore, you're already in a 25% pop trade based on the width relative to the stock price. So if you roll those calls down more, you are basically waving the white flag. Like, you're putting yourself in a position where it's going to be really hard to be profitable, because even if Apple rallies back to 230, you still need to hold that all the way to expiration because your strikes are right on top of each other. So if you have a $1.86 credit, this is kind of like the last stand here, and we're looking for a rally. But if you roll down to the 235 or the 230 short call, you're gonna have to hold that to Friday expiration on the 21st to try and make money on that trade.
Yeah. I mean, you got it. Yeah. You could leg out of the call spread if you wanted to. It's a tight spread though, so it's not going to move all that much. Like, if we continue lower, even my $10 wide hasn't moved all that much. I'm out about 60 cents on it total with the roll down that I did at higher prices, which in hindsight was a great roll down, but even so, with volatility expanding, these spreads, they're not going to move all that much. So, you could consider just peeling off the call spread. You lean long. If you get, the $8, $10 reversal, you'll make back a lot more because you won't have the drag of this short call spread too. So I might consider that as well.
Mm-hmm. Drone in 2 for Tuesday special. A Tesla put ratio, 210, 220 in April for $12 credit.
Okay.
And yeah, I mean, it's a narrow spread. So I might just sell the put there.
In something like Tesla that's flying around.
Yeah. But
I did a put spread there for the Johnny trade or for cherry picks. So I'm with that same direction.
So yeah, I like it. I think it's fine. It's just a narrow spread relative to the stock price in IV. So it's going to take a lot for that to give you intrinsic value. And then MCL MRB.
MCL.
Micro crude, and then the
RB.
gasoline futures.
How would you trade that pair if you're going, not in the micro, but is there a pairs trade there, Thomas, like of long oil, short gasoline?
Yeah, I mean, like you can synthetically do like playing the crack spread, right? If you expect fuel prices to stay steady or rise and oil prices to come down, you're synthetically like long that crack spread, right? So that's kind of what you're playing is the crack spread when you're trading crude oil against a fuel product.
Okay.
Yeah, I won't actually play RB or HO that much.
I don't think are they as liquid? Probably
not as liquid, no.
They are tradable. We have them
available,
so if anybody's into them. It's probably a big contract.
I think gasoline it's 42,000 gallons, I think.
The big one.
Did you talk about what you did today?
Me?
Your trades?
No, I can.
Yeah.
So I did a couple things this morning. So I closed out of a couple, and again, we've been doing this the last couple weeks into this down move. Been closing out a lot of junky upside short premium positions. So in Shopify, I had like a calendar spread. I closed out the 116 call for 20 cents, just taking off some risk there. I added the short put spread in Tesla. Stock was trading right around here, 200, 190 strike. I mean, we've given up over a year of price action in Tesla. We're going back to like 2023-ish prices, or just about like early 2024. So I got a little bit of long delta there. It's one of the worst performing stocks in the S&P 500, which is what we were looking at for the cherry picks. So just kind of correlating it to that. The other stocks that have just gotten absolutely whacked over the last week and a half or so are the airlines. So I actually sold a put in Delta Airlines. I went to the 45 strike put. I sold that at $2.60, $2.55. I'm out about 30, 40 cents right now, but these stocks have all been killed. I have some long delta in UAL too. That is kicking me in the behind. Love is getting killed too, or I guess was up. It was getting killed. Now it's up because they're
charging for bags.
Charging for bags. They're turning into Frontier Airline. I mean, come on. Isn't that the whole reason you fly?
I'm boycotting.
You're boycotting?
Yeah. So that's all I've used is Southwest.
Mike's a big Southwest guy. I can't do it. I don't like it.
I gotta liquidate my points somehow.
They expire in May now.
Points expire too?
Points expire, they announced. Points expire.
Wow.
Yeah.
So that is a big
and they're only giving you a few months to use them, so.
Really?
Yeah.
Can you book it? Can you use them and book for later on?
I'm not sure. I saw the email update for their new terms this morning. I read through it and points expire, and yeah, so I'm like, I have to use my points too because I have like 25,000.
I have a lot of points. I gotta figure out something there.
Gotta take some trips.
I gotta get some cash.
You can give them away.
There you go. But yeah, I close out of my short put in LUV. Oh yeah. Sorry, go for it.
I sold a call against my short put in IBIT. So I sold the 53 strike call into this little bit of an up move.
There you go.
So I have a strangle now with an upside butterfly.
There you go. Yeah, I haven't done anything in IBIT, but I closed out of the Love short put that I had. LUV, stock's up $3 today. Big move to the upside. So got bailed out of that, and this is a take what you can get market. So closed out of that for like a 27-cent winner, but it was like a $300 move net. So yeah, love it.
Surprised it's up.
They see dollar signs. We see pain. They see dollar signs.
I guess, yeah.
What is your reasoning for going to an inversion over just buying the guts and selling the wings when a trade flips against you, like the Shopify Strangle rescue you pulled off?
I mean, I would say generally speaking, the going inverted is something you do intra-month. So if you're staying in the same expiration and you're rolling calls down or you're rolling up puts, that's, at a point if you're reducing delta by somewhere between 25 to 50%, you're going to have to be inverted on that position if the stock moves significantly in either direction. Buying the guts and selling the wings is more of a adjustment you can do with rolling out in time. So it's something that, if you're rolling from March to April right now, you can adjust the strikes or move, take off the inversion, stuff like that, because you're adding the duration aspect to it. You're getting more extrinsic value with the time value that you're rolling out, and it allows you that more flexibility. So I would just say, generally speaking, going inverted is something I do intra expiration of that position, the same expiration.
Mm-hmm. Yeah, and it's similar. I mean, the result is similar, but it's cleaner if you go inverted because you're just keeping the credit.
Yeah, and it allows you to still lean contrarian when you're rolling when you're buying the guts and selling the wings, you're flattening delta, and so a lot. Yeah. So typically when you do that, if you roll it out in time, it allows you to move where your risk is. If you're doing it in the same expiration, you're essentially, if the stock's down and you're buying a straddle and rolling to now a out of the money strangle, you're going from long delta to no to flat delta at lower prices. So I tend to not do that. I do that into a rollout in time because you're moving both your where your risk is. You're moving both your upside and downside risk.
Yeah.
Because you're rolling out in time.
Yeah. And this is exactly what we talked about on the digital event that you can sign up for. It's like an hour and a half of walking through real examples, walking through the theory and the math behind buying the guts and selling the wings, and how if you just understand the debit versus credit relationship, you can manipulate and manage positions however you want. But generally speaking, we like to keep compiling credits versus paying debits, which is why when we're buying the guts and selling the wings, we are doing that when we roll out in time versus in the vertical, or if we're making a vertical adjustment in the same expiration, we're probably going to go inverted. But yeah. E-minis down to 60.
Death.
Yeah.
When does it end, Thomas? When does it end? The pain. 5,500. I mean, if you would have told me 5,500 is where we'd be in the first 60 days, I probably would have said that is impossible.
Right.
This is crazy.
It's bad. I mean, there's no buying anywhere. No. It's stair-stepping down.
And the individual stock pain has been even worse. Like the E-minis being down, what are we, 10-ish% from high? Yeah, we're just about 10. If you 6,200, just round it. Yeah, we're almost 10. The NASDAQ's down 15%. But then you see NVIDIA is down 35, 40%. Apple is down, 20, 30%. Amazon and Google, they're all, 2 or 3x, whatever the move is. Crazy. Big move.
Mm-hmm.
Blood in the streets.
Quite literally.
in turmoil.
Yeah, we haven't got it yet. I check Chris every day. I'm like, did we get it?
Yeah.
Did we get it? We haven't got it yet.
That's the bottom.
Do they do it on a specific downside move? Like, is it the 20% like bear market?
I think maybe.
Is that like it? So we have to get to 20%. See, we need that. We need the pain.
Ryan asking about XYZ stock, which is no longer fictitious.
Yes.
Why?
Square.
Why? Tell me why I shouldn't buy the 10-day 55 put and sell the 37-day 55 put.
10-day 55, sell the.
So an inverse calendar spread for a credit. It can protect you on further downside moves. The problem is if you just chop around 55, you lose $260 over 10 days and you have undefined risk going forward. Or you have to rebuy another put, which will bring you into a debit, most likely. So if there's a rally, it can be a nice trade. If there's a sell-off, it can protect you, and then you got to take the shares.
You got to scalp it.
It's not risk-free.
Yeah.
At the end of the day.
Yeah. But yeah, stock's been killed too. That's down on 50%, 40%.
Let's see.
Oh, we got somebody talking about natty gas for AI data centers, keeping demand up. Is that a thing?
Just pumping energy.
Yeah, no, that's the thing. Yeah.
Is it?
Yeah, because you consider all these data centers, thousands of GPUs. You need to.
I thought they were
increases power demand.
Thought they were going to the nuclear.
Yeah. Microsoft is doing that, at least with 3 Mile, which is interesting. I think we're a ways off from other data center providers. Got some birds on the roof or something.
Yeah, what is that?
Someone's about to bust. The Kool-Aid man's about to bust through the ceiling.
That's a thing though. But data center spending cuts are in focus now. So if those come through, which I don't think they will too much, because you don't want to be the first company to really announce a significant rollback in spending, because that's just a bad look. After telling investors for years that this is going to generate so much profit. So I think the gas is going to be kept to the floor on that for a while. But it definitely plays into natty gas to it if you're looking at aggregate demand over the next few years.
Crazy. Well, that's the bottom of the YouTube chat. We've done it, boys.
Yeah.
We've done it.
What do we got for lunch today?
Mediterranean something? Yeah.
Pita.
Yeah.
Oh, nice. Okay. It's solid, always.
Love it. But yeah, if you want to reach out to us on Twitter, you can always find us there. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Thomas is at FX Westwater. We're all long crude oil after the analysis.
Yes.
But at some point you got to step in and put your foot down. And if it's at 65 where we've bounced a couple times, I'm fine with that. But we're all doing it in a small way using the micro crude contract or defined risk spread. So that's really the key. We can withstand any volatility in micro crude, even if it drops below where we're at now. So
it'll survive.
That's it for us. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Go get your cherry picks. tastylive.com/newsletters is pinned to the top of the YouTube chat. You can just click on that to get it. But yeah, we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Me and Mikey, Valentine's Day.
HR. Ready?
8 years and you say 9.
Yeah.
It's 8 to 9.
Yeah.
It's same thing. It was right there. Right when we
So
started.
He was my friend first, clearly. Met at work.
Yeah, Tasty. We met here. Mike interviewed me for a support role
right when I was starting off. So Mikey was here. That was where the Mike and his whiteboard came. He's nervous. He gets nervous sometimes when we're this close together.
What I remember about Nick was his beautiful brown hair and brown facial hair, which no longer...
Say it, say it. I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this. Which is a very dangerous thing in the financial world. But learning about that in the tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
We are back. It is Tuesday, March 11th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Jamal Chandler. Jamal, so much for Turnaround Tuesday.
Are we up? Are we up yet? Are we ever going to be up again? I don't know, man. I mean, I think we are. I was looking at some stuff recently, and I feel, I don't want to say encouraged, but I would like to feel that things are going to change at some point soon. I mean, we've been through these type of markets before. I was looking at something just recently showing a lot of our corrections in around like 20 to 25 days. This has been a long one, so we'll see what happens.
Well, we can thankfully say it's Tariff Tuesday again, Mr. Chandler. We can turn to the slides, Josh. President Trump today did not like that Ontario Premier Doug Ford wants to slap tariffs on electricity going to the United States in response to Trump's tariffs of the 25% aluminum and steel. So in response, Trump is upping the tariffs to 50% for Canadian metals. Bad for the Canadian economy, of course. Makes this on again, off again mindset all the more prevalent because this was a Truth Social post that seemingly came out of the blue. Apparently there is a roundtable today between Trump and the CEOs of various business leaders and finance. That helped spark the market last night, but we'll see if this market can get any headlines out of that here today, of course, because it would be contradictory to the tariff headlines we've already heard this morning. So it's a back and forth kind of session, event-driven risk, thanks to those at 1600 Pennsylvania Avenue. We still have a market to cater to, Jamal, and we can't totally ignore the fact that we have a CPI print tomorrow morning. CPI, of course, has been overlooked in recent months. It's produced very shallow market reactions that have not stuck around. Just last month, the S&P Global PMI on that Friday carried more weight than the CPI report just a few days earlier. But I still think we need to talk about the CPI report here, Jamal, because it's perhaps coming to the end of the period in which we see the base effects play through and begin to roll over. You could see quickly here March PCE tracking at 2.08%. This will be some deceleration after we get through what could be the last hurrah for high inflation figures. Outside of the initial market reaction tomorrow, do you think that this market is going to take away anything from the data that we see at 8:30 Eastern, 7:30 a.m. Central on Wednesday that leads to any sort of sticking market reaction? Or will it just be subsumed by the day's latest headlines and tweets?
I think it's the latter. I mean, I do. It's hard not to. To be honest with you, I thought this would have, coming into this week, I thought we would have sort of start to calm down on some of the chatter and the back and forth headlines. But no, I mean, to start yesterday, it started with a headline and again today. So it's hard to believe that anything else is going to move markets outside of, well, what's moving markets right now. But obviously this is still an interesting data point, right? Like it's still, I guess, leads to the question of how much this changes inflation and whether or not we can lean into more of these potential rate hikes, which could end up being emergency rate hikes at some point. But I think that's probably about the biggest takeaway that you can get from this report, whatever it comes out to be. But outside of that, man, it's tariffs all day, tariffs all night. Doesn't matter what. That's what's moving markets.
I don't see any reaction that, how should I say this? I see a hard time figuring out what narrative the market's going to run with if we get data either hot or warm tomorrow. If it's hot, I could see people coming out and saying, yep, the market's down because this is clear evidence that people pulled forward spending to get around the tariffs. And if it's too weak, it's going to be a clear sign that those PMIs, of course, were correct, that growth conditions are weakening so fast that it's dragging down inflation, because after all, there is a causal relationship between the two. What's the silver lining here? What are we looking for in this number that gives us a reason to be bullish in equities again? Is that just not possible given the narrative out there in the zeitgeist right now?
I guess if there's a situation that we're continuing to see, we continue to see once again some deceleration in inflation. I think that's naturally happening anyway. I think if we see that, maybe that gives way for if and when we need to cut, we won't be completely damaging the economy. I guess that's really the only silver lining I can think of. Outside of that, we know what the economy is worried about right now, and it's a matter of what are these tariffs going to do to anybody's business or their regular life. And oddly enough, that's exactly what we were worried about a few months back when it came to inflation, right? Like that was the number one thing we were worried about. It's completely shifted and changed. Now it's like, are we going to, hurt ourselves by these tariffs that we're inflicting on other countries, et cetera, because we're such a large consumer. So it's funny how the narrative can shift within like a 6-month period, but it really has. Your lips are moving, but there's no sound coming.
Sorry about that.
I could have let it carry on for a while, but I didn't want to do that to you. If you were talking about the Jets and your new quarterback, I probably would have, but since you're not, I didn't.
Josh, the sound is cutting out. Sorry, the sound is. I don't know how to. This keeps happening every time. You guys keep bringing up the Jets. And,
you're not excited, are you? You're really not excited. You were so over the moon 2 years ago when your quarterback came, but now it's just kind of like, I wonder. Let's remember this, guys. Take note of this. We got to take notice. Anytime a Jets fan is not excited about their team, you got to take note, because once they do, they turn on the spigot and it doesn't turn off.
No, it's. Sorry, all my audio's gone. We root for New York sports teams in this household, and the New Jersey Jets are in East Rutherford, New Jersey, and that, what do we call them, a New York team. And we have an NFL MVP in the state.
If you're like, but also, if you guys are like 4-1 and Justin Fields is balling, I don't want to hear anything from you. Okay, I'm just telling you right now.
Strong opinions held loosely, and raised by two lawyers, you might say that I have the ability to argue a position and take the other side without losing a blink of sleep. So trust me, I will be there in October if the Jets are 4-1, telling you like that was my guy from day one.
Right.
And these video archives delete after 3 months, so there'll be no proof.
We're saving this one today.
No proof. All right, so we have a market that clearly, like, you got to thread the needle here, I think is the point. And could something change out of this? Yes. Is the Fed caring about this for next month's meeting? No. And that is the greater takeaway right now, that the Federal Reserve cares about this data still. The markets may not at present time, but the market doesn't at present time because the Fed's timeline for caring about this is not anything immediate. The odds of a Fed rate cut in March are effectively whittling down to nothing. The next rate cut is not expected to arrive in June, so it's not like this is a question of if inflation is too soft tomorrow, does it alter the perception of when the Fed ultimately delivers its next rate cut? And that answer really isn't there. Right. So, this is going to produce a market reaction tomorrow. Is it going to have staying power? Contextually, we care more about growth over inflation, and really we care more about the tariffs and the impact on potential growth. So this is a second or third order effect. Either way, though, Tariff Tuesday rolls on here, Jamal, and those new headlines are seeing stocks go down to their now session lows, 55, 52 and a half here in the S&P 500, off 1.22%. The Nasdaq down by 0.73. Your Russell 2000 off by 0.66. Dow Jones off by 1.56. The beatings will continue until morale improves. There's no semblance of any resumption of upwards momentum, the singular characteristic that has defined this downtrend from my technical eye. We have not been able to close back above the 1 week moving average since February 20th. And since then, the 1 week has been below the 1 month moving average, Jamal. That has not changed today. Trying to get long deltas here, in my opinion, remains it's trying to catch a falling knife. We need to see that close to show us that downside momentum is broken. And thus, my hands are still flat and clean of any long equity exposure. So I will still sit on the sidelines at these levels.
And totally makes sense. I mean, we've reached a lot of support. It's a headline-driven market, and you never know what you're going to wake up to in what's being said day in and day out, or what's being said throughout the day. That being, at the same time, just to be devil's advocate, we are in the midst of a 19-day drawdown in markets right now. Obviously, they can get longer. I was looking at a chart earlier that shows kind of like the median over the last 10 years of a drawdown is like 26 days or so, about 7%. And right now we're down 9%. So, there are chances that this drawdown eventually comes to an end. The only difference is, again, it's the headlines, right? Like, it's not a binary outcome that we've been waiting on that's actually, taking markets down. It's just literally been day in and day out, different headlines about tariffs and what this is going to cost the American consumer and the economy. And so that's actually what's leading to the uncertainty. Markets don't like uncertainty. We see VIX where it is. And again, you talk about green shoots. I mean, VIX usually doesn't hang out in this level for too very long. That doesn't mean that we can't go higher, but at some point, volatility, realized volatility gets a little exhausted being so elevated and eventually calms down. So that's really the only green shoots. But man, it's been tough again. Because I do have some long exposure, long delta exposure, I should say. And yeah, it's been tough. I mean, day in and day out, we're just sitting at these levels and we really haven't bounced back. Mag 7 names are in correction territory. The S&P, again, like I said, is down 9.5% from its high. And obviously VIX is pretty elevated. So it's been a tough time. But again, when you look at that, you see that there hasn't been too many times that we've hung out at this level. And the only difference this time around, again, it's headlines. It wasn't headlines in August. It wasn't headlines in December. It's headlines right now. And I think that's why you're seeing this stair-step look to the VIX right now.
That, I think, is the bigger difference in how volatility is evolving here, right? I mean, we think about the spike from the start of August up into where we were, by Monday. You go from an 18 to a 28 in 2.5 trading sessions, right? That August 1st Monday, or that August 2nd Friday, then Monday opens up and this is where we are. Mm-hmm. This has been more of a slow, steady grind where it's every day we're adding a little bit more, a little bit more, a little bit more. And if you think about what the VIX actually represents, at like a 16, we're talking about a plus or minus 1% daily move. So when we go up to 30, we're talking about 2% daily moves. That has been one of the problems here, I think, that traders have. Usually it's implied vol overstates realized vol. And the past several sessions, because of these 2-3% moves, it's actually been the fact that realized vol has been more than what implied vol has been suggesting it would be. And so we continue to grind up. We're not finding any relief. It's not like a sudden spike like we saw here in December or any of the previous episodes that we had around tariffs in January, early February. This feels fundamentally different. So what is it going to take, Jamal? Like, what's the level where you say, you know what, the VIX is just too darn high. This isn't going to stick around. I don't care what the technicals say. I don't care what the news flow says. I have to just jump in on a 45-day cycle and just do what we know mechanically has worked best historically.
I mean, this is generally the level, whether it's here or a few points higher to get to 32, which is 2% moves, like you said, on 2% moves in either direction in S&P 500. Somewhere between there, I really do believe that. I mean, yeah, have we seen VIX hang out at these levels before for a while? Sure. There's usually in bigger crises. That's I guess at some point that becomes a question. How big is this crisis that we're looking at right now? How big is it, what we're dealing with day in and day out? How much is the tariffs going to impact? And again, we don't know the answer at all because it's just been, this just fluctuated. This news is just every single day it's something different. So are we at that type of, are we in the middle of that type of situation? It's hard to say, but you never really know when you're in it until you're out of it. That's when you realize. The banking crisis seemed like it was going to be a huge deal, right? We'd sit here and talk about it. Man, it did not look good. And within a month, it was over. So I don't know. But I tell you, this one has been really, it's probably been more frustrating than anything because, again, it's more of the headlines without any real substantial thing happening. That's really been the more frustrating part.
If there's a place where I'm looking to buy at least a long delta side for both the S&P and the NASDAQ, I want to see a little bit more deterioration from here henceforth. Double top measured move comes in closer to 53.75 in the S&P 500. That puts us roughly speaking, if we continue the current trajectory, before we hit zero later this year, we will have to hit 5,400 first. And so that gets us there sometime maybe late this week, early next. And I think that's an interesting enough conversation where the seasonality turns higher into April, starting March 15th. Now, that's including if it's a bear market, Jamal. I mean, one of the things that we can consider, and I have some good graphs I'm going to be publishing to the tastylive Traders blog probably tomorrow, about seasonality in bull markets versus bear markets, because the market follows a different rhythm when the market's declining than when it's rallying over the course of the year. And if this is a bear market, then actually still means we have a small window for a bounce coming up. We could be looking at a washout, but then you get a bounce and some stability in late March and April. And then the fun really begins for the bears when you get into May and June. But we're not there yet. So I have my level I'd be willing to look long deltas at because the volatility is certainly at that point. You could be brave now and look to the recent lows that we had in August, right? And say, this is an area that I'd operate around and try to jump in right now. Who knows? You got a CEO roundtable today where Trump comes out and says, actually, I don't think businesses need to learn to love to build their businesses in America, even if it means they can't maximize shareholder value. Shareholder value being maximized is the whole shtick. That's what we do around here. So we're going to back off the tariffs. Maybe that happens. I'd put my money on the under. Otherwise, this thing has no reason to stop falling. Momentum is so negative. NASDAQ in a similar spot. We're getting closer to that point, though. I would note that the swing lows that we have in September line up neatly with this double top, and that comes just below 18,800, right around that area. So there are potential opportunities where if you want to start thinking about scaling in, we see on a 4-hour time frame, the momentum breaks, right? This moving average envelope here, Jamal, has been ruthless. There has been no close through it. But let's say on the 4-hour, we start to see a turn here through the envelope after we touch just below 19K. That becomes pretty tempting to work with. And you could start to argue that there's been a shift in momentum where you can scale in on a very small way, maybe not NQ, but MNQ or perhaps even triple Qs, and begin to look long delta and start by building in by selling some put spreads once there is some evidence of technical basing. But thus far, we got none, and we still have longer term extension targets to the downside to reach.
You know what would end it all is if I just buy some puts. That would actually end it all. I'll tell you right now. That would be the end of it. We would bounce immediately. I should just do it and take one for the team. That'll help everybody out.
That's been an option this whole time.
Yeah, I didn't think about it until just now. I know. I don't know why. This is just occurring to me. But if I did, it would completely change the game.
Completely changed the game. Jamal, our joke about normative determinism with the Russell couldn't have been better timed because we are today. Yeah, 2009 now.
Yeah.
A date with the namesake seems to be preordained. Yesterday we hit a low of 2003.80. Today 2004.20. Whenever you're in the, we're moving closer to when you and I were in high school years on the Russell 2000, Jamal, and that's usually bad for the index.
Yeah.
So down here again, will the small cap companies be more negatively impacted than the larger cap ones? It makes sense. They don't have the balance sheets to survive supply chain transitions or an increased cost of goods. So many companies that are on the small or medium-sized enterprise in the United States, they operate on very, very thin margins. And I would argue that one of the upside benefits of globalization for the past 20 or 30 years, particularly in a tech-dominated era out of the United States, has been the fact that globalization has coincided with a rapid rise in American companies' margins. And so if we're entering into an age of balkanized trade, Jamal, and tariffs, do we think that those margins are going to increase or decrease? Well, if they went up with globalization, chances are they may be coming down with deglobalization. Russell rates stick around high, recession comes, the Russell gets smacked around. This is still the ugliest chart, and it doesn't even have a volatility premium to it. So I need more here. I know that you need more here too. The continuous contract is ugly. We're getting into a place, though, where, again, like so many of the others, the S&P, the NASDAQ, the fear is running high, a little bit more weakness. Like, give us another 100 points in the S&P, get us down to 18,800 in the NASDAQ. Let's get a wipe out to maybe another 1% or so, 2% here in the Russell. And you could start to see where a sell-put spreads in the Russell to fund call spreads in the S&P or NASDAQ becomes an interesting idea. Certainly worth exploring and discussing once again.
Yeah, I mean, boy, you just really got to, put this sell-off into context. This has really been a tough one. And again, it's been 19 straight days. Well, I shouldn't say straight days. We've had a few positives in there, but not many at all. And the Russell is just, it's going to take it on the chin more than most because, like you said, just these small companies and how much more they're impacted by deglobalization. So, in the meantime, I mean, look, like I said, I have some exposure, but it's mostly to very large cap things. This is definitely not on my radar right now. It's not one I want to touch. There's just too much, again, using the word exposure, if you will, to a lot of the issues right now. And I just can't touch Russell.
We are probably at the danger Will Robinson line here for the NASDAQ if we look on the continuous contract. Why do I point that out? This is the week where we may be losing the uptrend from the late 22, the late 23, the mid 24 swing lows. That is the backbone of the rally that's carried here after the post-COVID / Russia invasion of Ukraine decline. That's really not good, I think is what the kids say these days. Yeah, that's not good. So this move here, Jamal, this is a significant break. It's why I think we could be talking about a flush out further. Because now that this longer term uptrend's broken, I mean, really, what are you hanging your hat on if you're a bull? Yesterday was the day that you should have put in the bounce. When you got to this juncture near 19,800, the swing lows that you have pre-election in October, the uptrend in a multi-year rally, and there is nothing. We slice like it through butter. So this is a catching falling knife environment right now. And I persist. Maybe I wasn't there at the top, and certainly it took me a little while to get there because I'm a momentum person. I'm never going to catch the top or bottom. But it's still sell rips versus buy dips. We just need something to hang our hat on right now. A catalyst, a green shoot, technically, fundamentally, quantitatively, and it's ugly right now.
Even today, it's so crazy to me. I mean, really, when you look at what's going on, we're down 81 on SPOOs, 219, and those are big numbers. But at the same time, I mean, percentage-wise, it's 1.4% and 1.1%. respectively, S&P and NASDAQ. And then you look at some of the individual names. I mean, somehow NVIDIA is still positive. Apple's really taking it on the chin. As a matter of fact, they finally just broke Apple over the last 2 days. But some of these other names that were a little bit green that might start to fall lower, if they do fall lower, I think we're really in trouble and we could get one of those spikes down. Because Tesla's still green. AVGO, which is one of the top 10 largest names in the S&P, is still green. Netflix is pretty green. I'm not even sure what that story is. I don't know if there's news or something that today. But it's just, looking at individually and some of the names that are trying to prop up the market, people are trying to buy those up. It's just not working. And we've seen this a couple of days in a row where there are certain names that are trying to prop the market up or trying to keep it up, but they just eventually concede. Even if those names end up still being up, the indexes end up being down. So this is like pretty broad-based selling. And, it's been the consumer staples that have been a little bit stronger than obviously the consumer discretionary, which have really taken it on the chin, Tesla being one of the main ones. But, when I look at a heat map today, I mean, a lot of the financials are down. A lot of the healthcare are down. Some of those names that have been kind of keeping the market up, most of them are down. There's a few of these big box tech names that I mentioned that are up, NVIDIA, AVGO, Tesla, a little bit today, and Netflix. But it's really kind of ugly out there when you're looking around across the board. And I don't know. Like you said, I feel like yesterday should have been the day of the bounce, and it just didn't happen, and that doesn't bode well for the week. And I don't necessarily know if CPI or PPI are going to change that much.
Like, this is a great place if you're a bull defending Broadcom right now. This is Custer's last stand. You got the uptrend here from the swing lows August, September, late November. You have the former highs in June, here in October, here in November, right? This seems like a confluence where there should be some decent demand for share prices. And Broadcom, we had their earnings last week, right, Jamal?
Yep.
They were good.
Yep.
So it's not like this company is saying that the AI revolution's ending. 71.5 IVR. We have a swing low here from March 6th at 177 and trading at 188. I mean, is it worth doing like a 175, 170 short put spread? How much better is it going to get selling at support? If you're trying to do something like that, basically getting long delta support.
I think so. I mean, in names like this that are huge, that are massive, I think it's worth doing, especially a defined risk type of spread, right? Like, I believe so. But you're going to deal with some pain right now because the market is just hell-bent on going down right now, and it does not like any discussion of tariffs.
No, and you can see Apple, you talk about Apple getting crushed the last 2 days. It's down 4.26% today. It's losing swing areas that it's been trading above since the beginning of November. So the biggest components of the market, not all participating in this. NVIDIA is up a little bit today, but really no significant bounce thus far. Again, a decent area. You would have thought we would have bounced a few days ago. Not quite, maybe here today, but now it feels like we're reaching for a reason for why it should bounce from here. It's just bad. The technicals are bad. They aren't good. It's expensive to continue to roll put exposure, though, and I think that's something that Ilya was talking about yesterday, where he's looking to, continue to take his bear position that he's had on for a few weeks and do it in a cost-effective manner. The problem is that if he wants to, buy out of the money put spreads to keep this going, he's effectively talking about the NASDAQ extending another like 5 or 6 points on the same risk to reward structure that he had for the initial trade when the VIX was at 15, right? So it's more of, okay, if you have been short, what is the appropriate thing to do?
Short delta, you're saying.
Given this, yeah, right. If you've been short delta in this market, like, what do you do? If you're close to expiration, take some profit. It may be prudent just to wait for a bounce and then sell a call spread here. The nice thing would be if you do sell a call spread, at least in my head, the way this works out, okay, the market's rallying, uncertainty's falling, volatility's coming down. So those calls probably aren't worth as much now, even if the market's directionally moving there. That fall crush will give you some time to get out of the position at maybe a more limited loss otherwise than if had vol just stayed higher and the market starts ripping to the upside. We're close, though. Have you seen markets in turmoil yet on CNBC?
I haven't. It's odd that they haven't been mentioned, unless they were going to do it yesterday when Twitter was down and they just weren't able to get it out. I don't know, but I'm surprised that we haven't seen the bat signal yet for markets in turmoil.
People have asked me, because I talked about this yesterday on Twitter, has markets in turmoil, and you're asking for a friend. Why do we care about this? Every single time, starting in 2010, that CNBC has aired a markets in turmoil special, the 1-year forward return for the market is positive, averaging a 40% gain 100% of the time. This is not just like 1 or 2 or 3. You have dozens of instances. I think we're now counting up to we're at like 68 different market turmoil specials aired on CNBC since 2010, and every single one a year later the forward return is positive and the average return is 40%. So yes, I am asking for a friend. That friend is Jamal Chandler. That's perspective to you, listener, because once I see this, I know what I will be doing blindly, given the track record here. And I think a lot of other people will be too. So
it is kind of shocking that they haven't talked about it. I mean, really.
I feel like everyone's waiting for it at this point. Like, yeah, I'll buy when CNBC panics. And CNBC's like, well, like the panic isn't here yet. So there's... All right, let's turn our attention to the bond market here. They lost their rally today. Overnight, they were up and they were pushing to trying to test those highs once more. And then we got the headline. We would see this news table, roundtable conference today, whatever we're going to call it, with the CEOs, executives from the financial industry. ZB does pull back, and we, of course, have this market sell-off that's accelerating, which is allowing bonds to recover a little bit off their intraday lows. 117 and 19 ticks right now, Jamal. It's a 54.7 IVR in ZB. Do you have exposure? Are you looking to get exposure? How are you managing an existing position? Give me the rundown on treasuries from your point of view.
I'm still long upside calls in both CB and in ZN. And the days where I do think about getting out of it, I figure it's really my only, it's my real only hope in this market where we're continually going down, which is why it's kind of surprising that they're not up today. Like you said, they have rebounded from their lows, but this is another one of the things that are a little bizarre about markets. We have seen this a couple of times now where the market is down 1.5%, and bonds aren't necessarily cooperating. I believe that's kind of what actually Friday was up. I forgot. But this is it's been on and off. It hasn't been a consistent move in bonds. I would definitely expect bonds to be up a little more, but maybe there's just not as much fear, or maybe again the landscape is such that we're not as I guess, I don't know. There's confusion about how many cuts we're going to get. Again, it's changed from 1 to 3 over the last couple of weeks, but even still, maybe that's not enough. But I would expect bonds to be up more, and I would expect there to be more fear in equity markets leading to higher bonds. Again, VIX high, bonds high. I would expect that, but it's just not what we're getting today.
No, and as we see this, sell-off deep in here, I would point out that we have more reassuring commentary from the White House. White House press secretary says the stock market numbers are a snapshot of a moment in time, and we are in a period of economic transition. We covered this yesterday on Futures Power Hour, Jamal. Detox, transition. This is just fancy speak for a recession, right? Markets don't want to hear that the economy is in a period of transition. Transitioning to what and from what? We could talk about having more manufacturing jobs here at home, and that's what we're trying to transition to. But from what? The market only cares about the top line macro numbers. There's a reason why the stock market was at all-time highs when the economy had double digits earnings growth and 4 handle on unemployment and CPI heading back to 2% and real growth in the 2 to 3 range. So the market's saying, okay, we're transitioning away from Goldilocks to Goldilocks. Is that likely? Or we're going to go to something maybe that means some deceleration in the short term. And so more selling in stocks now, 55.40 here in the S&P. Bonds, though, Jamal, we covered this last summer. There's one part of the market that does well when recession fears are running high, long into the curve. Gold. Look in those places. So I'm sure with that in your mind and the growth fears moving around, you, like I, will stay calm, cool, and collected on this short-term pullback and hold on to our long deltas in the treasury market.
I don't think I have much of an option. I mean, really, like I said, I've dabbled in getting long the market and long deltas in the equity markets, and this is being long bonds is it's kind of like a hedge, I guess, if you will. I didn't put it on specifically for a hedge. I put it on for because I believe that bonds are eventually going to go higher. But I would like to look at this as sort of when I'm looking at ZB and I'm looking at this chart, there's a little bit of a sort of cup forming there, and I feel like I would like to imagine that that's going to lead to higher prices at some point in time, especially if this current situation in markets continues.
You mentioned it being a potential hedge. I think that's actually a worthy, discussion here. If we think about the relationship between bonds, or we could talk at notes or bonds, and the broader stock market right now, the rolling 1 month correlation is negative 0.73, right? So SPY up or SPY down, bonds up. And you can see with oil too, like this is how you know there's a growth scare going through. You get that kind of perfect correlation. And it's not yields up, stocks down. It's yields down, stocks down. That's never comfortable for anyone. It's a dramatic change in our perspective from where we were last year when it was, yields are going down, inflation's defeated. Good news. So why we're getting lower yields, that's obviously the question that we have to ask ourselves. It's like when I hear people say like, I really miss gas prices from how low they were a few years ago. Well, they were low back in 2020 because the economy ground to a halt and there was no demand for oil, right? And oil prices in the futures market went negative. So like, what's the reason for why we had low gas? Oh, the economy was crashing, right? For a pandemic, but it wasn't in a good spot. So you don't want lower rates just for the sake of lower rates if it means that you're going to have a 6% unemployment rate and contracting GDP along the way. I don't care though, Jamal, because I don't have long deltas in stocks. I have long deltas in bonds and treasury. So I'm going to keep my long calls in ZN, my short put spread in ZB, and I will sleep very comfortably tonight, regardless of what the news flow holds.
And I'm sure there's more news flow to come. That's one thing you can be assured of right now.
I was temporarily relieved of that news flow yesterday when Twitter was down, and I learned how unreliable and interesting the other social media forums can be during those times. Let's go over to metals. Gold, silver, finally bouncing back a little bit here today. Good one for the good guys, although gold really is not making any progress.
Yeah.
Because we've been trapped right around 29.20 for what feels like a week and a half now. And quite frankly, it feels like we've been trapped inside this range right around 29.20 or so. We've tested it nearly every single day. We'll call it 60, 70% of the time over the past month. We've traded right around here. So perhaps a flag, but the vol is still coming off. Maybe this is a triangle that's coming together up here. That's another perspective that we haven't entertained yet. But again, a symmetrical triangle in the middle of an uptrend, as has been so reliably the case for so many trades over the past year, Jamal. That is a continuation effort to the upside. So if we want to call it a flag, we want to call it a triangle, it doesn't really matter. It still leads to the same outcome, and that outcome would be higher prices. This is a pretty ugly looking drawing on the chart, and we're trying to amend that right now. But either way, there's your story, technically speaking, right? There is your flag after a flag that may be forming. And that looks bullish. So I have to keep long delta exposure here. And also, given the recession fears, gold is the second best performing asset class during recession episodes going back to 1980. So I'm happy to lean on those fundamental moorings when the momentum's positive to stay long gold.
Yeah, I really would expect more days like this in gold, and I'm surprised we haven't been seeing as many given the current market dynamics, right? Equities really being sold off, scared. Where's money going? Clearly, it's not really going into the dollar because it's not like the dollar is reaching new highs. Gold, I would expect, should be reaching new highs. I would expect more highs in bonds, like I said. So this has really been one of those bizarre things. But I mean, at the same time, there's a lot of things at play here, a lot of dynamics, and but I don't know. It's still weird to me. I would expect gold to be higher. I can understand why you still long it. Like I said, when it was in that downtrend almost 2 weeks ago, I figured it was going to find its way out of it, particularly if we were going to have the issues that we've been having. But I would expect it to be higher, and maybe that spike is coming at some point soon.
Gold up 0.79%, silver up 1.83. It's a little bit off the highs. I continue to persist in my long delta exposure here. Last week, we rolled out the long call spread because we got to 21 days to expiration, which is obviously good thing because long 33, short 33 and a half. The past two sections would have been on the wrong side of that decay curve with the market below my long strike. So the roll was appropriate. We're now back above 33. I think there's 45 days left to go here, 44 days left to go here. It could be a bullish outside engulfing bar today. The high from yesterday's session is $33.15. And so depending upon where we ultimately finish up, you could be looking at a resumption, if you will, of bullish momentum right at that 1 month moving average as we cross back above it and the 1 week at the same time. It feels like we're trying to press this breakout condition once more. It feels like it. So I'm going to keep those long deltas on in gold and silver, as well as in copper, which, like some of these other metals, it looks like it's a consolidation of sorts. It looks like that we've just been moving sideways. When I can get my chart there you go. What do we do once more here? We fall back to the 1 month moving average. As has been the case this year thus far, it's been an area where the market has picked itself up. So longer term, Jamal, copper looks like it's bull flagging following a breakout and settling comfortably above former swing highs. That's exactly what you want to see as a market carves out an attempt of a low and a bottom, which it has done here.
That's the best both of those charts have looked in a while. They actually look more favorable to upside prices now than they had before. They're both pretty volatile metals, right, compared to gold. I mean, they both are fairly volatile, but that's the best both of those charts have looked. So you might be in pretty good shape there being long those.
There is a China component to this. China seems to be attempting to stimulate legitimately. Now, again, we've heard this story before. How many times have we heard this story before in the past year or two? But that tends to be a driver of the market. And we saw this, in the spring last year. We saw this in August and September last year. September, of course, when they had their big stimulus announcements on the other side of the Fed rate cuts. No one found that to be a surprise. That juiced copper prices too. So we have some things to work with here, Jamal.
It's always nice.
I think we should move. We got some things to work with here. Let's talk about these energy products, though, because crude oil is just still. I look at it every day. I watch it every day. I just stare. 25.7 IVR, bottom side of a range. Any appeal here to do anything?
So it's funny you say you stare at it every day. I actually really don't look at it most days. I kind of forget about it. I moved it off my screen. God, when was that? Sometime late last year. I don't even remember. It might have been or the beginning of this year. I don't know. Even the move where we saw it move to 80 didn't really do much for me. And I really don't look at it as much because, again, the vol is low. And if what I think is happening overall, global growth slowing down, then I feel like at some point this should see lower prices as well, probably below 60. Again, that's just what I think. Who knows where this is actually going. But it's just not as interesting of a trade to me. Most of the time last year, you could hear me talking about on this show, if oil goes below 70, I'll be willing to buy it because more than likely it'll return to somewhere between 72 and 74. And it did that quite a few times last year. But since we saw that touch of 80 at the beginning of January, it's just been a slow grind lower. And obviously this discussion of what's been going on recently has really kind of slowed things down as well. So that's just not as interesting to me. I really haven't looked at any trades in oil. I haven't looked at any option trades. I really haven't even considered buying MCL. It's just not as interesting to me. I should say there are other interesting trades, more interesting trades in oil right now. That's really what it boils down to.
Yeah, and so if we were looking at going out 65 days and looking at recent swing lows here, we could, just for the sake of exercise, why isn't this worth it? We see the recent swing lows down below 63. So 63 and a half, so down to 63, and then let's buy back $2 wide. 66% probability of profit, nice. Max profit 610, okay. Max loss, we're giving up more than 2 to 1, and the buying power here, almost twice the amount of profit. So we're locking up a lot for not a high convexity trade. This doesn't feel like a great use of capital. That's really the point I'm getting at. I want to see more juice. I want to be able to execute trades like this where it's really worth it. And this one at 25.5 IVR is just not worth it. Natural gas, I know, has been a pain in the ass for you.
Yes.
Yesterday was probably painful at points. I guess you were surprised by where we settled in at the end of the session. what do you make of this price action up here? I've totally missed the boat since missing my long entry on March 3rd. But yesterday felt like a pretty significant day. You don't get a 10% decline from the highs for no reason, do you?
I don't know. Yesterday, because that happened, it happened Sunday night, that touch of 490. I mean, that looked like somebody blowing out or something. I'm not really sure what the deal was there. When you see that kind of spike and then, like you said, a retreat like that intraday or throughout the rest of the trading session, seems like something went awry. And I don't mean like, with the product itself. I mean, clearly somebody was forced to buy up there or something. I'm not sure what it was. I was, of course, relieved to see it pull back some, and it gives me some hope that at some point it'll fade. Again, when you look at the chart here, you saw the high in January and then the fade. You saw the high in February and then the fade. We're looking for that in March for sure, and that's the only thing that gives me reason to try to continue to hold on.
There's some rumors floating around over the weekend that an energy-focused pod blew up. I don't know if that's true, so I don't want to, perpetuate any rumors around here. But you see price action in an energy future product or any futures product like this, where right out of the gate the market's gapping and then running, and then immediately retracing it over the course of the session. It feels like someone's being forced to liquidate a position, right? So you put that price action coupled with the rumors that you see on Twitter when it was open over the past few days, and you can kind of paint the story where, okay, maybe there was something that was going on here. Maybe this squeeze in natural gas is because people in the market knew someone was really short and they were trying to squeeze them and knock them out of the position. And that's not unheard of. So this is a very interesting time in natural gas. I'm not of the mindset that I would be going in here to sell calls against yesterday's high, but it certainly feels like we should be open to a deeper setback. And if it's a setback we get, would I be willing to try to get long deltas again? Yes, I would. But this is a dangerous looking candle. A 10% intraday swing is nothing to trifle with. And for natural gas, that unfortunately is one of the many reasons why we call it the honey badger. It really just does not operate on anyone else's clock, schedule, whatsoever.
No, it does not care at all. But yeah, I'm hoping that that's an omen too, like that eventually this will lead to the fade in natural gas that I've been looking for the last couple of weeks here.
What's the plan? Let's say we just stop here, right? We have this big inverted hammer yesterday, shooting star. We have a doji today. Both of those are kind of like, okay, the top is here. There's indecision. The rally is slowing. Would you try to sell more calls up here to monetize the position a little bit better or accentuate potential gains to offset recent losses? Or do you have enough eggs in the basket where you're not going to chase this?
No.
I'm curious about your trade management.
Yeah, I wouldn't chase it. I mean, again, I'm short to 390, 410, so it's fairly in the money at this point. But for natural gas, I mean, we could easily see a 10% pullback, and I could be, in a good spot. So I don't feel the need to add anything to it. I'm just going to live with my deep, in the money call spread, which again I have a decent loss on right now, and just look to recoup some of that, and then politely move on, Chris. I mean, it's pretty much it. I don't want to tempt any fate here.
Jamal, one of my favorite shticks is to chide people for bringing up the concept of de-dollarization. Because after all, who's not going to use U.S. dollars? The U.S. consumer buys everything from everywhere. So we import your trinkets and you import our paper, treasuries, right? You have dollars, and what do you want to do with them? Well, you're going to put them in dollar-denominated assets. It's a great idea. U.S. treasuries, U.S. stocks, which means you have a vested interest in the outcome of the United States, right? You don't want your counterparty to go under if you're investing in dollar-denominated things. However, there's a lot of repatriation going around the world right now because of the tariffs, because of higher capital requirements, because of demand for investment in local industry. Europe, in particular, is driving this, where fund managers are saying, well, I can invest in German concrete as opposed to worrying about what Mag 7 name is overvalued and if those semiconductors are going to fall into the purview of XYZ tariffs. So I don't want to say we're in a de-dollarization stage beginning, but it feels like that thesis deserves a second look these days, given the movement in the euro, which is surging here again today, 109.34. This is up nearly, it's up over 5 cents now over the past week and a half. This is absurd, obscene to see in FX markets in such a short period of time. I can't really fade it, but declining dollar, declining U.S. equity markets, those aren't good pieces of information to piece together, Mr. Chandler.
It is. It's another example of this market is very different than what we've been seeing over the past 2 years, right? We typically saw equity markets down big, and we saw the dollar up. It was running. The markets were completely running away from the dollar, so fearful of that. And if you were we certainly didn't. We certainly saw bonds down too, right? We saw bonds, treasuries, that is, down on those days as well. Things have completely changed in here. And again, dollar being so strong, euro really making a move. I'm really glad I never sold that Strangle that I was looking at one point in time. I think I was looking at like the 101, 108. I'm sure glad I never did that because, man, this thing is absolutely moonshot more recently. But yeah, it is kind of strange, right? Like for those who are fairly new to equity markets, it's probably pretty strange for you to see the dollar down the way that it is and see markets down. It's really been a little bizarre. But not really.
For more of this trade war context, Canada has announced that it will be moving to sell U.S. Treasuries in a tariff retaliation. Canada holds $328 billion worth of U.S. bonds. You know, Jamal, that's the kind of headline that we're seeing. Makes me feel pretty good about gold and silver, I'll tell you that. Feels pretty good to be in gold and silver right now. The de-dollarization of this market continues, pound at a new high. Canadian dollar really not enjoying the fun because it is at the centerpiece of this tariff talk today. Again, tariffs on steel and aluminum bumped from 25 to 50% for the retaliation against Ontario's retaliation against Trump's retaliation for the War of 1812. I'm just trying to pull on the thread of whose fault this is at the end of the day. Figure out where the off-ramp is, Jamal. No, I mean, it's true. The War of 1812, and then again, I'm reading through American history now, and then the UK supports the South in the Civil War, and so the US demands, like, hey, you guys owe us money for that. You hurt our war effort. Like, we want Canada. And the UK is like, here's $16 million instead. And the United States is like, okay, but we still really want Canada. And that goes on for like 30 years in the 1800s where we're trying to take Canada from the UK. So maybe we're just reliving history again, Jamal. We got bored, so the writers needed new material. They couldn't come up with anything. And everyone knows how the sequel is always worse than the original. So
always
this one kind of sucks. But the Canadian dollar, 69.9 IVR, I got to say, with these headlines and how it is a drag on this market, is probably going to be the biggest one that pops once we get to a USMCA renegotiation phase where the tit-for-tat tariffs ultimately end. You heard the Canadian Ontario Premier, Doug Ford, say this today. Let's just stop with the tariffs and start renegotiating the USMCA. This is what this is all about anyhow. You know what? If that happens, you're not going to see the tariffs go on and off during a negotiating window. That's going to be the relief valve.
I mean, you think so? I mean, that should be, right? Like, that would be something that would create some relief.
I mean, I think the bigger story here is what's happening with the yen, how it just continues to grind higher. JGB yields have just pushed to a new 16-year high. The yield gap between JGBs and treasuries is closing in favor of the yen. The yen is a liquidity vehicle. This is a time when the market liquidity is very shallow. Jamal, I shared in the research chat last night, top of book depth in S&P 500 futures right now at the lowest levels that we've seen since the start of 2022. Now, this is a thin market. People are looking for cash. The yen serves that role. I know I've seen the tweets and I appreciate them. People have been doing double bulls where they were short the put spreads and to finance long call spreads in the yen. They've been just doing long call spreads. They've been just doing long calls around the James Bond idea, the 007 calls. The vol still is pretty cheap, all things considered. It's a 39.4 IVR. My premise is that I think yen vol is understated here. Forget the directional trade. But yen vol, generally speaking, is understated right now, given all these other risks. And Japan hasn't been in the tariff crosshair, by the way, even though it came up last week when Trump noted that we are in a pact where we send aid to Japan if they are attacked, but they do not need to help us in return. So it seems like that is in the queue, right? That's going to be in the queue here. And if Japan does get in the queue, it's probably not going to be good for the currency in the short run. So what am I getting at? If you've been long for the past few months, we're at the swing highs from early December. If this has been a trade you've been riding, if you've been doing a better job than I have been at monetizing this idea, as I've been playfully joking with some of you, this is a good place to think about maybe adjusting the position and thinking about ways to get a little bit more bang for your buck. this is a Tom line, Jamal, and then I'll let you have the final word before we go into the calendar and the education. But when the volatility in the S&P 500 is like 70 IVR or 60 IVR, that's the trade. And so if you've made money in the yen, there are better places to do it right now.
That's the thing. There are better places to do it right now. There's plenty of other places you can deploy capital, as we talked about. It's not easy, and it's probably going to take some time. At this point, you probably want to be out in May, maybe even June, because this is, who knows when this is going to resolve itself. Like you said, we are all waiting on the relief valve, which could be them discussing how to figure the USMCA. But until that happens, any trades you put on, just give it time.
Time is your friend. What's next on the calendar? Big day actually coming up tomorrow. We're going to have this US CPI report in the morning, 8:30 a.m. Eastern, 7:30 a.m. Central Time. We're going to have a BOC rate decision, 9:45 a.m. Eastern, 8:45 a.m. Central Time. There's also speeches from various policymakers in Europe. Christine Lagarde, the ECB president, will be talking most likely before any of us are awake, unless, of course, Jamal, you're a 3:30 Chicago time riser, which maybe you are. I'm certainly not. But if you're holding the euro, there is an ECB Lagarde speech overnight, and then Nagel and Lane are speaking over the course of the day. As we typically do at the end of every one of these shows, we talk a brief bit of education. Jamal, we were just talking the futures liquidity here. So what do we mean by futures liquidity in this market? Well, head over to tastylive.com, top banner, Learn Beginner Futures, where you can find this coursework put together by the fine folks on the Tasty Live research team. Jamal, when you're executing a trade, it's really important to be able to get out of the position as it is getting into it. And so one way that you can do that is check the volume in a contract. You can check the open interest at a specific expiry and strike to know and have the confidence that once you jump into it, you'll be able to pass the bag to someone else when you want to get out. Otherwise, it's nice being able to buy something, but you don't want a Hotel California trade where once you're in, you can't leave. The ways to check liquidity in the market, again, by open interest, by volume, but also by the bid-ask spread. Tight bid-ask spreads mean there's a lot of activity in that strike, and you can operate with confidence that you'll be able to execute with relative ease, hopefully the lowest transaction time, lowest commissions, yada, 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 right? Everything to just make sure it's as frictionless as possible. So you check volume, you check open interest, you check the bid-ask spread, and then you are good to place a trade. Jamal, we keep an eye on the liquidity, of course, because that's important for time of day. Highest liquidity hours are during the New York to London crossover, 8 a.m. Eastern to about noon Eastern, and then it tends to tail off. But other than that, what else do we need to know here? Go to tastylive.com, top banner, Learn Beginner Futures, learn more, don't listen to me. And more importantly, we can end a little bit early here, which I know the production team loves. Congrats to our producer, James Coney, who just had a film screened at a festival here. I'm not sure if I'm supposed to say that on air, but I know he put a lot of hard work into that, so good on him. And he's one of our company's GOATs this month. So good week for Mr. James Coney here at Tasty Live. Thank you to our great production crew. No doubt. So for Jamal Chandler, I've been Chris Vecchio. We will see everyone later today. He's back with Engineering the Trade. I'll be on for overtime. But up first, quick break, then Dr. Jim Schultz with From Theory to Practice.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Oh, yeah. Tasty Nation, good morning.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Karen. Thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There's a phrase for this. When the time comes to buy, you won't want to.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract.
Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this. Which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. And I don't know who saved the market out there, but man, somebody rallied at ES about 50 points in the last 15 or 20 minutes. So welcome to the show. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the discussion and you can join the conversation in real time. You can communicate with our brethren who are also watching the show. Man, you can celebrate if you're a bull or a bear these days. You can commiserate if you are a bull or a bear these days because everybody's getting creamed and everybody is also winning all at the same time. And of course, you can ask me whatever questions you might have. Drop them in the chat box and I'll try to get to as many as I can here in the next couple of minutes. But Josh, bring us in here, man. Do we still have a market? You just never know. Man, even S&P is now down only 40, which, I mean, that's a pretty big move. But guys, if you've been watching the market at all today, especially over the last, 30 or 25 minutes, I mean, that thing was down to like 55, 35 maybe on the lows. I mean, we'll take a look at it here in a couple of minutes, but NASDAQ only down 32. That basically feels like up 100. You've got the Dow down 500. You've got the Russell 2000 Futures Index down 4 on the day. You've got the Bitcoin bros kind of saving the whole deal, up 2,000. You've got volatility, of course, is strong today. Volatility futures up 70 cents. And then the old spot volatility, the old 1977 volatility. You got the VIX index up 25 cents, which is pretty crazy because the VIX, I don't think it broke 30 today. I think it topped out at like 29.50 or 29.70, even when ES was down 80. Like, even when ES was just puking its guts out, like the VIX still never broke 30, which is like, man, what is this thing even doing? Like, whenever it actually, quote unquote, works, it's also, quote unquote, imaginary, which is, quote unquote, this one doesn't count, right? And so that's probably enough air quotes for probably the rest of the month. But for VIX here, man, only up 20 cents. That's wild stuff. If you look at the VIX index, let's look at this guy. Let's take a look at this guy together. So, yeah, you can see we topped out at, 29.57. I mean, that doesn't make any sense, man. That doesn't make any sense at all. Now, if you're on the internet, if you're, Googling some things, if you're grokking some stuff, you're like, well, it's an orderly sell-off. Like, I need chaos, I need capitulation, I need all these other things, whatever, to really trigger a VIX, a huge VIX spike. But again, I'm not talking about a VIX at 40. I'm not talking about a VIX at 47.5. I'm talking about a 3 handle. That's all I want, man. Like, that's all I feel like is necessary and kind of reasonable for the action that we've had here in this market. But yeah, EMI S&Ps, man. I mean, they're headed back down now, I guess. But man, look at that. They were down to what? Yeah, look at that. 55.34. I mean, let's count. Let's do some really serious TA here. So we got 1, 2, 3, 4, 5, 6. These are daily bars, of course. This is very sophisticated stuff. 7, 8, 9, 10. I was practicing this earlier with Amelia May, so I'm all ready to go. 11, 12, 13, 14. I'm not counting just the red bars, although most of them are red. I'm just counting the number of days. So 14 trading days, right? So that's not even 3 weeks. We shed 6,200 down to, let's call it 5,500, just because we almost got to 5,500, earlier this morning. That's 700 points on the S&P 500. We're not talking about the NASDAQ. We're not talking about the Dow. Like, this is crazy stuff, man. 700 points in 3 trading weeks? Man, I mean, I don't know what the catalyst is out there. I mean, you could attach any number of things. Maybe it's Trump. Maybe it's Biden. Hey, maybe it's one of the Bushes. I don't know who's causing all this to happen, and neither does anyone else. But it's like, man, this is just some wild, wild stuff out there. Wow, crazy stuff. So S&P 500 was down to 55.34 on the lows. You got the NASDAQ is about to be actually green, like really green, not even like fake green, like down 70. It's like, it's pretty much green. It's about to be really green here in the next couple of seconds. It's only down 12. You can see the NASDAQ was down to 139 on the lows today, so about 300 points lower than it is now. Still a pretty muted day relative to what ES has been doing. ES has felt a lot weaker than the NASDAQ, and I mean, right now it actually is significantly weaker than the NASDAQ, where the NASDAQ is almost unchanged, and EMI S&Ps are still down 36, 37. So crazy stuff, wild stuff. What a time to be alive. And I'm still not quite sure we are alive. I mean, do we make it through jolts? Like, is this actually happening? Like, is this lost season 1, 2, or 3, or is this like lost season 4 with the flash sideways, or lost season 5 with like the the flashbacks and the flash forwards? It's like, man, you don't know what's going on in those seasons. Still the best show ever created, but you still have no idea what's going on. Like, I feel very much that way right now, as the NASDAQ is now officially green. It's actually up. It's actually up $1, and so that's crazy stuff, man. That's crazy, crazy stuff. And so, all right, so let's see here. Yeah, let's do a couple of things. So a couple of things in the portfolio, and then I'm going to get to you all, man. I see you guys in the house. Man, shout out to the team for getting YouTube up and running. Like, we were having some Microsoft Teams issues. We figured it out. Troubleshooted it, man. Really appreciate Josh and Matt and James and everybody else that's kind of working behind the scenes. Just appreciate you guys so much. So I see Sam L's in the house. I see Theta Traders in the house. Rob Banks in the house. Junior Max in the house. Emmett's in the house. Man, Grumpy Mike's even in the house. On a day like today, Grumpy Mike's showing up. Man, nice job. Man, real good job. This would be a day to just mail it in and just kind of cast the check on the grumpiness, man. But you didn't do it. Like, you didn't do it. You're here, and you're part of the team. And I appreciate you, man. CM's in the house. Man, I'm going to get to all you guys here in a couple of minutes, like 3 of you guys probably in the next few minutes. All right, so what I want to do, a couple of things. So number one, let's look at Starbucks. So, if you don't remember, just a couple of days ago, it feels like maybe a week and a half ago, Starbucks, our short call on Starbucks, that thing was like deep in the money. That thing was like 4, 5, 6 points in the money. Now it is way out of the money. Now Starbucks has followed the market lower, and it has fallen all the way down from, I think it was like 115 on the highs, all the way down to now 99 and some change. And so our short call that we sold for 93 cents is now only worth 14 cents. And so all the juice is essentially gone from that orange. There's no reason to keep it on. Like, just get rid of it, eat it, toss it in the trash. You probably wouldn't want to eat it. Maybe just toss it in the trash and go find you a different navel, or even navel that has more juice. And that's exactly what we're going to do right here as my orange analogy crumbles in real time. Only on the Tasty Network. And so Starbucks, when it comes to for my covered call investors out there, right? I mean, this is why we're doing this position. This is why we're doing, these different kinds of things on the show, which I think has been really, really helpful. And shout out to Josh for the thought on that. Really appreciate you for that idea. I think it's been really good, giving us something different to talk about. And I know that this is something that a lot of you guys out there are doing. Like, if you're brand new to like the derivative space, or you're brand new to like, you're considering like an active options portfolio, whether it be your whole portfolio or just a chunk of your assets or whatever, it's like you've probably started selling some calls against some shares that you own. And now you're like, man, maybe there's some more out there. Now you're like, man, maybe there's a little bit more that I could experiment with. And so this, of course, is kind of a bridge to take you from, just doing kind of passive, kind of slower moving covered calls over to a more active space. But now we have some of these components in our own portfolio, which is really, really nice to be able to kind of talk to these things. Because it's one thing to kind of work through this on like a PowerPoint slide or like a Google Slides slide or something like that, or talk about it like on a podcast or like a YouTube, show that might be live on the internet, pun intended, of course. But it's much different to actually go through it. It's much different to actually be in the arena and have to deal with it day by day and kind of talk through the different, wiggles and nooks and crannies that just kind of unfold. So I'm going to buy back this call. There's no reason to keep it on. And then we are going to lay out a new call right here today. And so let's buy back the call. Looks like we'll get we'll buy it back for about 15 cents. That should be no problem. All right, no takers at 15 cents. We'll give them another penny. I mean, that second Range Rover, it ain't going to buy itself, right? So we'll go 16 cents. Boom, there you go. Fill the 16 cents. Beautiful. All right, so for Starbucks, let's look at the chains here for Starbucks. So if I go in here, I mean, this is the whole chains essentially. Well, hold on a second. No, it's not. I want to see the share purchase too. Is the share purchase in here? Wow, did we buy the shares? Wow. Oh, the shares don't show up in the chains. That's what it was. Yeah, you have to go to the activity tab to do the shares. So let's go to the activity tab. Let's just do it this way. So this is a little 2000 late, but it's all right. So we bought the shares. When did we buy the shares? Did we buy the shares last year? Hold on. Let's go 120 days. There we go. Yeah, we bought the shares at the end of last year. How about that? Man, that's crazy stuff. We bought the shares on 12/27. Wow, that's wild. So we've held this for, man, it's almost been like 3 months now. And so I think that puts us in a different tax bracket and all kinds of stuff. And so, man, that's some good stuff. So we bought the shares at 92, right? You can see we're already sitting on just a huge pile of coins, ducktail style. And so that's kind of nice. But now this is what you also are trying to tap into when it comes to your covered call investments. You want to sell calls. Best case scenario is you want essentially the stock to go nowhere and the short call kind of expires worthless. Well, here's what's interesting. I know, go back and watch the show. I remember on 12/27, because my blueberry consumption, it has been on point. I mean, consistency is the name of the game. It's not about volume. It's about consistency. 12/27, Starbucks was right around 100. It was right around 98, 99, 100. Go back and watch the show. 12/27, 214. We put the trade on. You'll see the price of Starbucks. I remember it was about $10 lower than we sold the call. And so what's really, really crazy is essentially Starbucks hasn't gone anywhere between now and 12/27. Now, of course, it's gone a lot of places, but ultimately it's right back to where we started. And so this is the power of selling calls against shares that you plan to hold for a long time, where it's like, man, if you give yourself enough room, if you give yourself a long enough runway, you could still cash in on a big chunk of the stock appreciation, but now you've got this other arm of profitability that you can tap into, which is, selling the calls, letting them expire worthless, and all those things. Now, it's not always going to work that way. There's going to be plenty of situations where the call is at the money or in the money, and you're going to have to do some things. Like you're going to have to roll it, you're going to have to adjust, you're going to have to make some moves and kind of maneuver around that. It looked like we were going to have to do that in Starbucks up until, obviously the bottom completely fell out a couple of weeks ago for not only Starbucks, but essentially the entire market, which has now found some legs. Look at the E-mid S&P is almost back to 6,000. Or I'm sorry, not 6,000. 5,600, which kind of feels like 6,000. We're still 400 points away, but man, we are just... Man, if Trump could just, if he just gets rid of the Tennessee tariffs, I think we're home free. Like he squashed the Alabama tariffs yesterday. We've still got Tennessee. We've still got Georgia. If he gets rid of those Tennessee tariffs, man, I think we are going to be home free. And again, the Tennessee state, the east side and the west side, it's a very different environment. So just get rid of the west side tariffs. You can keep tariffing Knoxville. You can keep even tariffing Nashville. That's fine. But leave Memphis alone because those are my people, man. Those are my people. That's where I went to grad school. And so obviously it has a special place in my heart. But anyway, I digress. I think we're digressing off of digressions at this point. Starbucks, we bought back our short call. Shows off the rails. But again, so is the market. So what would you expect? Let's go into the trade page, though. Let's go into May. 66 days away. So we'll go super long term. Again, we're trying to slow some things down. I want to keep premium working against my shares, but I'm not really in a hurry. I'm not looking to zig and zag 45 days, 21 days, those kinds of things. I'm not worried about earnings calls, right? This is not something I'm looking to avoid because, again, this is intended to be a long-term position. This is intended to be a longer-term holding. If I was trying to zig and zag around earnings calls, it would never work. I mean, it's every 3 months you have to battle or deal with another earnings call, so it doesn't make a lot of sense to feel like you have to what was I going for? Zig and zag, to feel like you have to kind of, just finagle your way around earnings. So I'm not going to do that. But instead, what I'm going to do here, man, look at this. Because the volatility is so high across the board right now, you've got IV rank of Starbucks is 67.7. That's pretty high. We just saw it on the chains. We sold the 110 call when Starbucks was around 100. We did that for like 90 cents. Back in whenever we put that position. I think it was maybe in January or February. Now we could do essentially the same thing for like triple the amount. Now I can't remember what the DTE was when we did the original call. It may have been less than 66. So that's obviously going to factor in here. But I'm like, man, we could sell the 110 call. Hey, we could sell a 115 call. Like again, I think when you're doing covered calls as an investment, sticking around that 20 delta, if not even lower, is kind of a good move. Like sticking around the 20 delta, even a 15 delta, because you want that runway. You want to leave yourself room for, capital appreciation. So when you have a huge volatility spike like we've had right now, take advantage of that and don't snuggle up against the stock price and selling at the money calls or even sell like 1 or 2 strikes out of the money. That's what you do when it's an active trade. That's when you do when it's kind of an in at 45, out at 21 deal. This is not that. So I think you need to adjust accordingly. And so that's what we're going to do. Let's sell the 115 call. I actually really like that. Looks like we're going to get about $1.60 on this call. And again, I mean, that's like 1.5% of the stock price over the course of the next couple of months with stock appreciation potential gains with a Z all the way from 100 to 115. I mean, those are like some RDL gains. Like that's some pretty serious stuff for all my RDL bros. We did some RDLs today. Got a brand new program doing hamstrings and back together on Tuesdays. Yes, that is really, really strange. Trust me, I know. So Starbucks, we sold the 115 call. We got filled for about $1.60, and boom, there you go. All right, the other thing I wanted to do today is I just wanted to adjust our Apple Strangle because we've been tested on the put side, and you can see Apple has earnings coming up on May 1st. Hey, happy month anniversary to you guys. A little early, May 1st. That'll be pretty fun. Let's go ahead, and I'm thinking I want to stay in the April cycle. Because they have earnings coming up, I don't really want to roll this guy forward into the May cycle. I'd like this guy to be done and dusted here in this April cycle. So I'm like, hey, let's roll this 270 call down and let's maybe roll it to like a 240, 250. Let's see if we can pick up. Let's control our risk a little bit, still leaving ourselves being mildly bullish. I don't want to totally neutralize my directional bias because I still think we're sitting on a dynamite stick when it comes to, the upside potential right now. I mean, in terms of the asymmetric potential in this market, again, This is just my opinion. I don't have any hard stats to back this up, but nobody knows. Nobody has any idea where the market's going to go next. Not a single clue. People can have hunches. People can talk about guesses. People can talk about flows. People can talk about whatever. But I don't know that anybody knows. Obviously, Jam Croissant knows, but he's the only one, right? Everybody else, us mere peasants and plebes, we don't know. We have no idea, right? And so when I think about that, and I think about it through that context, I'm like, man, I'm thinking let's just roll the call down, right, to leave ourselves some mildly bullish upside, because the asymmetry of the potential explosiveness on moves coming next, man, I feel like the downside is all dried up now. Now, I know that, for all the perma bears on Twitter, man, they're a little bit over the top now, man. It's a little bit much. And again, I still have a bearish view for the rest of the year. I'm mega bullish in March, and I've been dead wrong on that. But it's like, man, they're getting to be a little bit over the top. They think we've just gotten started. Like, they think this is just a flesh wound. Like, they think, like, man, we're going ES 5200, ES 4950, like ES 4675, and then it's really going to begin. I'm like, all right, that's probably a little bit overplayed. When it comes to the asymmetry of potential explosiveness for moves, I see the upside being much greater than the downside. And so I don't really want to roll my call all the way down, and then I'm totally bamboozled if Apple rallies 20 points in a day, which I think could absolutely happen. Apple rallies 16 points in a day. I think that could 100% happen. And so I don't know if it's going to happen, of course. I don't think anybody knows that. But yeah. So let's go in here. I don't want to close it. Hold on. Let's go into the April cycle. Man, look at the NASDAQ up 40. Man, look at this, guys. Look at this. Shout out to all the pros out there. And by pros, I mean, internet pros like myself, where it's like you don't really need to be a pro. You just tell everybody that you're a pro, and then you're a pro. Bought ES at 35, 36. Man, that's that takes some cojones. I'll tell you that. But let's go in here. Let's buy back our 270 call. And I'm thinking, yeah, let's sell like a 240. I mean, look at that. We'll pick up another $2. We still have 20 points of room between the put and the call. This is this is kind of the standard adjustment that you would make when it comes to a strangle that's been tested. You don't typically want to go straight to a straddle. You don't typically want to go straight to inversion, right? You typically want to go to a tighter strangle. This is kind of your standard operating procedure when it comes to strangle adjustments. And so I like this a lot. And then this is perfect because it'll put us right at the halfway mark of the show. And then I can see where you guys are at as S&Ps are now 5,600. Guys, look at this, man. This thing is going to be actually green today. I mean, they're probably just letting it go up a little bit before they take them down to 54.85 or whatever. But yeah, some crazy stuff. Absolutely crazy stuff. Man, I don't even know what to believe anymore. Obviously, we have other things that need attention in this portfolio. We've got Best Buy. We've got Bank of America is just going to zero, and that's just the way it's going to be. But hey, look at Tesla up $12. Right, look at that stuff. And we only have 10 days to go. This guy's absolutely going to meet its maker. And it's not going to be worth very much when it gets there. But that's okay. It happens, right? And that's the beautiful thing about defined risk is you just kind of let it go and you don't kind of worry about it. So, all right, let's go ahead and all right, boom. Okay, I see where I started the show. It was a little bit later because we were still working through. It was mainly Microsoft Teams. Microsoft Teams, it's not that great, guys. It's not. We have to use it. We're forced to use it. And there's some benefits. There is a couple of gimmies, but the gotchas are massive and they are numerous when it comes to Microsoft Teams. But all right, I'm going to start with my comment. Theta Trader. Well, actually, hold on. So I see Sam L says Dr. Jim is in the house before my comment. What are the chances of early assignment? Okay, on a short put in NVIDIA, I see Theta Trader, I see David Gallimore, but I just see it looks like an inside conversation that I normally just invite myself into kind of without your, you don't really have any say against that or for that. But I do see a question from Sam L, so I'm going to go with that real quick. Sam L says short put in NVIDIA, $120. The expiration is April 17th. Yeah, let's take a look at it. It's a great question. I appreciate the specifics here. Look at NVIDIA up $3. That means we can keep calling it NVIDIA. That's good stuff. So if I go in here and if I go to April 17th, the 120 put, right? That's what you're talking about, I think. Yeah, so if you look at, this in the money put, 120, I mean, there's your extrinsic value right there, right? That's a ton of extrinsic value, Sam L. That is a ton of extrinsic value. Right, that is like when you look at your pre-workout and it's got 6,000 milligrams of citrulline malate, like you're good. That is a ton of citrulline malate. And so it's the same type of thing here, right? You have a lot of extrinsic value. You're good to go. The risk of assignment is very low. It's never zero. Whenever you're short an option, it's never zero. So I have to be very clear. You could be assigned on this position. You could just be, the proud owner of, 100 shares of NVIDIA one morning, but it's very, very unlikely. I really doubt, if you hold this thing to 21 days and then make a decision at that point, I think it's smooth sailing. I wouldn't worry about it. And so that was, let's see. Let's see. I see Virendra is in the house. I appreciate you, Virendra. I think that's right. Talking about nat gas, which is definitely not my wheelhouse. And so I'm going to go ahead and sidestep that guy. But let's see. Sam L goes on to say the dips keep dipping. What are we even doing here? Just embracing the pain? I don't know, man. We may have seen the final dip. Was 55.34 the dip? Was that the final dip for now? I mean, could we see lower lows, this year? I think I think we're definitely going to, which essentially cements 55.35 as the low for the whole year. But I do think that it's going to continue to be rocky. I do think that's going to continue to be bumpy. And it's like, man, if this type of move couldn't unlock, right, a VIX over 30, it's like, man, I really don't think it's over. Now, I do think that for March, it might be over. But again, I've been dead wrong. I mean, I was saying it was over for March when the NASDAQ was at, still over 20,000. Right. And so don't take anything that I take seriously when it comes to market calls and market direction. Again, I don't have a clue. But I do think that we are going to see some lower lows this year. I would say if you guys forced me to pick a number, it wouldn't totally surprise me if we saw 5,100 just to really, really twist up some knickers, man. That's going to bunch some things up in some places that you don't really want them to be bunched up. And so 5,100, I think, yeah, that would do some things. I could see that happening. Let's see. EK0 says, shout outs to Tom on his call yesterday that we retest the lows and rally near the end of the day. Oh, Tom finally got one right. That's good. I mean, he's been trading for 75 years. You would think he'd finally get one right. So that's good. That makes me feel better since he, of course, is our leader and our visionary. And so Junior Max says, good morning from Australia to the brethren. Yes, the brethren. We are the brethren. We are the From Theory to Practice fam brethren. And so thank you there, Junior Mac. I appreciate you for being here. I see Demi's in the house. Hey, Dr. Jim. What's going on there, Demi? I'm going on vacation next week, and I'm seriously debating flattening all my positions. I have no problem with that whatsoever. No problem with that whatsoever. If you're really going on vacation, where you're really going to unplug and you really want to spend time with friends, with family, with yourself, I mean, whatever you're doing from a vacation standpoint, I would strongly encourage you to do something, whether it's completely flat, totally out, you just got some SGov, you just got some BIL, or you don't have anything, whatever. That's totally fine too, of course. And I think that's usually probably the best move for, vacation. But, if you don't want to do that, I respect that as well. Maybe just kind of tightening up the undefined risk positions. Maybe just kind of, and when I say tightening up, I mean, you could close some. You could close some of the winners that are maybe not quite at your target yet, but it's like, hey, I've got some green on the board. Let me close that. Let me lighten up on my overall risk exposure. And, I got a W there. Let me book it and just kind of move on. For the other trades that are maybe not working, maybe kicking them out. Kick them out to some, later dated cycle. That might be 60, 66, 70 days to go. It's not what we would normally do, of course, but it's like, hey, if you really want to unplug, by being that far out in time, of course, it doesn't remove the risk, but it does slow things down significantly. So, your gammas are less, your deltas are less, big moves against you are just not going to, they're not going to be as potentially painful. And so those are two things that I would consider. And then, of course, if you have any defined risk, you won't really have to worry about that, provided that your position sizing is in check. Excuse me, because that's the beautiful thing about defined risk is that you can just, kind of let it go. You don't have to worry about it. Kind of like my Tesla position and, any other defined risk position that you might have. And so hopefully that helps out, Demi. Theta traders in the house. What are we doing? Man, I don't know. Ideally selling the volatility. Got to do it. But since I can only pay attention for brief periods of time at the moment, I'm holding dry powder like Scrooge McDuck. Man, that is the second DuckTales reference on the show today. And I didn't even see Theta traders comment when I made the first one. And so, man, let's go for the trifecta. Who can give us a third DuckTales reference? You can't reuse either of the previous two. And let's see if somebody can do it. They're in the chat. But that's some good stuff. If you can only pay attention for brief periods of time at the moment. I mean, that's similar to this is kind of like a hybrid vacation, I guess. This is kind of like a like a semi-vacation. I mean, you're not talking about a vacation, but it's like if you're in a season of life or a season of work or whatever, to where you can only pay attention for brief periods of time, you could still sell the volatility. You could go super wide with your strangles. You could sell like 10 delta strangles, right? Or 12 delta strangles. And now with volatility so high, you're going to be way out there, way out there. I mean, let's look at it. Let's actually look at it. If I go to if I go to MES, right? I might even do this. Like we might even do this. If I go to MES, I'm going to go to April 17th, which is 37 days away. What is a 10 delta strangle? How far am I getting away from where I'm at? I'm selling a 5,000 to put. I'm selling a 5,000 put, Theta Trader. That's the 11 delta. 5,000 put, and then I'm going to sell, what's the call? I'm selling a 60-50 call. Now, I'm only collecting 46 points on that, which is only a $230 profit. So maybe you want to tighten it up just a titch. Like let me move my 60-50 into 59-50. Now I'm collecting 64 points, which is $300. That's a little bit better. I think I'm going to go with this trade because this is a good looking trade. Man, and I mean we are super wide, Theta Trader. It's like, man, you're 5,000 on the downside. I mean, that's not going to be tested. I mean, it might be Thursday before that's tested. Like, that's a long time in this market. Like, that gives you a lot of breathing room. That's like almost 48 hours. And so it's like, man, this is a good looking strangle if I've ever seen one. So this is something that you could consider, whether it be this trade or other trades similar to this one, but just going really wide with your strikes and taking advantage of the high volatility. And rather than using the volatility to collect more credit, which you could also do, but that's when you're going to be a little bit tighter to the strikes, you don't have as much wiggle room. You can use the volatility to push out your strikes, right? To increase your probability and slow down the number of adjustments you need to make and all those things. Or of course, if you kind of need to check out entirely, you can do that too, of course. Man, I like this trade a lot. I'm going to go with this because IV rank of MES is 62.5. Yeah, let's get a quick fill here on MES. Let's see here. If I get MES, no takers at 64.25, I'll probably get filled at 64. The markets are moving pretty rapidly, though, so that could be an issue with the fills as well. It's not really a liquidity issue with MES. It's pretty liquid. But right now, the markets are just moving around so rapidly. I mean, ES just dropped like 15 points. It just moved like 8 points in the last like 20 seconds. It just went from 55.88 to 5,600 in like 17 seconds. I mean, I'm looking at it out of the corner of my eye, and I'm like, this is crazy. It's trading like Solana. Like, it's trading like the Batcoin. That's some pretty wild stuff. So MES, we are in a pretty wide strangle, and it shouldn't really require too much management. I'm hoping at least. So Daniel Rooney's in the house. Let's put some trades on Dr. Jim. How about a naked strangle on Pfizer? They're still in business? Nah, there's no way. After 2020? Nah, there's no way. Pfizer, IV rank 80, stock at 26. Do they have earnings coming up? No earnings coming up. Man, I haven't traded Pfizer. It's been a minute. Yeah, I don't really want to do it, man, because it's like there's no premium here. It's a $26 stock. And it's like if I sell the at-the-money put, I'm getting 50 cents, right? If I sell the at-the-money strangle, or I guess the at-the-money put might be the 26, so you're getting 90 cents. If I sell the at-the-money straddle, I'm only getting like $1.90. It's like, yeah, I'm going to pass on that. And I don't really want to own shares of Pfizer. I'm certainly not interested in that. So I'm going to pass on Pfizer there, Daniel Rooney. But I appreciate you, my friend. I hope that you know that. Emmett Morrison. Hey there, Dr. Jim. What's going on there, Emmett? Does it ever make sense to invert an iron condor? It does not. I have a couple that I've turned into iron butterflies, but the put side on both are just getting crushed. Yes. So a couple of thoughts. Number one, I would actually rethink the rolling into the iron butterfly. The rolling into the iron fly. I personally wouldn't even do that because yes, it is going to collect more credit. Yes, it is going to reduce risk. It's going to do some positive things, but it's going to make it darn near impossible for you to make money. That's just the truth. Now, can you make money? Yes. There is a very, very narrow pathway through the forest that will lead to your having some profit on that position. But man, you are going to have to walk the tightrope basically from start to finish to be able to do that. I just don't love that trade. Again, you are taking risk off the table. It's not completely without merit. But man, if you really want to control risk, you need to do that in order entry, in my opinion. You need to make sure your position size is in check on order entry such that if you want to, you can just let the iron condor just go. just go ride or die with the original trade. Now, if you want to roll the untested side, I don't like doing that either personally, but I don't dislike that as much as I like the final roll into the iron fly. So I wouldn't even do that. But going inverted, you definitely don't want to do that because the math really starts to work against you when you got to bring those long legs with you, because you got to bring the long legs with you. Like, you can't just leave them where they are, because then your buying powers expand and a lot of really, negative consequences come from that. So you have to kind of log those longs, with you wherever you go with the rolling on the shorts. And so I actually did a segment. I've done a couple actually on the skinny and options abstract applications. If you Google tasty, skinny abstract, inverted iron condors, it will take you right to the segment I'm talking about. I did it recently. I think I did it with the two Batistas. I did it with Tony and I did it with Nick. And so take a look at that. I actually work through the math on the show, and I show you why it can be really problematic. And so I would not go inverted, and I personally wouldn't even go to an iron fly. So take it or leave it. Sub-Zero says it is ripping higher from its lows down at 552. Must be talking about SPY. Yes, it has ripped off the bottom. SPY back to 557 now. And so maybe the worst is over. I don't know. We'll have to wait and see. Rob Banks, good day, Dr. G. I've stopped selling iron condors on SPY and started buying lead balloons. Yeah, I mean, that might be a better business model, right? I mean, y'all know how I feel about iron condors, right? I mean, I don't love them. I really don't. I think they're great as a beginner strategy. I think it's very, very useful to learn how to play the market in a neutral way and all those kinds of things, but they're hard to make money on. Like, if you're doing like a traditional iron condor, like $5 wide, even $10 wide can be a little sticky. If you're doing like $15, $20, $25 wide, your big boy Scotty S, it's not really an iron condor anymore. That's kind of more like a synthetic strangle. And so that's going to be a little bit better in terms of, the profit potential on those strategies. But when you get into a traditional iron condor, like $5 wide or even $7.50 wide, $10 wide, you can make money, of course. But I think it can be kind of, it can be a bit of an illusion. Like, you look at like here, I'll even show you guys really quick. Let's actually bring this up. We've got a few extra seconds. If I go into, I'll just go into SPY. It's fine. Like, if I go into SPY and I sell, if I go to like the expected move, right? I sell like a 526, 521 on the put side. And then I sell 589, 594 on the call side. I'm picking up a little over a third the width of the strikes. Like, all that looks good. I go to the analysis tab. I go to the curve view, trying to look at, hold on. No profitability? What's going on here? That's weird. I don't use the curve view that often. You can't make money at all. I mean, that does sound about right with an iron condor, but man, I would expect to see some green area on here. I'm probably not using it correctly. There's probably some button I'm not clicking. Oh, there it is. Ah, nice. Okay, so there's your iron condor. Wait a minute. There it is. I just had to click it a couple times. So there's your iron condor, right? Like, this is a basic iron condor. This is what you guys, you look at this and you're like, hey, look at that. You're like, there's no way I'm gonna lose money. Oh yeah, you're gonna get hammered a lot on these. You're like, look at that range. I'm all the way from 557 to 590. I'm all the way down to 557 to 525. It's like, I've got so much room. Market's going to chew through that real quick. And the tricky part with iron condors, as we kind of discovered going through Emmett's question and Emmett's situation, it's hard to make adjustments. It's hard to make good adjustments. You can make adjustments, but none of them are really that great. You're kind of gritting your teeth whenever you make those adjustments. Not that you're not gritting your teeth on all the adjustments that you make, because when you make an adjustment, by definition, things are not working the way that you would have hoped. But I just I've been very open and honest about this. I think iron condors are great for starting out. I think it's great as like a transitionary period. It's probably even fine as like a little bit that you do in your portfolio, whatever. But I think that it should be kind of a stepping stone to wanting to do more undefined risk, especially in the form of like a short strangle, right? Where you kind of taking the training wheels off. It's like, all right, we got to get off the milk. We got to get on the meat. I mean, it's biblical, man. It's like, that's what we need to do, right? And so I think moving from iron condors to short strangles really makes a lot of sense. And so hopefully that helps a little Rob Banks. But I also like the lead balloons as kind of a backup plan, kind of a hedge against the iron condors. So Brad Glazier says, greetings, Professor. I'm moving today, so please hold the markets for me. Man, I don't know who bought off 35, but somebody did. It's probably Errol. That's right in the Errol Coleman window of trading, although he normally trades the NASDAQ. So he's probably the reason why the NASDAQ has been so strong today. And so I don't know. Maybe it was Gus, because I know Errol's got Gus in the markets now. So maybe Gus is the one who, bounced us off of 35. That's good stuff, Gus. We appreciate you, my friend. And so, but good luck on the move there, Brad. That's never fun. Moving day is always kind of like, ooh, talk about gritting your teeth. Yeah, that's moving day. And so Sergio's in the house. Hello, Dr. Jim. I appreciate you, my friend. Thank you for being here. Emmett Morrison says, well said, Rob Banks. I agree. And let's see. CM says, if that move isn't proof of TDS, I don't know what is. Well, there you go. We have no idea who's causing this. We don't. No idea whatsoever. None. And so, CM, Trump suffers from TDS. Really? Are we inside the Matrix now? Like, is this an Inception level thing? I don't know that he can. Can he? That would be pretty crazy if he could. David Gallimore says, Theta Trader, the SPX puts are low deltas. Most round to zero deltas. My beta weighted SPY. Oh, they're talking about this inside conversation about David's strategy. So I'll step aside on that one. Let's see. Sub-Zero says, in the house in Compton, a picture of Nectar. I'm all in stocks here. Hey, man, I said this yesterday. I said this when we were like 75 points higher. You got to be mega pint long here. You can't sell them in the hole here. You can't be short here, obviously. I mean, I say obviously, and it's funny because to me it's sort of obvious. And I don't know that I'm right, of course. I mean, I could be dead wrong. But to me, it's like if you had to make me pick a side of the market here, it's got to be long. You got to be long. But there are a lot of people that look at this and say, no, man, it's just getting started. And that's what's so fascinating to me when it's like, this is what makes a market. Like for every buyer, there's a seller. Like you have some people that look at, a stock, they look at a probability distribution, they look at a chart, they look at whatever, and they draw radically different conclusions. And that's just fascinating to me. Like that really, really kind of makes this whole thing so interesting to me. Just when it comes to, what could potentially happen and, all the reasons for why you might think something is happening. John Jones says, it's been a rough 3 weeks. Hopefully the market will stay green for the rest of the week. Yeah, that's, I'm not convinced we did make it through jolts. But let's assume, for the sake of argument, that we did. Guys, I don't know, man. At 8:30 tomorrow morning, if I'm not mistaken, there's a CPI print that is going to be unlike any CPI print that has come before it. I mean, this number that's going to be released in the morning, it's never been a more important number in the history of the economic world. I mean, we're going back to, 18th century stuff now, guys. We're going back to that first tulip trade. That's nothing compared to the CPI print tomorrow, right? I mean, whatever those cooks in the kitchen cook up in terms of the imaginary model that they're using to tell us what inflation is or isn't, man, everything depends on this. So 8:30 Eastern tomorrow. Man, look at the market. Look at ES at 56.10. Man, look at Gus getting in there. Nice stuff. But I don't know, man. The CPI tomorrow's got me pretty nervous. Let's see. Chill Bunny says, yes, this is how I started. Covered calls, and now on to poor man's covered calls and critical spreads. Critical spreads. You may have meant vertical spreads there. That's good stuff. That's good stuff there, Chill Bunny. I'm excited to hear about your path. And if I can ever help in any way, I'm here. And we're all here to help you. You're in a good spot. You're in good hands when it comes to an active trader space. So welcome aboard. RK, hello, Dr. Jim. Stocks can only go to zero, but ETFs never become zero. I agree. Can I base my entire trading system on this premise? Or am I not seeing a big catch here? No, I love it. I absolutely love it. Because, and that's why, like, for example, like if I go into like SPY, right? And I go to like sell a put, like, well, actually, hold on. Let me clear that away. Let me clear all this away. I go into the table view and I go to just sell any put. I sell a 580 put. It doesn't matter. The maximum loss, right, is this number right here. $55,000 on one lot. That's one SPY put. RK. That is assuming that SPY goes to zero. That maximum loss is only going to occur if SPY goes to zero. There's no other scenario where that occurs. Is that a realistic possibility? No, of course not. Now, could it drop 20%? Yes. Could it drop 30%? I suppose. Right? I mean, that would take an absolute, a depression of catastrophic, degrees. But I mean, it's happened before, 1929, all those things, whatever. So of course it can happen. But, is it practically going to happen? No, it's not going to. So can you base your whole trading system around that? Of course. I really like it. I actually like it a lot. As ES is about to be green, guys, look at this. Look at what's in that circle over there. This is only happening on the Tasty Live Network. Look at that. It's green. It was just up by 75 cents. Did you guys see that? Now it's down again, of course, but this is only happening on the Tasty Live network. This is not happening anywhere else in the market. You can't find this information anywhere else. It's only here. ES is now unched on the day, up $1. Look at that, up $1. Guys, that's crazy. NASDAQ up 145. And y'all talking about TDS. Nah, man. We are good. Mega pine long. But I hope that helps you, RK. Let's see. Tango999 says, I thought it was just me with the Lost series. No, man. You and me together, bro. Don't let them tear us apart. So Sunflower says, Starbucks has terrible pastries and sandwiches. I don't disagree. Terrible. I don't disagree. Not surprised as a consumer that they are dropping lately. Oh, I don't think it has anything to do with that. It has everything to do with the market. I mean, everything's going down. You're not going to find anything that's up right now. And so hiring a union-busting CEO isn't good either against Starbucks' cool, progressive brand. That might be true. That might be 100% true. But, I still think that they have the coolness factor in the coffee market that no one else can match. Like, come on, man. Like, when you go to Dunkin' Donuts, do you feel as cool as if you have a Starbucks? You know that you don't. You can lie to yourself and pretend like you do, but we both know that you don't. And so anyway, guys, I got to go. We saved the market, though. Gus saved the market. Errol saved the market. Man, I appreciate my brethren for buying this thing right off the bottom. But if I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Everything I have to talk about is kind of gloom and doom, but guess what? Markets are trying to sing a different tune, if you will. They're moving to the upside a little bit, a little positivity here. Who knows if it lasts long because the mood in the market has mostly been sell the rips. Anyway, Mag 7 names have fallen into correction territory. Of course, the big news today is Trump is increasing tariffs on Canada, on Canadian goods, steel and aluminum. And you got to wonder if the rally in Chinese stocks that we've been seeing recently is finally the real deal. So we'll talk about those three things and more. We'll take a look around markets. Those in the chat, if you got questions, hit me up. I'm interested in the things that you're looking at in your trading. And not too many earnings, but we'll look around and see what's happening there. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. And it's true. Stocks, things seem to move quite a bit during this time period, during my show time period, which is really kind of fun. Before we get into stocks, I just got into the White Lotus. Been watching that show a little bit. I tell you what, what's crazy to me is seeing Arnold Schwarzenegger's son it's so weird how sometimes you just see glimpses of like, I didn't see this before when he was a little younger, but now it's kind of weird watching him. Sometimes he looks like Arnold. It's a trip. He walks like him. I'm telling you, there was a scene where dude was walking and it looked like Arnold. And it's when he smiles more than anything, he looks like Arnold. It's really kind of weird, but pretty decent show. Been watching that. It's kind of fun. Other than that, I really haven't been watching too much recently. I'm kind of bored with TV right now, to be honest with you. I think I'm ready for the NCAA tournament. I'm going to be watching more of that. But yeah, right, that's the only show I'm watching. It's kind of into it. You know, it's kind of different. But yeah, it's a trip, man. He looks a lot like him, especially when he smiles. It really kind of throws you off. It really does. How hard is that, being Arnold Schwarzenegger's son growing up, you know, especially when you're little or you're like a teenager and you're scrawny as hell and people are like, where are your muscles, man? Like, everybody's used to seeing your dad. Had to be a tough life growing up. He looks like he's put on a little weight now, though. You can see him. Let's pull up the slides. Let's talk about the things that we're seeing in today's market. Mag 7 has fallen into correction territory. Big moves yesterday. Largest down day in the NASDAQ since 2022. When you start hearing a lot of more of these things, you're starting to hear some of these statistics. It's hearkening back to times where things weren't so good. Right now, I think we're at a crossroads. We really are. It's been 19 days of this correction. It's reminiscent, starting to be a little bit, of 2022, which was a really tough year to trade in, really bad year. And you need the back and forth on trading more than anything. I mean, you're just continually having down days. And again, most of these down days, like they're increasing in vol, but the worst thing you want is when we're just continually having down days and the vol is actually not changing much. We haven't gotten to that yet. At least right now, we're continuing to, when we go down, vol increases. I think that's good for eventually a bounce, which again, we're getting a mini bounce right now. I wouldn't really call this a strong bounce quite yet. But at some point, if we're doing what we're doing now, you figure the market is going to get exhausted and eventually sort of find its way back up, possibly. At least that's the hope. We'll see what eventually happens. But I do want to know at some point when things are going to change. But it's just such a headline-driven market, right? That's really been the thing. Like, for example, today, the big headline, and a lot of them have been coming out in the morning prior to the market open, so it's almost like the market has no shot of positivity on the day. Trump increasing steel and aluminum tariffs. I mean, that's going to, again, Trump is doing this as a result of the Ontario Prime Minister saying that they're going to obviously increase prices for electricity to certain areas of the U.S. And so, there's this back and forth. And we, at some point or another, are they just going to go to the table and resolve any issues from this U.S. MCA agreement? I mean, that's really what they need to rework and change around. I think that'll be the thing that'll really give some relief to these markets. Until we get that, it's going to be a tug of war most days, kind of like it is right now. It's still a tug of war. I mean, you're looking at this market, you're seeing S&P up 12, but you don't believe we're going to finish positive. I mean, you can't as of right now, given everything that we've seen. So until that happens, I think we're going to be, dealing with the tug of war. But that said, I got some stats and I got a chart that shows maybe we might be seeing an end sometime soon. Finally, the one thing that has been positive has been Chinese stocks. Now, I don't have any of these right now, but when you look at Baba, you look at Baidu, you look at JD, these stocks haven't gotten rocked the same way that some of these other tech names in the U.S. have gotten rocked. And it's interesting how at a time where our economy is fine. Our stock market is struggling. Chinese stock market has been fairly strong more recently. So I don't know. Is it real this time, the Chinese stocks? Is it another head fake? I mean, I'm not falling for it. I'm not jumping into anything right now. I don't have any exposure. I've had various degrees of exposure in some of these Chinese stocks over the past couple of years, but right now I have none. It's just I couldn't help but notice that they've been strong. Between them and some of the consumer staples, those have been the main names that have been positive. Outside of that, it's been pretty bleak in equity markets. And like I said, until some of this rhetoric calms down, until they fix what's going on with this USMCA agreement, we're going to be in purgatory for just a little bit. Leftovers. Would you ever buy anything secondhand? Just curious. Let's move to the next slide. Wait. Oh God, yeah. Who's in the chat? I know who's in the chat. Look, Josh. Seriously, I mean, yes, it is. Josh is in the chat, guys. He just couldn't help but say hi to you all. He was missing you. Would you ever buy anything secondhand? Clothing is the number one thing people would buy secondhand. 30% of people said they would buy clothing secondhand. I mean, I would consider shoes to be clothing, but I guess not. Shoes is in there. Shoes is 19%. I don't know if I could. I don't know. I'll buy clearance shoes. I actually bought clearance shoes this weekend. Some Adidas, and I never wear Adidas, but I kind of like these mesh kind of shoes. They look kind of comfortable. They're not bad. I wore them the other day. They were pretty cheap. I mean, you can't beat $54 tennis shoes. Clothing is, I don't know. Books, movies, music, games, definitely have done that in the past. For those who were old enough to remember, that's what GameStop started out as, right? I used to go to GameStop. That's how I knew when GameStop first started going, like the stock. I'm like, what is this? Like this company? No way. But yeah, I definitely bought those secondhand, these type of things, 16%. Furniture and household goods, 15% of people say they would buy that secondhand. Accessories, whatever that may mean to you. 14% of the people said they would buy accessories secondhand. 12% of people said they would buy consumer electronics. No way that I would. I mean, electronics is one of those things I want it new. I don't care. I want it new. Toys and baby products, 12% of the people. And I can tell you that those people, it's not their first kid. Nobody buys used toys and, stuff like nobody buys those secondhand with the first kid. By the last kid, you're like, hell yeah, I'll take on, whatever. It doesn't matter. Household appliances, 11% of people will buy it secondhand. But overwhelmingly, I should say not overwhelming, but 41% of the people said, I ain't buying nothing secondhand. I'm not doing it. Where do you lie? Just curious. Let's move to the next slide. This is where we're at. This is over the past year. Performance. Russell 2000 is negative over the past year, if you can believe that. Things are very off their high. S&P 500 is now, less than 10% up over the past year. NASDAQ is about the same. Actually, I mean, just recently, S&P, NASDAQ, and the Dow Jones are all under 10%, are about 9% up on somewhere between 7 and 9% up over the past year time period. Let's move to the next slide. I think you'll find this interesting. Shout out to Charlie Bolello. He's actually he actually has some pretty good stuff from time to time. This is a chart showing some of the corrections, S&P 500 corrections, over 5% since that March 2009 low, and this is as of Monday. So right now, our current correction is 19 days, 9.5%, right? Of course, it's been the tariffs and the trade war and recession fears, et cetera. Just so you remember, last year, July 16th through August 5th, we had a 9.7% correction, and that lasted 20 days. We had a 22-day correction between March 28th of last year and April 19th of last year, 22 days, and that was 5.9%. Now, there's plenty of others in here. Obviously, 2022 was a damn near year-long correction, if you will, and another long one that we had was 2015, between May of 2015 and February 2016. That was the Greece default, the China stock crash, all those other things. 267 days. But, a lot of them are varies. I mean, anywhere from 30 days, 11 days, 20 days. On median correction is 26 days since 2009. 26 days and a 7.6% decline. So, when you consider that we're at 19 days right now, 9.5%, and again, there's various different things that go on from time to time. A lot of this is headline driven. There's no telling when it's going to slow down. There's no, telling if they're going to fix this USMCA agreement at some point or another, when that happens, if that happens. But just wanted to sort of put some context to the current correction that we're in. Let's move to the next slide. Forward curve, man. We're in backwardation right now, fairly strong. Usually, like I said, I think I can tell you right now, just as a trader at a firm, a lot of times traders would look at this and be like, ooh, vol's going higher. Now I'm going to get long vol as opposed to being short vol. we're different, right? We try to wait at times because what we do know. And the other thing I should preface that by saying traders get long vol, but they can get compensated because they can be, long puts and long stock. And so even if long vol doesn't necessarily work, if you do get a big enough move in the market, you'll be hedged and you'll be able to at least sell. You'll make money on your long stock. You might get crushed on your long puts, but you'll make money on your long stock. That's why they do that. In our case, we're looking at short vol, and we know that vol doesn't necessarily stay elevated for that long, and we're waiting on the vol to collapse. It's just kind of how it goes. Let's move to the next slide. Just to kind of give you context, over the last 4 weeks here of vol curves, look how much things have changed. From February 17th, we were in strong contango. A little bit less contango February 24th, obviously started the backwardation last week, and now we're in strong backwardation. So it's always cool to take these snapshots because I'm telling you, you don't imagine this is going to last long. That doesn't mean the correction won't last, but the vol is not going to stay this elevated. I can promise you that. It's just not going to stay elevated for this long. But yeah, I mean, we haven't seen backwardation this strong in quite some time. Probably, I guess we did maybe, but before a brief period. But you would have to go back to, like we said on that chart, sometime between that July and August time period, and between March and April of last year, we might have had some backwardation going on. And, those are 20 plus days, and then they changed. We'll see. Let's move to the next slide. The consumer staples are holding up well, if you will, of the Johnson & Johnsons of the world, things like that. Meanwhile, discretionary has been getting rocked. Tesla is the biggest poster child for that right now. Really been hammered more recently. Will it bounce back is the real question. We'll see. Let's move to the next slide. Like I said, big turnaround there. Earlier in the year, consumer discretionary was crushing it. You started to wonder if this was a top. It turned out to be a top. I remember discussing it on This Week in Stocks at one point, and I even had some consumer discretionary names that I was long. I probably should have stayed long those. I hate when you get out of a trade too early. Similar to what we saw in 2022. That's what it's looking like. Hopefully this doesn't turn into 2022 because that was just a disgusting trading environment. And so that's really what we're up against here. Is this just 2020? Is this a 20-plus day correction like we saw 2 times last year? Or are we looking at a 2022 time period where we're just going to get no relief? Again, 2022 was we had inflation, and eventually that caught up with the market, and eventually they had to continue to raise rates, and there was no sign in sight of them slowing down, and that's really spooked the market, right? And so right now it's like, are tariffs the new situation of raising rates and like we dealt with in 2022, or is this all temporary? Who knows? Let's move to the next slide. So, we're at scraping the bottom of the barrel here for earnings. Groupon, Casey, Stitch Fix, the shipping company Zem, and then iRobot. We do have CPI tomorrow. There's also a Canada rate decision, which I think really is a lot more interesting this time around, considering that we're fighting with Canada over tariffs and all these things that are probably going to sort of affect their economy. And they're in the middle of doing a rate decision. I can't imagine they're going to cut, but we'll see. PPI is on Thursday, and then we got retail sales on Friday. Number of S&P 500 stocks above the 50-day moving average. It's getting low. Now, that's one of the things that I've been confused by, because typically when we have a correction to this magnitude, the number of S&P 500 stocks above the 50-day moving average is in the 20 to 30% range, if not lower. This one has been hanging around 40+%. Now, I know there's been shifts happening where consumer staples have been going up, and financials were kind of hanging in there along with healthcare, and tech was getting crushed. But I think finally over these last 2 trading sessions, things really started to fade in equity markets, and now it's only 34%. So I would like to think that that's a bullish number. As much as that means we're kind of oversold on the short term. Again, it doesn't mean anything for long term, but on the short term, we're kind of oversold. S&P seems kind of oversold on the short term. These are things that I think point to a turnaround at some point. But again, you just can't tell because the headlines have just been nonstop and constant, and that's been the real issue here. Let's move to the platform, please. Jamal, I'm trying to close an SPX put with 0 bid and 10-cent ask. I'm not filling at 5 cents. Do I need to wait for my price? Yeah, that's one of those where I'm guessing with a 10. Yeah, I mean, you're not going to get filled at 10 cents. There's no way market makers are going to. I'm guessing you have like this one, the 5740 or something like that. I mean, if it's a 0-day option and it's like this, if this is literally the one I'm looking at, and I'm looking at either the 5475 or the 5470, you're probably just going to have to sell it for a nickel. These market makers are stingy. They're not going to sell it for the offer. It's not going to happen. You're probably going to have to close that out for a nickel. It's just kind of how it goes. Good question, though, David. Crude oil has been confusing. And I think if this story continues, if we continue to see market drops to the tune of 1-2% a day, I think eventually it's not going to be a good thing for crude too, which is probably somewhat caught up in the crosshairs of what's going on. But it's so funny though. You see crude, right? And then you see natural gas, which I've had the pleasure of having a short call spread. Okay. You're got a wait. Oh wait, what? Oh, you got the 2100 put. Look at you, man. You are looking for carnage, huh? You woke up and shows the 21-day put, the 2100, huh? How do you even get down there? 20 DTE, not 21. Okay. So you're in, got it, the end of the month here? Okay. And you got that, wow, you got it really far out of the money put. Either way, I'm going to assume that they're not going to give you, they're not going to give you this nickel. And you might be lucky to get filled for, they're not going to give you this dime. You might be lucky to get filled with a nickel, but you're definitely not going to get filled for a dime. That's for sure, I would assume. Yeah. Thanks, Frankie. Yeah, good answer, Frankie. So tomorrow, CPI, 38 IVX. I'll tell you what, this is a lot of this vol. Again, it's all headline-related vol. I don't think CPI has a whole lot to do with whatever this is priced at. $90. That makes sense. You think about the kind of moves that we've been seeing more recently. $90 on a round trip is not crazy. Today we've already moved 107 points. Look at this, 107, 141, 116. As a matter of fact, 1, 2, 3, 4, 5, 6, 7, 8. I'm looking at the ranges. 9 days in a row we've had a range of over 100 points. That is something else in and itself. So say for 2 days, 3 days, 9 days in a row, range of 100 points. That just doesn't last very long in markets, and eventually markets kind of calm down. That's a lot of volatility in a short time period. That's what gives me some cause to think it's going to change a little bit. Like we said, markets oversold here. You can see this RSI stochastic indicator. Right now, we're very low levels. Markets are fairly oversold, if you will. But just still kind of crazy when you think about how the dollar, speaking of oversold, has gotten rocked. Again, nobody seems to want to invest in the dollar in America right now. Bonds have not exactly been bought up. Matter of fact, today was the day that they could have had continuation, and it didn't work out that way. Well off the highs here today. Bonds have gotten sold off. So they're selling markets, they're selling dollars, and they're selling bonds. That's when you're talking about the idea of recession. That's a very ugly area to be right now, and it makes it difficult for this market. It's one of the more difficult markets we've had, again, since 2022 in 2 years. We saw 2 sell-offs like we saw last year of decent amount, somewhere between 7 and 5%. 7% for one of them and 5, like I said, what was it? In 2020, July of last year, 9.7% sell-off from top to bottom, and then March through April, almost 6% from top to bottom. But those, again, those were kind of the same duration as what we just had. But this is different. This is a little bit different. That being said, I just don't think the market can withstand historical vol can't stay this elevated for this time period. And sooner or later, things are going to calm down to some degree. It's just these damn headlines. They keep coming, man. FCX, moving to the upside today. Again, there was discussion about steel and aluminum tariffs. Alcoa. What is Alcoa's symbol? It's not AA anymore. Is it? Oh, okay. I thought they changed it. This stock moving up again today, obviously on the heels of some of that news. Guess it's good for those stocks. Yeah. For me, it's been put spreads, but again, a lot of them are deep in the money at this point, and some of them April, some of them May. This one is May, but that's most of the portfolio right now. I'm going to continue to hold until things change. And the bond position, that's actually my biggest loser today is my bond position, because again, these bonds have gotten rocked. I'm just long calls upside. In my mind, I'm like, if there's really that much fear in the market, then bonds should really bounce, which we have seen to some degree, but there just hasn't been a sustained bounce. Do I want to win on the bonds? Honestly, no. I mean, I would love a world where the market is actually bouncing back higher, and I'm able to, and we're starting to cut rates, and I'm able to win on bonds making a move out of this bear market that it's been in for basically 2 years, and markets starting to rebound from this correction more recently. That was what I would really like to win. So I don't necessarily want to just win on bonds. I want to win on my short put spreads. But all being said, I think at some point, the market has to calm down before we can resume any uptrend. I'm in majority of the big names, as I continue to say. I'm in Apple, I'm in the Microsofts, NVIDIA, Amazon. That's it. There's no smaller cap names for me. That's mostly what I'm in. Not only that, I'm in the spies of the world. Again, 58 IVR really piques my interest when you see that on this. You just don't see that too often. Same thing with Qs. Again, those are the things you can really sort of layer into if you're scared of equities themselves. XLK, another, this is tech, of course, related, but it can be XLY. Again, we talked about that earlier. This has really gotten rocked. Tesla's the poster child, as we said. I should have, this one, it is a little bit weird. I mean, 40 to 30 to 40 cents wide on some of this stuff. But, I just think these are the names you want to be in right now. I feel like you should be getting compensated a little bit more than $2, though. Honestly, like on a $10 wide spread, I would rather get a little bit more. Let's see. Maybe I'm wrong. I don't know. 30 delta. What does SPY look like? Selling the 30 delta put. The boy who called tariff. That's a good one. Yeah. $10 wide. $2 and change, man. Sometimes I hate markets for this. They're so efficient at times within that. I just see, for me right now, I see the best thing to do is selling put spreads. This is not the environment for doing, like calendar calls. It's really not. It's not that you can't. It's just, upside really is so bid right now. Like this is, the normal trades that we've looked at in the past, right? And the upside is so bid right now. You would really need the massive move is probably going to come at some point. It's not to say that you can't do these. I just feel like, again, those are reserved for probably a calmer market, and this is not exactly the one that it's really reserved for. You could do it, but I don't know. I just wouldn't touch. I wouldn't do calendar calls for the time being. I think you're just better off sort of selling out of the money put spreads, or even, in some cases, like I did on the big equity indexes, I did near the money put spreads. Or, I didn't, this one I rolled. This was near the money at the time, but I'm comfortable having this, especially out in May. Hopefully some of this will get resolved by that point, you would think, but who knows? We'll see. We'll see how things end up going. But yeah, right now, I think that, there's really not much else you can do other than pay attention to the headlines. We've all become tariff experts at this point and trying to figure out where things are going to be taxed and what's going to be affected. But at some point or another, I do believe that the historical vol is going to calm down. VIX does not stay in backwardation for this long, unless it's a super major crisis, unless there's something more that I'm not seeing with tariffs. Unless this is a major, major crisis, Again, something on the order of 2008, something on the order of COVID. I don't think backwardation lasts that much longer, and eventually vols calm down. Folks, that's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. I'll see you.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from profits, and you'll understand % winner, and you don't know, why don't I do this every day, right? This is easy, but you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Howdy, everybody. Tim Knight here, and it is time for the wonderful world of charting. The market's really funny right now because, and I've done this a long time. I've been trading for decades, and I know the nature of where we're at right now because, the market will sell off and sell off and sell off and sell off. And even people like me will be like, maybe I should buy some stuff, or maybe I should and not some stuff, but usually maybe I should buy a huge block of spiders, or cubes or something, either to hedge or even, because I think a big bounce is ahead. And it's very alluring. There's this siren song drawing you in. And they got me this morning because I tried 2 or 3 times to jump into IWM, lost every time, every single time, just cut. Okay, never mind. And I came close to it about 10 minutes ago, or even 5 minutes ago, because everything was powering higher again. It's come on, the water's fine. And this time I'm like, no, I don't think so. And we're red again. So, bottoms, even short-term bottoms, take a little time. People might just be a little jumpy about tomorrow's CPI, because with all the other bad news going on, if inflation comes in white hot, or even somewhat hot, that could give people a new reason to freak out, because the psychology of the market has changed a lot, because for years it was just relentless lifetime highs. And it's how can it go up anymore? And people have become very accustomed to that. And it's an odd feeling for people to have any fear. But the VIX has blown to the kinds of levels we normally see with a termination of a drop, kind of the upper 20s zone. But I think I want to get the CPI out of the way first. For myself, I tend to be kind of a bottoms-up style trader. I focus just on individual charts and individual stop levels, as opposed to, broadly speaking, I believe the market's going to go up or down. And that keeps me relatively sane, because I can just kind of break down the granularity of the decisions into instead of just the macro up or down, just here's these 17 positions, and just kind of surgically tend to each of those. And we'll see a couple of those today. So let's just jump in here and kind of catch up. We begin with a spider, which hasn't been really this pounded since back in last July. We had this chunk where we went from July 16 down to August 5th. So a couple of weeks. And in this instance, we peaked lifetime high at February 19. And here we are in March 11, a little bit longer, but 2.5 weeks so far. But, this is, even if we've seen the lifetime highs for all of our natural lives, it just doesn't just go down every single day. I mean, there's going to be lots of bounces along the way. So people ask themselves, is this equal to, say, this right here, when stocks are relatively cheap compared to where they're going? So that's what folks struggle with. For myself, resistance really isn't until up here. And, little did we know, last Friday, just a couple of trading days ago, stocks are still pretty expensive, even though they seem to have been battered already. And on Friday, I was really worried, is this all we're going to get? Well, clearly not. Yesterday, we plunged big. Today, we fell to even new lows for this chunk. And we basically unwound back to early September, long before the election took place. Here's the diamonds, which kind of gave up the ghost. They had been for 1, 2, 3, 4 days holding firm at this line. That changed yesterday. It broke down, and it broke down even more here. And we can see this also illustrated in terms of the industrials breakdown with XLI, in which we've finally broken for the first time ever this pattern. So this pattern is complete. We're in it now. We're probably not going to close below it, but we have punctured the base of that pattern. Overseas, Brazil, EWZ. Speaking of siren songs, I'm into these puts again. And so long as we don't get above 24.91, content with that, because this is one of my favorite patterns. And China FXI is rather strong, up about 1 1/3%. And it's a little tough to read the resistance on this one. It could be as low as 36.90. If you want to be a little more generous, we could kick it up to more like this level, which is 37.48. But clearly this is very dependent upon the whole back and forth tariff stuff, as well as China's own economy, which isn't doing great. I think a good illustration of how swiftly things change is Meta, because back here, leading up into the 14th of February, there were 20 consecutive up days, 20 days in a row of net gains, which is incredible. And as I've mentioned from time to time, don't let the red bars throw you, because those don't necessarily mean the day was down. It's just a candlestick. It simply illustrates the difference between the open and the close. It has nothing to do with the net day-to-day change. So the net day-to-day change for 20 days was up 20 days in a row. Can you imagine flipping a coin 20 times and having heads every time? That's kind of what happened. Well, that didn't last. As you can see, we got kind of an upside-down V here. So all that juicy stuff that started on Jan 14 has been completely unwound for Meta, which I think amongst the Mag 7 is still the top performing stock. Tesla, of course, way at the bottom. Here's SMH, which is up. And this is the kind of thing which is tempting to think about in terms of bounce. In fact, as an individual stock, one security that seems just so trashed it can't get trashed anymore is On Semiconductor, symbol ON. I was thinking about buying that one because it's just so smushed. And even earlier today, when we were down across the board, the semiconductors kind of aren't having any more of it. They're sort of, they're dead already. So they're the first to spring to life. And I would not go near any sort of semi-short these days. It was great a few weeks ago, but not anymore. You can see, and this is one of those big fish that got away, what a magnificent trade this would have been. This is SOXL. This is a leveraged ETF for semiconductors. There's a gap here. The gap itself was at 32.31. We fell and climb right there. There's the Feb 20. So the gap was closed and a little bit more. 32.64 was the peak for the day, and then plunge-a-rooney. And so from there, we went from 32 down to today, we were at 16. 50% drop. 50% drop in just over 2 weeks. Of course, it's leveraged, so you're kind of playing with fire. But even at this, I can back all the way out to its entire history, and you can see what a monster drop that is. Haven't seen anything that sharp since COVID. So yeah, semis in bad shape. Transports very weak today. I didn't have time to look, but I think the airliners got zapped, and you can see here that it was not that long ago. These were also at lifetime highs around about Thanksgiving. IYT was over 75. It's about $10 lower than that now. So about 13% drop. Big plunge today. Even though at the moment, like the NQ's up, RTY's up about 0.5%. Transport's quite weak. And again, I don't know who the culprits are, but I know, for example, Delta is down quite hard, over 7%. And you can see how much things have changed. Here again, it wasn't that long ago that this had all the markings of a good, strong, bullish breakout. And it was. But what happened? And the first huge warning sign was that this gap was sealed. The next big red flag was that it got below this low. And of course, once we penetrated the pattern again, it was, toast. XLU, I still really like the CTF on the short side. We have, you know me, I'm a little bit lazy about drawing diamonds. This is an oval, but it's really a diamond pattern. And about halfway up there, halfway up the egg, we've got this line, which is pretty much today's high and yesterday's high. That's a pretty good stop loss, I would say. And I think this is, even though the market in general has been beaten down a lot, XLU is kind of a little creature unto itself. And I think this has every good chance of flipping lower. One item that's proved that nicely is NEE. Yesterday, this went raging higher, but look what it did. Here's the trend line. Here's the break. We approached it here and backed away. And yesterday, we approached it here and backed away. So this line's proving quite formidable with respect to its resistance powers. Just a few odds and ends here. As I said, I've got a bunch of short positions right now, 17, I think. Here's a couple or three that I like that I don't think I featured. BG, there's a symbol here. There's the broken trend line. Here's the completed pattern. And this security appears to have a tendency to respect its topping patterns. And this is the biggest one by far it's ever seen in its history. So even on this rather green day, we're down 1 2/3 on BG. Wendy's, another diamond pattern, and tightening up the stop loss here like so, 15.94. This one's down by 0.5%. And this one, MDLZ, I finally, not finally, it was just yesterday, but this one had been very, very strong. I'd gotten out of it. I got back in again yesterday. We had a beautiful shooting star on this. I got just a little bit above this trend line, but as you can see, this trend line here has been broken and by a lot, and we've pushed all the way back to it. Seems like a pretty appealing risk-reward ratio at these levels. So that's just a few of those positions. I'm not in Reddit, but boy, is that a pretty one. It's bouncing back now. It's up 12.5%. But in this instance, this had lost, as of yesterday, about half its value. There's the gap on it. We'll just get rid of that. That'll do. That's good enough. We keep things simple here. So here's the breakout here. So this is a strong support, and this is strong resistance. So we've moved, and this is very typical. About mid-February, things seem to have topped out, and kind of the smaller, sassier stocks, the worse they got hit. So yeah, I read it down by 50%. Tesla is having a rare green day. The president announced that he was going to buy a car. He was sick and tired of all this craziness going with Tesla, so he decided to show his support. That's fine. I've owned Tesla cars since 2012. There's 3 parked out right now in front. So I'm a long-time fan of Tesla vehicles. And I just got just beaten to pieces. And a lot of people who are rather defensive about the stock point out correctly that it's had 50% wipeouts at least twice before. And it tends to spring back from those. It's a very volatile creature long-term. It doesn't really take much of the pain away from a 50% drop. But this has been very weak. And we have violated fib after fib after fib. At this point, what I would say is, should this thing rally to anywhere in this zone, let's call it 248, kind of split the difference. That's probably about all it's going to bounce. And I would also say that its competitors, its upstart competitors, are just get the death watch out, honestly. Rivian and Lucid, times have changed. And yeah, I think they're in trouble. I'm guessing perhaps they'll get bought up at some point. Who knows? But those are dreadful stocks. I kind of beat the semiconductor thing to death already, but just one other one. ARM Holdings, ARM. You can see just how tremendously this has dropped. Here we are again, those February peaks. We went from about 173 down to 113. But as I mentioned weeks ago, I quit trading this just because it was too erratic. Here's an oldie but a goodie. Remember this one? This is our ratio chart. XME miners divided by GDX, precious metals miners. And I've shown you this a number of times, initially like probably a year ago. And the idea is basically over the long haul, this ratio tends to stay in this range. Wow, it's working out great, isn't it? Look at this. Here's the peak, and it's just been getting battered down. And I would say we've probably got years left of this thing to work lower. It's a slow one. Just to wrap up real quick, and just, I don't use indicators much, but let's just sauce things up here with some exponential moving averages, just to show you how sold off things are. I'm be careful not to use the word oversold. Just let's look at these. This IWM got a crossover here. And we're deep, deep down. Typically, it got just right toward that 200-day and bounced. Not this time. So if it did bounce, and it could bounce mightily tomorrow. I will not like that, but that is the cold fact of the matter. It could bounce very strong. As I said yesterday, probably aiming for that pink zone there. You know what? I'm out of time. I better say farewell. So that you kind of get the idea. So good luck with the CPI. In a paradoxical way, I will welcome a big bounce. I need a big bounce, but boy, it's going to hurt. So we'll see how it goes. I'll see you tomorrow. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap.
Today's Kashmir Pulaski Day. So
I know you forgot the pushkis.
I brought you cherry pie. What do you want from
sweetie.
me? Yeah, it's
You're
tomorrow.
conflating just because I'm saying things that are in Polish. You think it's the same thing. Kashmir Pulaski, a freedom fighter. He's honored here in the city. This is his day. Tomorrow is Fat Tuesday or Mardi Gras, and that's Punchki Day. Two separate things. They both happen to be Polish words.
Are you sure it's tomorrow or Thursday? I thought somebody. Oh, yeah, tomorrow.
No, it's tomorrow.
Anyway,
Fat Tuesday. When is it ever been
Fat Tuesday's never on Thursday.
My chili is so spicy, it'll burn your face off.
Yeah, that's not good to me. Like, I like spicy stuff, but just because it can burn my face off, that's not what I'm trying to do. I'm trying to have a nice meal. I'm trying to eat something nice. Your chili sucks. It's all right. Don't worry about it.
Actually, if we're going to get after it, your chili does suck. We'll leave it at that.
Oh, my God. I can't listen to you guys. Good. You're not getting any more. Either you.
Sosnoff got me sick.
I definitely did not because I'm perfectly healthy.
Yeah, you are annoyingly healthy. Yeah, that is true.
And he is he's dying. He was hacking up a lung here yesterday.
I think it is the titration of you just disobeying like food safety laws. I think it has worked in your favor.
For sure.
For sure.
I think it has.
Yeah. I don't think it's replicable in like a general population, but I think for you specifically.
I got another one, Sosnoff. I go to my local bank over here last night after the close, and I'm talking to somebody, and I had to do a wire transfer, blah, blah, blah. I'm talking to the guy, and they're having a problem with the wire transfer and all this other stuff. So they go, let me get my specialist guy. And who walks in? The Vanilla Gorilla. Remember Liz and Jenny always talk about the Vanilla Gorilla, the best nickname on the floor because he had all this hair coming out of his chest. He had a big beard.
That's a pretty iconic nickname.
It's him. He goes, Bat! And I look at him, and he was all clean shaven. He had his shirt and tie on, so I couldn't, I didn't recognize his chest hair or anything like that. I go, Vanilla?
He goes, yeah. And anyway, he's the big manager there at the bank. So I got an in now. If you need it, you can have an in too. We got the vanilla gorilla on our side.
I don't need an in at like the Skokie Savings and Loan Bank.
It's the Glencoe Credit Union. How dare you?
I didn't even know it, the Glencoe Credit Union.
I got Giuseppe in New Orleans. What's up, my man?
I've noticed the last 2 days to talk about your birthday, but those two guys next to you never once saying happy birthday to you. Happy birthday to you.
To you.
Happy birthday.
You belong in a zoo.
Happy birthday.
Hey, Sadnov, now blow out this candle.
Get the full scoop by checking out the archives at tastylive.com.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, with the closing bell. Even the S&P's down $5.50, Sadnov, after having about a 120-point range top to bottom. Some of it last night, a lot of it this morning, Sadnov, mostly to the downside. I don't think we turned higher on the day until about an hour ago, maybe 45 minutes ago, since this morning, right? NASDAQ up 104, Russell up 14. That's the strongest of the group. Dow down 247. That's been the weakest of the group. Volatility, let's talk about it. /VX. You can see it on the far right-hand side of my chart here, right about the middle of the day. Basically unchanged, up 20 cents. We never made new highs in volatility, which is elevated, still in the 20s. I mean, 23 is well into the 20s as far as I'm concerned. But in the 20s, never made new highs on the way down, never made new lows on the way up, Sadnov. I think we still have a little bit of market movement to go. I know we got CPI coming out tomorrow. Anyway, bonds down 27. They're a decent sized mover to the downside. Trade on the 170.
Yeah, they were down almost. They were down over a point.
Yeah, decent size. That's $1,000. 1 point.
Yeah, I'm long some bonds, but I would trade the long bonds for today's market move any day of the week. Needed a little help from the market.
We've talked about this when you've said the bond position is the best position that you have, and the market was the worst position you have. You're much heavier in the market.
No doubt about it. Yep.
Bonds, for sure. Bitcoin hanging in there, 83,400 or so. You can see here just a skosh off of its highs. Ethereum up $86, flirting with 2,019.53. Oil up 47 cents. It was higher this morning. Up 47 cents. I don't know what else to say about that. Gold up $27. That's been your mover to the upside for most of the day, up almost 1% there. And the euro still going strong. Currencies against the dollar are still doing well. Sadnov, a little bit surprising with the market basically unchanged, maybe a little bit more red. Some of these stocks still to the downside. Apple down $6 and change. Hasn't got out of its way all day. Oracle, which had earnings down 4 and change. Not too many other NASDAQ type stocks to the downside. I think Apple's the biggest one that you look at. To the upside, you got Netflix, some relief rally here, $33. These numbers are starting to get big. Crowd up 24, MSTR up 20, Coin up 12, Tesla up 10, and Boeing got its first uptick in forever. It's up 666, the devil number.
Yeah, I mean, first of all, a bunch of things about today. Anybody that thinks today was easy, you crazy.
Man, they were down 70 some odd handles.
I couldn't believe they were down 80 handles this afternoon.
Yeah.
And after this morning, when I thought, I mean, I picked the right stocks today. We bought some Tesla stock, scalped it. We bought some
You had
NVIDIA.
multiple times to trade Tesla.
Bought a bunch of NVIDIA.
Decided, yeah.
It worked a couple times. But, I mean, you couldn't hold it for $4, but you could hold it for $1 or so.
You were more on today than off. I'll give you that. You were definitely more on.
Yeah, I didn't do anything crazy. Didn't do anything bad. Made back some money from yesterday. Most of it, actually, surprisingly.
Oh, look at you.
With the SPOO still down 11 today.
Uh-huh.
We're gonna make a lot of money back when they crush Vol here. If they crush
I don't know
Vol.
if they're going to crush Vol. Maybe until, I mean, I know CPI comes out, but I got a feeling VIX expiration, not until next week. I think we got a little bit more. I think we got a little bit more to come in volatility, or at least staying elevated until expiration week. That's my call, Sadanoff.
Well, there's no reason to think anything other than that because they rallied
Why
back.
did you say it?
Well, 2 seconds ago they were just up 18. Now they're down 18.
I know. I see.
So I mean, literally all over the place.
Believe me, I want volatility to contract. I have a position that says volatility needs to contract. It's actually late in contracting.
Yeah, pretty wild. So here's the tough part today. I do think they on that last down move this afternoon, because it took them a while to turn around. Like it was about an hour or so.
Oh yeah.
I think they hit a pain point in that when they were down about 80 for that for a better part of an hour and a half or so.
Yeah.
And
it reminded me of what all day yesterday was like when the
Exactly.
market just slowly downtick, slowly down.
Yep.
But it was a shorter period of time. I will give you that.
And I thought when that was all said and done and they rallied back up, I go, now they're closing up on the day for sure. Now they're back down 18.
Mm-hmm.
And I thought they were locked up.
Listen, every time you think you got this market pegged for what it's going to do, it always surprises.
Well, I don't think anybody has any idea. So today was another one of those days where it didn't matter what side of the market you're on. If you waited long enough, you got paid.
Yeah.
But
It's good. That's a good
It
market.
was really hard to wait.
Yeah, of course.
This is about as hard a trading, like few couple of days that I've seen in a long time.
It's reminiscent of bear market trading. I mean, when we get a rally and you think that the bottom, is in now, and then we sell back off again, and then we come back up and we sell back off again, you get met with sellers. I mean, that's what it's acting like.
The way they're selling off on every uptick, it is very much a bear market action, no question about it. I agree with you 100%.
Mm-hmm.
The only time the market looks like this is, when you're in these kind of crazy bull markets, every single downtick is a buy.
Yeah.
And
it's quick too. Those are the V bottom type things. I mean, that's what you get.
When you get into some markets, when you get into a little more of a bearish market kind of mindset, every single rally is a sale. And it's hard to do because each time you think, oh my God, they're going to be up 80.
Yep. This is true.
Yeah. Today is a tough one. Anyway, all right. What do you think here?
We haven't gone anywhere yet, right?
No, we've gone nowhere. We're down 12 handles. Right. It's absolutely freaking nothing.
Yep.
It's literally nothing. It's literally nothing.
Yep.
I'm looking through my positions now because I was doing stuff for a lot of the day, and I'm just taking a look at some of the currency. Man, everything is a little more violent, right? That's the thing with higher volatility. People ask me. I once was doing this seminar, and somebody said, "Can you explain volatility like in lay terms?" I go, "It's violence. It's what degree of violence," and I think that's kind of what to a certain extent, what everybody saw today. It's just a certain degree of violence.
Yeah, I'll give you that.
And taking a look for us now yesterday.
Here, I'm not a big looker at the currencies, but I mean, I know what they do.
They're all huge today. The U.S. dollar has been.
But I mean, since we've sold off, currencies have rallied.
Mm-hmm.
When we were every sell off in the market was met by a buyer.
Yeah.
currencies were going lower. Our dollar was strong.
Yeah.
Do you think currencies are the whole key?
No.
To this?
No, currencies are an after. No, absolutely not. There's nobody cares. I mean, people obviously. The strangest thing is you would think when U.S. stuff gets cheaper that, hey, it's cheaper. Not only do I get a discount, not only are U.S. stocks cheaper, but the cost of buying U.S. stocks is cheaper.
Right.
But it doesn't quite work that way. I mean, the euro, the British pound, and the euro, British pound have had
even
the
the stupid yen is rallying.
Today it's down a little bit, but
I know. But look at this move it's had. It couldn't put 2 days together. It's put a month together.
Oh yeah. But most of the other commodities are kind of a little bit just sitting around on their butts. I don't think the story of the day was commodities. What I was going to say is yesterday, if you looked at your P&Ls yesterday, every single one was red. Like I didn't have anything that was green. Literally nothing that was green. Maybe bonds or something, but that's it. Today, completely the opposite.
Yeah.
Completely the opposite. We don't have any major reds today. Everything is green.
With volatility really doing nothing too. And
with volatility doing nothing. I mean, my biggest loser today is gold. And I have a couple of stocks like Moderna. I lost a little money in Netflix because the move was too big. But biggest winners today were almost everything. Boeing had a huge move. Coinbase had a huge move. NVIDIA, Micron, Oracle for earnings. That was a good one. Tesla's our biggest winner by far today, but it was our biggest loser yesterday. So who knows? Like this is just one of those, hey.
Even Boeing turned around today.
Oh, Boeing's up like $6. Yeah. So anyway, I'll get rid of this slide here. So tastylive.com/assumptions. Send us your assumptions for tomorrow. We got a fun segment tomorrow morning. It should be a good free for all in the morning. tastylive.com/assumption. All right. With this kind of tape action, it's like there's no point in saying, oh, I think they're going to be up, whatever it is. The question is, 2 questions. With no earnings tonight, and earnings have been good to us, is there a bond play here for the CPI tomorrow? Last time I thought there was a bond stock.
IV rank is 56. It's
I know.
pretty good. It's elevated.
I know.
Let's look at
Is there a bond play? Is there a no play?
Yeah, I mean, but they're in no man's land. I think you almost have to sell both sides. I know you're more of a bull.
I'm more of a bull, but it's
Maybe it's a closer put and a further away call if you want to lean with a little bit of.
It's 17. If you look at April expiration in the bonds with the IV rank where it is right now, it's about as high as it's been. You can go out to like
April with 45 days.
45 days is perfect. If you go out and want to have a little party here, you can sell and I know this is going to be wide, 1322. Okay. Now we're currently trading at 17. So the 1322 is at 17. We're $4 away on the put side.
113.
113, 122. We're $5 away on the call side. We're $4 away on the put side. Okay.
Yep.
Which makes sense in this market. And the expected move is 379. So we're
basically no skew here, puts or calls, right?
No skew.
Right.
And
105 would be like $1,080 or something like that.
Yeah, 105.
Right. 1 point would be 1,000.
I'm doing a little price discovery here. And the thing is, nothing done at 105.
Well, it's 104 mid price now. They saw your big order come in there.
Yeah, I'm going to try 104. Nothing done at 104, so I definitely am not going to get filled at 105. So I'm at 104, and we'll see what happens. The market on this is 102, 105, 103, 105. 104 mid price, nothing done. I will hope for a fill, and that's it.
Okie dokie. Now we sit.
I tried. You can also, if you want,
Adobe tomorrow after the close. That's all I see really for.
Yeah, after the close.
Not to be done for today, but tomorrow if you're thinking about it.
After the close.
Yeah, tomorrow after.
Okay, and then if you go to the notes, let's take a look. April, 45 days out in the notes. Notes are trading 110.28. Man, these things move around. 24, 21. I'm just looking for strikes to sell. If you can't sell the bonds, you sell the notes. If you can't sell the notes,
So, curiosity. You looked at it, high implied volatility, decided to sell something, can't really get filled at mid-price. Does that make you feel good or bad about chasing the order?
I didn't chase anything. I'm working notes and bonds right now. Nothing done yet on either. If you hear a ding go off, then I've got something.
Then you got
I'm at mid-price. I'm at mid-price on both. I don't do very well trading vol around a CPI number. Now let's do this. Let's. I haven't looked at the S&Ps.
Okay.
So I don't know.
ES or SPX you're talking about?
ES.
Okay.
How many traded today? 2.2 million.
2.3. Good guess.
Okay.
Really good guess.
Now I have not looked at the expected move for tomorrow on the CPI.
Okay.
I'm going to make a market.
In ES you're talking about, or in bonds?
SPX.
Okay.
SPX. I have no idea. I know it was 94 the other day.
Yep.
And I know vol is higher a little bit.
Yeah, unchanged to higher, yeah. Day goes by, multiply 10, take 85% of that, you get
73.
Not bad, 83.
83.
Not bad.
83 for tomorrow morning.
83 all day tomorrow, the 12th.
83 all day.
Right. Not overnight into the morning.
There is not a sane person that would sell 83 for tomorrow one day SPX.
Why are you?
I don't know.
Are you saying that because SPX had $110 range today alone?
We're currently at 6,000. I'm sorry, 5,600.
600.
Okay, so let's trade this.
The one day?
Yeah, the one day.
Okay, it wasn't. It was a question, but it was a questionable statement. Like the one day? Like I know that's what you're talking about. The one day? Could be a question.
50.
You're trying to go 80. You're trying to count 80 back from 5,600. 55.20 would be 80. What are you trying to do?
57.95. 200 points on each side. 195. 200 points on each side. 53.95.
You're not going to go down to the
57.95. $1.80.
53.95.
Yeah.
And what's your upside?
Huh?
58? Because I don't know what number you're saying.
I said 50, 57.95, 53.95. 400 points wide for the opening tomorrow.
Okay, you couldn't just do 58, 54? Just couldn't do it that way? Yeah,
I'm not filled.
$1.85, man. Is your wife proud of you?
Huh? I can't get filled.
Is your wife proud of you?
Not really. I can't get filled. Oh, there. All right. 175. I had to do something for the opening tomorrow. 175.
Dow's been stronger than most of the market. Weaker today. Is the risk off? My friend Jason just asked me.
Is the risk off? Well, the Dow is down 400 today.
Right. Dow has been stronger. Rotation from NASDAQ. Even
Wasn't the Dow down 800 yesterday?
Stronger relative to the rest of the market. I mean, just listen. I mean, that's where your consumer staples are, right? I mean, you would think. I don't know.
Yeah, the Dow's been stronger in that sense. Sure.
Okay. So is the risk off today? Don't make my friend Jason come after you.
It's a risk off today. I think anytime that you're this late into a multi-day sell-off, you're always going to have a little bit of risk off. I mean, right now we're 2, 4, 6, 8, 10, 12, 14, 16. We're like 17 days into this. It's almost 3 weeks.
Yeah. Oh, no.
Actually, it's
well overdue.
It's 3.5 weeks. You're probably well overdue for a little, risk off. Yeah, sure. Sure, Jason. Give that to you.
Okay.
Just a trade. I mean, I don't think it's anything more than that. Spoons down 31 is not where I thought they were going to close them today. I mean, and you didn't think they were either.
No.
We thought.
Actually, my son Nicky was kind of pumping his chest a little bit. Tell Scott I'm not bearish yet. You know, you boomers. Or when they went positive on the even yesterday, I told him be quiet. They're going to hear you, and they heard him.
Scott just texted me. He just texted me. He said, "What, Johnny?" He said, "Johnny said what?"
Pretty much. That's
Johnny says what? So, all right. So I didn't get filled on any of these bonds or note trades. Would you go down a tick or would you just
go down a tick? Come on. You can do it.
You wait.
$16 to you. Come on.
You wait. You see if you can, you see if they come for it. All right. I'll go down a little.
They ain't coming to you. They're scared of you.
No, I can't go down. I can't. I got to just.
It's against your religion.
It's against my religion. I'll just put
understandable.
I'll just put something smaller on, just so I get a little something.
Well, you went down. You went down to 103.
I know, just for a tiny bit, just so I could have something on.
You reduced your size.
Yeah, I'm going to leave my main orders in. I reduced my size on the small order, and I'll leave my big orders in for a higher price. See if we get filled.
Fair enough. You just
to have something to play for tomorrow morning. So we played the bonds, we played the notes,
So you got a little taste. You figure you can't lose. You know why? Because if it goes against you, you say, "Oh my God, I want to do 10 times as much as what I did."
Don't tell my secrets. don't. You got to
look how good I am. Okay, that's how Daddy does it. You let them come to you, right? And now, if you get it right and you make money, you say, "You see, bet you got to push the trigger. You participate, man. You are SMRT smart, really."
Don't ever give away my secrets. Those are trades.
You got this. You do. All right, you got less than 5 minutes. Even the S&Ps are down 27. The answer to the question, the easy question, would be to the downside. Expected move in the E-mini S&Ps is only about $6. Do we touch unchanged before the close?
No chance.
That's an easy call.
What, you think we will?
No, I don't think we will. I mean,
the question is not do we touch unchanged. The question is do we close down over 50? And I don't want them to.
Volatility up 27 cents again. Never went to new lows, never went to new highs.
Well, I think that,
I think it was over.
Yeah, this is not the close I expected. When they were rallied back up, I thought we were going to close them up on the day. And I was pretty sure of it. Now I'm pretty sure they're not.
Nicky just said, "I really can't hide from the doom and gloom or boomers."
Who said this?
Nicky just said the doom and gloom or boomers.
I give him credit for being what he is and never seeing a down move before. So I get it.
Yeah, I get it.
It's okay. Yeah, Spoos down 38. I didn't expect it. We going to Dylan?
Yes, we are. We have all three of our overtime co-hosts, Chris, Ilya, and my man Dylan. How are you, gentlemen?
Good. The pain continues. I took my stock shorts off today. I think it might be starting to run out of steam a little bit here.
Oh, now we got more downside. You see what you did?
Is this a commercial for Zenny, the eyeglass company?
They look good, these guys.
Listen, this is my first time in Trump's America. I run the European
you got a beard?
operations.
Are you home?
This is a beard.
I run the European operations.
Oh,
I like
now
it.
that I'm in Trump's America, I feel like I need to go more lumberjack, like intellectual lumberjack.
Yeah.
Yes.
Yeah. That's why I wear plaid exclusively now.
Trump's going to take us back to like the
Oh my God, Dylan! Not you two, please. Not 2 months.
Hey,
you can't take it.
Don't worry.
I mean, you had 4 years over there of candy canes and jelly beans.
I don't need to like one pile of crap to take another pile of crap. Okay, there's more
What
to
is
like
it?
than
If
crap.
candy and nut, if ifs and buts were candy and nut, what is that? How does that
I don't know. You got to ask Dr.
We'd
Jim.
all have a Merry
All I
Christmas.
know is Trump's America. This is weighing upon my soul. I need to.
Yeah,
get
but he
back
just
to common
tweeted
gear
out-
and
I don't know, man. You're
perform
jet
office.
setting all over the place, eating out of fancy restaurants in Italy. Don't give me this
I'm wearing
bullshit
the burden
from you.
I'm the burden of the Gettysburg.
I
I've
see
the
you on
Gettysburg
Instagram,
address.
okay, starting companies, doing things.
The
Don't give me.
Gettysburg Address.
Mm-hmm. I don't want to hear from
gotta
you.
Sleep the cold winter on Lake Champlain. No electricity.
Did I ever tell you my Lake
Ethan Allen
Champlain
style.
story? Did I ever tell you that I almost died on Lake? I never told you this. We were kids.
No.
We were kids. We got caught in a storm in the middle of Lake Champlain. That you got some violent waves on that thing.
No, but
Wait a
listen,
minute.
this
You
is
were out on a boat?
Yeah.
Or you sitting
is
on a
carnal.
dock or
This
you
is-
were looking from afar?
No, we were out on a boat
This
in Lake
is holy
Champlain.
water. This water will take you from this earth.
I'm telling
It's a-
you,
it's a
we
danger
almost died out there. Lake Champlain. We were kids. We were on a boat, and storms came in. The waves. Lake Champlain is like what separates Canada and the U.S. Right? It's like
It's the next biggest lake after the Great Lakes.
yeah.
That's
we were
why I
out
stay
there.
out of the water.
It's
You
also
go in the water,
glacial,
rejoin the
glacial
supply chain of
retreat,
food.
fertile, such abundant. The soil is just really great because of the glacial retreat. Really leaves a nice density of nitrogen and
All right, boys.
good plants.
Where are we, Chris? Are the lows in on this close? A little bit down on the close. They didn't. The long. Everybody got long prior to the close. I'm convinced of it. They're puking them here into the close. We're going to be down 40 or 50 on the close. Is this it?
They're down 45 on huge volume. SPX volume 4 million. That's 12 times the norm.
What do you think, Chris? Are we there?
We have another 4 or 5% to go to the downside.
4 or 5%? Ilya, what do you think?
I think it's going down until it's not, but I think it's kind of overextended here and probably gets a little bit of a relief on CPI tomorrow, if only just to get the event risk out of the way. I think the trend is down. There's just room for a little bit of a correction here before we keep
So
going.
far, I'm on board with you. Mr. Radigan, what do you think here?
Yeah, no, I mean, I think that the president's a full fruitcake, and the market will reflect it by virtue of massive declines in financial assets until somebody does something. So I think that the bottom, this thing we could lose another half, no problem.
Save your thoughts for tomorrow for truth or skepticism.
Oh my God! Seriously, let's get somebody with a view on here. I mean, it's like I'm.
Would you like, sir?
It's like I'm talking to the view here. All right. I mean, you're supposed to give him. You're supposed to give him banter. You can't be on both sides of the market.
Talking to me?
Yeah, the two of you.
We're all sober.
What are you talking
This is
about?
not the view.
I didn't say
We're
a
not
word. You
drinking
didn't even.
wine.
You said save your remarks for tomorrow.
Oh, save you because the bell ran off.
Because
Because the bell went off. Because
I thought you were saying for truth or show.
no, because the bell went off. So I said save the rest for truth or skepticism. The bell went off. I'm in a little bit in Ilya's camp here because I think that this close today, here's what I think. After that sell-off, we're down 80 all afternoon. Then they rallied all the way back to up on the day. I think at that point, a lot of people bought them just for the close.
Huge volume capitulation.
Huge volume. And then they sold off 40 handles because they didn't go higher. So all the longs just puked out. I think tomorrow they're going to be like, oh, crap, I should have held it overnight.
Huge volume capitulation.
And I didn't get filled on my bonds or my notes.
You weathered the storm, Sosnoff.
Thank you, boys.
Gentlemen, have a great one. Overtime next. Peace. Sorry.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Tom, when you're scooping the offer, what are you doing?
That means when you're scooping the offer, you are buying whatever you can get your hands on at the best available price.
What does it mean when something trades by appointment?
Trading by appointment is when like you're in a pit back in the day that had like one or two market makers in it, and if they were having lunch, you had to make an appointment to make a trade with them.
In the pit, if you said, I'm going to buy your book, what did you mean?
If you're going to buy the book, that means you're going to buy everything that is posted in an electronic book. So every resting order that's posted in the book up until a certain amount.
If you say take a fill, what's happening?
If I'm taking a fill, that means I'm a broker, and if I'm a broker, that means I did something horribly wrong because I'm a market maker.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
Stocks keep falling. It's Tuesday, March 11th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Dylan Radigan in New York, Ilya Spivak in San Francisco to take you through the rest of this hour as we wrap up this Tariff Tuesday. It was a turnaround Tuesday for a point. Stocks did flash back in the green, but an ugly close carries us back underwater for most of the major indexes. Bond yields, which had tried to touch new yearly lows overnight, ultimately reverse. The dollar sell-off continues. Metals are perking back up. I guess we're doing 50% tariffs against Canada for steel and aluminum. And yeah, there's more coming. So if you're joining us for the first time, come over to tastylive.com, see what we're all about. If you are already on the platform, if you're on the website, come to YouTube. Tell us what you're trading, what you think of this market action here today. Is this late day turnaround a sign of something to come? I hear resident bear Ilya Spivak talking up Tom Sosnoff about how maybe tomorrow is a day for a bounce. But I see no reason for it to happen. Dylan, I think I'm more in your camp that we're looking at a mad titan who's currently wishy-washy, on again, off again. Tariffs are driving the business community crazy, and it's bleeding into our equity markets here. But we'll cover that and more. So Ilya, the baton is yours. You, of course, ruined my S&P 500 calls a few weeks ago when you dared come back from vacation. Naturally, the market peaked the day before you came back from vacation. And since then, it's been effectively a straight line down. So you have the floor, sir. It's another day of selling where we find a new yearly low in stocks.
I took my shorts off today, and it's not because I think that the trend is over. It's not because I think the move is done. It's because I think we've gotten to a place where we've understood that which is the scary thing. And the next question is, will there be a white knight named Jay Powell that at the very last moment comes riding to everybody's rescue? Because if we look at what the Fed funds futures market did today, it is very dramatic. We are now priced, as of today, for a tremendous amount more easing by the end, not just of this year, but of next year. That was really the big thing today. We are now looking at 121 basis points through the end of next year. Mm-hmm. That's almost a full cut more than the Fed anticipated. 3 cuts now on the menu for this year and 2 for next year. Very, very significant shift considering but a month ago we were looking at 50 basis points through the end of next year. So this is a really dramatic turn. This is the most dovish that we've been on policy expectations since mid-September of last year. So when we look at this in the context of what's coming next, the CPI report, I suspect the markets are going to want that excuse. And they're going to see a weak CPI number. The expectations already look for disinflation. They might get something worse or better, depending on your perspective, but in any case, lower if the recent flow of U.S. economic data holds up. Obviously, it's been a story of weakness and a story of increasing disappointment relative to forecasts, if you look at our favorite index on that from Citigroup. So the risk, I think, is CPI is lower than expected. I think the markets are going to like that. I think if only for a day, they're going to look at this and say, oh, goody, the Fed will come and save us with lots of rate cuts because we can't hope for sanity from the other side. And the beatings, as you like to say, Chris, will continue until morale improves. So in that environment, once you sort of lose faith in one side of the policy ledger, you go to the Fed and go, okay, well, surely you all are sensible. You'll come and save us. And with a weak CPI number, the markets will have an excuse to ease off a little. Having said that, I think the trend is going to be down for a while. And so to me, any kind of uptick here is an excuse for vol to come in so that the puts get cheaper so that I can buy them back.
Dylan, volatility does close a little bit lower today than where it opened up. Do you think that this is finished?
I mean, I don't. I think that when the market is exerting, it's like this to me is a sell-off that's more akin to. I mean, I don't want to make the wrong parallel, but it's a policy answer. You know, it's like before TARP. But when the market is willing to go to whatever level it needs to go to force a rational counterparty back to the table. That's what I'll say. And so the market doesn't care. It's just another number. You want to be this 90? You want to be 10? Like it can change. Because now you're pricing the credibility of the counterparty. You're no longer pricing the transaction. And I'm not even saying the credibility is terribly impaired. But for sure, the credibility of the counterparty that is the United States of America is diminished, and by a little or a lot, we don't know yet, and it is resulting in a discounting of the equity value of America. Rationally so. The proponents would argue that this is a small tax on a transition to a new low-income tax, high tariff, high domestic production environment, which could very easily be true. It also could not. And the other side of the room is saying, well, I don't know whether your future fantasy is going to happen or not, but I know that the value of your presence on the other side of an agreement is less than it was 2 months ago because you change your mind every day.
Flip-flop. Ilya, at the end of last call, I noted that maybe stocks could have another, 4% or so to fall. And that seems like a lot. Why pick that number out of a hat? I'm just looking at the double top measured moves here in stocks in both the NASDAQ and in the S&P 500, 61.75 or so down to, well, we'll call it 57.75. That's 400 points. 400 points less 57.75 is 53.75. That kind of gets into a zone where you see some closing prices the week of early August when we have those growth fears, spasms, if you will. And I also see a market where for the past several weeks, my line in the sand has been, I have levels I'm interested in. Now let's see us break downside momentum before I get long. And we still don't break that downside momentum today. We are a little bit long in the tooth here from the 1 month moving average, right? That's not something that we can just dismiss. 300 points is quite a big deal here. That is a little extended. It's getting a little bit extended. But if we're operating on the typical Tasty cycle, if we get a bounce and I'm short puts, I don't think that's a bounce that I want to stick with for a long time. I would only stick with it if I see, again, a close above the 1 week moving average, but otherwise I would feel very much like I'm catching a falling knife right now. And I mean, Dylan, I think we've all been pretty consistent about this, Ilya. Last week, this week, the week prior to that, what have you. It doesn't really matter what the tariffs are. You just said yourself, it could be 10, it could be 90. The fact is that they're on again, they're off again. They're on again for arbitrary and capricious reasons. We heard today that the reason why we were slapping on escalating the tariffs against Canada is because President Trump didn't like the way in which the Ontario Premier spoke to him. That's not a way to conduct.
Not a rational counterparty.
Not a rational counterparty.
And this is why the move in Fed funds futures today is so interesting and why the markets may, in fact, take heart. Because the market seemingly decided today, all right, we're not going to get any kind of relief from one side of the policy ledger. And we don't care what Powell said on Friday. Events will compel him. Powell was very sort of calm, not clearly in any kind of hurry to cut, saying the economy is fine, longer-term expectations are mostly anchored. Yes, there's a lot of uncertainty, but things are going okay despite the uncertainty. And today, clearly, the market said, yeah, all right. Here's what's going to happen. The economy is going to start to break down and tailspin, and you're going to step up the pace because you're not crazy, and that's what you're going to do. So clearly they're making a bet that there will be much like the end of the 2008 crisis, where we had the fiscal retrenchment of the sequester on mostly vindictive partisan grounds rather than actual economic logic grounds, just at the time that the economy needed a little bit more loosening and a little bit more coordinating between monetary policy and fiscal policy. And we ended up getting a lot more easing from the Fed than we probably needed. A lot more QE than was probably called for were there to be just a little bit more coordination. But monetary policy had to make up for vindictive fiscal policy. And that was seemingly what the markets finally sort of threw up their hands about today and said, right, we thought that the fiscal policy from this administration was going to be pro-growth. And we were betting on that for months. And that's not what we're getting here, so fine, forget it.
Trump was asked today, or his press secretary was asked today, if there's a way for Canada to get the tariffs removed, and if Trump considers or the administration still considers Canada to be a close ally. And the administration's official response is he believes that Canadians would benefit greatly from becoming the 51st state. So, lovely. Dylan, you keep talking about a rational actor here, and Ontario has suspended, after the conversation with Lutnick today, they're no longer implementing the electricity tariffs against the northern tier states like myself, which I was looking at the math. I think it would have resulted in about a $12 surcharge per month in my electric bill had those gone through, given the mix of the energy that we get here in Westchester. But what's the path forward here? I mean, if you're a foreign actor,
I think the path forward is for the market to apply pressure until the counterparty starts to behave in a more rational way. That's the traditional role of the market, is to insist on, a rational counterparty.
Is that going to be equities?
And the only way it can apply pressure is by meaningful declines in asset values.
There has to be great pain before great peace, is what you're saying.
I don't know. I have no idea. I'm just saying that pricing risk is one thing. Pricing rates is another thing. Pricing business execution risk is one thing. But pricing the reliability, the trustworthiness of the counterparty is just a different kind of risk. It's a pain it's like a unwelcome and more difficult to price, I guess.
Well, I suppose the good news is if you're a zero DTE person and you sold put spreads against today's lows, you've come out on top. Other than that, being long deltas today was a very difficult exercise. Markets were down big overnight initially. They bounced back when we hear that there's a CEO roundtable today, including some remarks from everyone's favorite presidential advisor, Elon Musk. Tesla shares are up 3.79% today after the president declares that any violence against protesters or Tesla dealerships by protesters will be now considered domestic terrorism. Let that sink in, as they say. He also showed off a new Tesla at the White House that he can't drive himself, but he'll let the staff use on the grounds. Is this the helping hand that Tesla needs right now, Dylan, to get off the mat? This thing has wiped out all of its election gains.
You know, it's super interesting, right? Because on the one hand, obviously, there's all this appeal that's associated with it. And on the other hand, it makes the company appear actually less compelling than it really is. I mean, the company is a very compelling technology company, and that the more it appears to function based on public awards of U.S. government contracts that are clearly secured through sort of patronage kind of relationships, it actually makes Tesla look less like more. It makes Tesla look like they have more of an investment in some ways in their relationship with the government than they really need to appear, because they very easily have a relationship with a global consumer base that believes in the company, regardless of how how lucrative the government contracts are.
It feels different than when, like, we've seen Trump have like a Mack truck at the White House before, right? Or like Biden drives an F-150 electric vehicle. It feels a little bit different when it's one of the president's top advisors, who people have been saying is like a co-president, is touting his own private company and the government's putting it out there. But it's enough for shareholders to find a reason to catch the falling knife today, up 3.79%. Tesla, one of many companies, obviously among the top names in the NASDAQ, that's been under a great deal of pressure. Apple looks like it's potentially topping out here, right near a neckline of the lows that we have in 2025, swing lows that we have right before the election. Amazon does get a little bit of a bounce today too, but again, struggles to get back above that 1 week moving average. Can't get through the former swing highs that we have in July, the swing lows we're struggling at in November. Elliot, it still looks like there's a lot of weakness. Today may have just been a reshuffling of the papers, dare I say. But in this market right now, it feels like we're going through legitimate price discovery again. Yeah, where we get a rally of 50 or 60 points or a sell-off of 50 or 60 points, and there are enough people who are saying, you know what, this could be the low, or this is enough of a rebound, it's going to get crazy. So I guess I want to take a step back. Like these ranges that we're seeing intraday with a VIX that's near 27 and we have a 2% sell-off, realized vol is still a little bit over implied vol right now. Mm-hmm. How does that inform you as someone who's looking to scale back into this market, wanting to stay bearish short term? Do you need to go longer time? Are you widening out your strikes? Are you taking smaller contracts, smaller positions, right? Instead of NQ, you're going to triple Qs. Like how do you proceed here? Because everything is going in your favor right now. And realistically, you have to run this thing into the ground until it turns.
Well, so I was starting, because I was using verticals, I was starting to get to max gain on pretty much everything that I was holding. And the question was, do you add to the position? Because I had quite a bit of duration in the Qs and in SPY. I had less of it, maybe about 20 days left in IWM, which is the Russell. So the question was, do you roll out Russell and then just straight add to SPY and the Qs on recentered strikes? And everywhere that you would price a reasonable thing, 50 days out, 45 days out, 46 days out, depending on what instrument you're looking at, all of it did not give you very good risk reward. You were looking at maybe 1.5 to 1 or worse. And that's because vol is so elevated. So these things are expensive. So for me, the thing to do here today was to say, you know what? We're getting next to max profit. It's not going to get much better. There isn't really a point to hold it. Close it all. Close it all and wait. And if there is some sort of further capitulation tomorrow, then you just bite the bullet and eat the bad risk reward and chase momentum. And that'll depend on what the price action looks like. But my sense is actually that we're getting to a place where maybe there's a bounce. And if there's a bounce, if the dynamics in Fed funds futures today signal that the market has stopped looking at the White House and looking at the fiscal side of things for clarity and said, you know what, we can't just keep jumping on headlines. Let's just assume it's going to be a madhouse. And if it's going to be a madhouse and if it's going to be back and forth, then what's the outlet? It's the Fed. Okay, if it's the Fed and you get a soft CPI number while the Fed is mum, then you end up with something of a bounce. And then the story becomes the consumer confidence numbers at the end of the week, and it becomes what's going on with the Fed, of course, their own policy announcement next week. In my mind, there is almost no way for the Fed to satiate markets with this policy announcement. And so I think the sell-off is due to resume after any would-be bounce relatively quickly. Because if the Fed doesn't do enough stimulus, market is disappointed. If the Fed goes, oh my God, the alarm bells, and they go big, they send everybody running scared. So there's no way to get this right. So I think what ends up happening is we get a bounce, the market feels some relief, and then the FOMC disappoints them. But what I'm looking for in that relief is for some of these IV readings to come in and for the puts to, again, give you better risk reward, and then to reload on put verticals pretty much across the board. IWM, SPY, the Qs. Of course, you can do that as RTY and QES, but essentially against the three major indexes that we look at here, just not quite at these levels.
I mean, part of the reason why I have no faith in this being the bottom yet is just by the characteristics of the downtrend. Here in the Russell, for example, we've seen green days on the 28th. We saw another one here on the 5th, another one here on the 7th, but no break of momentum. So today it's actually, we are up technically speaking. We gap open higher. We move lower over the course of the session, but we are up relative to yesterday's close, and we're still not scaling the appropriate levels. Clearing out the September lows here in RTY H5, perhaps the continuous is a better look at this. We can see that this is a lot of damage done in a short period of time, and this is perhaps an area where the market may want to bottom out temporarily. There's a good opportunity to rotate back in over the past month. The Russell's down 11.16%. But it feels like it's catching a falling knife still. So, Dylan, we need some semblance of stability, of some direction. Right now, it feels like there's no direction, and I think the equity market's being penalized for it.
Right now is not. The pricing is, I'm going to make this really uncomfortable until somebody behaves seriously. And I think that's the risk. I don't think the risk is like the growth risk for sure. There's obviously growth risk, recession risk, whatever. But I think that the selling there's a more a risk of selling because of the pricing in of the absence of seriousness. Whatever the implications. I think there's a discounting for the slowdown, and then there's a discounting for the diminished reliability of the most important counterparty in the world.
Lutnick saying that Trump will not impose the 50% Canada steel aluminum tariffs tomorrow now. Off again. The NASDAQ here, over the course of this, breaking the uptrend, and this is perhaps the most important chart about all this, the uptrend from the 2022 low. December 22, late December 22, October 23, August 24. This could be the week that breaks. And so then from a longer term technical perspective, with an economy that looks like it's decelerating, and why on earth would I be trying to buy the dip right here? Right? Like, why would I want long deltas? This is the worst looking chart that the Nasdaq could have. Okay, we broke down a few weeks ago. Fine. We have a pullback to 20K or so. We get the long-term uptrend. Let's see if we bounce from there. We did initially. This week, nothing. People are emptying the coffers right now. And so that means that there's still wipeout risk, right? At this point, what are you hanging your hat on if you were holding on to your long still? We just lost a multi-year uptrend. Bad news bears. So this is fine. We get back above here. We're back above 20K by the end of the week. You know what? Maybe this is a low. Maybe we can work with it. Maybe this is it. But if not, the rest of the month becomes hugely important, because if you close out the month then below this uptrend, you got real significant issues heading into 2Q. There's no other way to look at it.
Yeah, I mean, this is why I am not at all looking to be a buyer. I am looking for a period of digestion and correction, for the markets to kind of think over what the FOMC will give them next week between the CPI and then. Obviously, there's a consumer confidence report in the middle, but it's on a Friday. Maybe it doesn't shock anyone too much, considering it's already shocked them for the past two editions. And it would stand to shock them in the same way here. So if the markets have essentially thrown up their hands and said, right, consumers are unhappy and inflation expectations are rising because of chaos and flip-flopping in fiscal policy, that's certainly what the University of Michigan surveys have been saying. It's certainly what the Conference Board has also been saying. But the University of Michigan was out in front on this. That's why people start to pay much more attention to this report. I've obviously been banging the table saying the U of M report is one of the greatest early economic indicators. Seems like people are catching on that it's been very, very good recently. And so when you look at what's going on here, if the markets have decided that there's no help coming and what they need now is the Fed, that U of M number isn't going to tell them anything that's terribly new. It's going to tell them the same story. People are afraid. Inflation expectations are rising. Okay. Now the Fed needs to do something. And I think there's room to see the markets entertain that idea until they are let down. And so I'm not looking to be a buyer whatsoever. All I am doing is looking for a place to be a seller again. And the only reason I'm not a seller here is because once you sort of reach max profit on your vertical and you have a big event risk day the following day, why would you not? Why wouldn't you take your money off the table? If you don't have much more of it to make, you're capped, and you have all of your gains to give back if it goes wrong.
Yeah, this is just a really ugly chart. S&P as well here.
Yeah.
I guess we have to go back to the COVID lows on this weekly time frame. We look at the uptrend that we've had over the past few years, and you can see that breaks down last week. We find more follow through this week. The long-term post-COVID rally lows, we could do the lows in March 2020. We'll do October 22. We'll do October, early November 23. That would put us on a collision course with the August swing low at 5120, perhaps sometime by the summer months. So if we think that this correction, like this is a sign of a more significant top that's come together, and we're due for some structural weakness here moving forward into the rest of the year, or at least into the middle months of the year, then there is certainly a rhyme and reason to it right now, stronger than ever to say that a top's in place from a technician's perspective. Now, to that point, and I'm still preparing the charts, but I think it's important that as we approach the middle of this month to have a discussion on seasonality, because the seasonal discussion is that typically, if it's a good year, you get your turn higher, and the rally really begins for the rest of the year in mid-March, after the Ides of March. Mm-hmm. That's not necessarily the case in bear market years, though. Of
course.
If we were to look at years when the S&P 500 enters the month of April trading below its 200-day moving average versus it's above its 200-day moving average, you're going to get very different seasonal outcomes. Now, early on, they're going to look similar. And I'm going to show this all in visual form, hopefully tomorrow in overtime. Okay, I just want to make sure this looks wrapped up and nice and clean. But when you see this, you'll notice that in the second half of March and into April, there is a rally in both bull markets and bear markets. Call it window dressing for tax season, or maybe something to do with, Japanese fiscal year ending and repatriation of funds. So it really doesn't matter what's going on in the broader market in policy circles. There are certain seasonal flows that are dictating things. Okay, we can get behind that. But that's part of the reason why I wouldn't put in so much faith in a bounce right now. Because if we do see a bounce materialize over the next week or two, it doesn't necessarily give us any indication that we're really in the clear. And we won't really know that we're in a clear from a time and date perspective until we find ourselves realistically until the end of April. Because if the market is embracing the bullish seasonality, that means when we turn in mid-March, that is the low. And if it's not the low, then by the end of April, we will have cleared out the area from which we turned in the middle of this month. So these charts look terrible. The economy is clearly facing difficulties. We don't take the Atlanta Fed number seriously because we're too far out. But in terms of an impulse directionally, the New York Fed, pick a regional Fed branch, they're all moving the wrong way. All the banks are downgrading their expectations for first quarter GDP too. So negative fiscal impulse, contractionary economy, corporate earnings that look like they're going to run into more trouble. I mean, if only lastly here, Dylan, who have been the biggest beneficiaries of globalization over the past 20 years? American tech companies. This has been our industry. So if globalization is coming to an end, the margin expansion that they've enjoyed probably kicks into reverse for a little while. Companies that have decreasing margins when the economy is shrinking usually are getting punched in the face. And that's what we've seen.
The problem is countries that, like I think I said this yesterday, but countries that want to be left alone get left alone.
Do they now? I feel like every country that wants to be left alone now is going to be running their own Manhattan projects.
Brexit is an example, like London, like the whole fashion industry's left. All the European finance industry's left. Like they're just like, you know what, we don't need you. London, you want to be Brexit? You want to be your own place? Enjoy. You know, any deal away from the incentive is the highest it's ever been to do deals away from America.
Have you seen that on your personal business? Have you noticed that attitude shift?
For sure. For sure.
Do you think it's going to come back? Or do you think this is a more profound shift?
I think any business person would come back for sure. So, you know, I just think it's one of those things where budgets get laid, structures, cultures get shifted. You know, the fashion, there is no more London Fashion Week. I mean, it's a small example, but it's because if the designers, the big French designers and the big Italian designers don't invest and stand up a London event, and if the London designers now have to appear in these other places, I mean, that's a small example. But the value of the British pound is a bigger example, and the falling value of the US dollar is an example.
Elliot, today the dollar takes another hit on the chin, thanks in part to the euro continuing its rally now 109 and 35 pips. Apparently yesterday's news that Die Linke, the German left party, who's attempting to derail the safety and security of Europe, would potentially scuttle the German infrastructure defense plan. Less of an issue today, it seems. Should we reconsider our long-held public mocking stance on de-dollarization?
De-dollarization, no, because none of this changes anything as far as that is concerned. Nobody's going to replace the dollar with the euro because all of the euro's structural problems remain. The question here is very simple. It's about yield spreads. The euro is not any more structurally coherent, and that's not what this is telling us. We are still very much in a place where all of the things that would give Robert Mundell agita about the euro being an imperfect optimum currency area, all of that remains. The real question, and maybe this is something transformative for the Eurozone eventually over years and years because the defense build out and the mutualization of security risk ultimately ties everybody at the hip enough that there's finally mutualization of financial risk. And if that's finally the case, yes, we're going to get something closer to a United States of Europe, and then we can really talk about which currency competes with which one. But that's a long time away and may not come. The issue
Does that
here
mean
is
there's a place where you flip your position, your sentiments, because to short the euro again, or do you think that this would be?
Of course, absolutely. But I think in the current environment, I mean, I'll flip my position on any asset. I'm not married to anything. I'm a trader. Strong convictions, loosely held, as it were. But when I look at this, it's a very simple yield spread story. If Europe is going to have to go borrow a bunch of money, spend that money, what they're going to get is more growth, what they're going to get is more inflation, and what they're going to get is fewer ECB rate cuts, just at the time that the market is pricing in more easing for the Fed. The yield spreads are shifting against the dollar here. This is not about the structure of dollar dominance. It's not even close. The dollar faces no serious challenge externally to its preeminent currency of commerce status. The challenge is internal. If anybody were to go, for example, and mess with the Fed's independence in policymaking, that would be a catastrophe. But it doesn't look like that's what's going to happen here. In fact, if the Fed embraces easing, then the White House will love them better. So, and here they might actually have a reason to do it. So the conflict is internal for the dollar. The euro has probably a favorable economic tailwind if all of these military spending plans come to pass, and probably has a bigger run. What I've done, and unfortunately we can't do it through the futures very cleanly, but what I've done in spot over the past 2 days is bought the euro against the Swiss franc, expecting that the Swiss franc is going to have low interest rates, as Switzerland does for a very long time, and they're not going to rearm, given who they are, but Europe is. And so whatever happens in the US euro exchange rate, the euro Swiss exchange rate probably has a lot more legs to go structurally for a long time. So I think this is a yields thing. This is not a global leadership change.
Not a global leadership change. Hopefully not, because that would imperil other things, like the long-term favor of U.S. equity markets, because we need people's money coming in from abroad to the center of the empire to sustain our valuations, and that doesn't seem like that's going to be happening. Okay, where does that leave us?
It's going to be a rough several years for the dollar, I suspect.
That puts us in the spot where we should talk about what happened in the sectors before we jump over to bonds, ultimately, because yields, they do make their way higher over the course of today's session. And you're seeing that ultimately they're moving higher as we get some of this news that these steel and aluminum tariffs, which were on this morning, now they're off again. We'll have the Ontario Premier down in D.C. on Thursday to negotiate and start queuing up a USMCA negotiation, which ultimately, Ilya, I feel like this has been why they're doing this all, as you have dutifully noted multiple times. Among our ETF trackers here today, 25 names watched, 5 in the green, led by GDXJ, the junior gold miners. GDXJ, GDX are the top 2 performing ETFs, followed by XME, as the metals continue to press to the upside. Other than that, you're going to find only one non-commodity related ETF in the top performers, and that's XTL. Telecoms are up a whopping 0.09%. Otherwise, it's a sea of red across the board. Red wave, if you will, down 2.44%. XHB, ITV down 2.19%. And XRT, and this was a chart that I had up earlier, which is why we're rounding out to it. This is down 2.07%. Now, XRT was a leader to the downside over the course of late February and was one of those red flags. I go, hold on a second, how come the growthy stuff, consumer discretionary, retail, like why technology, why is that leading right now on the way lower when the top performers are healthcare and defensive names like utilities? XRT about a week ago stopped falling and the rest of the market played catch up. Now, why do we focus on XRT? For those that are new here, XRT, the retail ETF, has historically shown the greatest sensitivity when recession conditions set into the market. Different sectors display different degrees of panic and fear depending upon what the influence is. But when you have a growth or recession related influence in the market, XRT tends to be, prime example of where to look. Now, of course, there's the caveats. There's, survivorship bias. The stocks in XRT today are not the same ones that were there a year ago or 5 years ago. I got it. But the characteristics of those companies are all the same, which is to say that they are sensitive to consumption trends. So I think it's really notable here that while the market is trying to stage a recovery today, the growth sectors, XRT down 2.1%, XLY off another 0.96%, even with Tesla, one of its largest components, posting a rally of 3% plus today. There is not really anything to like on a sector rotation now still that gives you any semblance of hope that the green shoots are here. And I say that because we even see that financials, the darling that was leading to the upside, which coming into this month was hitting a new all-time high, this has too fallen back down to the levels where it carved out its yearly lows. And that's not great because, again, banks, discretionary, retail, tech, those are all the early inning bull cycle stuff that you want to see at the leader of the pack. And right now they are on the downside. So caution, I think, is the flavor of the day today. Still, despite this soft footing heading into CPI tomorrow.
I mean, the other side of it would be if you believe what I believe, which is that it's a confidence discount, a counterparty confidence discount. You could get a snapback reversal if there's an extremely confidence-inspiring event. This could be the opportunity. This could be the ultimate buying of the ultimate dip.
Okay, but if trust is gained in drops and lost in buckets.
Oh, no, I understand. I mean, it would take a magic act. I still think they have the ability to do one major statement just because everybody so desperately wants to believe that they're reliable. Like everybody's going to do everything they can to be like, help me help you to believe you. Because everybody has an incentive for a more stable, for the largest counterparty in the world to be reliable.
Yes. I mean, I ultimately think this is why they want a CPI number that lets them believe. I think they want to believe. I mean, we talk about all the time, and I say this having been bearish for a long time. We talk about this constantly, that the stock market is biased, that it likes going higher, that it doesn't like going down, and does so begrudgingly. Because so many of the market's structural participants never, ever sell. The biggest holders of U.S. equity are huge institutions like pensions and endowments that never go short, that never really sell. And so the market has a tilt. And I think the market then wants an excuse. This doesn't mean that the trend has changed. I do not think the trend is turning higher. But I do think we're getting to a place where maybe it's time for a retracement, and what the CPI number allows you to do is to hope a little hope.
Oh, God, hope. Listen, as a New York Mets fan, a New York Jets fan, having reviewed the hope strategy for rooting for those teams, I can tell you it's absolute dog shit.
And this is why I'm waiting to be a seller, because I'm not hoping. I just want better pricing. I'm just waiting for the little hope to light a little glimmer in the bull's eyes so that I can hit him over the head again.
Could I just point out the worst thing that's happened among a litany of terrible things recently? Just because
what a lead-in.
First pipe in the house, like mom's hospitalized, car accident, right? Like a whole bunch of things. The Jets had to sign that loser quarterback from the Chicago Bears. The loser quarterback, Justin Fields, that has made all the Bears fans in the office miserable for years. Do you know how relieved they are that he's a New York Jet now? How many text messages, apologies I've received from people in the production team? Like Josh messaged me.
But how
like,
about a little hope for this E-mini? A little hopeful reversal.
All right, I'll give you a little hope here, Dylan. Let's look at the 1 hour chart. Let's give some
reason to believe.
All right, reason to believe. The swing lows that we have on the 7th from Friday. Friday was the 7th, right? The swing lows that we have on Friday coming at 56.73. If we punch through 56.73 and we see the VIX drop below those swing highs from Friday, right? We can't. You see that we try to do it today. We can't really do it on a closing basis. So if we can get down below, we'll call it 26. If we're down below 26 and we're back above 56.73, you have a tradable low to work with. And then I'm not going to wait for a wipeout of another 3 to 4%. Then I have this zone here where we have the swings of the series of lower highs and lower lows, then potentially breaking. Elliot, I think that would be then looking for a rally up to maybe 57.75, 5,800, this box. And then that would be a great place to re-enter short, quite frankly. That's then a much more moderated place in the downtrend. You talk about the daily time frame.
I mean,
that's up to
even
here.
Even something approaching there, yeah. Like right where you have that green hammer at the bottom that you ultimately break through. Even if you get sort of in the vicinity of its body, somewhere toward let's call it 5,700, I'm already at that point starting to go, okay, show me an exhaustion candle on a 4 or an 8 hour chart.
Okay.
Like right there. And I'm good.
The metals today did really well. Silver's up 2.61%. That's nice to see. One thing that's working today. Gold also up today a little bit here. Guys, are we just biding our time now in these metals before the breakout? If the dollar is going to be less in demand as a safe haven, if the role of the U.S. economy is in question, if the hegemony is falling apart, Dylan, why shouldn't gold be at the top of our list for things to have in our pocket just in case stuff hits the fan?
The only reason it wouldn't be is because you were into crypto for some reason. But the interesting thing is at this exact moment, I believe crypto has been in the risk off. Like people have been running away from it.
Well, so
the crypto is sort of roped up in President Fruitcake. And so the whole thing, like they did that big crypto summit last week, hoping to make this whole thing work out. But they just all got in bed together with the big fruit, and now the whole thing stinks. So if anything, I think it's very good for gold and silver. It would even make me wonder about oil, but for the slowdown, but after the selling in oil. But for sure, good time. I had that silver call from the past. Gold, I never have anything because I don't know I have no reason. I can't figure it out. But silver, I've got, and it makes sense to me. Gold's worth some attention.
I saw an excellent tweet today talking about the direction of U.S. fiscal policy. It's like we went from, the U.S. economy needed surgery, and we went from a doctor who was asleep half the time in the surgery room to a doctor who only plays a surgeon on TV. And so in that world, do you want to own more gold or silver? I think I will continue to press the longs here. This is the long delta exposure that I'm comfortable with right now. Ilya, I know it's been a whippy range here, and we're still sitting in the middle of it. But from my eye, this is starting to look more like a triangle after a recent triangle, bullish continuation following bullish continuation. I think we're going to see 3K in the next before the end of March.
Very possible. I'm waiting to get long. I am bullish, and it's not because the hegemon is ending or because the dollar is losing its safe haven status, which it's not. Obviously, you can see it as a matter of fact, because when you look at the most recent aggression in the selling, which currencies does the dollar do better against? It does better against the Aussie. It does better against the Canadian dollar, where the liquidation is greatest, where the sensitivity to risk is greatest. Where is it doing the worst? Against the euro, which has the lowest yields, because it's a euro-specific story. It's a pound-specific story, and it's about yield spreads. So the dollar is not at all losing its ultimate liquidity haven status. That's not why I'm looking long gold. The reason I'm looking long gold is because of, again, yields. If we're going to be cutting interest rates in a hurry, that is something that's going to flatter an asset that yields nothing.
Dylan, let me ask you, you used to work there. Is this the kind of environment where the CNBC Markets in Turmoil special would air?
That is a disingenuous question.
No, it is not. That is very serious.
That Chiron is about as good an indicator as an economist
backhanded indictment of me.
No, because we got 10% down from the highs today in the S&P. So like, is there a numerical threshold? Listen, since 2010, CNBC has aired the Markets in Turmoil special like 66 times.
And it always works.
And if you held for a year, your average return is plus 40%. So yes,
it's the Chiron, baby. Come on.
Fingers crossed. Fingers crossed.
No, but it's like, if you've been on that side of the business, so like thinking about this, if you were in the production booth or you were on TV, would what you've seen recently, would this say, you know what, we've got to run this market special tonight?
No.
Why not?
Because it didn't. You got fast money. You have all your shows doing it. You're a little bit of a joke now, because of these jokers like you saying things about us. And then, so you wait it out. You're like, let's see. And then if you want to do it, you do it Friday. You do a weird, like if it was really selling, if it was plastered down again today, limit down, getting jacked, like you get 3 days in a row where it's, it's always just getting blasted. I would say you need 3 super blasters in a row.
Super blasters. Love that.
Yeah. Just
seriously.
Like, down, big down.
Yes, big down.
Big. That's gonna
caveman brain understand.
Not good. Less meat on the fire. I would say right now you're tracking for maybe a Friday.
So if CNBC does the wicked thing,
if I go belly up tomorrow, I'll get right in there.
Okay, but if CNBC does something wicked, like put the Markets in Turmoil special out on a Friday afternoon at like 4:00, I guess I don't have enough liquidity in crypto trading accounts to get levered long Bitcoin over the weekend, because I legitimately think there's enough people who look at something like that and are waiting for that headline to appear. And I'm just asking for a friend. Like I
agree.
I just want to know when the panic's really there.
But
right?
How much is the S&P down today? It's nothing. But
we're down 10% in less than a month.
I know. But it's listen, it's okay. This is like we book a big end of week. We get some Treasury watchers. We get some Fed watchers. See if you can book Jamie Dimon as a live guest.
Okay. All right. Like Larry Summers up there.
Just talk it out on Friday. What are we doing?
Okay.
But I may not be able to wait until Friday. If I get beat up tomorrow, if I get my teeth kicked in tomorrow, I might have to go with an audible and spring it tomorrow night. But
Well, certainly trade talks are going to be picking up here the next few days. Canadian representatives in the U.S. on Thursday. We have a Russia-Ukraine ceasefire potential deal coming through today. The U.S. resuming its intelligence sharing with Kyiv as a result of this ceasefire arrangement between the U.S. and Ukraine. Now we just have to wait for Russia to sign on to it, which if you read any of the reporting and the intelligence that's been shared and leaked publicly, which again, that's all part of a narrative building, so take it with a grain of salt. Information that's released from intelligence agencies is done so very selectively to help shape narrative. It would stand to reason that they don't think Russia's going to accept the terms of this ceasefire, because it's nothing that Russia wants. It's just basically freeze everything where it is right now, no permanent territory shift. Oil gets a little bit of a bounce today. We're starting to get a little bit more vol again. Whenever we get above a 30 IVR, my interest is peaked a little bit. Certainly around this area, it would look like it's a place to sell puts. I just think the context of the world's largest economy going through a growth scare is not something that oil is going to ignore. And in fact, if we think about the rolling correlations between oil yields, stocks in recent sessions, sorry, someone just sent a screenshot of you and me, Dylan, over on Twitter talking about the Jets, which is quite funny. Take a look at it. it feels like you could get another washout here too. And the correlation between these, I put this out last night. That's where I was going before I saw this funny tweet. The WTI SPOOS correlation, the SPOOS 10-year yield correlation, both of those are north of 0.9 right now. So oil going down with stocks. Treasury yields going down with stocks. Oil going down, well, that's potentially a reason why Treasury yields are going down. The growth and inflation premium is coming out of assets right now. And it's a warning sign. So 31.4 IVR, I'm still not going to stand in front of this. I'd like more volatility to take that risk. Maybe we get a turn here through the 1 week, and that gives us a little bit more technical confidence to work around. Maybe, the 63, 64 put spread. But I need a little bit more vol to draw my attention here, particularly when I'm waiting for the opportunity to catch the turn in stocks if and when it occurs. 100 points from here if it occurs here. Other than that, guys, I got nothing left here to say. Dylan, you are clearly the most stylish one among us. I really appreciate your jacket. It's a beautiful day here in New York. You look quite appropriately pressed. So you have earned the last word because I'm still wearing the 3/4 zip collection.
I'm just saying, I think for me, we all would just love to see the Treasury Secretary, the Commerce Secretary, and the President issue a written statement and back it up with a press conference.
Show me the money, says Dylan Radigan.
Stabilize the other side of the table here. What are we doing? Why?
Because overtime is now out of time for today. We'll be back tomorrow, same time, same place, as always, right after last call, Monday through Thursday, 4 p.m. Eastern, 3 Central. So for Dylan Radigan in New York, I've been Chris Vecchio in New York, alongside Ilya Sisbevak in San Francisco. He's going to be coming back in a little bit, so we're going to take a quick break here. But up next, we have Ilya Sisbevak, Macro Money on Tasty Live.
See you there, everybody.
Okay.
I think you got me.
Yeah.
Oh, I don't know you that well. Short put?
Short putty.
Come on.
For myself, I wrote Strangle. For him, I wrote ratio spread. Strangle. Strangle ratio spread. Strangle ratio spread.
That makes sense.
Sure.
So Liz says, you say your favorite strategy is a zebra, and you got it right. And
Yes.
you said Jenny's was a jade lizard, but Jenny said hers is short.
Bullshit!
That's it. I'm telling the truth. Mine is, I might be.
Oh, there's a short put component to the jade lizard. By default, I'm accepting this.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
If you missed the live show, here's our cherry on top.
Did I see a birthing room?
Birthing room?
Oh, stop. Please
behind
stop.
JJ, is there a birthing room?
That's not a birthing room, you genius. Okay. Oh my God. Yeah, we have a whole birthing room. It's called. Oh my God, I think it's called a lactation room. Okay.
No, we have a birthing room. Hey, Tasty, we're delivering babies. Another day, another sell-off for the stock markets, but are we finally getting to some level of exhaustion? Perhaps as event risk starts to beckon and loom ahead. This is Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And we're going to have a look here at the incoming macro event risk now in front of markets in the next 24 hours and consider what may be the next step here. And if, in fact, these markets are finally starting to get a little bit more of a reason, at least, to pause and think. And of course, before we get into the meat here, so that we're not talking out of turn, let's quickly consider where we find ourselves. This is the S&P 500, obviously. We're looking at a dramatic sell-off now that has erased just about half of the rally from those August lows. The last time we had any kind of a reasonable sized sell-off here was back from about the mid-year through the beginning of August last year. This then gave us this rally, and we're rapidly erasing it here since late February. The sell-off follows first and foremost this U.S. CPI or PMI rather data, the Purchasing Manager report from S&P Global. They tell us as of February the 21st, and if you want to go and play the home game, just go ahead and take a look at where that date is on any given asset chart that you like. Almost all of them will have an inflection point right there if you're looking at anything with any sort of market-wide significance and decent liquidity. And so the message clearly starts to shift right there. And
you can see why. As ever, this data operates around a center line at 50. That's neither growth nor contraction in the given sectors that you're looking at. Above 50 is growth. Below 50, the sector activity is shrinking. And the further you go above 50, the faster the expansion. The further you go below 50, the faster the contraction. So what we see here is a little bit of a pickup in manufacturing, perhaps for all the wrong reasons. The reporting suggests it is probably the temporary influence of front-running any potential tariffs that could be coming and have been on again, off again for weeks. The flip side of that uncertainty has been a rapid deceleration in the service sector. That, of course, a much larger part of the economy than manufacturing. And so we can see the composite index that takes in both has been closely tracking the services side. And when that gave way in January and then showed further strain in February, this rapid move toward almost no growth at all, almost approaching neutral here on the services side, that clearly took down the aggregate. And now we're looking at a very dramatic slowdown in U.S. economic activity growth. Of course, this is just one data point, but if we look at a model that takes in the ongoing flow of U.S. economic data, this is the Atlanta Fed's GDP Now tracker, we can see that their estimate, their running estimate for first quarter GDP growth has absolutely fallen off a cliff from this sort of mid-February normal. And again, you can see that this starts to happen in late February. Once you sort of establish this sort of initial normalization to right around 2.1, maybe 2.2%, you've now utterly collapsed, expecting a decline of between 2 and 3%. Now, of course, we're quite a ways away from getting this data actually published, so this is going to shift around still. But what this tells us, never mind the actual level of growth, what this tells us is the direction that the data fed into this model has been going. The fact that the model has so dramatically collapsed tells you that the economic inputs going into it have been abysmal. And of course, that validates what the PMIs showed us early on. Not surprisingly, the result has been a dramatic dovish shift in Fed policy expectations. You can see it clear as day right here. In the green is the outlook for this year as priced into Fed funds futures. In the yellow next year. In the orange is the sum of the two. And you can see the implied Fed policy path from late February through to now has seen a dramatic dovish revision. Just a month ago, the markets were looking for about 50 basis points in cumulative easing. Now, the market is priced for 121 basis points in cuts through the end of next year, of which 3 are on the menu for this year. You can see 72 basis points here, almost the full 75. And for next year, we're only a basis point shy, 49 basis points on the menu. A full 2 cuts would be 50. So we're looking at now 5 cuts on the board, most of them this year, slightly so, a 3-2 spread. So the market is looking for urgent policy support and is starting to reckon that more of it ought to come than even just a month ago looked reasonable. Indeed, the Fed's own forecast back in December called for only 100 basis points. So the markets have now, having been a little bit more hawkish than the Fed, flipped to the other side of the ledger. And they're now screaming at the central bank that they need policy support. If we look at the timing here, we can see that whereas in September was the last time that the Fed was very dovish, and then we saw that over the course of the coming months, the relatively warm economy toward the end of last year in the fourth quarter saw a revision in expectations, we then started to see this kind of clustering in this area across November, December, and even the January FOMC meeting. Well, if we look at the current curve ahead of what's on the menu here for the FOMC announcement next week, we are now the most dovish in policy expectations that we've seen since September. So the market's clearly here starting to drift in a more stimulus-oriented direction. We can see current rates at 4.38, seen, that's of course the median between the Fed's target of 4.25 to 4.5 range. As we see this evolve, we see the Fed seen holding in March, holding in April. We start to lean in the direction of easing by June, and in July, that easing kicks off. So the first rate cut in this year's cycle seen somewhere around mid-year. The response from markets, of course, has been unmistakable. We can see that what the growth scare has done is pulled down yields, both the 10 and the 2-year here. The yield curve has narrowly widened just a bit, mostly because more and more of the easing is heading into both sides of the spectrum, and the immediacy of what the market is calling for, this more pronounced build out at the outlook for this year. That's given us a little bit of a steeper curve as the front end starts to price in stimulus that comes sooner. We've also, of course, seen a dramatic decline in the U.S. dollar in the green here as yield differentials shift against it with this pricing of more stimulus. And inflation expectations, as they are priced into the bond market, have started to tilt down a bit. That, of course, would be consistent with some sort of an economic downturn. And indeed, it is inflation that we are concerned with. Over the next 24 hours, we're going to get an update to CPI figures. Expectation here that a little bit of a cooling is on the menu. Headline number expected to come in from 3% to 2.9%. That would be in line with December's reading, so essentially erasing the uptick that we saw from 2.9 to 3 in January. The same thing seen for the core, coming in from 3.3 to 3.2% year on year. Again, reversing January's uptick and coming back to where we were in December. Now, if we look at the Cleveland Fed's nowcast modeling of CPI, we can see that realized results most recently here ran a little bit hotter than expected. But if we look at what we're anticipating now for the coming month, it looks like not much of a change in the core, but a little bit softer in the headline. So the modeling here seems to agree that we are, in fact, heading toward some amount of disinflation. So at least directionally, seems like we might actually move as expectations are suggesting. And although we overshot expectations in the last month, why we overshot them is perhaps telling. If we look at the makeup of the data, that tells an interesting story, and we'll get there in just a moment. But before we do, the overall tenor of U.S. economic data against the backdrop here is, of course, pointing to deterioration. Not surprising. In fact, this was one of the early indicators that we cited here on Macro Money ahead of those PMI numbers, saying U.S. economic data is starting to tilt toward disappointment. That's what we need to be looking for. And of course, when those disappointments started to roll out with the PMI data is when we saw the markets roll over. This is why this indicator is so very useful. We can see here that already from the middle of November, U.S. economic data starts to deteriorate relative to forecasts. This is an index from Citigroup that measures not the absolute outcomes, but where those outcomes register compared with median economist forecasts. And if, in fact, a move is particularly market moving, that increases its weight in the indexing to make this indicator. So you get a real good sense not only for the dynamics of the data, but also for how responsive the markets are to those dynamics. So you start to see this deterioration. And of course, most recently, what you get is a move through this zero line, implying that U.S. economic data, any given piece of U.S. economic data, now tends to disappoint, or at least has a bias toward disappointment relative to expectations. And it's simple to conclude why. If the economy is structurally weaker than analysts' models heretofore anticipated, those models are going to need some of their assumptions revised, some of their settings retuned. And since economic data tends to operate on about a month cycle for most of the data, some of it is weekly, like jobless claims. Some of it is quarterly, like the numbers on GDP. But most data runs on a monthly cycle. And it typically takes a month or two for analysts to start to take enough inputs to adjust the modeling. And until then, you still have this disconnect between reality and what that modeling gives you as forecasts ahead of economic releases. So what you're seeing here is underperformance relative to expectations that then sets the stage for more underperformance relative to expectations until analysts revise these models. And of course, we'll see that in this index too, as scope for downside surprises fades. But for now, the path of least resistance seems to be to still lower CPI numbers than is already anticipated. Now, if you were to get that, what the markets might conclude is that the Fed has more room to ease policy, and that would help to validate some of this more dovish repositioning that we've seen recently. But for its part, the Fed has been interestingly resistant. In fact, we just saw on Friday that in a speech that we're supposed to update everyone on policy expectations, Fed Chair Powell struck a much less dovish tone than all of this fire and fury in the markets might imply, saying that the central bank does not need to be in a hurry to adjust interest rates, and that while uncertainty around the Trump administration policies and their economic effects remains high, the U.S. economy is in a good place nevertheless, and that the Fed is well positioned to wait for greater clarity, because the net effect of trade, immigration, and fiscal and regulation policy is still unknown, and there's a need to get a clearer read on that before the Fed acts. Helpfully, according to Powell, the Fed has room to sit and wait. There isn't urgency, apparently, in his mind. And so the question then becomes, well, you get a soft CPI number, but the Fed doesn't want to act. What does that mean? Well, to some extent, the Fed might be forgiven for being, as it typically is, reactive. If we look at the annualized pace of inflation change as a gauge of recent dynamics, looking at the headline, that's the blue and the red bars here, you can see the 3-month annualized rate is accelerating. The 6-month annualized rate is accelerating. If we look at the core, which is what the Fed frankly cares the most about, that's the bit that excludes volatile food and energy prices, over which the Fed really doesn't have much agency. They're set in global markets. And in any case, as we saw from these breakdowns here, almost everything that's left of inflation sits within core services. If, in fact, the Fed were to get what it needs, it would need the core to move. We can see here the 3-month rate in the core starting to tick up again. That's the yellow bars here, after a little bit of a cool down in December. And of course, the 6-month rate has been marching higher since essentially November. Higher in November than October, higher again in December, higher again in January. So the dynamics here are understandably worrying for the Fed, that wants to still get to that 2% inflation target and doesn't want to cut too soon. In fact, despite economic sluggishness, what we just got from the latest numbers from the Institute of Supply Management's version of the PMIs is another strong uptick on the pricing side. So inflation against this backdrop perhaps not quite as vanquished as the Fed would need in order to really push for more stimulus in the near term. So you get this soft CPI number, and the Fed is perhaps reasonably resistant, perhaps resistant in a way that's understandable. What the delta is between reasonable and understandable, we'll have to wait and see. But if the market reckons that the Fed isn't going to jump the gun here and immediately readjust, even on a soft CPI number, well, then the speculative outlet may well come for these 2026 policy expectations. And so you would expect then that the market would say, right, the Fed is going to drag its feet. That means it's going to have to do more later, because it'll be playing catch up to an economic downturn that is already starting to get away from them. That would mean that more rate cuts need to happen in 2026. We, of course, saw this movie last year. You can see here the market starts to really build out 2025 rate cut expectations when the Fed is dragging its feet on cutting into what looks like an economic downturn at the end of the second quarter last year. Not surprisingly, again, let's go back to this economic surprise index. Here's that turn right here. So when U.S. economic data starts to do this from mid-April going into July and August, you get this from mid-April going into July and August. And then once the economy starts to improve, late August into the Fed's September announcement and into this more recent downturn in November, you can see policy expectations start to get less dovish. And in fact, this is the Fed's peak for its dovish stance in September. And of course, by then, you're already seeing improvement here. The bottom's here late August. So when the market gets an ultra dovish Fed, they go the other way and say, no, that's way too dovish. And so by November, we're already here. If you get a soft CPI number and the Fed is resistant, then you're back at the start of a process that's similar. And this would tell you that the yellow area here has room to build out further and for this wedge to open wider as the market anticipates more Fed policy support downwind. In practice, that speaks to probably a weaker dollar, probably lower yields. The real question, of course, is what does this mean for stock markets? Whether this now here ends up as a concern, or if the markets are prepared to take some heart in more stimulus expectations. And it really seems to come down to the internals. Now, we just mentioned we had that upswing in inflation in January, but if we looked under the surface, it came not from the place where you'd want to see it. It came from the good side of the ledger, going from a net negative contribution to inflation to a fractionally positive one. It came from less of a negative input from the energy side. But the part where most of the growth lives, as we can clearly see from growth here being powered by services, even as manufacturing gets anemic, as we can see where all of the pricing impetus is in CPI. It's all in services. And what we saw in January was that despite an uptick at the headline and the core, the place where growth lives weakened. So if we see something similar in this data where the core services component of CPI continues to come undone, it wouldn't be shocking for the markets to say, well, the Fed isn't coming to rescue us, risk off. But to the extent that the market has already been pricing in this story, what a soft CPI number may do is perhaps tell the markets, well, we already know there's a problem, and the soft CPI number maybe gives the Fed an outlet to promise us a bit more by way of support next week. So maybe we get a bounce into here, somewhere within the vicinity of the 5,700 level. But to the extent that the Fed believes what it is saying, an FOMC announcement may well disappoint such hopes. And so any bounce from here looks more like an opportunity to sell at better levels into a downtrend that's building rather than a true buying opportunity. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am likewise on with Chris for Futures Power Hour Mondays and Fridays. On in just 30 minutes time from now, as I am every Tuesday with Victor Jones for The Price of Truth. Definitely come and join for that. It'll be a spirited discussion, no doubt. Back with Victor and Tom for First Call on Sundays, writing for the news and insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com. Oh, God.
Wheel? Can you give us a suggestion?
How many astrological signs do you know? Like, you don't know any?
No.
By passive elimination, you're not a Sagittarius. You're not an Aries.
Okay, if I'm not a Sagittarius, you're not a Pisces.
All right.
Okay, let's see.
I'm a Gemini.
Yeah.
July 12th.
March 6th.
He's a Cancer, you're a Pisces.
I know what I am. I didn't know that he was Cancer. I didn't even really know Cancer was one of them.
Because you literally said that back, you're a Cancer.
That's for different reasons.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
If you have any questions, feel free to toss them in the chat.
On today's Trader Taste Test, we are going to the first Chicago location of Voodoo Donuts. Let's go. Okay, you guys.
Voodoo.
So we got a dozen of the classic Voodoo, and then a dozen of the Voodoo dozen. So.
These are basic.
Basic.
This one.
Okay, that's gonna be your taste test.
Good.
How many stars do you give it?
3 1/4. Yeah, see, this doesn't work for me.
This is for children. That's why there's cereal on top of it. This is my jam. Nice old school donut.
Old school buttermilk.
All right.
It's not a crow.
Okay, what do you rate it?
3.25.
That's sweet.
3 point. I know, because I've trained him how to be a market maker. Now we load up the flotilla.
What is going on, everybody, and welcome back to the segment. We're back with Gus. Gus, we have had a pretty beaten down market. We'll get into all of that, but it is Tuesday. How are we doing today, brother? What's new?
I'm doing well. Feeling good. It's a good hair day. I always bitch when it's a bad hair day. I better acknowledge when I'm having a good one as well. Yeah, markets. Man, we just keep making new lows. Looked like we were going to recover for a moment today. Worked back down just a little bit. But I don't know. I feel like we got to be nearing the bottom. I feel more strongly today than I have that we're getting close to the bottom here. Seems like the bears are running out of steam. What do you think?
Yeah, no, I mean, it's starting to look like it. I mean, that's what I'm hoping. I mean, we'll get into some of these positions here in a little bit. I mean, we'll see how the rest of the week plays out. I think it's kind of been the same story for almost 2 weeks now. But I know we've got a lot of like economic news. Not something I pay, too much attention to, but definitely a lot of these economic factors probably causing a shift in sentiment a little bit. I know we got a lot of tariff news. Whenever we have, for example, when CPI really started to pop off, like CPI was one of those economic news or economic data points that, the whole market was just paying attention to. And I learned a ton about interest rates, even more so whenever CPI was just popping off. And it looks like now, right? I understand tariffs, but it almost seems like I'm getting a deep dive on tariffs now. So it's just kind of funny. Whatever's most relevant, I kind of get more of a deeper economic lesson on too. So that's kind of been one thing that's been on my mind. I've been learning a lot more about tariffs than just the regular gift of tariffs. So I know there's been a lot of conversation around that. I think there's just a lot of uncertainty in the market. And I think the volatility index really reflects that. So no, it's just been a learning process. I think, just being in the market year after year after year, every year is just a learning lesson. So yeah, volatility is up a little bit, so I'm not going to complain too much. But if I had to wrap it up into a few sentences, that's what it would be. It's just interesting, very interesting. And I'm hoping the bottom is in for the week at least. I'm hoping we get some type of pop. I'm long delta on some of these positions, Gus, but I don't know what your thoughts on the current environment.
Yeah, I think interesting is a good way to put it. And though my portfolio is hurting, dare I say fun. I think this increase in volatility is fun and trying to wait and maybe catch this falling knife, which I've tried to do 2 or 3 times unsuccessfully already, fortunately on longer time frames. But yeah, I think that there is a fun aspect to it, and there's as a trader, there's fun in the unknown. And right now in this administration, on any given day, any given thing can happen. These news cycles come out and they swing the market one way or the other. You can be having a great day and more tariffs come out, or we're going to pause these tariffs, or we're going to take away this 25% or whatever it may be. And it's fun, and you have to be quick on your feet and, be able to react to these moves. And it's making me want to be a day trader again. I'm getting that itch. I had,
come on down to the dark side.
I had made my losses. I thought I was comfortable with these swings, but now the volatility's back, and man, I just want to get in and out every day. So that's really been my more overarching sentiment. I'll also throw out a funny anecdote from my day today. I'm always talking. Okay. We talk pretty much every stream about Tesla and how Tesla looks. And I always mention that Tesla is a no trade for me. I want nothing to do with it. And this morning, my own mother texts me and says, "You think Tesla's a buy?" I said, "Mom, ask me about any other stock in the market, please. There's no way you just text me about Tesla."
Send her the list. Send her the list.
I did. I should. I should be like, don't text me about these stocks. But I gave her the answer that I would give to anybody, which is, I don't know. I really don't know. I don't know what to make of Tesla. The sales numbers have been weak. Promises have yet to be fulfilled, but there's no reason that those promises can't be fulfilled moving forward. There's no reason the sales numbers can't improve. And when you look at Tesla in the macro, all we've done is given back the election run-up. We're just at late October 24 levels. So I don't know that it's necessarily too scary of a spot.
Yeah, I mean, I'm not the biggest fan of Tesla. It's definitely not one of my go-to underlyings either, but I am long-term bullish on Tesla. If you're long-term, the 200s, the low 200s, that's not a bad spot to be whenever trying to get involved here, in my opinion, for the long term. So that's kind of my thoughts on Tesla. I don't trade it too much.
Yeah, that's
kind of piggybacking on.
That's what I told her. As I said, I think at 200, this would be irresistible to me. I might have to get involved at that time. But right now, it's scary. And I agree. In the macro, in the 5-10 year time frame, I think Tesla's moving up. I think the shift to EVs is only going to become more pronounced, and I think that can only, rising tide raises all boats, as my father says all the time.
I like that.
But at the same time, though, in the more micro context, even in the 6 month, 1 year type of micro context, I don't know. It might be a little rocky. We'll see. But the question that you're really asking is this the best buy spot that I could possibly get? Is this the bottom? I don't know the answer to that, but I do think this is a good buy spot regardless.
I'm going to piggyback off of that opinion. I'm going to also piggyback off of what you said a few minutes ago about how the volatility is a little exciting, and we'll get into that a little bit more here in a little bit, but Tesla's trading at about $230. We're zooming out here on the 10-year weekly chart right here, and this is what it's looking like. So, Tesla's looking a lot better here than it was looking at over here at 425. But it's just funny. We naturally want to lick our chops at 425, but not at 230. You know what I mean? In just a very short amount of time too. So Tesla's one I'll be looking at. I know it's not on my no trade list, but whenever we're trading at these prices and this type of elevated volatility, I don't know if I'm going to be able to help myself. So, I know these are $5 wides on the in the April cycle. So we can go a little further out, maybe near that expected move. Maybe volatility increases a little bit. Maybe we'll do something in Tesla. But other than that, if I'm a long-term investor, this is looking a lot more attractive to me over the last couple of weeks. What did you had mentioned before that? Volatility, right? Volatility is elevated. I think it is kind of exciting too. I know I had tweeted the other day. Once things finally settle, I think premium sellers are going to have a field day. I know there were so many underlines where like, this looks attractive, but I don't really like the premium on this. And this is a first shakeup, a real shakeup we've gotten in a while in the market. So I'm excited. I'm looking forward to it. One thing that's going to be top of mind for me is to kind of get some long delta on in tandem, some short delta on in tandem with all the long delta I have on too. But I'm excited for the opportunity, brother. So we got a lot of new things happening in the market, a lot of volatility. We'll see what we get. Hopefully we pull through, and hopefully, you put a bid on some of these positions for me. I'm down on Meta, down on QQQ, sold it out of the money put spread on Meta. I know we talked about this one, I think last week. We're down a little bit on that one, defined risk. So we're going to just wait out the 2 more weeks until we look to manage this around 21 days to expiration. The market looks like it's trying to find maybe a short-term bottom. Maybe if we at least go range bound a little bit, just enough of the downside, just temporarily pause this market for me. Let's just chop around a little bit, maybe a little pop to the upside, something. But I do have this Meta position on still, 37 days to expiration. QQQ, very similar position. Sold it out of the money put spread, same exact cycle. Got about a couple weeks until we manage that one. It's going to be a waiting game on those ones. See if we can get some premium, some volatility sucked out of those. But that's been my main watch, brother. What else have you been looking at? What you got any thoughts on?
Yeah, positions? I haven't. I didn't open or close any positions today. I've been passive. I'm getting into the territory where I don't know, like I have this NVIDIA position that's on the April 17th cycle. My April 17th positions are starting to get maybe dicey. We're like 2-3 bad days away from these all of a sudden needing some sort of management. But to this point, everything is holding pretty strong. Everything is above and below and inside where I need it. So I'm not particularly concerned about anything I have going on in my portfolio, despite those, right? What's up?
Yeah. You have time on those positions too,
yes.
right?
Lots of time. Yeah. And honestly, as crazy as it sounds, I might just continue to get long delta against this move. It's even if we only catch a brief pop for a week, there is a chance that I could correctly time that and hedge myself out of some of these other positions that are a little bit longer time frame. And even if that pop doesn't come and it takes another 3 weeks or a month before we see anything else, having this, big bankroll of positions that are 100 DTE or longer with some buying power left over doesn't seem like the worst spot in the world to be. I just worry because that's what I've been doing is just slowly averaging in on different, very well-known positions, your IWM, your QQQ, I got Amazon, I got Google, I got NVIDIA. I've been slowly taking these things as the market continues to work down. And I think that I'm going to continue to do so, but I also don't want to wind up overexposed should this turn into a recessionary sort of thing, and this is going to be a months-long process. Because if we get another month of red, I am cooked. Yeah. I am big cooked. Yeah. So I'm walking the tightrope, but I am holding faith that we have to at least get a bounce soon that will, let me lick my wounds a little bit here.
Yeah, no, I mean, I hear you. I think I'm kind of in the same boat there too. I mean, I know I only have Meta and QQQ on right now, but I think it is tempting to, sell some more, selling more puts in general, no matter what that is. I think just the long delta looks really attractive to a lot of people right now. And should that be concerning? Maybe a little bit. I don't know. It's looking the long is looking so obvious now. I'm like, is this looking too obvious? Like, another leg down would really hurt some of these positions. So I hear you completely on that. But NVIDIA, that's another volatile one. I forget you were still trading that one. NVIDIA is one I'll look at. I know SMCI, or was it SMCI? Was it SMCI? Yeah, SMCI was one that was kind of going rampant the other day. But I know SMCI or NVIDIA, I'd probably put on one of those at a time. But I'm looking more NVIDIA. But again, it's like if we trade NVIDIA, I got to look out for that QQQ and Meta position, because if those are up on the day, most likely NVIDIA is going to be up on the day too. So I'll keep an eye on that. Lobos over here saying if Tesla delivers Robotaxi and iRobot, excuse me, it could be a buy right now with Europe and China. Walking away looks like a $10 stock. Robotaxi, thoughts on Robotaxi? I think we touched on that, Gus.
Yeah, we have.
You hopping at one of those?
We have. Oh, am I like my personal thoughts?
What do you
I don't know. Honestly, go ahead.
I was just going to say quickly, back in the day, it was very suspicious to put your credit card in the internet, right? Early 2010s, very suspicious. Airbnb, what do you mean I can stay in somebody's house on their? That sounds risky. That sounds weird. It's normal now. Uber, what do you mean someone can pick me up in a car? All my life, I was taught to not hop in a stranger's car, and then now it's normal. Robotaxi, is that going to be normalized? Will the masses adopted?
I certainly think so. It's too valuable for corporations to not have to give any cut to these drivers. I mean, it seems like, once a year there will be a relatively large lawsuit about one of these companies or the other stealing from their drivers in one way or the other. I just made a TikTok maybe a week and a half ago. DoorDash lost a $17 million lawsuit in New York because it was proven that they were using tips to subsidize drivers' base pay instead of giving them their base pay and then the tip on top.
Wow.
They would only actually pay the drivers in New York when the tip was not enough to meet their base pay. So anyway, there's a whole class action and everybody's going to get right on that, and that's good. But these stories are not all too uncommon. So I think it's too much of a cash cow for all of these major corporations to pass it up. As for my view right now, I think I would feel safe hopping in one. I have friends with Teslas, and I've never felt unsafe at any point letting them just rock the full self-driving on that thing. So it would be hypocritical of me to suddenly say that I don't trust the self-driving on a Waymo or something of that caliber, where they're more souped up than your run-of-the-mill Tesla. They got the big detector on the top and all that good stuff. So I think I would wear my seatbelt and know that it's going to be a check if this thing gets in an accident. So that's sort of my.
Absolutely. You open your Uber app let's say we have regular Ubers still, we have robo-taxi. What is going to make you more inclined to click on the robo-taxi? Is it if it's a better fare?
Yeah,
are you more intrigued to taking a robo-taxi anyways? Would it be the fare to influence you to at least take that route instead?
For me, certainly, yeah. It would be my wallet. Yeah. It would be if it's a considerable amount cheaper. And also, I'm not like a proponent of robots stealing human jobs. If it was, say, a $2 difference, I don't know if that would be enough to justify it to me. But if we're talking about $20 versus $11, I probably would choose to take the $11 option. Also, I'm not like the social type, really. I mean, I do this. I guess that wouldn't really come across, but I don't like to talk to my Uber drivers straight up. I want to just play on my phone and get to my destination, and I will give you a great tip.
I need all of my. I know my Uber drivers' kids by this. Like, I'm in the backseat yapping away, asking where they're from.
I always wind up stuck in conversations. They always wind up talking to me, and I'm very polite. I don't try to shut it down or give any indication that I'm not into it. But I've had multiple instances, especially since I moved up here, where I will get to the bar and be like, damn, that was kind of socially exhausting, and now I have to go into the bar. There's a balance to it. But yeah, having silence and just being able to mess around on my phone and do whatever I want without also having the social awkwardness of it, feeling silent, feeling like I'm not shutting somebody out or whatever. That would be good to me. Trunk is safer. Yep. Is there an option to sit in the driver's seat? There is not. They do not let you sit in the driver's seat. I do know that. Yes, Scott took a Waymo. He filled us in on that.
Oh, talking about driver's seat for the robo-taxi. I was like, for regular Uber, I could have swore I've been in the passenger seat before.
Yeah. On Waymo, it's the driver's seat. You can sit in the passenger seat, just not the driver's seat.
Yeah. Beth says, no way, robo-taxi. No, thank you. Well, Beth will have to be the first one to try it out for us again. Maybe we get another vlog, Scott Sheridan style. Also maps out in advance, which helps a lot. Yeah. Statistically, of course, less human error. So, I see benefits in that as well. But
I'll tell you what's exciting to me about this entire prospect is that in the relatively distant future, when do I project this happening? Like 30 to 50 year time frame, maybe. If we could get everybody into EVs that pretty much all have the capability of self-driving and they could start talking to one another, that could be really cool. That would eliminate traffic. Like, I don't mean the drivers talking to each other. I mean, if the vehicles were synced up in such a way that, because, think about like when you're at a red light and it's way backed up and it turns green and one car goes, then the next car goes, and the next car goes. That takes a long time. But if all those cars could talk to each other, you could move like a train all at once.
Right.
And
efficiency.
Yeah, there would be massive efficiency to be had with that. And you're getting into some serious Jetson stuff there where you'd probably have cars like missing each other by 1 inch intersections and stuff.
What is this, WALL-E? You've watched WALL-E before, right? Like that's what it immediately my mind goes to. It's at that point, it's a city running on its own, and it's like, would there be a need to even have your own vehicle? Like, would you just go outside and wait for one to come stop, and then you hop in, and then it like almost like buses that hit every route, but it's a sedan?
I guess that's true. That's true. Yeah. What if there's just there's a car that just swings up? I mean, even in like the suburbs, the car that just swings up a cul-de-sac every 5 minutes, hop in that thing, hop off at school, whatever. I'm sure you could. You could probably. The opportunities are endless. You could set up like your whole schedule for the week on your phone and just have the things coming by. I'm sure. But also in this situation, has AI replaced everybody and none of us have money to afford those futuristic taxis? I don't know.
At the same time, we probably got automotor or vehicle insurance companies probably lobbying against that. They're like, no, we don't want to. We want we need a little bit of accidents here and there. We don't,
Yeah, it's
so
true.
that's going to be funny to see, how other industries might be affected by the efficiency in other industries. But anyway, Tesla's going to be a fun one. Outside of EV, we'll check on Rivian before we go ahead and do a little tour to market and see what's been going on everywhere else. Rivian still getting beaten down alongside Tesla. Rivian, again, seen another Rivian later today, and they're getting a lot more popular, very expensive, but we'll go from there. That'll be it on the EV. Anything else to add on EV before we shift gears here? When I say shift gears, it just I feel like a high school teacher vibe, shifting gears.
These Chinese EV companies are certainly becoming a real threat, especially in Europe. I know Li Auto is a big one. That's starting to take over a little bit. And I'll tell you what, too, don't sleep on Polestar. I remember I was in Canada this past summer in Vancouver, and there was Polestars around. I saw a considerable amount. 1 or 2 a day. And they have a huge EV push. They want to be full EVs by 2030. But
don't sleep on Polestar, as in don't sleep on their investment growth or them as an EV company as a whole? Like you would put them in your top 2 for EVs if you were to choose one of the 2.
I don't think
Would you
I'd
get
have
one over Rivian or Tesla?
No is the answer to that. Me personally, no. But I think that a part of that, self-reflecting, is that I just am kind of scared of the unknown on that front. I think that Rivian and Tesla are just so much more established, and so that gives me more comfort. But they look super clean, and I'm sure that they have all of the same features, if not more. They're nice looking cars. So, yeah, I like, and I just, like I said, rising tide raises all boats. I think as more and more countries continue to do this massive EV push and try to get everybody into EVs, which is, inevitable at this point, I feel. That somebody has to fill the void. Not everybody in the world wants to drive a Tesla, especially not now, I suppose, that Elon Musk has really tied himself to Donald Trump. He's, sometimes that can alienate half the people. It's what happens.
Yeah.
So, yeah, I think Polestar has a place in the world. I think that they could grow. But also, you want to come full circle. Are we .com bubble with these EVs? Can only a few survive? I don't know. We'll see.
Or have we even seen the bubble yet for these?
That's
true. We really
too.
don't have that many competitors. There's really not that many competitors in the grand scheme. Granted, I know other competitors that have been existing already, like Ford, and they're starting to produce their EV lines as well. So those will be existing competitors already. But I had to sneeze so bad, Gus. My fault. But
you gotta look at the lights.
Bro, I saw a German Shepherd dog the other day, and I petted him once, and I'm sneezing for like the rest of the week. But I was driving home, and I'm like going 70 on the highway, and I had like a sneeze attack. I'm like, this is dangerous. Like I gotta pull over. But thank you, Beth. Appreciate it.
Yeah, Beth chiming in. She might be ahead of everybody else on that one. We got the internal stream.
I know. Quickly, volatility index. Volatility is trading at about 26 right now. We're above 25. Didn't even think we would last a long time above here. I know this is the first time this year we traded above 25 and actually held. So volatility tends to cluster. We've seen with a lot of the data, and it's looking like volatility is clustering right now. How much will volatility come in? I don't know. It's really going to be dependent on if the market is done going lower for this time being, at least. So, we'll keep an eye on that. As for SPY down a bit on the day, 4.5 points. And, hopefully we're putting in a bottom here because, again, I'm on QQQ. Which indice are you in again, Gus? Are you in a SPY or QQQ or a Russell?
I'm in QQQ and Russell both.
Okay, QQQ and Russell. I know IWM was a little bit more disjointed from NASDAQ and QQQ. I know everything's been moving to the downside, but in terms of whenever we're putting in those fresh highs, IWM, a lot of volatility. This is another one Julie would bring up a lot. Good, really solid premium in IWM when I've been looking at a little bit more often. Maybe I'll look at that this week too.
Yeah, I find as well that the moves on IWM just tend to be more pronounced to both sides of the equation. If SPY is having a good day, IWM will be having a slightly better one, and vice versa. That's totally baseless. That's my observation. I think I could have just made that up, but in my experience,
I know what I'm doing right when the market opens up tomorrow.
Yeah. Disclaimer: giant asterisk.
195. Yeah, we'll take a look at this in the morning. As for QQQ, obviously heavily correlated to SPY, looking really similar over there. Oil. Kind of flat on the day. Oil hasn't been moving as much. We've kind of been consolidating on oil over the last 6-7 days, kind of been trading within a range, but those are some of the bigger movers on the day. I know we can take a look at Bitcoin quickly, and Bitcoin was one of those. I've seen a lot of FUD. I've seen a lot of fear in the markets, but I would say crypto is probably the market I've seen a lot more chatter about online too. So Bitcoin's been really pulling back hard too. It almost seems like the overall market in Bitcoin is almost correlated with each other at some points. But trading at 83,000 right now, decent pullback from about 100 and 12,000 on Bitcoin. So this is another one. We'll see if we see a recovery during the week, or if we want to put in any type of short-term bottom. But been seeing a lot more chatter about this one on social media, especially.
Yeah. Crypto has, been a big part of the talk of the world as of late. And honestly, I'm surprised to not see crypto rallying a bit more, especially as recession fears mount a little bit. And perhaps we will start to see that moving forward. But what's up?
Was that because of the conversations about Bitcoin potentially becoming like the gold standard?
Well, yes. I mean, I just see strong correlations between Bitcoin and metals in that regard. I mean, when people start to fear currency, they look towards other stores of value. And I think that as crypto continues to become more prominent, and Bitcoin especially, being finite at this point, it's a very good store of value that people expect to appreciate. So yeah, I would expect to see some of that action starting to come through soon, but I'm not a crypto trader, and I'm not going to act on what I just said. I'm going to keep up with it. that's as much as
I brought up Beto not too long, unless I'm mistaken. Unless I'm mistaken, I could have sworn we were talking about Beto, the ETF for Bitcoin not too long ago.
Yeah,
maybe I'll take a look.
I'll trade IBIT or Beto, either one. They're sort of substitutes to me.
Well, I apologize. I hear you. We'll take a look at some of these tomorrow. Again, we have Meta. Excuse me. We have Meta. We have QQQ. We'll see how some of these positions pan out. We have a lot of time on this. So forget any type of short-term rally. Even if I get break even or maybe make about 10, 20% of the credit received on this, this is one of those where I take it as a massive W.
Oh, yeah.
If I get, you know what I'm saying?
I have a lot of those right now.
I've got a lot of those. No, I mean, anything before we hop out of the platform here, anything else you wanted to take a look at or add into?
Yeah, I will throw out one more action item. We are looking for name suggestions. We are going to rename. We're going to rename this show that you guys are watching, and we are open to ideas. So drop them in the chat, even if we've already ended or whatever. By the time you guys see this, there is a little delay. We will read everything, and we would love some suggestions. So whatever you think would be best to fit both of our personalities, drop them. We're going to get flamed, but drop them.
Yeah, absolutely. I know Grumpy Mike just made it for the end. He was too busy baking English muffins. English. I don't really bake English muffins. I typically just buy those in the package, and then
English muffins from scratch. I don't even know how to do that. Yeah. I assume it's some combination of flour, yeast, water, or something. Is there yeast? Minimal yeast? I don't know. They don't really rise. Gulf of bad taste.
I love the culturally relevant jokes. That's actually very funny, Mike. That is very funny. That's good. No, we are coming to a close here. If you guys do have any ideas, absolutely let us know. You can find us on social media. You can find us on Twitter at our names. But that's going to do it for today. Before we head out, Gus, anything to add?
Nope, that's it. That's it for me.
Awesome. Well, we'll see what we get for the rest of the week. Hopefully the market is putting in a short-term bottom, but volatility is up. So we'll be looking forward to that. But thanks for taking the time and joining us today. We will catch you guys next time. Peace.
I'm AJ Rudolph. I'm a senior product manager here at Tasty Trade, and I just qualified for the World Poker Tour $5 million free roll in Las Vegas on Friday. So I've been playing poker for about 20 years, actually. I started just with friends. It was like 2005, I think it was, where everybody was like, yes, let's go play poker. There was a huge boom around poker. And I actually feel like that is coming back around again. Right now, there seems to be a lot of interest, and the fields are growing, and everybody wants to get in there, and everybody has a chance to win. That's kind of the cool thing about all of these big events. I feel really privileged that I have the opportunity to go and do this. This particular tournament is only 2,000 people. You cannot buy your way into it. You have to win in order to win your seat, and that's what I did. And so I just buckled in and played my game and really focused and won my seat. I'm a very aggressive player. I do rely very heavily on reading the players at the table. I think that's super important. To be a balanced player, you want to make sure you're doing the math, you're reading the people, and you're doing all of those things in combination with each other, so that way you're using all the tools that are available to you.
So Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling in the hole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammies when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You hear it all the time. Spoos up or spoos down. What exactly does that mean? Spoos is a slang term for the S&P 500, specifically the S&P 500 futures contract /ES. It's the world's most liquid asset. In the S&P 500, billions and billions of dollars trade hands each day. The S&P 500 represents the top US stocks, all in one basket, traded through one contract. The S&P 500's movement day to day gives you a good overview of the market as a whole and what it's doing.
If you missed the live show, here's our cherry on top weekly recap.
You know what my first concert was when I was very young. It's quite embarrassing.
Anson.
How'd you know that?
I mean, I feel like everybody.
How did you know that?
Because who else was popular then in like the late 90s?
Oh my God, that's amazing. That was cringe. There it is, the song, yes.
Yes. All right, good luck, good trading. Let's go eat some roost.
Peace.
We built Tasty Trade for today's traders. See it, click it, trade it. Customized charts with hundreds of indicators. Actually see your potential profit and loss. Quickly roll to the next expiration. See gains and losses even when you roll. Cancel, replace, duplicate, or invert orders with just a few clicks. The tools, the data, the knowledge. See it, click it, trade it. Join the club, genius. Tasty Trade.
When you've got a futures contract that's in contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of contango. So where contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
yeah, it is Tuesday, March 11th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. It is Tuesday here, my friends. You know what that means. We went and got the big brain. I'm talking, of course, the global head of macro here at Tasty Live, the one, the only, the incomparable Mr. Ilya Spivak. Ilya, how are you, my friend?
Beautiful day here in San Francisco. Sun is shining. Birds are chirping. It's supposed to start raining again tomorrow, but in the meantime, I am sitting in my lair looking outside and thinking I should probably be out there and catching some vitamin Ds before I keel over.
Yeah, definitely. I'm glad it's good weather somewhere. I don't think it's terrific weather in Chicago from what I hear anyway. It's beautiful over here too. So from 88 and sunny over here to 11,000 miles over there. I'm glad you're in great weather and good spirits, my friend. Ilya, we were talking before we came on in the green room about fashion choices.
Yes.
I would say you're a San Francisco guy, and I think like the San Francisco style is kind of like, I don't know, business casual chic. You guys over there, you dress kind of casual but fly, like
I'm from a different era.
Subtle fly.
I'm from the early 90s, and so it's all about workwear and white sneakers for us over here.
Workwear and white sneakers. And then for you, we were joking that if you're walking down the street and you see like a mannequin in a storefront window with like an Adidas tracksuit on, it's like a moth to a flame.
I can't help myself. I can't help myself. My Soviet gene immediately activates, and although I don't wear that many tracksuits, I certainly will own one, even if it hangs in the closet, because some part of me is like, whoa, listen, we have to have it.
So what's the color? Like, what is the Soviet color choice? Is it the normal, like the black and white, and the sort of the classic look, or is it those? Are you going for those Skittle colors? That
Not
taste the rainbow
colors.
look.
Not to taste the rainbow look. I just recently got a dark. Recently, like maybe 6 months ago, I got a dark green Nike one.
Yeah.
That, I mean, the color alone was like, oh.
What are the stripes?
Green. Okay.
What color are the stripes? I kind of imagine the Ilya Spivak
White.
holiday. It's just a bunch of younger kids, and everyone opens up a present. It's just a different color tracksuit.
If you take a picture of Run DMC circa like 84, that's the tracksuit direction.
All the Spivak boys come downstairs in a tracksuit to open up a present that has a tracksuit in it.
By the way, my boy is 4, right? His grandparents have bought him not 1, not 2, but 4 tracksuits already. So he is walking around a black and white stripe Adidas to the core, and he loves it. It's like he knows it's in his veins.
Oh, bro, we could have the whole shell toe conversation next, but we won't. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't already have both, go get them. But if you want to be part of the conversation that's in the middle of your screen, this little chat box or whatever it's called in your fancy internet YouTubes today, there's only one place that you can do it, and that's over on the evil Google YouTube. So head on over there, find the Tasty Live channel, jump in the chat, start banging your skull into the keyboard or moving your phalanges and metacarpals and spoof the Google algorithm into putting us in front of as many people as possible. It is official, my friends. The deprogramming has begun. Ilya Spivak, before we get all the fun bits of conversation, let's set the table, my friend. Let's talk pure price to start off the show. S&P 500 down 3. Yes, and if you're just tuning in for the first time, it's going to surprise you. After that open, this is a stock trading show. We're about to take a hard left turn. The S&P 500 is down 0.75%. The NASDAQ was down 0.25%. The Dow Jones down a little bit more than 1%. and the Russell up about 0.25%. It was a mixed day. We were sort of all over the place, on top of positive for a little bit. Vol had dropped for a bit. President Trump increased the tariff threat to Canada and threw a little bit of volatility in the middle of your trading day. But Ilya Spivak, was today day number one of the market trying to find some footing down here around 5,500?
So I got out of my shorts today.
Mm-hmm.
I looked at this market and said, you know what? It's had a really big run, and there's but two things to do here. You either roll out exposure, recenter the strikes, roll out expiries, or you wait. And for me, the answer was wait, because when I started looking at, for example, my put verticals on the NASDAQ, my put verticals on the S&P, it was frankly starting to get to max profit levels. And so it didn't really pay to sit around. It was time to start to either do something to push the exposure forward, recenter the strikes to lower levels and get myself some more time, or to just get out and wait. And when I went to go to price the put verticals, the higher vol readings made it really expensive to buy puts in a way that gave you something approaching, let's say, 2-to-1 risk reward.
No way.
It's not going to happen here.
You got to go buy the tails if you want to buy put verticals right now.
Right. It's not going to happen here. So for me, that told me, okay, wait, what else is going on in these markets? And I noticed that the market seemingly, finally, today said, all right, all of this chaos is going to get the Fed to really move. And they started to significantly shift the calculus for Fed policy expectations, especially for next year.
Yeah.
Next year now looks a lot more dovish. This year looks a lot more dovish. The market now, for the first time in months, is to the dovish side of the Fed's baseline.
Yep.
The one they said in December. So I thought, you know what? Maybe the market is going to see CPI and take a little heart in at least for a day or two in a lower inflation number. It doesn't pay me to stick around in put verticals at max profit and see that. Let me just take this off. And maybe if there's a little bounce and the vol comes in, I'll reload.
So I think that makes a lot of sense. So you did some buying today, right? So because buying back your put verticals,
I didn't buy anything, but I covered.
To the market, it's the same thing. So so in effect, you're selling puts to the market, which is sort of taking on long deltas.
Yes.
I nibbled a little bit of stuff today as well, not a ton. Doubled down on short VIX futures, bought a little upside out of the money call verticals in S&P, and then I bought some stuff that I've been messing around with. So Newmont Mining, bought a little bit more Freeport, bought a little bit more Moderna. So like the themes I've been talking about on this network, on my show on a recurring basis, I bought a little bit more of that stuff today. And it seems like from my perspective, I was a small buyer. From your perspective, you were a small buyer. Again, you're covering, but we're doing the same thing. We're effectively buying and taking longer deltas into the marketplace, which made sense to me. I pretty much looked at the world and I go, most people are probably doing this. This is how you end up with a mixed market today. This is how you don't get a continued selling. There is a little bit of demand here for the marketplace, which is why Russell was slightly positive. Dow was kind of ugly, but everything was basically a mixed bag. You were either covering or you were finding prices that at least some people wanted to nibble on today. Do you think? Actually, let's do this. Let's game this out. I'm fascinated with this one question. You brought up the idea of the Federal Reserve. The market's pricing of cuts, and I'm sort of fascinated with this meeting that's coming up next week. Right, March 19th. We're gonna hear from Jerome Powell. We're going to basically, in the midst of all of this volatility, he's going to have to step in front of the marketplace and say no, and nothing's coming, right? So no cuts. And he's going to have to put an SEP in front of everybody. And he's going to have to speak to the idea. He's going to have to defend the idea of sort of not moving today. Yes. And either he's got to play a neutral game, Ilya, because even though cuts have theoretically started in May for the May meeting, it's still a 50-50 toss-up. It's like 57-43. It's not a guarantee.
It's not really convincing until July. Only by July do you go, okay, a cut has occurred.
So what you're saying about more and more cuts being priced into, there's still about 3. They're flirting with a 4th in 2025. But there's about 3, and they're pricing more cuts in 2026. To me, I look at it like loading the gun. It's like if Powell doesn't say the right things on the 19th, it's like the market is loading up the gun to go, okay, we're going to go find your pain point.
What did we see last year, right? The Fed is all kinds of resistant because inflation doesn't want to go its way. By April, the data starts to turn. In May, the Fed doesn't give the markets what they want. It goes, woe is me, inflation won't go down. And the market goes, oh, okay, sure. You're going to cut a lot next year. And then that becomes the story. And they put more and more and more into next year's outlook, the more resistant the Fed is. And this goes from mid-April basically until like the middle of August.
Yep. That's
you
right.
have to get all the way to Jackson Hole, where at Jackson Hole, the Fed goes, okay. And the markets go, wait, really? And by then, the economy is already turning. So when the Fed comes in September and goes, the stuff of your dovish dreams has been hereby delivered, everyone. Behold. Yeah. And everybody goes, yeah, we needed that like 2 meetings ago. The economy is already turning. Our mind is elsewhere. And there's this massive shift to a more hawkish setting already between September and November. And from November, really until January's meeting this year, you wiggle a little bit, 10, 12 basis points this way or that, but nothing much is occurring. Then you get this most recent deterioration in economic data. And again, it's the same story. The market goes, wait, I mean, you hear Powell on Friday, there's a recession risk. The economy is turning down. What? Everyth's fine.
Dude, dude is Mr. Magoo if there ever was one.
There's a lot of uncertainty.
He's the most Mr. Magoo.
The economy is fine. We get that there's uncertainty. We're not going to jump the gun on 1 or 2 pieces of data.
Yeah.
And he has to say that. Has to. Because the Fed is by definition reactive. It can't look like it's jumping from thing to thing quickly, because then you lose the credibility of the monetary authority as being a middle of the road, medium-term inflation targeting sort of institution. So he comes out and does what you might expect. We've been telling you for months we're not going to overreact. We're not going to overreact. And the markets go, haha, okay, sure. More easing into 2026.
So let me ask you. Oh, go ahead. Finish.
That's next week, I think. I think we get the same thing. I think the FOMC disappoints
You don't think he
them.
tips his hand? You don't think he starts to move towards the growth concern in order to open up the range, open up the possibilities of the cut in May? You don't think so?
Not enough.
So you think he's gonna do the same Mr. Magoo dance? The risks are balanced. We'll continue to be data dependent. Good night, everybody.
No, he'll tell him, look, well, he has to tell him that he's not asleep. So he's going to come out and go, we see. There's been consternation in the markets. We get it. And we're very happy with having lots of room to cut. And if we felt like there was an emergency, of course we would act. We don't think there is an emergency now because our variable isn't the stock market. Our variable is the labor market and inflation. And inflation isn't going down as fast as we want, and the labor market is by no means coming unglued. So if you think we're going to be out here bailing out the stock market, half of you are going to start to whine about the Powell put, and the other half is going to be happy. We're not playing that game. That's not what I do. I have two variables. I'm going to work to those two variables. Stock market wants to go down unless credit spreads are doing something that makes me afraid for the credit structure. Where's the hurry? And I think the markets are going to look at that and go, where's the hurry? Okay, more cuts in 2026.
Okay, so here's what I get it.
In other words,
I get it. So what I hear what you're saying, and this is, and you've already answered the next question, but I want to frame the question on a mantle for the audience. So where I'm going, and you've already answered it, but where I was going was, how should I look at the Federal Reserve's sort of non-commitment that we are likely to see on March 19th? Should I look at it as a potential bringer of volatility, that that this guy's not moving, he's not pivoting, and now I've got to discount the potential that they're not actually going to move in May, and that they're going to stay at these levels a little bit longer than the market is currently forecasting? Or is it on the other side of March, I know that we've got a cutting cycle price, so I need to start positioning myself for what at least three cuts this year means for asset prices, and the market's going to start to front run that if they haven't already, and I want to start positioning towards that direction. Which one of those two directions would you lean? One, towards more uncertainty because he's opening up his range, he's not playing his cards or his hand yet, or the other direction, which is, I got a whole cutting cycle right here that the market is forecasting that I can start playing into that hand. Which one of those two directions should I lean, and why?
I think it depends which asset class you're looking at, and I think the difference matters a lot.
Okay, let's break that down.
So let's start with stocks because that's what the people want to hear. And then we'll go to bonds, and then we'll go to currencies. I think for stocks, the anticipation that Powell is going to give everybody the healing salve next week, I think that is going to start to appear in stock markets as long as CPI complies. So the expectation is that CPI is going to come in a little. The path of U.S. economic data has been awful for weeks. It's been disappointment after disappointment. Just look at the Atlanta Fed GDP now, not as a reasonable expectation for what GDP will do. Forget that. Just look at this as a model that takes in economic data and spits out an output. What has been the tone of the data to give you the green line that you see there doing that? Obviously, bad data. So, rocket science, this is not. So I think the markets are going to get a CPI number. I think there's a decent chance that it undershoots and is lower than expected. The market, I think, for stocks is going to say, oh, goody. The Fed is going to give us something next week. They're going to tell us something. They're going to tell us that they're coming to save us. And the markets know how this works. I mean, all of the post-2008 experience was we can't rely on fiscal policy because there's a sequester and these people are fighting and we can't get anything passed through Congress because the two sides can't find common ground. The Fed is going to have to come and bail us out with more QE. We would have probably ended up with less QE after sort of 09-ish and the initial credit market unclench, if we actually had, as we did during COVID, some sort of coordinated direction between fiscal and monetary policy, where monetary policy went big, fiscal policy went big, and COVID got smashed back as far as its economic influence. It was short, and the bounce back was hard. So I think it would have looked a lot more like that in 08, but didn't. And the market sort of understood, okay, well, if the fiscal side can't come to some kind of a reasonable growth stimulus mindset, then the Fed's the only game in town. And I think that after a week's CPI number, they're going to maybe entertain that idea. So stocks might at least stop falling. Unclear whether they get much of a bounce, we'll see, but they might find some relief. I think then the FOMC is going to come out and give them less than they want, and that might be the top on any correction, because then they'll be disappointed that the help isn't coming as fast as they want it. So there's a little bit of a back and forth there in stocks. I'm not a buyer. I'm waiting for any bounce to sell into. For bonds, especially at the long end of the curve, and for the dollar, all of this looks like uniform negativity, because all of this just starts looking like we're pricing in more easing. More easing, and then some more easing, and then some more easing. And then the dollar starts to lose more of its yield advantage against other currencies. Bonds at the long end start to anticipate a more sharp, a harder hitting easing cycle downwind. And so ZB, ZN, so 10-year, 30-year, think those bonds come up.
Those bonds come up in price. Okay. So this is the most, I'm going to say this is the most interesting, but this is my biggest question, because when we started this back in September, the question was, the question was, how does the curve react?
Yeah.
And we ended up getting lower Fed funds rate, and the long end of the curve actually moved higher.
Yeah.
Through that period of time. So the red line is sort of where we started, and on each successive cut,
that was September, that very
November,
dovish
December,
September update.
Right. We get the lifting of the curve. Now the white line is what the curve has done since that last cut. We've basically, or since that pause, we've come down significantly. So the curve is showing you an anticipation of lower growth and sort of, I want to say, subdued sticky inflation throughout term premium in the long end of the curve. So that's what it's sort of showing you. So it's anticipating, I think, what we're ultimately going to see with this cutting cycle, which then starts.
Yeah, but look at what happens now from September in the red to November in the green, especially like 2 years out, 3 years out, right?
Yep.
Rapidly, the markets go to a less dovish setting, like by a lot. Now look at where the white line is, which is current relative to November. We are the most dovish in our 2 year, 3 year outlook since September.
Totally agree. And so the question in my mind, which I'm just putting this on the platter for everybody. But the question which you actually answered then is, when we start to, if we're going to get this new cutting cycle, how do you anticipate the long end of the curve reacting? Because we've seen in September, you started the cutting cycle, you got the long end that lifted. Then you had a pausing cycle, growth, the whole curve shifts down. Now we start the cutting cycle again. Would you anticipate a long end lift in the curve, or would you anticipate something different this time around? Because what happened in September, I would say, was probably a little bit unexpected. I don't think a lot of people expected the long end to lift to the extent that it did. Would you anticipate the same type of reaction in the curve this time around?
No, because I think what happened in September was, I think the market went, what are you bonkers promising all this easing? The economy is heating up, and we just had an election. Remember, that Fed meeting in November was immediately after the election, same week. By the time you got September's update, it was already starting to look like the election was going to go the way it was going to go. And the economy was already heating up. So the markets looked at the Fed being very, very dovish in September, which, by the way, they were calling for. The markets were calling for the Fed to be very dovish from April to August. But by the time they actually moved in September, the table was set differently. The election expectations were set differently. The growth expectations were set differently. And so when they went ultra dovish in September, the markets went, there's no way. So of course the long end has to change, because now if you're going to do all this fire and fury now, you're taking away from rate cuts we thought were coming next year. You're not going to be able to do a lot of those. You got to dilute all of this. So yields go on a big march higher at the long end. The dollar goes on a big march higher from mid-September, basically through the end of the year. The table is set differently now because growth is not only not going to give you more inflation downwind, it's looking like it'll be a minor miracle to avoid a global recession at some point in the back half of this year going into next. And so, because the one thing you can't afford to lose momentum on, the U.S. service sector, you're rapidly losing momentum on the past 2 months. So maybe you'll get the minor miracle. But for now, it's looking like you're taking away the one remaining bit of global growth that's been working. And so how you don't end up in a recession in this environment, even a shallow one, is difficult to imagine here and now. And of course, strong convictions loosely held. If the data changes, I'm going to change my mind. So at the moment, you read that differently. You get weakness and you start to say, well, there'll be more easing now and there'll be more easing later. The whole curve shifts. The base for the whole curve, from the floor from which you start to add term, premium, et cetera, just comes down for everything.
Got it. So your expectation is that we'll continue to see this, the yield curve will normalize, so that front end of that curve will come out or move towards away from inversion territory. We'll get to a more normalized shape of the yield curve, and it'll also shift lower. Yields across the curve will move lower as we get into this cutting cycle. That's your baseline expectation, which means you probably are cool going long the 10s, long the 30s,
and I am
maybe even long the 2s. Which one of the, do you have a preference on which end of the curve you'd like to be long? Because I got to imagine those 2s got to be ripe for a rally, given what you believe could be possible, no?
I mean, they've kind of seen it already. So if you look at what's been going on here, the 2s have started to go up from about the middle of February when we got this most recent growth spook. When you look at what's happened at the 10-year and at the 30-year, they started to move a month earlier than that. So you started to see the long end already shifting as of January. The PMIs started to really warn you in January. You and I talked about it on this show. I said, hey, those January PMIs, they don't look good. And it's 1 month's data. Let's see if we get a second. And if we got a second, that would start to look scary because two points start to make a line. And they don't quite make a line, but they start to make a line. And people start to go, okay, well, this is not just a one-off. Already in January, the long end started to bottom and yields started to come off. So, and the 2s are catching up now. I generally like to play the front end of the curve through currencies because it's more liquid and easier to manage. And so to just move the dollar rather than the 2-year, since I'm expecting that we're going to get lower yields across the board, I already have, I'm back in a TLT call vertical, and I've held it now for about 2 weeks. That's the second time I dip my toe in here. I initially started buying in mid-January, got spooked out in early February where there was that little dip, and I've re-entered as of about 2 weeks ago. So I'm long a TLT vertical. I'm certainly not beyond adding into it, and I am in lieu of being long the front end, I am massively short the dollar. And I've been holding short the dollar for a long time now, for about a month and a half, 2 months. And that's against the euro, the Aussie, the Canadian dollar, the yen, the pound, the whole thing.
So let me actually, as you were talking, you kind of you helped something. Basically, I think something dawned on me. You helped frame something for me. So let me run it back to you, and then I'm going to go asset by asset class, because this is how we do the show. We start with your baseline assumption on yields, and we take your opinion on yields, and then we spider out throughout the rest of the asset classes. But you just tripped something, and I want to pull this thread. You had said at one point that, like, Jerome Powell at the end of last year was sort of like this judo master. He was using the market's momentum against it, which I thought was just like the perfect anomaly for what was happening. And some part of me just realized that my question to you was, do you start to price the cuts that are coming, or play the uncertainty because he's going to be coy about this because he doesn't want to telegraph sort of the cut package or when he's going to start it? And I realized it depends on the market. To your point of the judo master, it depends on what the market does. So if the market starts to price the cutting cycle, then that actually gives them more time. So that you're getting the liquidity on the front end, and you don't need to go early. And then reflexively, if the market then does not give them the benefit of doubt for pricing in these cuts and the easing, then they need to actually move forward. So in a way, the fact that the market is currently pricing these cuts in a weird little way, it gives them the range to see whether or not they want to go in May or June. So I actually already have my answer, do I not?
Yeah, I mean, they're on a different timeline. One of the most useful things that I have learned in my years in currency markets before I branched out to other assets and a sort of a bigger picture macro view, and really what enabled me to do that was to understand that the cost of money typically matters more than anything else, because that determines whether the markets want to lay out any kind of risk or not. And if they do, then you go find where they want to do that. And if they don't, it's a whole other thing. It's liquidation. And it doesn't matter. Sectors don't matter. Asset classes don't matter. Look at gold. Yields are falling and the dollar is falling, and gold can't go anywhere because people are liquidating. They're going to cash. It doesn't matter. They're selling what's not nailed down. So you learn that, and then you learn, as you realize that the cost of money typically matters more than anything else, and that's a starting line for almost everything else, then you realize the markets and the Fed operate on different temporal lines. The Fed thinks in terms of quarters and years, and the markets think in terms of days and weeks. And when there is and the Fed is very well aware of the markets, and the markets are very well aware of the Fed, and there is a dance. And if you can get a good sense of the dance, there's a lot that you can glean just from that.
Amen, bro. Amen. All right. So then I'm going to ask the question in the way that our friend Laid Back Trader asked in the chat. You sort of gave your view of the world through bonds, which explicitly or implicitly tells us your view of sort of growth and risk on, risk off. But let's unpack it and let's make it explicit.
Sure.
So the way that Laid Back Trader asked it, so is it risk on or risk off, and what assets would you rotate into? So let's make it explicit. It is risk off. Explain why you feel that way, and then how you sort of navigate this next couple of months from your point of view. I'm not necessarily agreeing I do agree that it is risk off, but I'm being opportunistic to accumulate into risk off. So that's the way I think.
Right.
If you want to trade with momentum and just be on the right side of a binary pick, I would probably agree with you, but that's not the way I sort of deploy capital. Anyways, go ahead, Elliot.
Yeah. So I deploy capital in different ways for the kind of opportunistic few weeks at a time, 45 days to expiration type of tactical exposure. That is the trading side of what I do, as opposed to the set it and forget it longer term investing that I do. I think it's very clearly risk off. I think the stock market is telling you that in no uncertain terms. If the S&P is kind of your barometer for the market's appetite for risk, you can very clearly see what's going on. And you can also see that it's not going on for flimsy reasons. It's not going on because they found Jensen Huang in some sort of compromising position, and now, oh no, NVIDIA is going to have a new CEO and everything is going to fall apart. No, it's not some sort of nonsense. Economic growth is actually suffering, and you can see it in the data. And this was always the risk. We've talked about it for 6-9 months, that Europe is anemic, China is anemic. That leaves just the U.S., and in the U.S., the goods side of the ledger is anemic. It's the service sector in the U.S. then that powers global growth, and everything else is getting, by hook or by crook, dragged along. And you lose the U.S. service sector, you've lost the game. You've crapped out. There's recession. So what we see that's so troubling in the data is that is starting to occur. And the reason that it's starting to occur, if you read what ISM is saying from their surveys, what S&P Global is saying from their surveys, this is of businesses and why they're so upset. If you ask consumers, whether you're the University of Michigan, that's one benchmark survey, a conference board that does another, you start looking at all of this other data that's starting to fall in line. It's about uncertainty. It's about policy uncertainty. Powell said it on Friday also. This is not, at this point, much of a debate. The issue is policy uncertainty. And if the markets were to get clarity, whatever the policy was, doesn't matter what the policy is. The markets just need a forecastable path forward where they can say, over the next 12 months, let's say tariff policy is this. Okay, let's value assets for that. There'll be some sort of a shuffling of money from pile A into pile B to reflect what that is going to mean. On we go. I think the problem for the markets here is they don't know what the path is, or don't feel like they do. And so there's uncertainty and a sense of, well, if I don't know, I'm not going to lay out risk. I'm just going to take the money and wait until the dust settles and there is certainty and deploy risk thereafter. And I think everything that you're hearing from the administration is there's going to be a detoxing period, apparently. There's going to be a transition, this, that, all of which signals they're not looking to get off their path, at least here. And you've had some back and forth. Maybe we're not going to have those electricity tariffs from Ontario or this or that, but the thrust of the administration's policy direction, that is to say, to come out there, be chaotic on the negotiation of tariffs, ostensibly to set the stage for a renegotiation of USMCA, which is what, to me, all of this is really about. That and to exempt USMCA covered goods out of the tariffs tells you what they want, which is actually to include more goods into the USMCA and thereby have a bigger free trade zone, not a smaller one. think that gets lost a lot, that the administration, if you read the tea leaves, seems to want more free trade, not less, lower tariffs, not higher. But it wants to get there by waving around a sword and not by inviting people into friendly conversation, because for whatever reason, it feels like it can get a better deal by hulking out. So at some point, this is going to ostensibly give way to that negotiation occurring, like it did with the USMCA and its emergence out of NAFTA. So at some point, the fire and fury will ostensibly end, if that's the model, but not yet, and they're not signaling that the time is now. So as long as the fire and fury continues, as Chris likes to say, the beatings will continue until morale improves. So that seems like where this is going. So I think the market is going to be unhappy, and I think now they've kind of seen through the looking glass of you can't just blindly buy every dip. And now people are getting nervous. So I think there's more to this sell-off. I think the bias is risk off. I think you do get a bounce in stocks maybe between now and next week's Fed meeting, or at least some kind of a deceleration of the sell-off. And to me, that's an opportunity to be a seller when vol gets a little bit cheaper and the pricing gets a little bit better versus now. I still want to short. I just don't want to short here. In fact, I took my shorts off here. I'm looking at 5,700 S&P, 5,750 S&P to go, okay, that's enough of a bounce. Let's sell them again.
I am a little bit less bearish than you. I'm still in this sort of, I'm not convinced. You know what I mean? I'm not easily spooked. I'm not convinced that we're out of a sideways trading range. We just gotta use a higher vol number, which means the range is wider. And I'm gonna tell you why. I think you are right. I think there are headwinds to global trade and to global growth. But I think you and I would agree, we've been decelerating in growth for like a year now, and like nobody's noticing. And now you're sort of putting
globally, yes. U.S., no, but globally, yes.
No, even the U.S., we've come off of 4% growth down to 3%. So you're still
good GDP numbers that are kind of slower rolling.
And I'm just saying we're decelerating. Yes. I'm not saying we're going to slow down, but we've been decelerating for a year is my baseline point. But I guess where I'm going is there are headwinds and tailwinds. You know what I mean? There are competing forces. At all times, there's inflationary forces, deflationary forces. There can be bullish catalysts along with bearish catalysts, and ultimately, it's just the net effect. I do agree with you that what's happening in global trade, the uncertainty that surrounds that trade, and the forward planning that CEOs and boards and marketing departments and all of that have to do in the face of the uncertainty, regardless if you slap the tariffs on or not, or a 30-day pause. If you're a responsible, prudent business person, you're going, what's my worst case scenario, and how do I optimize my business so that I can maximize margins into my worst case scenario? And if I'm going to be surprised, I'm going to be pleasantly surprised because I planned for the worst. That's what's happening in my personal opinion right now. But I think like the opposite side, and that's the hope, the opposite side is that looser monetary policy can somewhat or will play some sort of counterbalance to what's happening on the fiscal side.
I think that's what they're hoping.
I think that's what they're hoping. And while there is some cuts in government, everything that I've seen so far is adding $3 trillion to the deficit. You know, we're adding to the deficit. We're cutting some stuff, but like, we're not
I don't think there's a fiscal headwind. There's just uncertainty.
Exactly. So I'm not so certain I should run for the hills yet in sort of how I think about risk. And maybe I'm wrong. Maybe I should be on your side of the train and the market's going to have to beat me into submission. But I'm playing this just like we're going to rotate down. 5,500 might be my new fair value instead of 6,000, and now I'm playing plus or minus 300 instead of 6,000 plus or minus 200. And I think that's the world that I'm playing, and I'm only offering that as a different potential point of view or competing alternative.
No,
point
that's
of
very
view
fair.
To your sort of world that you're setting.
No, it's
up.
very fair, because I think if you're laying out capital for a longer period of time, and you ask me, do you think that the view on the S&P 500 over the next 10 years, up or down? Unmistakably up, without question, in my mind. So in my longer-term exposure, I'm long. But I'm not tactically doing adjustments to that exposure every month or two.
So you're short dollars here. You're okay leaning long bonds, and then how else do you express your opinion? And let's start with that. The next question will be, what do you look for in order to start to change your opinion? But let's start with, outside of short dollars and outside of long bonds, how else are you sort of playing this?
So I'm waiting for stocks to give me the next opportunity, because I don't think the washout is done. I think we're going to get a chance to sell at better levels and then set a lower low relative to this low, and then we'll see.
In other words, you're hoping for a dead cat bounce, which will then give you an opportunity to get short again into a lower low.
Yes. So that's one thing. That's what I'm doing on the stocks side. And here it's NASDAQ, S&P, Russell. And the other thing I'm looking at is crude, which is sitting at support, long-term support. If you're, again, thinking tactically, so like in terms of weeks and not years. And if there's a real growth scare, we're going to crack that support. But if there is some sort of a relief in sentiment, then maybe we bounce. And maybe this reluctance of crude to sell in the past several days, it's kind of idling at these lows that we saw from September, October, November. There's like multiple bottoms there. You can see there's that choppy range, and we're sitting right on it. So if there's a bounce, I want to be a seller of oil. Much like I want a dead cat bounce in stocks, I want a dead cat bounce in oil. Gold. I don't really like silver because silver has a little bit more weighing toward risk sentiment. I do like gold. I think it's really interesting here that gold is doing nothing at all, and that when the liquidation gets really violent, it sells off also. But we're basically locked now, where on the one hand, people are trying to divest of everything and raise cash. And on the other hand, as they do that, yields come down, which helps gold. The dollar comes down, which helps gold. So gold is kind of in no man's land here, looking for what is going to be the dominant catalyst. And I think if you ultimately land on it's not the end of the world because the Fed will save us, and I think the market wants that to be the answer, hence the dead cat bounce potential, I think you might get a breakout in gold. Because if the markets go, it's okay, the relief valve will be lower rates and a weaker dollar, gold goes unmistakably higher. As long as the markets believe the relief valve is going to work. And I think for now, they are likely to do that. I don't think they're going to go, holy moly, credit spreads just yet.
Holy moly. Bro, the way you personify the market is hilarious. So then the area we haven't talked about, is what you think about if you don't like U.S. markets and you're looking for a dead cat bounce in order to short U.S. markets. And I think it seems like you're doing that indiscriminately. I don't think you love the Russell, hate the NASDAQ or anything like that. It seems like you'll take all comers in terms of fading risk assets in the majors. What do you think about emerging markets or just international markets in general? Would you be an incremental buyer of any other country, region, or continent outside of the United States?
I think right now, one of the curious things that's happened.
And sorry, the reason I'm asking this is your view on the dollar is very bearish. And so there, in many people's view would say, all right, well, if you're bearish on the dollar, that will have this particular impact on emerging or developing markets. Therefore, so there's sort of this correlation. And so I have to ask the question, well, if you think the dollar's going to get weak, what do you think about international markets? Go ahead.
It's very important not to confuse the state of the economy with the direction of the stock market, with the direction of the currency. Because those three things don't necessarily rhyme. And what we're seeing right now is some of it rhyming. So the direction of the economy is obviously a level of concern. On that basis, we're seeing much more dovish expectations for Fed policy than we saw even a month ago. And not surprisingly, that has kicked the dollar squarely in the teeth. It's also helped, and this is where you get the very significant difference between how the euro looks and how, let's say, the Aussie dollar looks. The euro looks much, much stronger. And it's because what you've seen is the dollar is still the liquid cash of choice in a liquidation. So if you look at what's happening with those currencies that are the most sensitive to what's going on in stocks and sentiment more generally, the dollar is holding up much better there. And this is why you can't say, oh, well, U.S. growth is in a bad place. Money is going to rotate out of the U.S. to other places. This is that lunacy that the markets were entertaining in the first half of 2008, where everybody ran around going, oh, well, the U.S. will just have a recession and mortgage crisis, but everything else is going to be fine. The world will decouple from the U.S. Put the crack pipe down. This is the largest consumer market in the world. And Europe and China, the other two major engines of growth, depend for a large part of their growth on selling into the U.S. market. If the U.S. has a recession, it's bringing down everybody. Everybody's going. So this is why the dollar stands to benefit in ultra risk-off conditions. So you can't necessarily say that what stocks are doing and the dollar is doing and the economy is doing are connected, because if the economy really falls off a cliff and stocks crater, chances are you get a stronger dollar, not a weaker one. So you get into a situation then here where you want to see rotation. And what rotation would tell you is the Fed is going to be successful. It's going to cut rates. That will save the economy. And the release valve will be lower yields. If the markets believe that, then yes, you get a weaker dollar, you get lower rates, and you get stocks outside the U.S., in particular in Europe, not in China, but in particular in Europe, looking better and starting to take some of that money. But if there is a broad-based global recession, run for the hills, hair on fire situation, like we saw during COVID, like we saw in the 2008 crisis, at its most extreme, those are crescendos. You build into something like that over quarters. Then, yeah, you get a dollar that's stronger against all odds. So and then you don't get rotation. Correlation goes to one, everybody's selling everything. So what you're looking at most recently, if you look at EZU, the ETF tracking European markets, FEZ is another one that's a little bit cheaper that I like. If you look at EWU, these markets are not rallying with the U.S. getting weaker. They're coming down. This is liquidation. They're not coming down as much, but look at what's happening the past week or so when U.S. markets really hit fever pitch. Look at EWJ, Japan's index. it's lower. Look at what's going on in China, and the mainland ETF, which is ASHR, hasn't gone anywhere in forever. But FXI, which has listings in Hong Kong on it, all of those are Hong Kong names. That's higher. And why? Well, when you look at Stock Connect flows, it seems to suggest that all the money isn't going from south to north. That is optimism in a mainland rebound. It's going from north to south. That is money fleeing China through the escape valve that is Hong Kong. And so what it's looking like right now is that the market isn't prepared to believe in rotation. But again, I think there's a dead cat bounce in this thing. So I think you get some rotation, maybe over the next week, but I'm not sure it's lasting.
Can I just, I guess I'm trying to understand how so I view things on an absolute and a relative basis.
Mm-hmm.
On an absolute basis, for the last several weeks, U.S. markets are moving lower. And I can point to a decent number of international markets that are, on an absolute basis, higher than when we started the U.S. sell-off. And on a relative basis, even if you're flatlining, on a relative basis, you're outperforming the U.S. markets. If you were long that market and it goes sideways and you're short the U.S. market, you're doing okay. So I'm having a hard time understanding the framing that international markets aren't doing well in this last couple of weeks to couple of months relative to U.S. markets.
Well, couple of months, maybe, yes. But if you look at where
even the last couple of weeks.
Well, the last couple of weeks, it's a very different story. Look at what you have from, let's call it the Nikkei, all right? Let's go to EWJ.
Sure.
And obviously, this is in U.S. dollar terms, so discount that, right? This is not in yen terms. And because it's not in yen terms, the sell-off in the U.S. dollar is flattering this a little.
Okay, I see what you're saying.
But if you look at what's going on in the Nikkei, what you've had happen from shock of shocks, late January in the Nikkei, is you've had a sell-off of just about 11.5% as of today's low. If you look at what's happened in Europe as of the peak at the end of February, right as U.S. markets started to roll over about in, let's call it the 21st, 22nd, the peak in Europe seems to be March 3rd. For the Euro Stocks Index, you've had a sell-off of about 5%, 5.2. If you look at what's happened in the UK, the peak there is, again, March 3rd, and you've had a sell-off of about almost 5%, 4.8. Now, again, when you look at the ETFs, the dollar sell-off is flattering them because they're in U.S. dollar terms. But what you've had is a sell-off in the baseline indexes, and it's because people are just selling risk.
Okay, got it. I think that definitely helps, and I appreciate the nuance, which is why I always ask you the question, because your brain is always working on a level that I've got to sort of acclimate myself to. In fairness, I think for the people who are watching this show, the high likelihood is that they're focused on a dollar return. So when I talk like international markets outperforming on a relative basis, I think that's probably a fair assumption. But to your point, to be
very important question, why?
Yeah, to be very clear about what's happening and what's built into that return, I think is important. That level of nuance is important.
Well, and whether you want to believe that there is and this is what I think is so important. It's not that they're not outperforming in dollar terms. Of course they are.
Yep.
That's not the question. The question is, do you believe that investors are out there saying a bet on multiple expansion in Europe is what I believe? And the answer is no.
Right. That makes sense. That makes sense, my friend. Well, then let me ask you, since the last time we talked, a lot has happened in Canada. I'm going to ask you a super open-ended question.
Yeah.
It's a super open-ended question because I more or less just kind of want to see your open-ended thoughts on what you think is happening in Canada, not only with Mark Carney, but with the escalation in tariffs and the tit for tat, the back and forth that's happened with Ontario over the last 24 to 48 hours. There's a lot that you could cover if you've been following all of it. So I'm going to leave it open-ended and let you go with it where you will. What do you think about what's happening between the U.S. and Canada right now?
So Canada is obviously in a state of transition, right? Justin Trudeau was terribly unpopular as a prime minister for very obvious reasons. His own deputy prime minister and finance minister quit on him and told him, listen, you're out here twiddling your thumbs. We have a trade war coming up. And instead of getting us ready for a renegotiation that's substantive, like we had with the USMCA and its emergence out of NAFTA, you're over here doing God knows what. And he had to resign in January because there was just no way for him to continue. We've now had the new prime minister, and the Labour Party, which hasn't actually activated a general election, they get to pick their leader. That leader becomes prime minister until there's an election, and we'll see if this new leader, who is Mark Carney, the former governor of the Bank of Canada and the former governor of the Bank of England, if he is, well, now that he's prime minister, he's going to have to activate an election. And we'll see if he goes the Theresa May route, basically says, I need to do this fast and secure a mandate, or if he's going to wait it out. Ostensibly, I think if you're Carney here, maybe you try to go sooner because you want to get this USMCA negotiation going, and because the polls in Canada have shifted dramatically. Really, it wasn't about the Liberal Party. It was about Justin Trudeau. Because before he at least the polls seem to suggest it, because before Trudeau resigned, the Conservative Party of Canada's leader and their candidate for prime minister,
Pierre Poilievre.
Exactly, Pierre Poilievre. He was the next prime minister of Canada with almost perfect certainty. He was a shoo-in. The polls weren't even remotely close. Now that Justin Trudeau has resigned, and back in January when he did, the polls started to dramatically shift. And even
I think
back
the context. I think the context there, though, is that the aggression, the seeming economic aggression, the tactics used in this negotiation seems to have, they say like war.
They created a rally around the flag
it tends to be good for the incumbent president. It seems like that was the case there as well. That there seems to be.
Well, sure. I mean, sure, and frankly, if you're the current U.S. administration, perhaps you ought to have thought about a textbook rally around the flag effect if you wanted Pierre Poilievre in there, who you have greater affinity for, and with whom you have a relationship, and where you might have had a better negotiation. Maybe you should have set him up for success.
Right.
But no. No. In any case, it's pretty locked right now. It's about a 50-50 shot. And the Liberal Party could have picked a different candidate. They had that outgoing deputy prime minister that decided to scorch her boss, Chrystia Freeland. But no, they picked Mark Carney. And Mark Carney is somebody with tremendous crisis management pedigree. He steered the Bank of Canada very successfully
Nothing like a
through the
central
08
banker. Nothing like a central banker to come in and lead the country. That's what we need.
I mean, listen,
More central bankers
Mario
leading the world.
Draghi was a great example in Europe for when you're really in trouble, get you a crisis manager from the central bank to inject a level of safety into the conversation. And boy, did it work for Italy. Because Mario Draghi had great credibility after what he did at the ECB, and he stabilized what was a very precarious situation in Italy. Then to hand off to now, Italy looks like it is in much better shape. The situation that Giorgia Meloni inherited was orders of magnitude better than if she had inherited, let's say, directly from the Renzi government, for example. So the situation in Canada now is the Liberal candidate will be a hero of managing the Bank of Canada during the mortgage crisis and the 08 crisis, and then again a hero of the Bank of England that navigated it through the Brexit turmoil and didn't break the markets and navigated that carefully. This is a very safe pair of hands, is the pitch. This guy knows a crisis and can negotiate with the US and get results because he had to do quite the dance between the Eurozone and the UK. And then he had to do quite the dance in 08 because the whole world was melting down. So this will be very interesting now, what happens in Canada next. I was kind of hoping Carney wouldn't get picked on the Liberal side this time because I think that the Conservatives still have a little bit of
You think he's in a weak position, and then you think
I would have
he
rather
could come along
him.
the next
I would have
round.
rather him win an election later because I think he's excellent. But he's gonna have to run to some extent on the Trudeau record, not because it's his record, but because it's the same party. And
I think the central bank
that might hurt him.
I think the central bank has like an influencer program, kind of like how, just people that are influencers that have like promotional tags, sign up for this, use my promo code ILIA. I think you're like a central bank influencer that's been sent here from like the global
They've
central
been the
banks
competent policy makers for the past 20 years.
To spread central bank propaganda to
fiscal authorities
to the masses.
Fiscal authorities have been completely inept for the past 20 years, and all of the crisis management has fallen to central banks, and they've done reasonably well at it. The ECB safeguarded the euro when push came to shove. The Bank of England, under Carney, safeguarded the UK when Brexit really hit the fan. The Fed, under Bernanke, bailed out the entire world economy out of another great depression by being clever in a credit crunch. On and on and on and on it goes. They're not perfect, but if you wanted competent policy making for the past 20 years, it's a central banker that was doing it.
Let me ask you this question. We rerun the 2028 election, okay? But there's three parties. Kamala's still the front runner for the Dem Party. Trump is still the front runner for the Republican Party. There's a new third party, and Ben Bernanke is the leader. So you can vote for any of these three. They all have a 30-30 shot in the polls, so you can't say it's a wasted vote. Of those three, you can vote for any of those three in the 2024 election. Who does Ilya Spivak vote for?
Of course I'm voting for Ben Bernanke. Are you kidding me? Are you kidding me? Of course I'm voting for Ben Bernanke.
Chat, what say you? I guarantee
there is
if we were looking for engagement, we just found it.
Deserves a statue in his hometown as an American hero.
Christ, bro. Jesus Christ. I don't even have the energy today to do this with you.
Come at me, bro.
I don't have the energy in 15 minutes left in the show to do that one, bro. Earlier at the beginning of the show, in the chat, somebody goes, Ben Bernanke ruined the economy along with Janet Yellen or something like this. And that's like the level of feeling out there. Ilya Spivak believes he should be the leader of the country. A statue should be built for him. And I feel like I think when they gave him that Nobel Prize in 2022, I think you think it was well deserved.
Of course it was well deserved. Man is an American hero.
I love you to death, dude. Help me out. Let's do some nuance here in the dollar then. How should I think about the CAD, the Mexican peso, in the face of what's happening with these negotiations? So take it from, you just gave me the background of what's happening in Canada. How should I be thinking about the Canadian dollar given that backdrop you just gave me? And let's do the same thing with the Mexican peso, /6M.
Sure. So I think the Canadian dollar has been very unloved in this environment.
Yes.
It's been one of the places where you've really seen a currency struggle despite the dollar's weakness. I don't really buy that it's done bottoming. I'm still a little bit long, pretty much at these levels. And so I'm looking at and I mean, I've had this on for a while. And so it hasn't really worked yet, but it hasn't really shaken me out yet. I think, going back to what we said earlier in the show, I think the markets are going to come around to the idea that the essence of all of these strong arming tactics isn't just mean-spiritedness for its own sake. I think this is a negotiation. I think where people want to arrive at the end of the negotiation is a bigger free trade deal between the U.S., Mexico, and Canada, not a smaller one.
Yep.
And I think that's good for Canada, and I think it's good for Mexico, and it's good for the U.S., but I think that makes the Canadian dollar look cheap. It makes the peso look cheap. I think there's a lot of fear around the U.S. doesn't get where its bread is buttered, and I think the U.S. gets it just fine.
100% agree with you.
I think when you look at what happened with the NAFTA renegotiation, everybody was setting their hair on fire going, you're going to get rid of NAFTA, the most successful trade agreement in the known universe?
Not everybody. Just that was the media narrative. Yeah, I agree.
The markets were fearful. I could care less about the media narrative.
That's true.
The markets were fearful. You know this about me. I don't pay attention to the media at all. I don't pay attention to the right side media. I don't pay attention to the left side media. I look at economic data and the price action as filters for what I'm doing in markets. I could care less what anybody's saying.
I see you as a 60 Minutes guy, though. I see you as a guy who reads The Economist and watches.
I read The Economist
faithfully.
I don't really watch 60 Minutes unless it's somebody interesting on. It's not a regular thing I watch, but I read the Economist. Yes.
Yeah.
I think The Economist is sane and sober for the most part.
So I agree with you 100% on the USMCA. I think this is a tactic to drive a renegotiation of the North American economic bloc, but I also believe that that's only that's phase one, and then that being done as a precursor, as a predecessor to then going and looking at China going, okay, now it's your turn and we need to talk. So I think we get through this USMCA renegotiation, which is going to be bumpy. But even if there's some reprieve, right, we get to the other side of this and we go, okay, we renegotiate this. Well, that only gets us to the final boss.
I think it's a kind of Monroe Doctrine kind of a thing.
Correct.
That's starting to emerge, where we're basically saying we are the United States and this is our hemisphere. He who comes into our hemisphere must understand, in true Monroe Doctrine fashion, you can do business here, and we have no issue. But don't think you're going to set up enclaves of influence here, because you're not. This is our swimming pool. You can swim in the pool, but you cannot stay. Take the floaty, go back home at the end of the day. And so I think the renegotiation of the USMCA is very much step one. I think we want a deal with China where China understands that they need us. We need them, but they need us much more than we need them. And I think to make that argument, you need to have a very robust free trade agreement in the Western Hemisphere that then envisions that South America starts getting a lot more development and becomes the new China. And I think that starts, I think the Panama Canal thing is adjacent in that conversation. Again, I think people need to start to look at the first administration's tactics. And yes, the fire and fury now is much louder and sharper and more volatile. But last time it was more volatile relative to the thing that came before. The question is, what is the volatility aimed at? And I think it's aimed at a corralling of people into deals. I think this volatility is aimed at the same thing. And I think what we're trying to do is build a Western Hemisphere economic zone that collectively then, to your point, turns to China, turns to Europe and goes, okay, now let's have an understanding about how your regional hub and that regional hub and our regional hub interact. But don't get it confused. This part of it is ours.
Yeah, I agree. But my bigger, broader point is that if there's sort of some relief rally because, oh, great, we've got this MCA renegotiated and all this sort of craziness or uncertainty that's built around what will Canada do, what will Mexico do. I think that you have to be careful about getting too excited because that only means that you're moving on to a bigger level.
In the Canadian dollar, no.
Oh,
so
yeah,
I think yes.
I agree with that.
I think yes, the Canadian dollar gets a rally, Mexican peso gets a rally, but don't go thinking that the problem is solved in stocks. It very much is not. I agree.
Right on, bro. All right. I can't believe we're going to do this. But I don't know. When you trade the Canadian dollar and Mexican peso, I know a lot of you're doing it directly in currencies themselves, but do you ever trade the futures?
The futures? Oh, yeah.
Yeah. And then do you ever trade the options on the futures in these pairs? So Canadian dollar options, are they decent?
Because there's not options on the micro contracts, and I like the smaller size. So I like to be more nimble with my risk management, and so I like the M6 contracts, not the 6. And there's not options there. So I'm just an outright buyer and seller of the M6 futures, be it M6E or M6C or M6A, whatever it is.
Right on, my friend. All right, Ilias Bivak, always fun. I didn't talk to you that I was going to the Canada route, and you had a beautiful, I think, lay of the land there. I appreciate that, my good friend. If the people want more from you and you've given them no reason not to, can you tell them where they can go, my friend?
I am, as ever, all over the network. Overtime and Macro Money are there Monday through Thursday. We're here on Tuesday. We're also talking to Tom at the open of the week for First Call on Sundays, you and I. I am on with